Hi guys, here is a very good news to all the CA Inter Group 2 students aspiring for May 2023 and even November 2023. You know what? I'm going to release my revision classes of almost 25 hours of CA Inter audit, on this YouTube. Getting it? So right now whatever you're watching is part 1 video of the revision class for CA Inter audit. I don't know how many of you have watched the auditing class of mine previously, which I uploaded in 2021, which has almost 5 lakh views. It is the marathon revision which has highest views in the entire India. Who have uploaded in the past 2 years. It's been hardly 1.5 years that I have uploaded and almost it has 5 lakh views. And really thanks to each and every one of you. So that's a marathon which is having 18 hours, time. So now once again, I'm uploading for May 23 exams and November 23, even May 24 also you can watch these marathon classes. Now, so by the way, this marathon is going to be approx 24 to 25 hours. So this is a basic introduction video and I decided to upload it in the January month itself, 2023, for the benefit of students, so that those who are unable to afford my regular class, getting it, at least you can watch this marathon. And first important thing, please watch the video at standard speed. Revision class itself means generally we take at a faster rate. If you also increase watching speed at a higher rate, it will be, again, I'm telling you, there is no point of watching this marathon. Believe me, challenging to you, if you watch this entire YouTube video of 12 hours plus another part of 12 hours at standard speed, remarkable clarity you will be getting. Believe me, you are going to get a remarkable clarity. And what I am going to cover in this marathon, let me give you a brief idea. Okay, so please listen to this till the end. Okay, this is an introduction. Below in the description, timestamps were also given for each chapter. You can just click on that respective timestamp and then listen to that chapter. But what I suggest, please listen in the same order in which the video is playing. Do not deviate. There is a structure in which I have made these recordings. Further, whatever marathon I'm uploading here is nothing but recordings of the face-to-face class of revision which I have taken in September 2022. So the entire recordings I stopped selling it. Now I'm going to give you it, free of cost on the YouTube platform. That's it. So by the way, the material which I am using here this is actually a smart notes. This is completely a colored notes, and believe me, this is one of the best book that is available in the market, which comprehensively covers entire syllabus. And right now, because of the doubt that we have on the new scheme, we have not went for bulk publishing of this book. So right now you can find this book on Shrestha for CA and CMA application. You can see above me there are 2 logos. There is a white logo. So that application is there, Shrestha for CA and CMA. Inside that application, you can download this material. Below in this video description, YouTube video description, I will give you the application link also to download this material. So just open the app and download the material. Now, so without any delay, let's start the marathon session introduction part. So what I am going to cover, so what are the instructions that you should follow so that you can get the maximum benefit out of it. Once again, I'm requesting you, please watch the class at standard speed. If you watch the class at standard speed, you can connect with me and with the subject more strongly. It requires lesser preparation later. If you watch at higher speed, you require more intensified preparation later. Getting it? Let's hope the same magic that repeated in 2021 repeats again. Thank you. Now you see here. So first of all, CA Inter Auditing, as per the institute book, we are only having up to 13th chapter. So 13th chapter, which is having 3 parts, 13A, 13B and 13C. But in our material, in our Shrestha material, we made those chapters into 17 parts. We have divided all these chapters into 17 parts. You can see here, there is an order, and entire this marathon recording, right now you're watching part 1 of the marathon. There is another part which is part 2 of the marathon. Getting it? So in part 2 also, we are going to create a playlist in the same channel. CA Ramharsha, there is a playlist. If you open the playlist in the same YouTube channel, you will find CA Inter Audit Revision May 23. Getting it? So in that you will find these two videos. Okay, so now you see here, totally as per my material, there are totally 17 chapters. There are totally 17 chapters. First one is fundamentals of auditing. First one is fundamentals of auditing. So fundamentals of auditing is something which you don't find anywhere in any other, institute. This chapter is aiming at to give you clarity on certain basic terminology that you need to learn in the audit subject. Without learning this basic terminology, you cannot crack audit subject. You cannot understand audit subject. So kindly, you must watch this fundamentals classes for sure. Very simple. Straight away, if at all you decided to watch this marathon, getting it, believe me, you follow in the same order on which I uploaded. If at all you are unable to watch at a stretch, watch 1 hour, take break. Watch 1 hour, take break. Every day 1 hour. Since it is on our YouTube, you need not be hurry. I'm not going to delete it. Getting it? So first I'll be covering fundamentals of auditing. Then I will be discussing nature, objective and scope of audit. Then I will be discussing company audit. Then I will be discussing audit report. Then society's audit. Then documentation, fraud, risk assessment I am not covering. See, we need to be very clever when we are reading the syllabus. I always recommend in my regular class also, there are some chapters which I treat them as last priority chapters. What are the last priority chapters? Audit of government audit. I'll highlight them with a different color. I'll highlight them with a red color. So government audit and audit strategy, planning and program. Please listen to this list carefully. And we have another thing called risk assessment chapter and even analytical procedures. These 4 chapters I call them as last priority chapters. This is last priority. This is last priority. Even audit strategy and planning is also last priority. You know what? These 4 chapters together collectively maximum weightage is 20, 25 or worst case 30 marks. If you ignore these chapters at the beginning and study the remaining all other chapters, believe me, you are going to get exemption. This is what many students have done. Getting it? Most of my students, I always tell them to target for 85 to 90 marks in audit paper to attempt. You can definitely score 60 plus if you are perfect in the audit subject. Now next, so rest all other chapters in the same index order I will be discussing. Now you might be having another doubt. Sir, will you be covering all the standards on auditing? Yes, most of the standards on auditing I will be covering. You see, our entire subject, if you observe the entire subject, I can say 70 marks is nothing but standards only. 70 marks is nothing but standards. Not even 70. In fact, I can say 80 marks is standards weightage only. Out of 120 marks of your paper, 80 marks is standards. Like, first of all, what is your, paper? What is your paper thing? Just a minute. What is your paper pattern? So your paper pattern is very simple. Like, you will be asked for 120 marks, out of which 30 marks will be MCQ. And rest 90 marks will be descriptive. In this 90 marks, 14 marks will be true or false questions and remaining 76 marks will be descriptive questions. 14 marks true or false, 76 marks descriptive. Out of this 76, here some 2 marks choice will be given. Here some 16, I think some 20 marks choice will be given. Some 18 marks choice will be given in the descriptive. Altogether 20 marks choice for you. Getting it? Now, by the way, please follow the video in the same order. Just a minute. Please follow the video in the same order. In fact, in the part 2, you will be getting bank audit, all that. Anyhow, you just watch. This is part 1 video, some 12 hours in YouTube. Maximum duration with which a video can be uploaded right now is 12 hours. Earlier, 1.5 years ago, YouTube permits up to 20 hours video. Now they are permitting only 12 hours. So that's why we have to split the videos into 2 parts. So 12 hours part 1, 12 hours part 2. That's it. So almost in this marathon, I have covered 80 marks to 90 marks portion of the syllabus. And trust me, If you are watching this marathon lecture twice, believe me, first time itself if you watch, I mean, you might have taken anywhere the coaching, you will get enormous clarity in the subject like anything with this marathon. And now again, I'm having a doubt. I want to clarify some students, because earlier I used to receive these queries. Sir, if I watch the marathon, is it enough for me? Suppose if you have already taken regular coaching in audit and watch this marathon, definitely you're going to get immense clarity. If at all you're a first timer, you have not taken coaching, then this marathon cannot be a substitute for regular course. It cannot be a substitute for your regular course. For me, I have regular course also with me. Same in rest of our CA and CMA app. Regular course you can subscribe. It is 100 hours approximately. Whoever is getting regular course, until yesterday, we are giving this revision classes also at free. And now the revision classes are being uploaded on YouTube. So it is absolutely free for everybody. Regular class is different. In regular class, getting exemption is damn sure guaranteed if at all you follow our instructions correctly. By watching marathon, believe me, you are going to get top-notch clarity in audit. That is for sure. And thank you very much for your interest in this. So continue watching the subject. I spoke about where this material can be downloaded. These color notes can be downloaded. Right now only soft copy is available. Hard copy, maybe it is available from February 1st or 2nd week onwards, hard copy. So I also need to have certain clarity on the upcoming new scheme. There are chances that the new scheme will apply from May 24 exams. May 24, not for November 23. If at all you are having confusion, May 24, November 23, all that, forget thinking about new scheme. Your target is for May attempt or your target is for November. Happily watch this marathon, study sincerely, that's it, you are done. So this book is one of the best book available in the market. That is my smart notes. Getting it? So more about this notes I will be covering in the class anyhow. I will be covering it in the class. I hope you got certain clarity on what I'm going to cover, what I'm not going to cover. Last priority chapters I am not covering. Even, sorry, one more chapter. Audit of different types of entities. This is also part of last priority chapter. Rest all other first priority chapters. Whatever these last priority chapters is there, I am not covering in this YouTube marathon. Further, this marathon is only for 24 hours, where I'll be covering, in excluding last priority chapters, all other chapters. Regular course is 100 hours. That's again a different issue, where in regular, you will be getting tremendous grip. That is different thing. Of course, in marathon, you will get tremendous clarity. Getting grip is different from getting clarity. You will get top-notch clarity, and I bet and I challenge, you don't find any other YouTube video on audit CA Intro having this much clarity in the subject. That's it. So take care. Continue watching the fundamentals chapter. Please, watch at standard speed. You can download this material from rest of a CA and CMA application 3. Please watch in the same order in which it is given, the video order, whatever. Don't directly jump to a fraud chapter. Don't directly jump to sampling chapter. Don't directly jump to items of financials. No, don't do that. There is a structure in learning. Until now, in whatever the way you have learned, ignore that. Watch this marathon in this order, whatever I have given. And later, after you spend 5-6 hours itself, you will understand, is this audit subject? Because how interesting it is. This is the question that you get in mind. Okay, so take care, continue watching. Happy learning. And after watching these videos, this entire marathon, I'll be very happy to receive your feedback on this video as comment. Okay, that's it. So the first topic in this subject is fundamentals of audit. So first we must be good at certain fundamental terminology. So this topic is fundamentals. You don't find anywhere in the institute book. You don't find anywhere in the institute book. Now tell me, what is the definition of audit? What is the definition of audit? We have seen here, like there is a definition given here. An audit is an independent examination of financial information of any entity, whether or not profit oriented, irrespective of its size or legal form, when such an examination is conducted with a view to express an opinion thereon. So this is a simple definition given. Now, so an audit is an independent examination, whether or not profit oriented, independent examination of financial information. Now, see, there is a very big company, Reliance or Tata, any company you take. Today, are we only investing in Indian entities? Today, are we investing only in the Indian companies? No. There are many platforms which were opened where you can buy the shares of a Google company. You can buy shares of Apple. You can buy shares of Microsoft. You can buy shares of Tesla. Correct? Same way, many foreigners are buying shares in Indian companies. Many foreigners are buying shares of Reliance, shares of Tata, shares of Adani. So many are buying Indian company shares. We are buying US company stocks. We are buying German company stocks. We are buying London company stocks. We are buying China company stocks. Wherever trade barriers were eliminated, wherever the stock exchange barriers were eliminated, we are buying other companies which are operating in other countries' shares. But look, when we are buying, suppose you want to buy Tesla share, do you go there and inquire about Tesla company? No. How do you trust Tesla is having these many profits? How are you establishing the trust that Tesla is having this much of net worth? Tesla is having these many factories. Tesla is having these many cars. They are selling this much. They are having this much turnover. Elon Musk is so and so billionaire. Who are valuing all this? Who are giving the data? The exchange, the stock exchange across various countries, they are operating as regulatories. How they are operating as regulatories. Like in India, we have ICI. Outside India, in every other country, they have some institute of accountants. In every country, there is some accounting body. ICI is called as what? Accounting body, actually. Getting it? Which regulates audit profession in India. Same way, in America, US, we have CPA, Certified Professional Accountants Institute. In Australia, we have something called ACCA. In Canada, we have something called CPA Institute. All these institutes produce chartered accountants like you and me. What we do? Do we have any relationship with the company where we are doing audit? We are completely third parties. Me and that company, me and the directors, me and the shareholders do not have any relationship at all. I am completely a third person. I know how to verify balance sheet. I know how to verify P&L. I know how to verify background books of accounts. I know how to figure out frauds. I was trained for that. Correct? What we do? We will be appointed as auditor for those companies. Audit means what? Verification. And what you do ultimately, you verify all the financial information. What you do? Whether it is in Apple company auditor, or Indian company auditor, or a Chinese company's auditor, or German company auditor, whatever auditor it is, what we essentially do? We audit. Audit means what? Verify. We verify, and if it is correct, we say that the figures given by Tesla, figure was, Tesla in 2021 said, we have sold these many electric cars. How to believe that? It is his own business. He can obviously claim that his company is number one. He can claim that he is having highest number of sales. He is having this many $1 billion turnover. How do I believe? Some certified public accountant, he gave a report. Whatever financial statements given by Tesla company, Tesla Incorporation, the information contained in these financial statements is true and fair. Who certified this? Certified public accountant. Why should I believe him? He is a chartered accountant like you in India. He is governed by CPA Institute of America. If at all he do something wrong, he is punishable severely in the law. He do not have any relationship with the company. Completely a third person giving a report on the accuracy of the books of accounts, accuracy of the financial statements. Now tell me why you don't believe. Now I'll believe. Why I believe that particular report? You don't have any interest in the company. It's completely unrelated party. Correct? The auditor of Tesla is not a related person to the Tesla. Some outsider having accounting knowledge, having accounting standards knowledge, having financial statements knowledge, having books of accounts knowledge, verified the entire documents, verified the entire back-end data, and certified the financial statements of Tesla company, which is showing, a tremendous picture. And he said everything is true and fair. I am a person residing in India, somewhere residing at Chennai or Hyderabad. Getting it? I saw his report. I saw the financials. I felt Tesla is working super, working fantabulous. And that person also certified everything is correct. I will trust him. Tomorrow, if at all, if it is wrong, I will complain to CPA Institute on that fellow that he colluded with the management, he cheated investors, and he will be hanged. He will be punished. Correct? Civil frauds. These are all like, financial frauds. So that fellow will take they will take an action. So there is company which is showing this much of profit, this much of figures, this much of sales, this much of growth, and some independent person is certifying that everything is correct. And I am a person who is there in India, not seen any of them physically, but looking at the reports which are regulatory monitored. Correct? Which are regulatory monitored. Regulatories work for public welfare. So regulatory monitored. I saw these reports and I trusted Tesla is performing really well. I purchased the share of the Tesla. Same way, an investor who is there outside India is also buying shares in India. Same way, everybody, whoever is there in India, buying shares of a company, Reliance Industries, which is incorporated somewhere in Mumbai. Okay, Navi Mumbai. Somewhere head office is in Navi Mumbai. Somewhere they have a refinery in Mumbai. Have you visited there to buy the share of a company? No, by looking at the documents, you are trusting the company and then, buying the shares. Now those documents is called as audit report. That documents are called as audited financial statements. Why are you trusting these documents? Because the person doing audit is independent. Are you getting it? Now independence is having two dimensions. Independence in terms of appearance, independence in terms of mindset. Independence in terms of appearance, independence in terms of mindset. Tell me what we can see actually in this. In appearance and mind, what is visible? Appearance is visible. Independence of mind is not visible. Auditor will say that I am honest. But do we know how far he is honest? See, I am not related to Tesla company. I am not related to Mukesh Ambani family. I don't have shares in the company. Okay, you are able to prove. You don't have shares, your relatives do not have shares, you show me proofs. You are able to show me the proof. But I am independent in terms of mind. How can I prove? Do me narcotic test. Only that is the only way to prove. How can I prove my honesty? Independence of mind is nothing but honesty, nothing but integrity. That is something invisible. Are you getting it? Whereas independence, appearance, you see, I am not related to the director. I am not a relative of the shareholder. I am not having shares in the company. See my demat account. My relative, my wife is not having shares in the company. See my demat account. I can show proofs for all of you that I don't have relationship with the company where I am doing audit. I don't have relationship. I can show the proof. Correct? Independence in terms of appearance is visible. It is something we can prove. So in audit, which is most important, generally, mindset is most important. Honesty is most important. But tell me, if I tell you to act honestly, how many of people will act? So the lawmaker protected independence of appearance, independence in terms of appearance. By looking at the auditor, by looking at the relationship he's having, he should be independent. If at all he is unrelated person, obviously he will not do favor. If he is my relative, I will do favor. If he is not my relative, why will I do favor? So, people believe, if auditor do not have relationship with the company, naturally he is honest with the company. If at all auditor is related to the company, he will not be working honestly. That's why what company law disqualification says, a relative cannot be appointed. A partner of the firm should not have shares in the company, should not be indebted to the company, should not have business relationship with the company. Why all of these are prohibited? If at all you are having shares in the company, you naturally support your company because you are also owner. If you don't have shares in the company, if you boycott that, naturally, whoever chartered accountant is there, who do not have shares in this company, we will appoint him as an auditor. And since he don't have any relation with the company, he will do audit honestly. Suppose if I have shares in the company, I will not do honestly. Because if something is wrong, I may not comment on that. Because I am also owner, I will also affect. Self-interest threat. What is it called as? Self-interest threat. Since I am having interest in the entity, if something went wrong, I will not be commenting. Because I'm having interest. My interest will affect. Able to understand all of you. So audit independence is both appearance and mind. Now an audit is independent verification. What is it? Verification, examination, assessment, a determination, whatever. Independently you're verifying what? Financial information. Financial information means what? It is financial statements and books of accounts both. Financial information. It's not financial statements. Getting it? Financial information, financial statements and books of accounts both. You are verifying the entire financial information of any entity. Not necessarily company. Only companies will have auditors. Huh? A partnership firm can have auditor. A sole proprietor can appoint an auditor. A LLP can appoint an auditor. A society can appoint the auditor. All these are what? Enterprises. Enterprises, another synonym is what? Entity. Of any entity, whether or not profit oriented, it may be profit oriented entity or it may be non-profit oriented entity. Every organization which is dealing with many receipts and payments, do they maintain books of accounts or not? Correct? Huh? Do they maintain? See, in your family you might have seen, whatever expenses they are incurring, they'll maintain a chit, TT. Have you seen yes or no? In many families they maintain as a custom. Why do they maintain? If they are incurring on so many things, they should have something later on to look at. What we spend, where we spend, where, how the funds flow were affected. A small family spending some amount, they're writing in the record because they can't remember. So every organization, whoever is dealing with large number of receipts and payments should maintain records or not. So that subsequently they need to check everything. So non-profit entities will also maintain books of accounts. Non-profit entities will also prepare financial statements. Able to understand? All the temples you see, they have books of accounts. They have financial statements. It is incorporated as some trust. It is incorporated. Somehow it is incorporated. Getting it? So it may be profit oriented or non-profit oriented. Anybody. Tirumala Tirupati Devasthanam appointed me as an auditor? Yes. Suppose if they have appointed me as an auditor, what is my duty there? I will go check the assets, check the liabilities, check the incomes, check the expenditure, income and expenditure, and certify is it correct. Able to understand? TTD Devasthanam Temple says this year we have received 700 crore donations. Out of 700 crore we spent on devotees like this much. We spent on building renovation this much. We spent on other constructions this much. They are saying, who knows? It is public money. Some management inside TTD can do frauds, no? So that's why what they did, TTD trustees there, what they did, they appointed a CA. He will go and verify everything and say whether everything is fine or not. Whatever they showed in the books, is it reliable? Is it true and fair? They're coming and they're going and commenting. So auditors are not only for commercial organizations, audit is necessary for non-commercial also. Everywhere audit is necessary. Profit or not, profit oriented or not, doesn't matter. Size, irrespective of size, doesn't matter. Size of the entity doesn't matter. Able to understand? Whether your company is a 100 crore company, 1000 crore company, $1 billion company, 10,000 crore turnover company, doesn't matter. For every organization, they will have books of accounts. They will have financial statements. Are they correct or not is what my duty. Yes or no? Legal form, irrespective of size or irrespective of legal form. What is a legal form? Legal forms are many. Partnership forms, LLPs, societies, sole proprietor. Yes or no? There are many legal forms. Tell me, if I have to do a business, I'm an individual. If I have to do a business, should I register under any legal form compulsorily? Is it compulsory? I want to open some idli dosa bandi. I want to open a restaurant. I want to open a garment shop. I want to open some ice cream store. Should I have any registration? I may require PAN number and GST number. That's it. Should I register compulsorily under company law? Should I register under LLP law? Should I register anywhere under partnership law? Nothing. They're not mandatory. It's my wish. If I want to register, I'll register. Able to understand? So, legal form doesn't matter. If you are doing business, in your business, if the receipts and payments are huge number of transactions, you maintain books of accounts. You maintain, list of transactions. What is books of accounts? It's an account. Account means what? Recording. What you're recording? Recording transactions. Books of account is nothing but a method of recording transactions. Whatever I am doing, I am recording. So every organization will maintain books of accounts. So legal form also doesn't matter. A sole proprietor appointed me, a partnership firm appointed me, a company appointed me, a Tirumala Tirupati Devasthanam appointed me, a church appointed me, mosque appointed me, whatever. Whoever appointed me as an auditor, what I'll do? Open your books of accounts. Give me the financial statements. Show me bills. Show me proofs. You said here expenditure is this much. Where is the bill for that? Bill is not there. That means fraud. Able to understand? I'm just example I'm telling. I may not certify it as fraud, but I'm just telling you example. I will question like this and I will verify proofs everything and finally certify based on the proofs, based on the evidence, based on sufficient appropriate audit evidence. They are true and fair. That's how I certify. So legal form doesn't matter, size doesn't matter, they're objective, profit oriented or not doesn't matter. I'm an auditor. I'm appointed to independently verify your financial information with a view to express opinion thereon. So audit is a definition not specific for companies. Audit definition is not specific to law. It may be non-stat audit or it may be stat audit, doesn't matter. What is audit? Verifying something. Verification means what? Whatever you made that, maker and checker should be different. The person who is making the thing and checking the thing should be different. So maker and checker should be different means independence. If I only did the task, if I am only verifying, will I find a mistake? That's it. So an audit is an independent examination of financial information of any entity, whether or not profit oriented, irrespective of size or legal form. When such an examination is conducted with a view to give an opinion. Now you see the word financial statements. See this fundamentals is very important. That's why I'm going a little slow. Gradual I'll increase the speed. Okay. Now you are preparing financial statements. You are actually auditing what? Financial statements. So what do you mean by financial statements? What do you mean by financial statements? There are two types of financial statements. General purpose financial statements and special purpose financial statements. Clear is it here? So there are two sets of the financial statements. One is general purpose financial statements. Another one is special purpose financial statements. What are special purpose financial statements? If the financial statements are prepared for special purpose, if the financial statements are prepared as per special purpose framework, what is it called as? Special purpose framework. Then they are called as special purpose financial statements. We don't have this in our syllabus. We are discussing our entire subject. In which context? Audit of general purpose financial statements. We are discussing this entire subject from GPFS audit. We are not discussing audit of special purpose financial statements. We are not discussing anything else. We are only discussing audit of general purpose financial statements. And first of all, what is our subject name? Our subject name is auditing and assurance. Actually, the subject name must be audit assurance. Actual subject names must be what? Audit assurance. Because auditing is a type of assurance. We don't have auditing and assurance separately. Assurance is a very big subject. Assurance on what? I am giving assurance, confidence to many on the financials. You may be giving confidence on a motor car. You may be giving assurance on an air conditioner. You may be giving assurance on a gold ornament. Bismarck is an assurance on gold ornament. ISI is an assurance on electronic items. FSSAI is an assurance on food items. These are all assurance agencies, nothing but. They give confidence. Okay, on a biscuit packet, if SSA license number, everything is there, I can happily consume it. Because this particular product was produced in an organization which complied with the FSSA standards. Are you getting the point? So in every field, audit is a common word. L&T Metro project is going on in Chennai, Hyderabad, everywhere. Now whether the project is as per planned one or not, whether the railway track properly laid or not, there is an audit, Now their audit means accounts auditor, financial statements auditor. That's an operational audit. What is it actually? That's an operational audit. There are many audits. Regulatory audit, nothing but it is called as compliance audit. There is energy audit. There is environmental audit. There is a pollution audit. You know that? We are discussing which audit? Financial audit. We are only discussing in our subject which audit? Financial audit. So assurance is a very big subject. It has so many things. But we are only discussing in assurance which type of assurance? Financial audit type of assurance. That is the scope of discussion of the subject. And we are discussing about assurance on which statements? General purpose financial statements. Our entire subject has been drafted from general purpose financial statements. Correct? Now, what is the objective of audit? You might have read this. The objective of the auditor is to obtain reasonable assurance whether the financial statements are free from material misstatements and whether they are prepared as per applicable financial reporting framework. Correct? What is applicable financial reporting framework? It's a 5 marks question. Asked in November 2019 exams. November 2019, I think. What is applicable financial reporting framework? What will you write? Most of you have not seen that question itself. It's a 5 marks question. What will you write? They are nothing but financial statements. One line answer. Yeah. So applicable financial reporting framework itself is having a big definition. What is that? Applicable financial reporting framework. It has 3 parts. Getting it? What do you mean by framework? First of all, rules and regulations. The framework is nothing but rules and regulations. What is financial reporting? You are not only preparing, but you are presenting to lakhs of shareholders spread across the world. Tell me, when you prepare notes for yourself, happily you write in whatever the manner you want. Because only you have to understand. But when you are writing notes where thousands are watching, where thousands will read later, can you write in whatever the way you want to prepare? Can you prepare the notes in whatever the way you want to prepare? No, you have to keep in mind. You have to keep in mind who are your general audience, who are your various users. So, presentation must be keeping in mind which large number of users. So, reporting financial statements is different. Financial reporting is different. Financial reporting means what? Preparation and presentation of financial statements. You are presenting the financial statements. That is when the word reporting can be used. Correct? Now tell me, do banks, a sugar manufacturing company, insurance company, all of them prepare balance sheet P&L in same manner? No. A bank will prepare balance sheet P&L in a different manner. A sugar manufacturing company, oil manufacturing company, manufacturing trading company will prepare balance sheet P&L in a different manner. And an insurance company prepares financial statements in a different manner. A sole proprietor prepares financial statements in a different manner. A partnership firm prepares in a different manner. Correct? So the financial reporting framework, nothing but tell me, a partnership firm, when they are preparing financial, do they follow some rules and regulations? Do bank follow some rules and regulations? Do insurance company follow some rules and regulations? Are all these rules and regulations same for everyone? So, the rules and regulations, nothing but a framework for preparation and presentation of financials. Nothing but combinedly, financial reporting framework. The financial reporting framework is different for different types of entities. Agreed? Now, what is applicable framework? What is applicable? Depending on your nature of the business. Why are you preparing financials? Objective. Depending upon nature of the business and the objective of the financials, whatever financial reporting framework that company adopts, the management adopts, the partners adopt, the members adopt in a society, whatever framework they adopt for preparation and presentation of financial statements. That is what the definition of A for FW. And this applicable financial reporting framework can be a general purpose framework or a special purpose framework. It can be a fair presentation framework or a compliance framework. So first, have you understood that something is there this much? So now still we need to discuss what is general purpose framework, what is special purpose framework, what is compliance framework, what is fair presentation framework. Then slowly we will discuss the concept of misstatement, and half an hour we will close this session. Then we will start the next chapter. Clear everyone? That's it. Okay, we'll take break and get back in 15 minutes. So let's continue. So as I told, the financial statements are two kinds. Like one is general purpose financial statements, another one is special purpose financial statements. What are special purpose financial statements? If the financial statements are prepared as per special purpose framework. What is special purpose framework? There, the rules and regulations for preparation and presentation of financials were given by a special person or a group of persons. They are prepared for a special purpose. They are not for routine regular discussion by shareholders. They are not for routine regular discussion by stock markets. They are not for general public. They are for special reason. They are for getting loans. They are for mergers and acquisitions. If I am preparing financial statements specifically to exhibit about my company for certain things, getting it for certain special reasons, then those financial statements are called as special purpose financial statements. And you know, when special purpose financials is prepared, mostly whenever company want to sell its business to another company, they prepare special purpose financials. And you know what? In special purpose financials, balance sheet need not tally. There is no requirement. What is special purpose framework? Is there any law for that? Special purpose means what? If I have some purpose, I want to look at my company in a different way. I want to value my company. Why do I prepare financials as per traditional format of balance sheet, P&L, going concern, historical cost? Why? So, special purpose financial statements, the rules are decided based on the need. What rules we will follow, what principles we will follow, it is based upon the need of the moment. So, there is no framework for special purpose. Getting the point? I want to buy another company. I want to buy another company. Don't give me that balance sheet P&L. That is prepared on historical cost basis. Plant and machinery, it shows 10,000 crore. If I sell the plant and machinery, 10 crore also it will not come. Don't give me that balance sheet. Don't give me that P&L. Getting it? I want a realistic balance sheet, realistic P&L. I want realistic figures. So, you prepare everything as per net realizable values. So, my way of valuation of business is different. Able to understand? Special purpose financials are prepared based on the special circumstances, based on the need, special need. If there is no such need, why will I prepare them? Able to understand? Whereas, every one of us, whenever we discuss about a company, suppose if I name one company, if I tell you to buy the shares of the company, if I ask you to invest in the company, first question, what will you ask? Where the company is situated? What business the company is doing? Who are the people managing this company? And how much turnover it has? What assets it has? What liabilities it has? Is this company having positive net worth or not? Will you check it or not? Before you buy, do you check all these points or not? Whether you want to buy, a bank want to buy, mutual fund company want to buy, anybody whoever want to buy shares in a company, all of you will expect commonly same points, no? You don't want to buy the entire company. You want to buy some shares in the company. All of you will commonly expect some few common points, yes or no? Suppose you go and ask insurance company, mutual fund company, sir, please invest in our shares. They will also ask similar questions like you. Maybe they may ask little more questions because they are much more knowledgeable. You will ask few questions. Somebody else will ask few questions. But all of you, commonly, every one of you wants some information, right? Some financial information. Commonly, everyone wants to know about my company. Correct? Huh? Every year, what my company is doing. Every year, how much income we are generating. Every year, what is our position. Commonly, everyone will expect or not. On a year-to-year basis, customarily, gap. So, based on general purpose, why am I preparing balance sheet as on 31st March every year? General reason, general purpose. For whom? For what purpose you are preparing? Is there any special reason? I don't have any special reason. Then for whom you are preparing? I am preparing for my shareholders. I am preparing this for my creditors. My debtors will use. Soon, whoever is going to buy my shares will use. My directors will use. Many people will use. To meet their common financial information needs. to meet their common financial information needs. Everyone needs some financial information from me, and the information everyone wants is common in everyone. To meet the common financial information needs, I adopt some framework. I follow some rules and regulations for preparation and presentation of financials, and that framework is called as general purpose framework. What is that framework? General purpose framework. Now, when I am preparing balance sheet P&L using general purpose framework, do I value fixed assets? Do I value inventory? Do I measure income and expenditure based on one particular person requirement? No. I prepare them based on common requirements of everyone. Now you may get a doubt. Sir, if one company want to know some additional information, what they have to do? Nothing. Why will I give? It's a general purpose financials. Use it to what extent useful. You want to know something else? Come and talk to the company. They'll prepare special purpose if you want, if at all necessary. Just because you are coming and asking me special purpose, why should I give? Are you getting the point? So, general purpose financial statements are those financial statements which are prepared using general purpose framework. Special purpose financials are the one which are prepared using special purpose framework. And the frame and we are discussing the subject of audit from which context? General purpose financial statements audit context. Done? Now again, these financial statements are two types: fair presentation, compliance. This I will discuss in audit report chapter, not now. Let us discuss later. Next. So now, what is again once again objective of audit? The objective of audit is to obtain reasonable assurance whether financial statements are free from material misstatements and whether they are prepared as per applicable framework. So we need to check whether the financial statements are prepared as per applicable framework. We need to check. In order to check what is applicable framework, first we must know what is applicable framework, and just now we completed. What do you mean by applicable financial reporting framework? We understood or not? Applicable framework is nothing but in view of nature of entity, bank, insurance, NBFC, which one? And objective of financials, general purpose, special purpose. The financial reporting framework. The financial reporting framework, nothing but the principles and policies and rules and regulations for preparation and presentation of financial statement. The principles followed by the managing persons of the enterprise. Partnership firm, partners. LLP, partners. Sole proprietor concept, the proprietor. Company, directors. The management will follow some framework. No, that framework is called as applicable financial reporting framework. And this framework is broadly based on the purpose of the financials, two types: general purpose, special purpose. Based on presentation manner, fair presentation, compliance. I'll discuss that later. Now, one of the objective we completed. The objective of the auditor is to obtain reasonable assurance whether financials are prepared as per applicable framework. You will check. Company appointed me. Company applicable framework is Schedule 3. Applicable framework is accounting standard. Every company shall prepare financial statements as per Schedule 3 and as per accounting standards and should convey true and fair view. Section 129 subsection 1 says this. Yes or no? So applicable framework for company Schedule 3. Accounting standards. If company appointed me as an auditor, I will check balance sheet P&L. Are they prepared as per Schedule 3? Are they followed accounting standards? I will cross verify. And finally give my opinion. Not only this, I have another objective, most important objective. Whether the financial statements are free from material misstatements. Are the financial statements are free from material misstatements? Free from material word you ignore. For few hours, ignore that word material. Ignore. Obviously, do we concern about big mistakes or small mistakes? Material only we obviously concerned about. If it is some 10 rupees, 100 rupees mistake in the 100 crore balance sheet, do we worry? We only worry about a material mistake. So obviously. Now, whether the financial statements are free from MMS. What do you mean by that? Free from MMS means, free from mistakes means, is it right or wrong? I said the books are free from mistakes. What do you mean by that? Books are right or books are wrong? Right. No, they're asking you, are the financial statements free from material misstatements? They're asking you, are they right? Are they wrong? That is what they're asking indirectly. The auditor has to verify whether the financial statements are free from material. Hey, Mr. Verify, are they containing any mistakes or are they not containing mistakes? Check it out and come back and tell me. You told me Tesla balance sheet P&L. What Elon Musk says is not correct in the P&L account. He says in the P&L this many $1 billion sales, but in reality it's not there. Tell me that it is completely wrong. Give me a report that it is wrong. Yes or no? So now, what is the word here? Misstatement. What is the word that has been used? Misstatement. So what do you mean by a misstatement? What is misstatement? There is a big definition. Misstatement means a difference between amount, classification, presentation, disclosure of a reported financial statement item, amount, classification, presentation, disclosure that is applicable as per applicable financial reporting framework. If I ask you to remember like this, you will never remember even you read 20 times. So you need to understand. Now, misstatement means what? What is mistake? How do we say something is mistake? If you know what is right and what he did, I will compare with what is right. And I will tell you whether you did is right or wrong. Whether your answer is right or wrong, how do I check? First, look at the correct answer. Compare your answer. If it is matching, I'll give right answer. But if there is a difference, your answer is wrong. Misstatement means difference between right answer and wrong answer. Correct? Correct? But how here it has been written? I'm talking about definition. Misstatement means a difference between, in financial, we are not looking at mistakes of human beings. We are looking at mistakes in the financials. In financial statements, how mistakes can happen? 4 types. How mistakes can happen? 4 types. Amount, classification, presentation, disclosure. Amount, classification, presentation, disclosure of a reported financial statement item. Reported financial statement item means what? Already balance sheet prepared, already P&L prepared. In that fixed assets, current assets reported something. They are given some amount, some classification, some presentation, some disclosure. Difference between this and what? Difference between this and we need to compare with how they have to do. Correct? How we need to prepare financials? As per exactly applicable financial reporting framework. So compare amount with amount, classification, presentation, disclosure, required as per applicable financial reporting framework. You see the definition now, you understand, you'll never forget. What is a misstatement? It's a difference between amount, classification, presentation, disclosure. Now nothing but you see here, difference between what you reported in the financial statements and what is required as per applicable. If there is no difference, what you did, what is required, both are same. Now is there a mistake? But what you require, what you did, there is a lot of difference. Then it is called as misstatement. Now this misstatement can happen in 4 ways. Amount, classification, presentation, disclosure. You can mislead people by doing not only in amount, but you can mislead people in form of classification, in form of presentation, in form of disclosure. In any way you can manipulate people. You know that? Able to understand? Suppose how in amount a misstatement can happen. In amount how a misstatement can happen. Suppose we all know, let me take simple examples, traditional examples I'll take. At some places I'll take little modern examples where I think you can understand well. Inventory valuation is what? Cost or NRV, whichever is lower. Suppose a company is having 100 crore worth of cost of inventory. Getting it? The NRV value of this inventory is some 85 crore. What is actual valuation? Applicable framework, accounting standard says what? Cost or NRV, whichever is lower. What is right value? 85 crore. But Company presented in books of accounts at cost only 100 crore. They ignored valuation principle. Now, there is a difference between what they reported in the balance sheet and what they need to report. Now, is this a mistake or not? Yes. Next. A mistake can happen in classification. Suppose a company purchased land. What is a land for a company? Asset, not fixed asset. You cannot straight away say it's a fixed asset. Company purchased land, no, for what purpose? Factory construction? Warehouse construction, for what purpose? None of this. Company has idle money. Company has idle money. Reserves and surplus are so much. Now what companies will do with idle money? They invest. Now this company invested where? In the immovable property called land. Now tell me, when a company purchased land for the purpose of investment appreciation, value appreciation, what is this land for the company? Not a fixed asset, but investment. Fixed asset is something asset used for my business. Suppose I am a manufacturing company. If I buy an asset for my business need, for operating needs of the business, for factory purpose, manufacturing purpose, trading purpose, then it's a fixed asset to me. Yes or no? Here I purchased land. Am I using it as a factory or warehouse or something? Nothing. I'm just using it for investment appreciation. That's an investment. But you know, the company showed it as fixed asset. Actually, what is the classification? No, 100 crore land they purchased, 100 crore value correctly mentioned. But instead of showing it under investment, where they showed, it's actually investment, but where they showed fixed asset. Now the company did a classification mistake or not? Now you may say, sir, what happens, sir? Anyhow, balance sheet showing 100 crore value, no. What happens if it is shown under fixed asset, not under investment? What is the problem? The way I interpret the financial statements will change. Correct? The way I interpret the financials, very simple. You look at my investment, right, in the company. Suppose I have my personal asset. Will you calculate it for the purpose of investment in a business? No. For teaching the class, I purchased this and this. Correct? What you will check, what harshas are invested for teaching class, you will check only these, no? If I bring my land documents and show you, hey, this also I am using now in the class, will you believe? Correct? So, if I classify like that, am I misleading you? Suppose simple, I am investing all this, I am investing my energy, all that. Based on that, I am fixing some fee and collecting from you. Sir, what is the basis for the fee calculation? If you ask me, I need to show you the basis. Plus my margin. If I keep my wife jewelry cost, hey, my wife, I purchased jewelry also. Please reimburse in the form of a tuition fee. Will you? No, right? So, classification is very important. In a company, if a company classifies a land, which is investment under fixed asset, have you done ratio analysis? Fixed asset turnover ratio meaning will differ. Fixed asset turnover ratio will change. So, classification must be proper. This way they can do, mistake. A company can do mistake in presentation. A company can do a mistake in presentation. Maybe mistake is not there in amount. Mistake may not be there in classification. Sometimes mistakes may be cumulative. Amount wrong, classification wrong, presentation also wrong. Like cumulatively also it can happen. Able to understand? Mistakes can be in the form of presentation as well. How? What is presentation? Simple example. Debtors, no. How do we present in the balance sheet? Debtors. Trade receivables minus provision for bad and doubtful debts. 100 crore minus 5, 95. Trade receivables 100 crore, provision 5 crore. Which is right? This is presentation 1, this is presentation 2. Which is right? Presentation 1. Why presentation 1? I will follow presentation 2. Am I misleading anybody? But you are presenting wrongly. Because of the presentation 2 type, people may not understand you are having doubtful debts worth of 5 crore. Yes or no? If I show you 100 crore, below 5 crore reduce, I am telling you indirectly, I have 5 crore doubtful. Actually 100 crore I should receive, but 5 crore I am doubtful. So 95 you consider. This is right, no? True and fair. This is true and fair picture. But if I classify 5 crore on the left side, I am showing you completely true and fairly. But can you correlate it immediately? It requires so much of effort for you to understand that I have doubtful assets. Correct? Presentation can be done like this. Mistake. Mistake can be in the form of disclosure. A mistake can be in the form of disclosure. Suppose I'm having a court case pending against me. In my company, on my company, there is a very big pending case. If at all the case was successful on the other party, I have to pay 25-30 crore damages. If I don't disclose that to you when I'm selling my business, what will happen? Will you be at loss or not? If I don't disclose is also a misstatement. You see, misstatement. Statement means what? Stating something. Misstatement means what? Stating something wrongly. If I have some big liability and if I'm not disclosing that, it's a negative form of misstatement. Whatever mistake is there, whatever problem I have, I'm not disclosing. Non-disclosure is also a mistake, right? Misstatement can be in the form of disclosure, presentation, classification, amount. So now you see the definition of misstatement. Misstatement means a difference between amount, classification, presentation, disclosure of reported financial statement item and amount, classification, presentation, disclosure that is required as per applicable financial reporting framework. Easy to understand. So no need to remember. If you understand, you remember naturally. That's it. Next. So that's misstatement. Now tell me, in balance sheet P&L, these mistakes will happen, no? Commonly. Will it happen intentionally always? Always mistakes will happen in the financial statements intentionally. Or always do they happen unintentionally? Anything. Misstatement can be intentional or unintentional. How auditing subject is calling them as intentional. If you do a mistake, it is not mistake. It is fraud. If you do unintentionally, it is called error, which is difficult to identify. The person who is doing fraud, will he do in such a way that he can easily be caught? He will do fraud so that in such a way, it will be difficult to trace. So generally the person doing fraud, intentionally he do that. Obviously he want to hide at any cost. He will never make it reveal. So he will manipulate everything like that. Detecting fraud is very difficult. Error. The person who did the error, do he has knowledge of the error? The person himself doesn't know that he did fraud, that he did an error. So he himself doesn't know. Now tell me, when a person who committed error unknowingly, can he hide it? How can I hide it? The fact that I did a mistake, I don't know first of all. How can I hide it? So I can't hide it. If something is not hidden cleverly, generally identifying that is easy because nobody is hiding it. Correct? So there are two types of mistakes, fraud and error. With this, fundamentals is over. So the person conducting the audit, we call him as what? Auditor. Auditor can be who? Auditor means who? Generally, all of us will be a chartered accountants. After that, some of us will go for industry. Some of us will open up practice. Getting it? Practice means what? You open up an office, take, accept clients, you are the auditor. Now tell me, how many of you are in articleship already? 5 or 10? Hardly. Okay. Now tell me, whenever in your office, no. When a company client is asking you to do audit, only the CA partner, he is alone going for conducting audit. Your article, no. You are also going to do audit. In fact, major work you only do. Correct? And you will get 6,000, 7,000 stipend. And principal will charge 7 lakhs audit fee. Correct? And he will pay you 6,000 stipend for the 1 full month. Getting it? So, his auditor means who? Only, not the partner. The partner, my manager, my articles, everyone is called as auditor. Auditor means what? Everyone from auditor office is called as auditor, but not peon. Yes or no? Whoever is working on the financial statements for audit, we call him as auditor. Now tell me, we are accepting one work from client. What is it called as? Contract. In profession, we call it as engagement. Ring exchange kadayadu. It's an engagement. Getting it? Engagement means what? He is engaging me on an assignment. Yes or no? Engagement plus assignment. Engagement. Getting it? So, he appointed me as an auditor and I'm working on it. Now, I am not going individually. Me and I'm taking along with me some team on this engagement. We'll call as engagement team. I am the partner. My manager is there, who is also CA, but he is my employee, not my partner. He is also there to monitor you. And my articles were there. All of us are called as engagement team. Auditor means members of engagement team. But tell me, when something comes for answerability to SEBI, answerability to RBI, can I tell my article to go and answer? Who will come when it comes to responsibility? Partner. Who will sign the balance sheet ultimately? Partner, engagement partner. I am only taking their help just for the sake of my, because their articles, I need to train them, no? Just for that I am taking their help. Getting it? They are not responsible. They are only helping me. Ultimately, client appointed whom? Auditor. Able to understand? So this is fundamentals syllabus. Next, we need to discuss nature, objective and scope of audit. Next, we need to discuss nature, objective and scope of audit. So with this, fundamentals session is completely done. Clear? So now the actual chapter is nature, objective and scope of audit. This is what the first chapter I think in your institute book. Getting it? Now this chapter, if you look at, we divided this chapter into 4 parts. First, some concepts of auditing we are discussing. Then we will be discussing about how to accept the audit. Then we'll be discussing what is independence, what is relationship with other subjects. Then we discuss about SQC principles. But we will not be discussing SQC now, we'll be discussing later. Okay, now. So, first one, what is an audit? Explain the points which an auditor has to satisfy himself before expression of opinion. Now, what is audit definition? We have seen already. What is purpose of audit? Why audit? Why audit? No, I am not asking what is audit. I am asking why auditor? Because somebody is certifying Tesla documents, I am having confidence. What is auditor is doing? He is increasing my confidence level. Auditing enhances degree of confidence of user of financial statements. Why my confidence is increasing? Because it is verified. How are they valid? Are they accurate? It is verified by independent, unrelated, competent person. Able to understand? That's the purpose of audit. Next, now tell me, you are the auditor, right? You are checking books, balance sheet, P&L, right? What points you will check generally? There are so many things that we need to check, but generally as a points, what will you check? Will you check Schedule 3? Which means, will you check applicable financial reporting framework? Do we check accounting standards? Do we check, whether background invoices, documents, proofs and all? Company said, I have land worth of 1,000 crore, factory cost, plant and machinery. Okay sir, thank you, very good. Will you say that? Show me documents, title deeds, show me amount paid, show me bank statement. Will I verify or not? We will verify supporting documents, correct? Now company is depreciating plant and machinery. Depreciation, company plant and machinery, 100 years life. What will you tell? If 100 years life is used by a company, what will you say? How come it will come for 100 years? Suppose company purchased air conditioner, life for 50 years. Will AC work for 50 years? How many years it will work? Hardly 10 years. Correct? If company uses 50 years as life and calculated depreciation, don't you question that? Which means accounting estimate. Accounting estimate. Is it genuine or not? Don't you check it? Now company is depreciating company is following closing stock valuation methods, LIFO, FIFO, something they are following. I asked the company, sir, how do you sell the goods, sir? Sir, recent one the goods, whatever recent report, that we will sell it first. We will always make customers latest stock available. Which means company should follow which method of inventory valuation? LIFO, but company is following FIFO. How they are doing business and what they are accounting in the books, is it matching? Substance over form. Both should be same, no? Whatever I do in business, it should reflect in my books of accounts. So if company is following FIFO, where LIFO is the style of business, don't I question it? So do me, which means I need to question accounting policy. Correct? Huh? So see how many things I need to verify. I need to verify applicable framework. I need to verify accounting standards. I need to verify accounting estimates. I need to verify accounting policies. So many things I need to verify. I need to see background transactions. And tell me, between balance sheet, P&L and books of accounts, should they match or can they mismatch? Should they match? Balance sheet, P&L is a result of books of accounts. Books of accounts means journal entry. We post it to ledger. Then we post it to trial balance. Then from there we prepare P&L and balance sheet. Obviously, if I change something in books of accounts one journal entry, my balance sheet P&L will affect or not? Obviously, balance sheet P&L should be in conformity with the books of accounts. So I should check books of accounts, financial statements, whether they are matching or not. Whether journal entries, purchases, sales, are they having supporting proofs or not? Correct? That is the point which we need to consider. Whether financial statements are in conformity with the books, entries, transactions supported by evidence. Can a transaction have duplication? What is duplication? Twice or thrice? Duplication means what? Twice or thrice? Any number of times. More than once is duplication. Getting it? Can they omit something? Can they ignore some information? Can they pass dummy transactions? We should check, no? Next, and see that financial statements information is clear and unambiguous, and see that amount, classification, presentation, disclosure are as per accounting standards. See that assets and liabilities are true and fair. Correct? Or 4 points they may ask you in exam. They'll ask you like this question. Write about what is the definition of audit and purpose of audit, and what are the 4 points the auditor shall consider before expression of opinion. Before expression of opinion. Tell me, I give opinion. What will I give opinion? And what? I will have to tell whether balance sheet P&L, numbers, classification, presentation, disclosures, whatever balance sheet P&L is containing, are they right or wrong? That's what my opinion. Correct? Are they right or wrong? People appointed me for what? They want to know, is it right or wrong? Hey, we all lakhs of people gave so many crores of dollars to Elon Musk. He invested in some rocket, space science, something. And after 1 year, he came and showed me, this is the result of the fund, whatever we gave. We all gave $1 billion money. And this is how he invested. This is what he's claiming. How do I know it is correct? I sent one competent person. I sent one unrelated person, a chartered accountant, a certified public accountant I sent. He verified everything and came back and told me, hey, he gave some statements, to all of you after 1 year. The statements are correct. You don't worry. In the statement, what it shows, company is having this much of profit. Company is having this much of turnover. Company spent this much. So they showed so much. My money you took and spent on so many things. Whether it is right or not, whatever you are mentioning is right or not, I want to know. And auditor came and certified. So opinion means what? Opinion is of 2 kinds. Either you may have a positive opinion or you may have a negative opinion. So before you give opinion, what points you will check? Suppose I sent one auditor, what he should check? All these points he should check. Are you getting it? Now tell me, these points, are they inclusive or exhaustive? Inclusive. There are so many things that you should do. Few points I gave you. There are so many things that you should verify. Few points we explained here. Inclusive list. This points is inclusive list. Next. Now tell me, that auditor went and came back. Hey, you got balance sheet P&L right? I verified everything is correct. Does it mean company future is excellent? No. Am I giving guarantee about the future of the company? Or am I talking about Elon Musk intelligence? You appointed me for what? You gave money to him. Yes or no? He said to you, he gave back you 2 documents, balance sheet P&L. Hey, your money is invested here. See, this is a plant, machinery I purchased. This is a factory I constructed. This is the sales I generated. This is the profit. And out of that, some dividend, take it, enjoy. This is what he told you. You are having doubt. Hey, whatever he is telling, right? You are having doubt. So he appointed me. I went and came back and told you everything is right. That's it. How can, I am giving opinion on past. Whatever event already happened, past financial data, historical financial information. I'm giving opinion on that. Getting it? How can you say it's a guarantee about future? How can you say it is about his efficiency? So is my audit opinion talking about management efficiency, management effectiveness? No. I'm not talking about company future. I'm only talking about past financial data. Is it right or wrong? Balance sheet P&L contains information about future or past. Historical means what? Past. Historical means not 17th century. Yesterday whatever happened is also called as historical. Understood? So that is what implications. The auditor opinion does not guarantee future viability, does not guarantee efficiency and effectiveness of management. What is efficiency? What is effectiveness? What is the difference? Effectiveness speaks about result. Efficiency speaks about process. Are you getting the point? Efficiency speaks about process. Effectiveness speaks about result. Which is most important ultimately? Result is most important. Ultimate effectiveness is important. Now how should we achieve that best result? Most efficient manner. Getting the point? So how the Reliance Industries board of directors, Mukesh Ambani, how efficiently he is working, how effectively he is bringing the company into the future. Is my opinion talking about that? Is my audit opinion talking about Mukesh Ambani effectiveness? No need. Getting it? So my audit opinion is purely on historical financials, whether they are reliable or not reliable. That's it. Clear? Everyone. Next. What is objective of auditor? We already finished this. The objective of the auditor is to obtain reasonable assurance. Sir, what is reasonable assurance? I'll discuss later. Getting it? Whether the financial statements are free from material misstatements, whether due to fraud or error, thereby making you express opinion whether the financials are prepared as per financial reporting framework. Check it out. Then give a report. Then give a report. How do you give your opinion? Orally with Maiga. We'll give a written document. That is called audit report. That's it. So this point is explained under SA 200. There is a standard called SA 200. The standard heading is this: overall objectives of an independent auditor and conduct of an audit in accordance with the standards of auditing. That's it. Clear? Scope of audit, principal aspects to be covered in audit. You will understand only after you understand the entire subject. Before reading the entire subject, you should not read that. Getting it? Scope of audit. What audit covers, what audit do not cover. What are the aspects to be verified in audit? You should verify internal control system. You should verify accounting system. You should conduct risk assessment process. These are all, we have separate chapters. Suppose you see principal aspects of audit. Auditor has to study internal controls. What is internal control? We have a chapter. Systems and procedure. Nothing but internal control element. Correct? Arithmetical accuracy. How to verify arithmetical accuracy? Items of financial statements we have. How to verify authorization? Again, it's a control. Accounting principles we should verify. Getting it? Overall review, balance sheet P&L, verification of assets, verification of liabilities. How to verify assets? How to verify liabilities? Items of financial statements we have chapter. Yes or no? Finally, reporting. We have a chapter called audit report. If you want to understand this entire question truly, not sentence meaning, but concept, you need to understand remaining chapters. Clear? I think by this time you might have understood the difference between sentence and concept. Next. Now, tell me, is audit compulsory for everybody? Right now I'm taking class. You all have paid little fee. So no, some fees you have paid. And I incurred some expenditure. Is audit compulsory after this class? Is audit compulsory for me? Is audit compulsory for every type of business? No. Depending upon the law applicable to you. Depending upon the law applicable to you. How you registered your business. How you registered your business. You know, there is a hotel called Akshayam, you know, here. Alvapet, nearby. There's a hotel called Akshayam. It's a good restaurant, decent restaurant. What is Akshayam legal form, you know? It's a partnership form. What is it? It's a partnership form. You know, Barbie Nation, it's a listed company. What is it? It's a listed company. You know Sharavana Bhavan? I think it's a sole proprietary concern. It's a sole proprietary concern. And you know Lalita Jewelry? It's a private limited company. You see, I'm showing you different businesses. They're all businesses actually. நம்ம சாப்பிட போவோம் சரவணம் இது பார்ட்னர்ஷிப் கம்பெனினா உட்காந்து இட்லி சாப்பிடுவேன் இல்லைன்னா வேணாம். Do you say that? No, right? I want idli and I want sambar in that. And Saravana Bhavan is special for that. And I go there. How they are incorporating their business? How do I need? If at all Saravana Bhavan is a company, do you sit on table and keep a plate on the chair and eat? No, right? Business is different. Legal form is different. Understand? Correct? Huh? Now, there are only two forms of organization. Only two forms according to me. Either I'll do individually entire risk. Or me, another person, or more than two. Two or more than two persons, we will form as an association and do the business. Only these two ways we do the business. Either தனியா நான் மட்டும் பண்ற business, இல்லனா குரூப்பா சேர்ந்துட்டு பண்றேன். Only two reasons. That's why only two forms. Either individually you do business or group of people will do business. If I do individually, sole, single. Yes or no? Single, kingle. Okay, so only individually I do. Or association I'll do. Association of person. We call them as what? Association of person. AOP means what? Association of person. Now, whatever the way we do we register? Is it compulsory to register under company law? Not. Is it compulsory to register under partnership law? No. Is it compulsory on LLP? No. Now, Lalita Jewelries, no. They're registered as a private limited company. Getting it? Saravana Bhavan have not registered as a private limited company, maybe a sole proprietor. Akshayam registered under a partnership form. Barbeque Nation registered as a company, public company, went for listing, publicly traded share. Are you getting the point? But all of them are actually selling what? Food. Some are vegetarian, some are non-vegetarian, some are mixed. Correct? So, they're all selling food actually. It's a restaurant business. But the form in which the business registered is different. Now, if you register your business under Companies Act, your business organization is called as company. If I register my business organization under Partnership Act, I'm an AOP. Then it is called as partnership form. If I register my business organization under LLP, it's called as LLP. If I don't register my organization, but multiple of us are doing together, partners, but we didn't register anywhere, it's not partnership firm, it's AOP. Unregistered partnership firm is not correct word. Unregistered partnership, can I say unregistered company? Only if you register under Companies Act, it's a company. Without registering under Companies Act, can I say unregistered company? Correct. Same way, unregistered partnership is also not a proper terminology. It's association of person. Me and my friends associated. Are you getting it? And if I only do single person, I'm a sole, single owner, sole proprietor. Getting the point? Now, depending upon the law applicable for me, in some law, business must be audited. In some laws and regulations, business not required, doesn't require audit. Suppose if I don't register anywhere my business, AOP, no law applicable to me. Audit is not compulsory. Company, if I register my business under Companies Act, it's a company and registration is, audit is compulsory. Companies Act says every business registered under my law, every business which registered company license must require audit. So, depending upon the law applicable, the audits are two types. Statutory audit, non-statutory audit. Able to understand? Now, statutory audit means audit mandatory under law for the time being enforced. Non-statutory audit, nothing but it's also called as voluntary. Non-statutory means not compulsory. Audit is not compulsory, but still voluntarily I'll appoint auditor. I want to know about my business. Getting it? Because my business is very big. Saravana Bhavan has so many stores. Saravana Bhavan has so many hotels, so many restaurants, so big. I want to know whether everything is working fine, every employee is working fine, every sale is accounted. I want to know voluntarily. I appointed voluntarily some auditor. It's called voluntary audit. Yes or no? Now tell me, in statutory audit, who will decide the framework for financial statements? The law will decide. In non-statutory audit, who will decide? Client will decide. Yes or no? In statutory audit, auditor must be unrelated person. Independence of appearance is compulsory. Companies Act says that. Whereas sole proprietor, can I appoint my brother as my auditor? It's voluntary I'm doing. Who? What problem? See, if I appoint my brother, no. If you want to say violation, what I violated? There is no law. Non-statutory audit means no law. I am voluntarily calling my brother and appointing him as an auditor. He is verifying. My wish. It's my choice. I'm not doing as per law. I'm doing voluntarily. Yes or no? Able to understand? So that's the difference between statutory. So terms of engagement. What is it? Terms of engagement between the auditor and the client. In case of statutory audit, the law will fix. Not the client, not the auditor. The law will fix. The client and auditor can have additional terms. But can it be contrary to the law? Exactly. So the auditor should obtain the terms of engagement from the client which is in line with the law. It should not be against the law. Getting it? And here the auditor is highly independent. Whereas non-statutory audit, it is important for obtaining instructions in writing. It is always highly recommendatory in a non-statutory audit to get engagement letter. It's okay. Engagement letter I have not yet started. We'll discuss later. Getting it? Now, so need for the terms of engagement I'll speak later. Next, what is the benefit for voluntary audit? Is audit benefits only for commercial organizations? No. Suppose I want to give donation to one charitable trust. Okay. So if at all some auditor has been appointed, if at all he do audit and says the trust is really helping the poor people, whatever expenditure they are showing, spent on poor people, spent on treatment, health treatment of poor people, spent on poor people education, like that they are showing so many expenditure. Sir, we raised this donation, we spent everything honestly here, like that they are showing and asking me donation. If at all it is audited, will I have a confidence or not? So not only investment, when I am donating also I want to know whether they are showing authenticity. Yes or no? So in voluntary audit also we are having so many benefits. So that is what they are giving here indirectly. Able to understand? See, your reading style should change. You should read carefully. So audit is a special reference is necessary for non-profit institutions. Most of these have some rules to govern their affairs. Generally, a provision about requirement of audit is inserted in most of these non-profit entities. They register under some trust act where audit is not mandatory. But in the trust deed, every business organization will have deed. Tell me, when two or more than two of us, we all together started a small business. Tomorrow if some dispute comes, it will be a problem. So what do we write today itself? Let us write on white paper some terms and you sign, I will sign. We will keep this at some third party. Yes or no, this letter. Tomorrow if any of us have dispute, we will go there and he will resolve. Correct? That is the reason why we are writing written terms and conditions. For trust also, same way deed. Partnership firm, same way deed. For company, what is the deed? MOA, AOA. They are nothing but deed of, the rights and duties of people incorporated it. Getting it? So, any surplus can only be used for the objective. Education institutions, hospitals, they will also have some internal rules for audits, for getting grants and all. So that is why, even though there is no mandatory audit under law, their internal rules and regulations say audit is compulsory. Partnership Act, audit compulsory? No. But if partnership deed says audit must be done every year, we must follow or not? Now, audit of trust, this itself can be asked as a separate question. Audit of trust itself, write about audit of trust. They can ask you a separate straight question. Getting it? See, at every concept I'm discussing, how a question can be asked, I'm mentioning. Getting it? Audit of trust. By the way, this is colored notes which I'm using. Related to this, parallelly, you are having a black and white notes, which you can take printout also. If at all you have not, you can take a printout. There's an application called Rest for CA and CMA. Getting it? So in that application, white color logo, Rest for CA CMA, you'll find a logo, white, Play Store. You download that app. In the main menu, you go CA Inter November 2022, May 2023 attempt. Okay, which is an edition released in July. Recent July 2022, I released an edition. So that material will have 3 parts. All the 3 parts you download. If you want, you can take a print. That's a very reliable book. You can ever read. Getting it? Next. So audit of trust. Now, trust means what, first of all? Trust means, suppose, trust can be a private trust or public trust. Private trust means, suppose, there is a father and children, getting it, or grandfather is there. Maybe the child's parents, they were expired. The grandparents is there. He's having so much of net worth. You might have seen this kind of movie. The child will inherit the entire, he's the owner of the entire that net worth. But that fact the child doesn't know. Correct? Have you seen these kinds of movies? Now the child will get only after he became major, only after he fulfills some dreams, he will get the entire empire. Arunachalam movie, Yes or no? Arunachalam will get the entire trust of Simhachalam only after he complete, only after he incur, only after he spent 30 crore in 30 days. This is what Simhachalam executed a trust. Simhachalam trusted whom? Rangachari. And the movie landa all Rudraksha poya umela edikilla signature podumbo. Yeah, Ramba father is Simhachalam. Sorry, he is Rangachari. So Simhachalam has trust on Rangachari. Executed trust deed. No, this is what private trust means. Yes or no? This is what private trust. So what Simhachalam will instruct Rangachari? Tomorrow my son Arunachalam will come. That time, put him the condition. That is the condition of the trust. What the condition? If he spent 30 crore in 30 days, at the end of 30th day, no property should be in his name. Single rupee should not be left out. Entire money he should spend, 30 crore. Only if he is able to spend 30 crore within 30 days, he will be eligible to spend the money later on. It's not difficult. Those days, see, now at least you can spend 1 crore one day easily. 1990s pa. How to spend 1 crore? It's impossible in a day. Getting it? So if at all we give him that kind of task, he will be eligible to spend the money later on. He will save the entire net worth later. That is how the movie was. They'll give one cigarette example. In the same movie, they'll give one cigarette example. This fellow Simhachalam will be, he's habituated to smoking. Okay. And one day his father caught. His father didn't punish him. He just threw him in a room. Almost some 100 packets of cigarette he kept. By morning, you should complete all the cigarettes, he told. He said he loves cigarette. So this is the condition his father put. So he thought, oh my God, luckiest day in that, he felt. Night after 2 hours of, continuously smoking, he was irritated with the, entire cigarettes. By the morning, he decided the next day onwards he should not use one cigarette as well. So, because naturally that hatred will come. Anything that we overuse, we naturally, later we will be reluctant. Our body will not support it. Exact logic. So private trust means exact cinema. In that they will show the concept of private trust. Getting it? Private trust means what? It's a trust between, trust deed. Trust means trust deed. Trust means what? Nambika. Getting it? Out of the trust I'm having on you, I'm executing deed. Take this empire. Protect this empire. Once my child comes, tomorrow hand over him after he satisfy all these terms and conditions. Now, I gave you so much of empire. No. Every year, this fellow on whom I trusted may do fraud. No. I put a condition. This trust must be audited. That is called private trust audit. Now, likewise, we have public trust. We have public trust where multiple people involved. Most of the public trust audit is compulsory. For most of the public trust, audit is compulsory. Now, how these trusts are governed? Indian Trust Act. There is a Trust Act, is that the Trust Act governs. Now, Trust Act, no. Does it govern private trust? No. Private trust is their own this thing. Trust Act will not involve. But all public trust must be audited. Why? Public money is involved. That's what. Okay. The trust may be public trust or private trust. They do business or they may do something else. There are generally two types of beneficiaries. Reminder, tenant for life. Reminder means what? If you spend 30 crore in 30 days, entire 3,000 crores is yours. Reminder, he will become. Getting it? Tenant for life. If you want 30 crore, take 30 crore and enjoy. Ignore 3,000 crore. 3,000 crore will go for charity, all that. Getting the point? If you want 30 crore, take 30 crore. You can enjoy 30 crore throughout your life. Getting it? Then tenant for life. Tenant for life means what? Whatever property you can only enjoy, but you can't take it. Getting it? Happily enjoy. Take this car throughout the life. The next 10 years you will use it, but you can't sell it. Use it whatever the way you want, but you can't sell it. Means tenant for life. You can only use it. When நம்ம building rent கொடுத்தோமோ tenant, அவன் sale பண்ண முடியுமா? We can use it. Tenant means what? We only give usability rights. Remainder means what? After agreed period, you take it. It is yours. Do whatever you want. That's what exactly tenant for life remainder means. Understood or not? Getting it? Generally, in trust to know, why audit is important? Because who are the trustees? Widows, minors. In Simhachalam movie, who is the trust? Who is ultimate beneficiary? Arunachalam is beneficiary. Getting it? But Rangachari discovered him after he became major. But logically, you need to protect him from the minor. Getting it? Who cannot understand the accounts? Who cannot criticize the accounts? They don't understand anything. So audit is compulsory. So audit of trust is non-mandatory. Yet most deeds contain audit point. Private trustees like Rangachari recognize the advantage of audit for their own interest. Tomorrow if something goes wrong, everyone will blame Rangachari. Correct? Yeah. Since any mistakes in accounts for which they might be personally liable will be pointed out. That's it. Able to understand? This question can be asked as, write about audit of trust, 6 marks question they may ask, or 4 marks question they may ask. You have to write these points. Understood or not? And any of this sentence can be asked as a correct or incorrect statement. Clear all of you? Next, advantages of audit. Simple question I'm not doing. Okay. Next, there are limitations in audit. I'll come back to this limitations point later. Then, what should be the quality of an auditor? Auditor eppadi irukano, ava lakshanam eppadi irukano. In Tamil also we'll call lakshanam. Quality na lakshanama. Oh, nice. Okay, fine. So, what should be the quality of an auditor? What are the qualities? Qualities are broadly 2 types. Personal qualities, work-related qualities. Work-related qualities are called as professional or technical. What are they called as? Professional or technical. In exam, they'll ask you, write about professional qualities, write about technical qualities. You should write like this. Auditor must have knowledge of accounting. Auditor romba nalla sir, ana accounts edu theriyadu. So is it good? Is it okay if at all the person is good? No. So knowledge of accounting, knowledge of law, knowledge of financial and management, and above all, without understanding client business, can you do audit? Now Reliance company audit panni vandute. Example, I did audit of Reliance company and came. You asked me, sir, what you did? I saw only accounts. What the company? I don't know anything. Tell me, without understanding business, how can I do audit? Now you may have a doubt. Sir, why should we understand business, sir? We are dealing with accounts, sales, purchases and all. See, I went to the go down. I saw whenever they purchase old stock, first they are selling it. Latest whatever they are purchasing, they are keeping it in the last side of the go down. So that old stock they are selling it first. Now, which method they are following? Only when I saw the business, I understand FIFO method they need to follow for valuation. Without looking at the business, how can I understand FIFO is correct? Logically correct or not? Now tell me, for a furniture company, furniture fixed asset, current asset. For a furniture trading company, whatever chairs, tables they are purchasing, is it stock in trade or fixed asset? For a normal company, what is chairs, tables? So, if I know nature of business, what business they are doing, then only I can properly classify is it fixed asset or current asset. Correct? Huh? Without understanding what they are doing, how can I verify the financial statements? For one company, what is capital expenditure? For another company, it's revenue expenditure. For one company, what is big amount? For another company, it is small amount. For one company, what is current asset? For another company, it may be a fixed asset. So if I have to understand the accounting process correctly, I need to first understand what business they are doing. For a real estate company, purchase of land is an inventory. For a normal company, purchase of land for business purpose is a fixed asset. For value appreciation is a investment. Only if I understand why are they doing, what business they are doing, I can understand the accounting process. Otherwise, why will I understand? Easy. So I need to understand knowledge of client business. All the 4 points compulsory in exam. They'll ask you, write about definition of audit and what qualities auditors should have. Getting it? Auditor is concerned with reporting on financial matters of the business. Financial matters inherently are set out. Problems of human fallibility of tendency of generally preparation of financials involves errors. Getting it? Hence, there is a need for certain qualities. If you want to discover an error, first you must know how error can happen. So these technical qualities. Apart from this, there are some other personal qualities that you must have. You must have basic human qualities. The manishiyaapa and the madri kelpanga, getting it. So you must have certain basic qualities. What are they? Tact. You must be tactful. You must have caution. You must be careful in doing the work. You must be firm, means strong, bold, confident. You must have good temper. Client. Getting it. Suppose a client has wrongly valued. Okay, if you speak like this, what happens? The client will never appoint you again. You must have good temper. You must have integrity, means what? Honesty and discretion. You must know how to take a decision. Industry, you must have knowledge. You must know how to judge. You must know how to, is it right or is it wrong? Is it correct way of accounting? They're doing business FIFO method and they're not following FIFO method in valuation of inventory. You must have good judgmental skills. You must have patience. You must be having clarity. You must be reliable. Client pon on a bank audit por namalla. We go for bank audits and we will be given cash physical verification. Manager pakra on the side 2,000 rupees board. You must be reliable, no? Honest, no? These are all personal qualities. Now tell me, is this qualities required only for auditor? Are these qualities required for doctor? For every profession, right? These qualities are given by Code of Ethics. What is it? Code of Ethics. Code of Ethics is given by whom? Institute of Chartered Accountants of India. But remember, the Code of Ethics is there for every industry. You have seen Arjun Reddy movie, right? Maybe Kabir Singh movie, right? Or maybe some other movie, right? The doctor will be suspended in some movies. Why? He violated Code of Ethics, they'll say. What violated? Because he drank, kudichit operation paniyach. Operation panna correct irukka adu paaru. Na kudichitena kudukka bole anna. Can he claim like this? He can't. Why? Because if at all it went right, everything is fine. What if it goes wrong? So there is a code of ethics for engineers, there is a code of ethics for doctor, there is a code of ethics for lawyer, there is code of ethics for auditor. For every profession, including teaching, everyone has certain code of ethics. That is called moral code. Able to understand? So qualities of auditor. Here the moral code is fixed by ICAI. For doctors, the moral code is fixed by Medical Council of India. For lawyers, moral code is fixed by Bar Council of India, like this. Understood or not? So moral code means what? Ethical requirements. What are they? Ethical requirements. Auditor must be integrity, honest, sincere, straightforward to the professional work. He shall not be. Don't associate with reports, with statements, communications, other information which is materially false, which is provided recklessly, where there are omissions due to misleading. Where there are omissions and they could be misleading. Can you sign these kind of documents? You must be honest. Don't sign something wrong. Don't sign something which is prepared recklessly. Correct? Next, objectivity. What is objectivity? Unbiased. When you're doing the work, ignore what relationships you have with him. Getting it? Unbiased. Getting it? So you should be fair, without bias, without prejudice, impartial. You must be impartial. When I'm teaching the class, I must cover every student's interest. I must be impartial. Without bias, I should clarify your doubts, everyone. Yes or no? Next, confidentiality. Auditor, no. You are looking at the financial data. Not just balance sheet P&L. That is public document. But you are going inside the company. You are saying what is happening in the company. You saw books of accounts. You saw so many confidential documents. Can you leak it outside? You should not. So, should not disclose information collected by him during the course of professional work to any third party. But if client permits me, can I disclose? Without authority from client, don't disclose. But if client tells you, okay, no problem, sir, disclose, I can disclose. And tell me, beyond all this, what is most important in order to do audit? You must know how to do audit first. Getting it? You must have professional competence. You must be careful in doing the work. Professional competence means it requires auditor maintains knowledge and skill at the level it is required. Yes or no? Not only that, due care means what? Act diligently. Act in accordance with standards. Diligence means what? Responsibility to act carefully, thoroughly, timely basis, in accordance with the requirements of the work, requirements of the engagement, requirements of the assignment. Clear? Now you're able to understand all this. Have you all read this previously? Next, above all, one more thing, professional behavior. It is also ethical requirement. Getting it? So the auditor shall comply with laws and regulations and avoid any conduct that he knows and should know might decredit the profession. Don't bring disrepute to the profession. Getting it? You know, for all this, if at all you violate, we have punishments. All the punishments we will learn at CA final. We have something called Code of Ethics, professional ethics. You know, suppose no, if a CA, if at all I'm alcohol, if at all he drink alcohol and make an accident, and at the night, especially police were caught him, and media person also there. Mr. Caramharsha made an accident. They will not write like this. A chartered accountant made an accident. Correct? Huh? This is how they are writing. A doctor made an accident. So only when the word is used, professional word, then only that use caught attention. Now tell me, am I bringing disrepute to the profession or not? Even if you do bring this kind of disrepute, I say will suspend your membership. You know that? Sir, the personal, it doesn't matter. Newspaper highlighted your profession. Why you disclose that you are a CA? Correct? Na disclose pannala sir. In car pinna sticker irukku. Adanal the sticker poda kuda. Okay, va? Fine. Next. All of you understood? That's it. So, with this, ethical requirements also we understood. Next. Short note on skepticism. Nothing but. So, what is skepticism? Many of you have read this. Have you felt this? What is skepticism? Skeptic. Skeptic. Getting up. Skepticism means what? Questioning mind. What is it? Questioning mind means I should question everything. Suppose simple logic. See, this is skepticism is not something we learn here and apply. It is something we already have inbuilt. Right now, whatever I'm teaching, are you correlating in your mind with what you learned? If I teach something wrongly, immediately correct? How are you able to find that something, if I teach wrongly, how will you find out? Because you're questioning indirectly whatever I'm teaching. You're not only listening. You are not only critically assessing whatever I'm delivering, you are indirectly checking it with the material you are having. Getting the point? You are alert to know throughout. Skepticism means that. Being alert. Getting the point? Careful in verifying the evidence that we are getting. Here you are carefully analyzing whatever I'm teaching. So that is called skepticism. So professional skepticism means being alert. What are the examples? They'll ask you. Write about professional skepticism. Give 3 examples. 3 marks question they'll ask. This is one. Audit evidence contradicts with other audit evidence obtained. What audit evidence contradicts with other audit evidence? When I go and saw the go down, first old goods are sold. Whatever new goods that are coming into the godown, they are keeping at the back side. Old one only first they are delivering. So which means I was thinking, okay, client is following FIFO method of stock. So his valuation is also FIFO. I saw came the books of accounts. They are following LIFO method. Now tell me, books of accounts are showing LIFO. Reality, what is happening? Don't you be alert in this case? Will you leave it? It's okay. Don't you be alert? So being alert. When evidence from one source contradicts with another source or conditions that indicate possible fraud. Getting it? So the go down, CCTV cameras were not working. Security guard is not there. Definitely, when this kind of scenario is there, will you suspect something is wrong? Exactly. So, skepticism, is it necessary for throughout the audit? Yes. Why it is necessary? To reduce risk of overlooking. You should not casually go into the audit. You should be careful. Careful na, serious normal alert mind. It's a mindset. Getting it? Don't believe anything blindly. That is what the point is. Don't believe any blindly. If client says something, sir, we have made this much profit. Don't doubt him. Keep your doubt inside. Really solo kuda thiruppi. And you should apply skepticism only in professional context, not in the personal context. So when a client tells you something, professional context, you should question, is it right, is it wrong, like that. Get it? Don't believe it. Ask for proof for everything. That's it. Now, by the way, tell me, should I doubt the client always? Should I always doubt? I mean, should I look at the client as a thief? No need to suspect. But if you come across any suspicious transactions, any suspicious elements, then investigate. So, the auditor may accept books of accounts as genuine unless the auditor has reason to believe the contrary. Nevertheless, auditor is required to consider reliability of information to be used as audit evidence. Whatever client is giving you the data, always check, is it reliable, is it accurate or not. Getting it? If at all doubt, or if there is a possible fraud, investigate. Getting it? And determine what modification or additions you have to, what additional work you have to do to resolve the matter. Getting the point? Next. The auditor cannot be expected to disregard past experience of honesty and integrity. This sentence can be asked as a question. Comment. What you will read if this sentence is asked. The last sentence. The auditor cannot be expected to disregard the honesty and experience and integrity of the entity's management and those charged with governance. Full stop. Explain 4 marks. What? You need to write nothing but professional skepticism answer. Look, question will not be as you expect. Question will be always unexpected. They may pick this particular line and ask you to comment. What will you write? If you never say in this line, what will you write? Understood my point? So this is skepticism. Because of skepticism, I'll be careful in doing audit, all that. But remember, skepticism is not something I explicitly exercise. It is something implied in our system. Getting the point? Dog has a natural skepticism. Some unknown person, if it sees it, start shouting, yes or no, barking, yes or no. So it will not, that is natural. You know, skepticism is a natural element in every one of us. That is what called as common sense. Able to understand? That's something called as common sense. Then you must also have professional judgment. Professional judgment related matter is not there in the ICA material, but I only gave just for your understanding. Read it later. So that is professional skepticism and professional judgment. Then after that, we will have 220 related content. But before this, I have to finish inherent limitations of an audit. Inherent limitations of an audit. Now tell me, can I do audit 100%? Can I do 100% verification of all the transactions and balances? All the transactions and balances, can I do 100%? Means obviously, no. See, you take this one, Reliance Industries or anything. Reliance Industries Limited is having so many businesses. So many businesses. Under one company name only they have multiple businesses. See, Jio, they have a separate business now. But earlier, they used to have only one company, but multiple businesses they are doing. Why to that extent? ITC Limited. ITC Limited is having hotels business. Is having this, a foodstuff business. Biscuits, packets, all that, bingo and all that. They're having, cigarettes, tobacco business. They're having agriculture. They're having cosmetics. So many businesses they're having. Correct? Now tell me how many thousands, crores of invoices they will have. How many you will verify? ITC, you are the auditor for ITC. Some ITC turnover is some 2.5 lakh crore. This 2.5 lakh crore is coming from 10 or 12 businesses. Each business is having 100 and 150 stores across India. How will you verify them? Will you verify each and every invoice, each and every bill, each and every customer signature? Not possible. So what we'll do, how we will do audit? In sample. Based on sample, but are we giving opinion on the sample? We are giving opinion on the entire balance sheet P&L. But are we verifying entire balance sheet P&L 100%? We are taking only sample. Based on sample, we are giving opinion on the population. Which means, if I say everything is true and fair, absolutely everything is true and fair, reasonably everything is true and fair. First of all, I myself did not verify 100%. How can I say absolute opinion? How can I give absolute assurance? I can only give reasonable assurance. Why am I giving reasonable? Why not absolute? Because I have limitations. Because I have limitations. Can I overcome these limitations? Impossible. Can I sit and verify 100%? Impossible. But that's why they are unavoidable, inherent. Inherent means what? Unavoidable. These are the limitations which auditor is having, which cannot be avoided. It's impossible. Unavoidable limitations. And that's why the level of assurance that we are giving is only reasonable, but not absolute. Only in investigation, we will give absolute assurance. Audit versus investigation means what? How audit is different from investigation. 4 marks question they'll ask. Getting it? In investigation, we don't do investigation of entire financials. Suppose in purchases some fraud happened. They will appoint separate investigator. Sir, please come, detective. Please investigate. These are the staff. try to investigate everything and then give me a report. That's an investigation report. Now tell me, he will go in depth in investigation? Because for him only one work, purchases. Now auditor, can he do the same in-depth work like investigation? I am not investigator, I am auditor. I only verify sample, based on sample I'll give opinion. Now you may get a doubt. Sir, we are verifying hardly 1% out of 100. Based on that we are giving opinion. Why to verify that 1% also, sir? Didn't you get a doubt? Sir, why should we verify that 1% also? Why can't we verify 100%? Anyhow we are not verifying 99%. Only 1% we are verifying and giving. We are only saying it is reasonable, not absolute. Even after we do fraud, so many mistakes will be there, no? Do we discover all the mistakes? No, possible. Not, it is impossible. Now why are we doing audit, sir? Anyhow he is not discovering. Why? Something is better than nothing, no? Correct, huh? Something is better than nothing. Able to understand? On the same logic audit. Fundamental logic. At least if I give a reason, see, simple, ma. You are having a fever. Or we are having a fever. We will not die on the next day immediately. But still we go for a hospital. Just to get the confidence. Hospital pona and adhe tablet kudupa. Medical shop lo pona adhe tablet kudupa. 99% of the cases this is same. Only 1% exceptional cases only patient condition will be severe. But 99% of the cases, no need to go to hospital, but we can directly go with the medical shop and get. But still 50% of the patients will prefer to go hospital. Why? To get reasonable assurance. Correct? Exactly audit. Audit is like a medicine. Getting it? It's a medicine. The medicine can only, stop temporary all these things, but cannot cure completely 100%. It is you who have to take ultimate care. You'll give only a reasonable assurance. If that is also not there, think of the fraud levels. Like because of this much of verification and all going on independent regulatory, even if it is there also so many frauds are happening. If that is also not there, if nobody is coming and verifying, obviously in examination also, 50 students are sitting, only one examiner is there, only one valuation. For each student, one valuation shall be given, no? Valuation is in this line, that side line students are copying. If he is coming that side, this side line students are copying. Can you say, when valuation is remove panunga? Can you say that? Exactly, same logic. Getting it? We will not verify 100% absolutely. We verify at least reasonable. At least if somebody is there, we will act diligently. So now, there are many limitations. So how the standard classifies limitation? Nature of financial reporting, nature of audit procedure, timeliness of cost benefit analysis, and other limitations. These are the limitations. I'll continue post lunch. Getting it? Yes. So we'll continue after that because this will take some 5-10 minutes discussion. Then almost the chapter is major over. We still have few more topics. That's it. This chapter will be over. So are you all comfortable with the speed? All of you? That's it. Afternoon we'll start much more interesting topic. So we are actually discussing inherent limitations of audit, right? And what we understood is, no matter what, it is impossible for auditors to obtain 100% assurance. It is not possible at all. And the auditor can only get reasonable assurance, but cannot obtain absolute assurance. And the reasons are as below. The conceptual part I have already told. So just we'll look at the reasons. So one reason is nature of financial reporting. One reason is nature of financial reporting. Tell me, in the financial statements, we have so many amounts, right? Incomes, expenses, assets, liabilities. Are they 100% accurate? First of all, depreciation is there. It's an estimate. Correct? Provisions are there. It's an estimate. There are many elements of the financial statements which are estimates. Now, financial statements themselves are not 100% correct. Getting it? How come the auditor's report on that can be 100% accurate? Logica. The financial statements itself is not 100% correct. The financial statements themselves are not 100% reliable. So how come we give 100% assurance on the financial statements that they are 100% true and fair? Logical. So nature of financial reporting itself is a limitation. Getting it? Many items involve subjective decisions. Many items involve subjective decisions. There is a degree of uncertainty. When I say plant and machinery useful for 10 years, will it exactly work for 10th year and then stop? There is an uncertainty, right? It may stop at the end of 8th year, or it may go beyond 10 years. But some sort of uncertainty is there, right? See, when do we worry? When the uncertainty is very high. Then only we will be worried in audit. If accounting estimate is reasonable, that is fine. Air conditioner useful life 7 years they used. It's okay, it's reasonable estimate. Able to understand. Next, another we have a limitation is nature of audit procedure. The way we do audit. See, like in some cases, one way of audit procedure will give one type of evidence. Another way of audit evidence will give another type of evidence. Very simple. We have debtors or creditors. Everyone know external confirmation? Have you heard? Yes. What is external confirmation? Direct confirmation, third party confirmation. What is that? As on 31st March, in our client balance sheet, there is a debtor receivable from so and so suppliers. Sorry, so and so, agencies. Some 10 lakhs is there. We sent a confirmation letter. Sir, I am the auditor. In our client books, where I am acting as an auditor, we discovered that you are liable to pay some 10 lakh rupee. Please give me a confirmation whether you are liable to pay 10 lakh rupee or not. So I am exercising external confirmation regarding existence of the balance. There is a balance existing in my books of accounts. How much? 10 lakhs. Really 10 lakhs balance existing? Is really debtor outstanding? I want to know. I sent a confirmation. He replied, yes sir, we are liable to pay 10 lakhs. Now I got a reply. Now tell me, debtor confirmed that he is liable to pay 10 lakhs. Does it mean he will guaranteely pay later 10 lakh? Can I see here? I got a confirmation from third party. Yes, he is liable to pay. He also agreed. He agreed regarding existence. But is there any guarantee that do we recover in future? So the confirmation provides only regarding existence, especially in this example. But does it guarantee about recoverability? No. But in the balance sheet, we are showing it as an asset receivable. Yes or no? We are saying it is recoverable in future. But who knows whether it will be received or not? There is a limitation here, yes or no? So the level of evidence that we obtain, the nature of evidence that we obtain is only persuasive. What is it? Persuasive means we can only convince. We can only convince based on the evidence. Yes, there is a debtor. He also agrees that he has to pay. It will be recovered. But is there any guarantee that it will be paid by the third party for sure? Can we even verify that? No. That's another limitation. The nature of audit procedure, the method we follow sometimes may provide limited evidence, but it will not provide 100% dimension. 360-degree dimension evidence it will not provide. Are you getting the point? So, normal audit procedure may not be effective, especially if there is a fraud. Getting it? Fraud detection is not possible. And further, remember, do we discover, is it necessary for all of us to discover all the frauds and errors? Not necessary. So audit is not an official investigation, getting it, of the alleged wrongdoing. Accordingly, it is not, there is no legal powers like power of search and all for the auditors. They cannot go and do 100% investigation. There is no legal power given for the auditors basically. But remember, in Companies Act, we have right to inspect books of accounts. We have given power to search under Companies Act indirectly. But that power is useful for us only for the purpose of audit. So the nature of audit process is determined by professional judgment. Whether debtor balance is there or not. I want to know as on 31st March company showing this much debtors outstanding. I want to know really that much there or not. So I sent a third party. I directly made a call. He confirmed that he has to pay. Now here, what is the audit process I did? External confirmation. By applying judgment. Now here tell me, I only got confirmation that he has to pay. But later, will he pay or not? Who knows? These are all the limitations. Able to understand. So, look at. After I verified all the financial statements, I told people that everything is true and fair. Does it mean tomorrow the debtor will guaranteely pay? This is limitation. Look, take audit opinion only as reasonable assurance. Don't take it absolute. He is not guaranteeing about future. Based on past, he verified something and he is giving opinion. Next. Now, what is audit versus investigation? This itself can be asked as a separate 4 marks theory question. Getting it? So, they'll give you here, they'll give you the statement, the audit is this statement they'll give you and ask you to comment. Audit is never started with a preconceived notion about state of affairs, about wrongdoings, about some wrong, about something wrong which have been committed, about some wrongdoings have been committed. Getting it? So audit will not start about this preconceived notions. Hey, something went wrong in this company, something is happening, that is why they appointed me. No, nothing happened. You are appointed every year. Every year you have to comment about books of accounts, financials, are they fair or not? Getting the point? We are not doubting. If at all we doubt, why do we invest our money with them? If at all I doubt Elon Musk, why will I invest in his company? I will not invest. No, I invested. He is good. But then I want a precaution. I have to take a precaution. I cannot trust him 100%. So I want an auditor. So audit will not start with a preconceived notion that something went wrong. You need not doubt the client. You need not suspect the client. You trust him. But you be careful. You be skeptical. Be alert, maintain alertness, be skeptical, try to identify where and all loopholes were there. Getting it? And if at all you come across something, maybe the top management is very good, but some middle level management may be having a fraudulent mindset. Able to understand? This regarding this fraudulent mindset, all that we'll discuss in fraud chapter. Clear? Next, another limitation. Another limitation that we have is we need to balance financial reporting, timeliness and cost benefit. Remember, if you want to do 100% audit, it is impossible for you to cover. You have to do audit with a very limited period of time. Within a limited period of time. You know how many days we spend on audit? If it's a very small private company having 10 crore turnover, we hardly spend 5 to 7 days in real life audit. If it's a public company or listed company, we will be spending some in the entire year, 45 to 50 days. Some 5 or 6 members will go. DMart itself, you take Avenue Supermarts. Or Reliance Industries, you take any industry you take. They're having some 3-4 lakh crore turnover. And this turnover was generated across some 500 shops across India, stores. And these stores were billed. Inside the store, only billing persons were in each store were 3 to 4 persons. For booking the revenue, for billing the revenue, approximately 10,000 staff is working. Only for billing. Imagine, this is only sales. What about purchases? What about stock? What about transport people? What about administrative employees? Imagine the affairs. So is it possible for me to verify 100% everything? Not. So I need to, tally between time and cost. If at all I want to do work more amount of time. See, remember, cost means not money. Resources consumption. Cost means what? Resources consumption. Articles. I am taking 2 articles. Am I incurring some cost or not? Their time. Yes or no? So the auditor cannot escape. By the way, one more thing. What this point again says is, you cannot escape saying, I don't have time. That is why I did not even obtain reasonable assurance. See, can you argue, I don't have time, and moreover, the fees, whatever client is paid, is not correct for me, is not enough for me to give absolute assurance. Can I argue for this? For absolute assurance, I can argue. Why can I give, how can I give absolute assurance? I don't have time. Can I argue the same for even giving reasonable assurance? No. Giving reasonable assurance is your minimum responsibility. Are you getting the point? Giving minimum responsibility. See, I want to get sufficient appropriate evidence. Inventory, some go down, it is there. I need to at least go there and physically see sample, right? May not 100%, but sample at least I should say, right? Can I skip sample verification also saying I don't have time? I cannot. So minimum work you need to do, reasonable assurance you need to get. So the auditor cannot escape saying time and cost as a reason for not obtaining sufficient appropriate evidence. Getting it? The matter of time, the matter of difficulty, the matter of cost is not a valid basis for the auditor to omit an audit procedure. Debtors, I want to get external confirmation. You must get. SA 505 says, wherever possible, get external confirmation. In one audit, you did not get external confirmation and you are saying, I don't have time. Client fees are seriya pay pannala. He didn't pay me fee properly. Tell me if I do audit at free of cost. First, suppose a temple is there. They want to appoint me as an auditor. and I don't want to take fees as a gratitude, whatever. Getting it out of devotion, whatever. Just because they are not paying fee, can I directly sign the balance sheet P&L? Whether you take reasonable amount of fee or high amount of fee or you're not taking fee, doesn't matter. You have to do your minimum work, yes or no? You have to satisfy with the evidence, yes or no? Yes or no? Only if you satisfy balance sheet P&L are really true and fair, then only you should say they're true and fair. Without verifying they're true and fair, can you give opinion? Just layman example you take. Suppose there is a phone you want to buy. A phone you want to buy. Or a friend of you have approached you and asking a phone. You both went to a mobile store, some demo piece is there. You both want to verify that and then accordingly take a decision whether to buy it or not. So mobile shopkeeper, he just permitted you to touch the phone once. You just touched it for a moment and sir, no buy sir. You got evidence, no. This is how phone looks like. Will you be satisfied? What will you say? Sir, how much time you need to verify a phone? How much time you need? In order to decide, you want to see the phone features, all that. How much time you will take? 20 minutes. How much time you will take? 20 minutes only. How much time you will take? Depends. Correct? 20 to 30 minutes. You need to check all the features. Suppose if I give you 5 minutes time, tell me now how the phone is performing. Can you say like that? Unless the phone is worst performing phone, within first 2-3 minutes only we can figure out. Yes or no? Within first 2 to 3 minutes, it's a preliminary assessment. Getting the point? So, what will you tell to the shopkeeper? Again, let me operate enough amount of time. Let me see every feature, 15, 20 minutes, 30 minutes, maybe half a day. Or else, you verify some half an hour, another customer is waiting, you will tell him, I'll come back evening once again. Until you sufficiently satisfy yourself, will you give your opinion on the phone to somebody else? Like, have you seen YouTube reviews on phones, cars, bikes? They'll give you the review after using it for 2 or 3 days. Somebody will use 3 days, somebody will use 1 week, somebody will use 1 month and then give review. Whatever, how much ever time they take, that much level of assurance they can give, correct? So what is sufficient appropriate evidence for the auditor? Same way, auditor also, I am asking auditor, sir, how is the balance sheet P&L? Are they right or wrong? You verified 1 voucher in purchase. Only 1 voucher you verified. Can you give your opinion? You verified 10 vouchers. Can you give your opinion? But better than 1, right? You verified 100 vouchers. Will your confidence increases? You verified 250 vouchers. Will your confidence increases? So you felt 250 vouchers I verified until this 250th voucher also, I did not discover single mistake. All this 250 randomly I selected. Across 10,000 bills, randomly I selected. Nothing, no mistake at all. Now, will you satisfy there or not? It's enough. Even if I verify 200 vouchers, answer is same, unnecessary. So, 250 is enough for me. So, this is sufficient appropriate. Sufficient appropriate audit evidence. What is sufficient? What is appropriate? Who will decide? No one will decide. It is your perception. You should prove somebody. Tomorrow when someone questions you, hey, you didn't get sufficient appropriate evidence. You did not do audit properly. You are punishable. You are negligently providing services as a profession, you are bringing disrepute to the profession. Somebody is blaming you tomorrow. You will show them your papers, working papers. You will show them, see, I have verified enough number of vouchers. 250 vouchers I verified. What else I need? In fact, 100 enough. Still I verified 250 vouchers. See how I selected these 250 vouchers. Will you argue or not? You must get that. You must obtain that much quantum of evidence with which you can defend. Are you getting it? If you think with the 10 vouchers you can't defend, then get 50. If you think with 50 you can't defend, then get 100. Are you getting the point? But there is a limit now. What is reasonable? Exactly. Can you say to the mobile shop holder, give me 6 months of phone, I'll use and then buy? It's not possible. Same way audit also. Getting it? Next up. So the relevance of information, thereby its value tends to diminish over the time. Remember, we are auditing historical data. That information, whatever circumstances that are prevailing at the time may not be prevailing now. Able to understand? So the value of information as the time passes by diminishes. So you need to strike a balance between reliability of information and its cost. Like to what extent you want to update. See, suppose debtors, no. I want to check existence and debtor conformed. Yes sir, we are liable to pay. Will he tomorrow pay or not? Will you go, entire your team will go to that debtor office, will you see due diligence, how far he will pay? Is it necessary? Not required. See, I'm an auditor of one company. This company has sold some goods on credit to some customers and the customer account is showing in the balance sheet. Now company, before giving credit, company internal people know. They did a credit worthiness analysis. Can we give credit to the customer or not? You go and ask any goods on credit, do you think they'll give you? No, they'll do credit worthiness analysis first. First they will check whether you are, who are you? Give me your Aadhaar card, give me your PAN card. What is your business? Give me your business profile. Where are you operating? For how long you're operating? Show me your GST return. If everything is super, then they'll give you credit. That too for 30 days. See how company is giving credit. Check it out. Company is giving credit to only those customers who are having credibility. Now, they will give credit. They sold goods on credit, 10 lakhs outstanding. You got confirmation that 10 lakhs is agreed. Will he pay tomorrow? After 2 months, his due date is coming. Will he pay that time? Will you go and sit in the debtor's office until he pay? So, it is not possible for you to do all that. Your resources will not support. Next. So, due to many other external factors, audit shall be completed within a limited period of time. So, this is also one more limitation. Able to understand, all of you. So, you cannot say time, cost, difficulty as a reason for not obtaining sufficient appropriate evidence. Don't say. For absolute assurance, you can always argue. Hey, absolute assurance, why you didn't give? Time is not there, you can say happily, no problem. But for giving reasonable assurance, you cannot. So the matter of time, difficulty, cost is not a valid basis for you to omit and proceed so. Or can you satisfy with less than persuasive evidence? What is persuasive? You must at least get convincing evidence, correct? You must convince, Until you get convinced, you have to do audit. You have to verify the things, correct? See, before convincing, will you buy the phone? You may convince after half an hour. You may convince after 45 minutes of verification. But first you must convince, correct? Can auditor obtain less than convincing evidence? Auditor should obtain how much evidence? Whatever the number where he will convince. Convincing evidence means what? In audit, technical term is what? Persuasive. Can auditor obtain evidence less than persuasive? Not permitted. Persuasive is convincing. Convincing means sufficient. Sufficient appropriate evidence. It is mandatory. Able to understand. That's it. Then still apart from this, there are various other limitations. In July 21, 3 marks question has been asked. Write about other limitations, which are a limitation as part of audit. Getting it? Like especially frauds where top management involved. Going concern related situation. Can you predict all this? In future, what is going to happen? Who knows? Suddenly something goes wrong. I will try to predict going concern next to 12 months, but who knows? Next, related party relationships, examples only. Related party transactions and all. Whether some frauds might happen in related parties. I will discuss about related party point in fraud. Getting it? Then non-compliance with laws and regulations. How do I find all this? It's impossible. Are you clear? These are all limitations, inherent limitations. That's it. Next. So almost we have completed part 1 in this chapter. Next, actually this will come under part 2. Engagement acceptance. This topic also comes under actually part 2. This topic also you can keep it under part 2. Not a problem. Even in 1 also it is fun. But keep it under part 2. This is related to engagement acceptance. Now what is this? Suppose tomorrow you cleared CA. Okay. You opened up a CA practice. A company client approached. One of the director in a company approached you. Sir, we are looking for auditors. When we Google search, your location is showed nearby. Our company is also in the next street. Okay. So we saw Google reviews also. Your client have given so many good reviews, positive reviews. So just, the company director came and explained you everything. Now they want to appoint you as an auditor. Will you directly accept? Won't you check some points? What points you will check? Qualifications and disqualifications I should check. But before all that, first, I'm the client. Integrity of the client you should check. Integrity of the owners. Integrity of the key management. Integrity of those charged with governance. Now who is those charged with governance? Who is management? First of all, understand management means everybody. In Reliance Industries, Mukesh Ambani part of management. Correct? Mukesh Ambani is part of management. In Reliance Industries, approximately 2 lakh employees are working. Is every employee responsible for governing the company? Who is responsible for governing the company? In case of company, board of directors, key managerial persons, top management, they are called as those charged with governance. What is governance? Accountability, authority, responsibility. Governance is not about, see, top management means not just authority, they are accountable. Yes or no? If something, a big, scam happened in Reliance, everybody will blame whom? In the Reliance digital store, on the billing person, will you blame him? You will directly blame the top management. They are the one who are accountable, ultimately those charged with, responsible with governance. Able to understand. So those charged with governance means only top management. Management means everybody, including TCWG. Correct? So in audit, wherever they say communicate with TCWG, you have to communicate those charged. Communicate to management means maybe top, maybe middle, maybe low, depends on whom you have to communicate. Even in SA 580, we have a standard. There it clearly says to whom auditors should communicate. We have a clear discussion. We'll discuss there. Are you clear? All of you. Now, so first point, you will check what? Honestiness. Then that company is engaged in some technical business, stock market, commodity business. That company who approached me. Now tell me, without checking my work exposure knowledge, can I accept that work? I studied audit subject, but I never did this kind of audit. Can I blindly accept? Nalla fees kudutittirukka client. Can I blindly accept by tempting for the fee? If at all you accept the work which you do not understand or which you cannot do, what will happen? Your credibility will affect. Correct? So first I will check is it good or not. Then I will check my competence. Then after accepting this work, I need to do audit. No. For that, can I alone go and do audit? I need team. No. So should I check my resources, staff, manpower availability? Yes or no? First of all, do I have time to do audit? This company is asking 55 days to do audit. 55 days I can't go and sit. So I need to look at the requirement of resources. Correct? Third, as you all said, now legal I will check. Legally can I accept qualifications and disqualifications? Able to understand. Suppose a company client whom I already an auditor, they are asking me, sir, please continue next year also. So they are asking me to continue. Actually, I thought of withdrawing. But suddenly they came and asking once again, sir, please continue. You're a very good person. Something they're saying. Now tell me, all these points, same points, I'll check whether I continue or not. Is the management good? All last 3 years I'm working, they're good. I have resources. I'm competent. And ethically also I'm fit. Can you check past experience also? Because you already associated with him. So significant matter that have arisen in previous engagement and their impact on continuing relationship. In case of existing client who is asking you to continue, you will check what? Important issues arisen in past. If it is new client, only 3 points. Integrity, my competency, ethical requirements. That's it. So that's why you see the question. Mention any 4 points which help the auditor in accepting and continuing client relationship. Able to understand this? You might have seen this earlier. Have you seen in this perspective? Getting it? So before you accept a new client, before you accept a new work from new client, what points you should check? Before you decide to continue existing work with the existing client, what matters you should check? Before you accept new work with the existing client, in any way the question can be twisted. What are the points the auditor shall consider before accepting new engagement from new client? What are the points the auditor shall consider before continuing existing engagement with existing client? What are the points the auditor shall consider before accepting new engagement from existing client? Anyway they can ask. What points you will consider while acceptance and continuation of relationship with client as per SA 220? This is the answer. Easy or not? Suppose no. Tell me, This sentence, no, this sentence itself, they'll give you and ask you for 3 marks question. So for if they ask you this sentence, you need to write the above answer. The engagement partners, if at all he obtains information that would have caused the firm to decline the engagement, had that information been available earlier, the engagement partner shall communicate so that the firm and partner can take necessary action. Full stop comment. They'll ask you this question. You need to understand what is the sentence exactly, not the meaning but the concept. Now tell me, I'm a partner newly joined in this firm. In this firm already existing partners were there. Suddenly one client approached. He's asking me to do audit work. He thought he's a new person. So I accepted. Later my firm people told me, sir, that client and all we don't accept. We had an issue in the past. Let us not accept. Now if this kind of issue had that information available earlier, if I know that information earlier, will I accept this? Now what should I do? Since I accepted, I will first communicate with my firm. Now we all sit together and discuss. Take necessary action. That's it. What action they might take? They may decline, they may withdraw, they may resign. Able to understand. So this statement can be asked and asked you to comment. That's it. Next. Now, letter of engagement. After that, I'll come to the above topics. What is the letter of engagement? Look, the persons for whom we are doing audit. Simple example, Lalita Jewelers Private Limited. The MD is Kiran. Yes or no? That uncle. Brand ambassador. Hey, no, we should not. He's really motivated. He's such a powerful person, obviously. You must have charisma to project yourself. And obviously, he is very handsome, no doubt. Yes or no? Even at that age, he's maintaining that level of fitness. Yes or no? So obviously, no doubt, and he is projecting himself so powerfully. If at all even a separate brand ambassador come, Lalita Jeweler would have been not that popular. Correct? Huh? Now tell me, is that uncle, whoever is there, Lalita Jewelers MD, is he aware of audit definition? Is he aware of Schedule 3? Is he aware of financial reporting framework? But we have a question, right? What are all management responsibilities? What are management responsibilities? Management is responsible for preparation and presentation of financial statements as per applicable financial reporting framework. Management is responsible to design and implement internal control systems so as to prepare financials in true and fair manner. Management is responsible to provide the auditor with information. Management is responsible to provide the auditor with explanation he is asking. Management is responsible to permit the auditor to talk with anybody in the company, unrestricted access to persons. That is what preconditions to audit question. That is what preconditions to audit question. All these points, is the chairman aware of? Are board of directors aware of? Definitely no. And you might have seen in your offices, wherever, if at all you have done articles, or if at all you might have heard this discussion. Auditor is there, he'll take everything. What? He'll take everything. Whatever fees you give, he'll take it happily. But he will not take care of everything. Yes or no? Tell me, a small restaurant people were there. They incorporated their business as company. Bad luck. A CA suggested them. Why CA will suggest to incorporate company? Because we'll get fee. Why company that person? In this, many CAs, they recommend. Have you seen private companies? In private companies, the shareholders are, one person will be there, he is the one who is doing business. There are 2 more shareholders. இவங்களோட அம்மா இவங்களோட பாட்டி. பாத்தீங்களா? அந்த பாட்டிக்கு கையெழுத்து போடவே தெரியாது. Example, she doesn't know how to sign itself and she is a board of director. In a private company, she is a director and she is chairman of audit committee. Getting it? Now, do they ever have all these formalities? These are designations which we give, yes or no? You see, in Reliance Industries, Neeta Ambani is a non-executive director. And do you think she is aware of all these financial statements, formalities, all the things? No. Fundamental question I'll ask, ignoring all this aside. In any contract of sale or contract of service, who should give terms and conditions? Who should decide the terms and conditions? Will buyer decide or seller decide? Will service provider decide or service receiver decide? Terms and conditions. Common sense provider. When you are attending to this class, what are the things that you must know before you attend to this class? Who gave terms and conditions? I give. When you are going to a movie theater, terms and conditions somewhere they would have mentioned. When you are going for any hotel, terms and conditions would have been mentioned. Will you fix terms and conditions? No. Why you don't fix terms and conditions? Because buyer or service receiver may not know all the complications. I may not know all the problems that might come in future. But who will know the problems? The person who is dealing with. He will know the problem. I know what kind of questions you will ask me in future. Getting the point? Because I am doing in that activity. Same way in audit, terms and conditions, who should make it? Auditor. Sir, but just we decided, no, in the previous class, statutory audit, law will decide. We will also agree with law only. Whatever law terms and conditions were there, we will put the same. Are you getting it? But that knowledge of law, for whom it is there, the knowledge of law, only for the auditor. Client may not aware of all this. Client, no, they appointed you. Sir, ninga vandu audit pannunga, some Saravana Pavan proprietor vandittu. Sir, you do audit, sir. I said, okay. And he is thinking, I will only prepare books of accounts. I will only prepare financial statements. I will only do audit. I will only file IT return. I will only take care of GST. He is thinking, audit ella paathirpa. I'm not doing everything. For what purpose I'm appointed? Only audit. Now I should tell this to my client, no? That's why letter of engagement is required. So who should give this letter of engagement? Auditor should give to client. Prescribing what? See, this is letter of engagement. 2. Board of Directors. Scope of work. Scope of the engagement. Nature and scope of the work. I am appointed as an auditor for conducting audit of financial statements. The audit is conducted with a view to give opinion thereon. Auditor's management responsibility. First, you are responsible to prepare financials. You are responsible to comply internal controls. You are responsible to give me information. My responsibility. I will do audit on a sampling basis. I will give reasonable assurance. I will not give absolute assurance. Correct? Huh? So, you see engagement letter, how it looks like. We'll see how an engagement letter looks like. Is it visible clearly? Clear the letters? Yes. So, letter of engagement. Letter of engagement. என்ன ஆயிடுச்சு? Or else 210 will try. So 210 is what? The standard heading. Agreeing the terms of audit engagement. So I accepted audit engagement. Now I need to agree with client terms. What terms you will agree with client? The heading, you see, how can you decode? Agreeing the terms of audit engagement. Okay. So what will you fix? What terms you will agree? So we will see letter of engagement format here. You see, this is an audit engagement letter. To whom it was written? To Board of Directors. What? To Board of Directors. So this following. So addressee to Board of Directors. Heading will be letter of engagement. First, what you should mention? Objective and scope. What objective? Who requested whom to audit? Did auditor went and begged the client, or client came and asked the auditor? In reality, different. Okay. So you have requested that we audit the financial statements of ABC, which comprise so and so items. And you see here, you see this word, cursor visible. We are pleased to confirm our acceptance and our understanding of this audit engagement. What we understand about this by means of this letter. Our audit will be conducted with an objective of expressing opinion. Now look, what are my responsibilities? Look at inherent limitations I have. So even though I do audit, still mistakes will be there. I need to tell the client, no, Otherwise, client will think I will discover all the mistakes. Even after I do audit, some mistakes will be there because there are so many inherent limitations. Now, our audit will be conducted on the basis that means precondition. What is it called as? Precondition. I assume before I start the audit, you acknowledge the following responsibility. Management, those charged with governance, acknowledge and understand the following. What responsibilities? For preparation of financials, for internal controls, provide access into books, information that we ask for, unrestricted access to people. Now, what are all these responsibilities of management? So at last, I will give audit report as per so and so standard. Getting it? And I will sign, put my name, firm registration number, my membership registration. I'll send a letter to him. He will also sign and give me one copy. Tomorrow he is coming and blaming me. Sir, you prepared books of accounts. Where did I tell? Show me in the letter. You read? No. So this engagement letter is important to protect my rights and duties. I should tell the client at the beginning itself what are my powers, what are my duties. He should also know that what are his duties. Correct? Huh? So that's why this is. Now you see here, what are preconditions to audit? Preparation of financial statements in accordance with the framework, designing and implementation of internal controls, provide access to information, additional information, understood. Same is there now in the letter also. Exactly. Able to understand. So this is precondition. So what is the purpose? What are the contents of letter of engagement? There should be title, addressee to board of directors. We have seen the format. Objective and scope first, yes or no? Responsibilities of auditor next. Responsibilities of management. You need to mention applicable framework is what? Management is responsible to prepare financial statements as per Schedule 3. Management is responsible to prepare financial statements as per Form A of the insurance IRDA regulations if it is insurance company. So, and what is the form and content of audit report? How audit report looks like? He may not know. I will tell him, we will give audit report in accordance with SA 700. So, if your client has a doubt, he will go and see SA 700. Of course, he will not understand anything. Okay. Then, signature of the auditor, signature of the client, confirming the acceptance, date and place. How many copies we should take this print out? 3 edukku 3 yaadukku unaka 2 bodum. Yes or no? 1 for auditor, 1 for client. But you can take 3-4 also, not an issue. Conservatively. Getting it? But 2 is the main. Getting it? Next. Easy or not? So, now, letter of engagement is issued by whom? By auditor to client. Why am I issuing? Tomorrow, if any dispute comes, I can show. So, reducing the chances of misunderstanding. Why? Where and all we misunderstand? Regarding my scope of work, regarding my objective, regarding rights and duties, we may have problem. Tell me, in which audit it is very, very important? Stat or non-statutory auditor? Non-statutory. In stat audit, if some dispute is there, law is there to clarify. In non-statutory, what is my scope, what is his scope, nobody is there to clarify. So we should only discuss. In case of non-statutory, issue of letter of engagement is highly recommendatory. Therefore, for both auditor and client, that each party should be clear about the nature of the work. It must be written, it must be kept reduced to writing and should exactly specify the scope of work. Correct? Huh? In case of partnership firm, few more precautions we need to take. Yes or no? The appointment of auditor is normally governed by partnership deed. So the chartered accountant, when he is appointed for undertaking professional assignment of a partner by a firm, first he should get a clear idea of the what is the service with reference to partnership agreement. So whenever a partnership firm appointed, don't blindly accept. Check partnership deed. Who appointed you? The person has authority or not? Check it out. Are you getting it? Now, they'll give you this point in exam, partnership firm point in exam, and ask you comment. Which point you will write answer? This answer you have to write. Letter of engagement answer. Understood or not? You see how in different ways a questions can come. I'm giving you all the idea. Yes or no? Mostly in another 1 or 2 days, this entire smart notes I told, right? We are going to give it as a A5 book, small novel type book. Getting it? You can, anyhow, you're looking at this. What I have decided is whoever have come for physical, getting it? For all of you, 1.8 view. What is it? 1.8 view. What is 1.8 view? If at all the class is for 100 minutes, you can watch the class for 180 minutes. Which means 100 minutes you watched. Somewhere some 40 minutes, 50 minutes, you have still have to. Another 40, 50 you watched. 180 minus how much already you watched? 100 you watched plus 50, 150 over. Still another 30 minutes you can watch the video. Which means 100 minutes video you can watch it for 180 minutes. You may watch at higher speed or lower speed. Doesn't matter how much video duration you watch. That will only count. So with the 180, with the 1.8 view, I'll give you Google Drive access. For all of you, I'll give you Google Drive access. Just make a list with them. I will tell them tomorrow, day after, you can just give them the list. You will get once again backup Google Drive class. Only thing is, for that 500 rupees extra charge you have to pay, because I need to give Google Drive encryption. We have a key cost. Only that, just a complimentary. So that tomorrow, day after, I'm releasing this book, probably bulk, getting it. So some 100 copies will be ready within 1 or 2 days. So that if you want to buy and then once again take the book and once again want to watch this class, you can watch it. All of you? Yes, whatever this 25, 26 hours net recording will come, right? Enter, I'll give you backup. Next. It is your choice. Whoever wants, pay that additional charge and then take. I'll tell you what is the price, all that. Some 500 rupees is enough for backup. You don't charge anything else. For a new admission only, we will take price, okay? For you, 500 rupees additional charge is enough. Next, even for CA final also, I have given in the class itself. I don't have a thought, but I just decided to give once again so that you can watch in exams within this. Okay. So 500 rupees is the Google Drive cost, and book cost will be some 300, 350 something it will be there. That A5 book cost. Getting it will be having 150 papers with binding proper everything it will come. Okay. Anyhow, I myself have not seen the book. Today only we ordered. Maybe it will take 1 or 2 days to come here. Next. All of you understood or not? Now tell me, letter of engagement. Is it mandatory that every year should I send this? Suppose my client appointed me for 5 years. Companies, they will appoint me for 5 years. Non-government company. Now, should I send every year this letter of engagement? Not required. One time it is enough. Yes or no? But whenever there are changes in circumstances, if there is any indication that entity misunderstand, that time when they misunderstand, no, why will you send the same letter again? They misunderstood already. Will you give same letter again? What you will do generally, we will give one more letter with clear-cut explanation. Getting it? Or some terms have been changed. Or law has been changed. Law is saying no, you should give every year. Or financial reporting framework changed. Or audit reporting requirement have changed. Until financial year 17-18, the audit report format is different. From the financial year 18-19, the audit report format is different. So I need to give letter of engagement once again when formatting changed. Generally 5 years I have been appointed. 5 years I need not worry. Next, change in management. Originally I gave letter of engagement to previous people. Now top management people have changed. So they may not aware of all these terms. So I will give once again letter. Actually in this case, in reality, when top management changed, will they take this letter away with them? The letter will be still in the company only, no? Just they told. Or a significant change in nature or size of business. Suppose company name changed. Company operations changed. That time also you may have to give letter of engagement. Are you clear? Everyone. Next. Suppose management is asking you, sir, they have taken letter of engagement. What they need to do when you send letter of engagement? They need to read, sign it and then send you back. But instead of signing and sending back, they are asking you, sir, these terms please, I don't want to agree. I will not prepare financial statements. You are saying I am responsible, but I will not prepare. Please, you only prepare, they are asking. Will you accept? Audit, maker and checker should be different. So, whenever a management is requesting for change, do we say always no? Depending upon the situation. If at all, the change requested by them is justified. Getting it? Now, will you accept the changes requested by the management? Obviously, because it is genuine. Yes or no? Suppose, if at all management is giving no, that is not genuine at all. Management is asking me to prepare financials, asking me only to do audit. How can I do both? It is against law. No reasonable justification behind asking to change the terms and conditions. I will not accept. Now, if at all I accept, suppose no, some management changes I have been asked. Management is asking, sir, like, please do tax audit also. Okay, you are stat auditor. Please add a tax audit point also, sir, in the same letter. Let us not have a separate letter. Keep tax audit also in the same letter. Okay, I can do tax audit. As per income tax law, I am appointed, eligible to appoint as an auditor. There is a guidance note on tax audit. I can accept the tax audit happily. Able to understand. So I accepted tax audit. So now management is asking me to give entire combined letter. Now I will take back my old letter, redraft the original letter, whatever is there. I will not, I will discard it and put a new letter and then give new letter. Now tell me, when I am giving new letter, should I refer about my old letter in the new letter? Suppose you wrote question in examination, one answer you wrote, you felt it is wrong answer. You strike it off and started second answer. In that, because I strike it off the previous answer, I am starting new answer. Will you write a reference? Exactly. So the report new letter will not include reference to original work, will not give reference to procedures that you already performed. Understood the points? Next. Suppose you did not accept. Management is asking some changes. You felt it is not correct or you don't have time. Whatever. You did not accept. Management also not cooperating you properly. What will you do? Management is not, management is not cooperating you at all. No, sir. Without accepting that, we will not, cooperate with you. You cannot. We will see how will you do audit. Management is blame, blackmailing you like this. What will I do? Withdraw. Resign from the company. Suppose if a withdrawal is not possible. Here it is not given. Just I am telling, if withdrawal is not possible. But sir, withdrawal not possible. And the mother circumstance irka. In listed companies, we cannot resign in between. There is a condition. There is a condition in listed company for quarterly results that time. After 45 days from the end of the quarter, if you want to resign, you can't resign. Getting it? There are some conditions which you will understand at CFI. So there are some cases where withdrawal is not possible. Resignation is not possible. So better always take what? Take a legal opinion. And whenever you want to withdraw, you have obligation to communicate. No. Suppose you felt humiliated. Next day onwards, you are not going to the client office. Is it deemed resignation? Resignation must be explicit. Yes or no? You must clearly explain the client. Correct? It cannot be implied. You clear. That's it. Now, then we have the concept of independence. What is independence of mind? What is independence of appearance? This you can understand. I already spoke. Okay. Now, there are some safeguards to independence. How to protect independence? Company law is protecting independence by prescribing disqualifications of the auditor. We are boycotting the auditor who are having relationship with the company. So thereby, by giving disqualifications, what are we targeting? We are only targeting chartered accountants who don't have any relationship with the company. So for public to have confidence, the professional should appear that he is independent of the entity which they are auditing. Very recently, 2 days back, Adani related some audit report was circulating, which was signed by a chartered accountant who qualified in 2017. That itself became an issue. Why, how come such an youngster who qualified in 2017 can negotiate with such a big company? Suppose if a CA who signed Adani audit report is of 45 years age or 50 years age, or who is in practice from more than 20 years, naturally that kind of client may approach him. He is independent. But how an young person be appointed as an auditor of Adani directly? That's supposed to circulating in the LinkedIn. Getting it? அங்க எது பிரச்சனை இல்லை. இவன் யங்ஸ்டர், இவன் எப்படி ஆடிட்டர் ஆயிட்டா? அதான் பிரச்சனை. அதான் குரூப். ஏன்னா கம்பெனி சார்ட்ல ஏதாச்சும் ரெஸ்ட்ரிக்ஷன் இருக்கா? ஏஜ் ரெஸ்ட்ரிக்ஷன் இருக்கா? Disqualification to audit a company having 500 crores turnover or auditor must have age of 35 years. No. Correct? So that itself is circulating. I felt heights of stupidity, but then there is a logic behind that as well. Okay, generally big companies will not come to fresher CAs. Naturally. But if they come to a fresher CA, they'll have a better bargaining power. Enna bargaining power? நான் நியூவா பிராக்டிஸ் ஓபன் பண்ணிட்டேன், கிளைண்ட் கிடைக்கதே பெரிய விஷயம். கரெக்டா? அந்த மாதிரி அப்ப அதான குரூப் வந்தா, சார் நீங்க அவருக்கு 10 லட்சம் பே பண்ணிட்டு இருக்கீங்க, எனக்கு 10,000 ரூபாய் பே பண்ணுங்க சார் போதும் மாசத்துக்கு. Possibility there, no? To negotiate. I will help you in whatever the way I want. Independence compromise ஆகுதுல, integrity compromise ஆகுது. Compromising on integrity, yes or no? So the auditors are compromising on integrity. Because of that, that became an issue. Able to understand? Generally, beyond our level of experience, if at all we are taking up such a very big work, it will question our integrity by default. You have seen in political either speeches also, a very new company has got a very big project. Every political party will start questioning it, opposition. How come for a new company you can give a contract? That shows integrity. Able to understand. So anyhow, this issue is not being made by any public person. This issue is made by CS only. In case of audit, the key fundamental principles, integrity, they have to be necessarily protected. Yes or no? So auditor must consider, is there any threat to the independence? Auditor should withdraw the engagement or do not take that work if at all there is a threat. Suppose if you are unable to implement the safeguards, if you cannot protect your independence, please don't accept the work. So these are the safeguards. They may ask you in exam, write about the concept of independence and write any 4 safeguards for independence. What is independence? Independence means like meaning of independence means ability to take decisions by not becoming subordinate of others. Getting it? Auditor must take decisions independently. He should not act as a subordinate person to somebody else. Next. And there are various threats to independence. This threats point I will discuss while discussing company audit disqualifications. Understood? Easy or not? Now, how auditing is having a relationship with other subjects? How audit and economics are interrelated? See, you must understand economics, geopolitical factors, all that. Tomorrow, your company going concern might affect your company. See, this is little bit beyond the knowledge, but still we have in the syllabus. If you want to have a conceptual understanding, slightly I'll give you data. Slight information I'll give you. There is a company, now across the world, there is a shortage of semiconductors. Due to which the phone production, the car production, electronic industry production, appliance production, everything were affected badly. So there is a supply demand mismatch. The supply was extremely low. Correct? Now, in Europe right now, the gas has become extremely costly. Extremely costly. The reason was Russia is not supplying the gas to the Europe nation. Now tell me, if I do not have the knowledge of Russia, Europe war and all, and if I am doing audit of a company in the Europe, and the company uses going concern assumption, how far they can use going concern assumption if this is a situation, suppose I am the auditor of gas company, they are not getting gas supply, so they are unable to fulfill customer demands, and the company cash rotation stopped. When cash rotation stopped, can the company continue? Going concern affected. When going concern affected, can the financial statements be prepared using going concern assumption? Now tell me, if I do not have the knowledge of this economics, can I talk about going concern of this company? Can I get an idea? So auditor must have knowledge of economics. Economics knowledge means what? Not economics for finance. GDP means what? NDP means what? Not that alone. Practically what is happening across the world. Getting it? That doesn't mean you should sit and study on the general knowledge books and all. No, not required. You have to be alert. Every day you need to just follow up with some sort of news. Next. Auditing and behavioral science. You must know how to, behave with people. You interact with a lot of people, yes or no, in the organization. So, auditor is expected to deal with human beings rather than figures, financial statements. Getting it? Next. See, knowledge of human behavior is indeed an essential for the auditor so as to effectively discharge the duties. Simply, you must know how to deal with people. The way you deal with people gives you the evidence. Getting it? If you behave that I'm strict auditor, CA, you can't. Getting it? You should not see, like you see, Instagram post and all CA students. Instagram post and all. Have you seen the Instagram post? Proud to be CA student. Yes or no? 5 years, 50 laws, 5,000 sections, 25,000 pages. Ordinary person it is not possible. And the other people are called as chartered accountants. Have you seen all this? இவனுக்கு 10 ஆக்ட் பேர் சொல்றதே தெரியாது. அந்த போஸ்ட் எல்லாரும் ஷேர் பண்ணிடு. Instagram எல்லாமே we will do halchal. And when some of your relative comes and asks, should I do CA? Don't do CA. அதேனா dual standardல. Next. Fine. Auditing and statistics mathematics. See, audit is completely based on samples. And sample is nothing but based on probability theory. Probability theory is nothing but statistics. And the chapter படிக்கவே இல்ல CPT ல. Auditor must have knowledge of statistics and mathematics because you are using statistical sampling to get a conclusions meaningfully. You're able to understand now this? And auditing and data processing. This is nothing but data analytics. What is data analytics? I'll discuss in IT. I'll discuss in analytical procedure chapter. Data analytics, analytical procedure, data processors, more or less similar. And auditing and financial management. How do you know company will successfully continue in the next 1 year? Going concern you should check, no? You might have understood the auditor must say going concern. Next 1 year. So what will you look at? Funds flow analysis. How the company funds are utilized. Funds flow analysis means what? Financial management. So auditor should have an understanding of financial management. Auditing and production. You must apply analytical procedures on scrap calculations. How much scrap generated? How much is accounted in books of accounts? How much is generated? How much accounted? What is the balance? What happened to the balance? You should question. You must have a knowledge of production. And above all, you must have knowledge of accounting. You must have knowledge of law. Easy. Then part 4 of this chapter is system of quality control. This will discuss while discussing standards. This is not to be discussed at this moment, but along with standards on auditing, we will discuss. There are few standards, right? I told you few exclusive standards. Along with it, I'll discuss. With this, NOS Audit chapter is completed. Are you clear? Yes. So the next chapter is the appointment of auditors. This is also called as company audit chapter. Nothing but appointment of auditors. We are discussing all appointment related provisions, rules and regulations. Getting it? And I hope many of you have grip on this chapter. Mostly. Okay. So I'll go a little faster now. So in this chapter, we are going to discuss these sections 138, 139, 140, 141, 142, 143, 144, 145, 146, 147, 148. These are the sections that we have. This is regarding internal audit. This is regarding appointment and reappointment of auditors. This is regarding removal, resignation. This is regarding qualifications and disqualifications. Correct? This is regarding remuneration of auditor, rights and duties of auditor, prohibited services, yes or no? And this is regarding signing of the audit report, duty to sign. And this is regarding duty to attend general meetings, not AGM. General meetings, everything is covered. 147, penalty provisions. 148 is regarding cost audit. 148 is regarding cost audit. Now, first we'll start with qualifications and disqualifications of an auditor. So what are they saying actually? See, once you qualify as a CA, you can either take up the practice or you can either take up employment, or you may do some other business completely, outrightly different from CA. Now, if you decided to take up practice, first you should have a membership number. By qualifying CA final, you will not become member. You need to obtain membership number by paying specifically some fees. Okay, there is a member enrollment fee, something. And you are not eligible to practice directly. For practice again, you have to pay separate fee. Certificate of practice. You see, the practice is CE, not SE. Observe. It is not PRACTI SE. Practice. Practice. Getting it? Sa. There is a difference. SE is not the actual name. Practice means it's a noun. It's a license. It's actually have another meaning called license. You can claim yourself as a chartered accountant. Chartered accountant is different, CA is different, All this that you are thinking that's just an abbreviation. No, CA is a qualification. Chartered accountant is a designation. Section 7 of CA Act. It says the word chartered accountant can be used only by those who are having COP. Getting the point generally. That's how the provision was. You cannot use the designation chartered accountant. Suppose you want to name and below you want to use full form chartered accountant. People think you are practicing CA by default. But if you put CA, they don't think that you are a practicing person. They may ask you what you are doing. But if you put a board and claim below chartered accountant, means people naturally think that you are practicing. That fact even CA Institute recognized. So they said the CA cannot use chartered accountant as a designation. Getting it? You can use the designation if you are in practice, no problem. In the name board you can have at home. But it is not permitted if you don't have COP. That's the actual intention of the provision is that. Getting it? Beside your name, CA you can put. Getting the point? CA caramharsha I can use, whether I'm in practice or not. But chartered accountant designation I cannot use. Understood or not? Now, as per CA Act, you can start this license, you can get this license, practice COP, either if you are individually practicing or you are practicing as a partnership firm. See, what is firm? Firm means it may be a sole proprietary firm or a partnership firm. Firm means anything. Getting it? Individual we call him as sole proprietary firm. Partnership is nothing but partnership firm. We'll discuss all this you will get all this at CA final. How to incorporate partnership firm, code of ethics is what. So firm registration number means what. Everything you will be getting at final. Now it is not required. Getting it? Next up. So now for a company, who can be appointed as an auditor? Sole proprietor, individual. He can be appointed as an auditor provided if he is a chartered accountant holding certificate of practice, or a firm. A firm means actually what? Partnership firm or LLP firm where majority partners are practicing in India and qualified. They may be appointed by the company in the name of the firm. By using in the name of the firm I can appoint. The firm itself can be appointed. But the partner of the firm will sign the audit report. The partner of the firm will sign the financials. He is called as engagement partner. Understood or not? All of you. Next. Now this is the qualification. Now okay, a firm is appointed, partnership firm LLP. Who should sign the audit report? Only the partner who are chartered accountants shall sign the audit report. So partners who are chartered accountants shall sign the. All partners will sign or only one partner? One partner is enough. Able to understand. Any one partner the firm should choose and that partner will sign, and he is called as engagement partner. Getting it? Next. Now there is a question in the institute book in first chapter, I think first or somewhere it will come. Suppose one partner was appointed as an auditor. One partner is the engagement partner. He verified entire audit, but before he signing he died. Can other partner sign the audit report without verifying the working of the previous partner? No. The other partner before he sign first should review the entire workings performed by previous partner or the other partner. Then get a conclusion whether the other partner has performed all the reasonable necessary evidences obtained or not. Only after that this fellow will proceed further. Able to understand? For that answer is not given so lengthy. Some 4 or 5 lines only it is given. Next. Disqualifications. Who are not disqualified? Who are not eligible to act as an auditor? All of them are CS only. But still we will not appoint. Why? To protect independence. We want the auditor must be independent. So anybody who has relationship with our company, we will not appoint. Who? A body corporate other than LLP. A body corporate is not eligible because Companies Act itself says body corporate is boycotted. Body corporate has a separate legal entity status from members. Now when an auditor and the company, suppose I incorporated a private company. I qualified CA, COP, me and my 3 friends together, totally 5 of us, example. All 5 of us became a shareholders in company. We wanted to act as auditor. Our company itself want to act as auditor for another company. Now separate legal entity, limited liability, so many issues were there, no? Can auditor have separate legal entity status? Is audit a technical work? No. It's a work involving personal intelligence. Personally you should be liable, yes or no? You cannot be under the protection of separate legal entity, limited liability. No, auditor should have personal liability in the audit. Getting the point? So body corporates are straight away boycotted. And anyhow, in CA Act, you can't incorporate body corporate. You are only permitted to practice as a individual or you are permitted to practice as a firm. Then officer of the company is disqualified, employee of the company is disqualified. Officer and employee both are disqualified. Officer means so many were there in the officer position. Yes or no? Like all the directors will come as an officer. All of them, key managerial person, they all come under officer. I am a director in a company. How can I do audit of the same company? I am working as an employee in this company. How can I do audit of the same company? Self-review threat. Next. A person who is a partner or who is in employment of an officer or employee. This is nothing but partner of an employee. What is this? Partner of an employee partner of an officer. Both are disqualified. Same way, employee of an employee, employee of an officer, both are disqualified. Director has some other business. In that you are working as an employee. You cannot act as an auditor for this company. In this company there is an employee. He has some other business. You are acting as an employee there. You cannot do this audit of the same company. Able to understand. So, for company officer and employee, their partners, their employees, who are those chartered accountants, disqualified. Clear. All of you. Next. A person who means the CA or his relative or his partner, getting it, holding any security or interest in the company, its a subsidiary, its holding, associate, subsidiary of the holding. Subsidiary of the holding is called as a sister company. Subsidiary of the holding means what? I am having one holding company. This company has another subsidiary. We both are having common parent. Then we are called as siblings, sisters company. Getting it? Not brother companies. Next. So, if a person, a person or relative or partner is holding any security or interest in the company, holding company, subsidiary company, associate company or subsidiary of its holding company is disqualified. In exam you should write this entire provision. Only then you will get full marks. Yes or no? If auditor is holding shares in the company is disqualified. That is correct answer, but that is not complete answer. Understood or not? Same way, if the auditor is indebted, by the way, before that, now if you have security or interest, right? Security means what? There are so many equity shares, preference shares, bonds, debentures, mutual funds, derivatives, so many were there. Getting it? Now, your relatives can have securities up to 1 lakh rupee face value. How much maximum a relative can have? 1 lakh rupee in the face value. Remember, the 1 lakh rupee exception is applicable only if the relatives are holding securities. If auditor is holding in his name, the exception do not apply. Now, relatives can hold up to 1 lakh rupee face value, right? Where in the company they use the word. Actually, there is no interpretation for that. People wrongly interpret. Even institute book also contains the word. If the shares are held in the same company, best example, Tata Group itself you take. Tata Group is best to understand this. Suppose Tata Motors is looking for auditors. This is the Tata Motors which is actually looking for auditors. It has holding company Tata Sons. This has a subsidiary company Jaguar Land Rover Range Rover. This has associate company some electric motor company. Getting it? This has a sister company TCS. It has sister company Tata Steel, Tata Power, Tata Chemical, Tata Beverages, Tata Salt. These are all various companies. Getting it? Now, so we have covered, it's like auditor or relative or partner. Originally, main provision should not have shares in Tata Motors, its holding company, its subsidiary company, associate company, or subsidiaries of the same holding companies. Nothing but sister. We should not have shares. Only then we are eligible. Only then we can be appointed as an auditor. However, relative can have securities in the company up to an amount of 1 lakh. That's what they are saying. Not exceeding 1 lakh. In the company means only Tata Motors or every group. Logically, everywhere I can have. Altogether one group. Altogether maximum 1 lakh. But in the institute book of CA final, they gave a clarification. They gave just a point that relative can hold securities only in the company where you are acting as auditor, but cannot hold in other companies. That's a blender interpretation. Sir, but ICA book gave no. Who prepared ICA book? God, human being only, no? Correct, la? So, just because ICA book is containing some point, that doesn't mean it is always right. Able to understand. You should apply common sense. I am doing audit of a company. In that you are permitting my relative. Why not other group companies? In fact, I am not auditor in Tata Sons. I am not auditor in TCS. I am not auditor in Jaguar Land Rover. I am not auditor for this company. In that company, let my relative have what problem? In my company, where I am acting as auditor, you are permitting relative. Why not others? That's a wrong interpretation, no? In the exception, no. See, every time I cannot give the entire list, no. Every time I cannot give entire list. So exception when they are drafting, they simply use the word the company. They didn't use the entire sentence. Now people are interpreting the company means only the company. Is there any significance for the word THE? Is there any significance for that? Thing. Above context they used this. So literally relatives can have securities up to 1 lakh rupee face value in all the companies put together. All my relatives together, in all the companies together, maximum face value 1 lakh aggregate. But in exam point of view, you should consider only the company. Yes or no? Because in the suggested answer, what is used? Correct, huh? Yes. Sometimes if it is wrong, we should say it is wrong, but we should follow. Okay, next. So relative can have up to face value 1 lakh. Understood all of you? Next. Suppose indebtedness point. How much indebtedness is permitted? Maximum up to 5 lakh. Now here indebtedness, can auditor also have? Yes. Here you see a person who relative partner indebted to the company or group companies in excess of 5 lakhs. Up to 5 lakhs it is permitted. Main point you see, auditor is straight away prohibited. Exception says relative can hold. Up to 1 lakh. Main provision do not contain 1 lakh security. Auditor cannot hold securities at all. But can I have indebtedness to the company up to 5 lakhs? Yes. Me, my relative, my partner, all of us together to the entire group companies, maximum outstanding indebtedness is how much? 5 lakhs. That's it. Are you getting the point? All of you. Or if auditor has given guarantee or provided security on behalf of third person to this company or group companies. I am using the word group company for convenience. Group means what? Remaining 4 companies. Other than this company, remaining 4. It's holding, it's a subsidiary, it's associate, it's a subsidiary of the holding company. Up to how much it is permitted? 1 lakh. The limit of 1 lakh will apply even for the company not having share capital. If the company is limited by guarantee, see this guarantee is different, paid up capital guarantee is different. Here guarantee means guarantee given on behalf of third party to the company. A third company you can sell goods to them. They are trustworthy people. I am giving guarantee. That guarantee is different. Becoming a shareholder by guarantee is different. So this point exception is what? Becoming a shareholder by guarantee. Can you become a shareholder in a company by giving guarantee? At the time you become a member, no. So can you give any company? Can you become a member of any company by giving guarantee? An auditor? No. However, relatives can they become? Yes. Up to how much they can give guarantee by member? 1 lakh. Paid up capital you are permitted to hold up to 1 lakh face value. Same way guarantee also up to how much face value? 1 lakh. Yes or no? Next. Now you see, indebtedness they are saying, right? Indebtedness means what? Suppose company sold me goods in ordinary course of business on credit. Just like any other customer of the company, I also got credit period and I got 6 lakhs worth of goods. Just like any other customer. And the company is now asking me to appoint as an auditor. Will I accept or not? No. Even in ordinary course of business, doesn't matter. You are indebted for 5 lakhs or more. Yes, disqualified. Ordinary course, extraordinary course, in normal course, that and all doesn't matter. If auditor is indebted for more than 5 lakhs, disqualify. Correct? Now, can auditor receive audit fees in advance? Entire audit fee can I take in advance? If you take entire audit fee in advance before you start the work, it will again become indebtedness, no? Before you start work, how can you take the fee? Which means you are taking advance. Advance is indebtedness. So take fees only on progressive basis. Finish some percentage of work, take fees. That is permitted. Next. So that's it. Next is about business relationship point. Next one is relating to business relationship point. So this is little bit lengthy. We will take break and then come back. Okay, all of you, just go and get back within 15 minutes. So we'll continue with all this business relationship, all that. So the next disqualification is regarding business relationship. Next disqualification is regarding business. Remember, I will not cover each and every point. Briefly, I will revise and proceed. Getting it? So what are they saying? If a person or a firm which has a business relationship with a company or group companies. Now here actually group companies means there is additional one more company added. Subsidiary of associate company. Generally what are the companies? Auditor, the company or its holding company or is subsidiary company, or is associate company, or is subsidiary of holding company. Subsidiary of associate company is another point added in this. See, for this, no, there is no specific intention behind law. These provisions are drafted by different people at different points of time. So that is the only reason why this kind of inconsistency will be there. Suppose actually if you see the bottom, no, J, there is another disqualification, there is another disqualification. What it says you say. Here you see, if any person directly or indirectly providing prohibited services to the company, its holding company or its subsidiary, only 3 are covered totally. Whereas in business relationship, totally 6 were covered. Whereas securities, indebtedness, guarantee, 5 were covered. No, is there any logic behind this? Means no logic. Are you getting it? These provisions were drafted and added in different points of time by different people. If I ask you who is relative according to you, you will give some 3-4 relationships. If I ask another person who is relative according to him, he will give 7-8 relationships. Correct? Huh? Exactly same. So related party means who? Important related party means who? Important person means who? For everybody, it will have different number. Same way, when law is being made, the people who are drafting the law, according to their experience, according to their understanding, they will put that company list. Getting the point? That's it. So, this is a interpretation point. This is not a very big interpretational issue. Now, exception. So, you see how the disqualifications are drafted. You should not be a body corporate. That's okay. That's a legal interpretation issue. So, they removed it. You should not be an officer of the company. You should not be their partner, their employee. You should not have securities in the company. You should not have, indebtedness to the company. You must not have guarantee. You must not have given guarantee to the company. All the ways they are prohibiting. Just to make you independent. Very simple. What are they trying to achieve? Auditor and the company should not have any relationship. You should not have business relationship. Business relationship means what? You should not be a distributor, sub-distributor, wholesaler, retailer. Able to understand? Can I be a customer of a company? Can I be a consumer of the goods of the company? For that, no problem. As long as you are purchasing goods at arm's length price in ordinary course of business, no problem. Able to understand? When the problem will come, if you buy goods on credit, up to more than 5 lakhs, then only the problem will come. Indebtedness point will attract. Are you getting it? Otherwise, if you are purchasing on cash basis, using company goods and services for so many years, so much you are using every year, no problem. But if I am buying company goods and services with a view to resell, then it is called as business relationship. Are you getting it? Same way, professional services permitted to be rendered. For the company where I am acting as an auditor, I can provide some services. I can provide some services to the company as per CA Act. There are some additional services, even though I am auditor, I can provide. But which services permitted, but not prohibited? If at all you are providing prohibited services, you are disqualified under J point. Other than prohibited services, are you permitted to render any other service along with audit? Yes. If it is permitted service, even though you are having some relationship with the company, we will not treat it as business relationship. Apart from permitted service, apart from consumer relationship, if you have any reseller relationship with the company, distributor, dealer, authorized dealer, any such kind of relationship, what will happen? You are disqualified. Are you getting the point? Because if you are having a business relationship, you are having interest in the company, self-interest is it again. Next. Not only that, we have seen B point, officer of a company, employee of a company disqualified. Their partner and employee is disqualified. Not only him, relative of a director, relative of a key managerial person are also disqualified. And a person who is in full-time employment disqualified. Actually on this so much of discussion is there, but revision it is not required. Getting it? Even in exam point of view, not required. Or a person or a firm, a person or a partner of a firm holding appointment of more than 20 company auditors as on the date of proposed appointment. So this is called audit ceiling. What is this called as? Audit ceiling. Which means audit ceiling is not to protect independence, but to protect quality of the audit. What is the audit ceiling guidelines? What is the necessity of audit ceiling? Quality of audit. You cannot give permission to a single CA to accept any number of audits. He can audit maximum 20. How many maximum? 20 companies. However, the following companies, any number I can audit. 20 limit do not apply for the following companies. Which companies 20 limit do not apply? 1% dormant small company or a private limited company having paid up capital less than 100 crore provided such private company does not violate 137(92) section. If a private limited company do not violate 137(92) sections under company law provisions, getting it, and having paid up capital less than 100 crore, that kind of private companies, any number of companies I can do audit. Now tell me 20 companies they are saying no. Is it per financial year or per assessment year or what? At any point of time. Today right now I received a call example. Someone is asking me to do audit of a company. I will just look at my list of companies. Right now I am acting as auditor. Right now I am acting as auditor in some company's position. I will look at the list. Total I will see 20. If it is 20, I will not accept this company. If it is less than 20, I will accept the new company which is asking me. Able to understand? Any day whenever you receive a new worker, new client, new company audit, check whether how many companies right now, right then, how many companies are acting as an auditor. That's it. It is not per year, per financial, nothing such. Any point of time, at any point of time, you cannot do more than 20 companies. And while counting the 20, these companies will not be considered. Suppose if it is a partnership firm, the 20 limit applies per partner. It is applicable per partner. Now, in case if a firm is having multiple partners, number of partners multiplied by 20. Which partners you will consider? Only those partners who are CAs, having COP. Suppose I'm a partner in 2 firms. Now on firm A 20, firm B 20. No, all firms together. From my name, on my name. How many I can accept maximum? 20. Clear? Suppose if I am doing audit of a private company having paid up capital less than 100 crore but violated 137, violated 92, will this be exempted from ceiling limit? No, that will be counted as part of ceiling limit. Yeah. Next, in CA Act we have 30. In CA Act, what is the ceiling limit? 30, including private companies. Including private companies. Their private companies are not given exemption. Only 1% company, 1% company, dormant company were exempted as per CA Act. You can do maximum 30, excluding 1% dormant company. Remaining all will be counted. Now you have a doubt. Which one we should satisfy, sir? Both. Which one you should satisfy? Both. Suppose I am having 35 private company audits. Company law, as per company law, it is okay, fine. But as per CA Act, it is not permitted. Because I am having more than totally 30 companies. More than 30 companies I'm having, I'm disqualified as per CA Act. Code of Ethics. ICA will take an action against me. Are you getting the point? It's okay. You need not have that knowledge. Later you can learn. I'm just giving you a hint. Next up. Tax audits. How many you can have? 60. How many you can have? 60 tax audits. So, in computing specified number of audits, whether you are handling singly or combination with another chartered accountants, everything shall be taken. The number of partners of a firm on the date of accepting the new work shall be taken into account. Who are in full-time employment shall not be counted for ceiling limit. Yes or no? If at all, a member in practice is exceeding the limit, he is treated as guilty of professional misconduct. We have in ethics, schedule 1, part number 1, clause number 9. There is a guideline. If at all you are accepting company audit without satisfying provisions of Companies Act, it is treated as guilty of professional misconduct. You will understand that in CA final. Next. A chartered accountant in practice, okay, what they need to do, everyone have to maintain a record of works they are accepting. You need to maintain record of your clients list. That's it. All of you clear? Then we have another disqualification, important disqualification. Prohibited services. What is the disqualification? Prohibited services. I'm not covering every point. Remember, I'm only covering important disqualifications. Major I covered. Now, if a person directly or indirectly rendering any services under 144 to the company, holding company, subsidiary company, you are disqualified. What services if you render, you are disqualified? 144 services. 144 services name is what? Prohibited services. What do you mean by prohibited services? What do you mean by prohibited services? See, these are the prohibited services. They will ask you a straight question on this 4 marks question. What are they? Accounting services. To the same company, you cannot be accountant and auditor. Internal audit you cannot do because you are stat auditor. Why will you do internal audit? Implementation of financial information system. In the company, you are implementing some accounting software. You should not. You are testing some software. You should not. You cannot provide actuarial services if at all you are acting as auditor. You cannot do investment advisory. You cannot do investment banking. Investment advisory. Suppose some stockbroker, which is a company, they appointed you as an auditor and he is asking some investment advices from you. Or you are appointed as an auditor for one big company, listed company. They are asking you to underwrite their IPO. That's called investment banking. Getting it? Outsourced services. Management services. Management services means those services where it involves decision making. Example of management service is independent director. What is it? Independent director is a management service. Able to understand? Next example. Or any other service prohibited. Suppose if at all you are having any of the above services, can you accept the appointment as an auditor? No. Suppose if you withdraw from the above services, can you accept the auditor appointment in that company? Yes. You should not provide these services to which companies? The company where you are proposed as an auditor, it's holding, it's a subsidiary. That's it, correct? Huh? Next, we have now they are saying the word directly or indirectly. What do you mean by directly, indirectly? If I only provide to the company, that's called, in case of auditor is sole proprietor himself, that is direct. Through relative, indirect. Or through any other person connected or associated with me through any other entity in which I have significant influence or control or whose name trademark is used by me. Getting it? You have to read this 3 and 4 and this point together. Any other person connected or associated with that individual. Associated or connected with me means what? I am a partner in another firm. Can that firm provide that services to the company? No, because the firm is connected with me. The firm is associated with me. Able to understand? Or some entity, example company. The company is providing accounting services to Tata Motors where I am auditor. What is this company? Some management consultancy other services company. In this company, I am the individual has 20% shares. I am the individual has more than 50% shares. Now in a company where I am having influence or control, the company is providing accounting services to Tata Motors where I am acting as auditor. Disqualified. Able to understand. Or the company has a brand name, same brand name we are using, same trade name we are also using for practice. Then also it is said to be providing indirectly. Are you getting it? Similar definition was given for firm. This you look into. All of you clear? What do you mean by directly, indirectly? They asked as a straight theory question. The past one of the attempt they asked. Think it. Next. Subsequent disqualification point. What is this subsequent disqualification point? We have seen above points. If at all a chartered accountant is coming under any of the above point, we will not appoint him as an auditor. Suppose we appointed. After that disqualification arises. After that disqualification arises. Now what will happen? He shall immediately vacate the office. He shall immediately vacate the office. Yes or no? He shall immediately vacate his office. Office means what? Position. Office means what? Position of auditor. Office means not office, chair, table. Getting it? So auditor should immediately vacate his office. Nothing but position. But in one of the case alone, in only one case, immediately don't vacate. I am giving you 60 days time to rectify your mistake. Only if it is in this kind of disqualification, 60 days time is given. Suppose you are affected with disqualification in the above list any reason, generally any reason, on which date you are affected with disqualification, same date you have to vacate. You don't have any other option. But if you have one disqualification, no. Security held by relative up to 1 lakh is permitted. Suppose my relative acquired securities for more than 1 lakh face value accidentally. How accidentally? Bonus shares. What is it? Bonus shares. Suppose in Tata Motors, my wife is having some 75,000 rupees face value worth of shares. Market value doesn't matter. Market value can be crores. But face value 75,000. Tata Motors declared 1:1 bonus shares. She didn't purchase. Can a shareholder say, I alone don't want bonus share? And company declare every shareholder will be allotted. Company also cannot stop. Yes or no? Her shareholding became 1,50,000 face value because of the bonus shares. Face value increases, no. 1,50,000 face value suddenly. Now just tell me, I told her not to buy the shares because I am the auditor. I took all the precautions. Still, because of the company bonus plan, the shareholding percentage increased. Is there any mistake that I did? In all other cases, if at all something went wrong, I might have not taken sufficient precautions. Correct? Here I told, in spite of it, shareholding increased. Is there any my side mistake or my relative side mistake? That's why, because considering this difficulty, if a shareholding of relative increases more than 1 lakh, please rectify that within 60 days. Sell 50,000 worth of face value, make it less than 1 lakh. Then continue as an auditor. 60 days over, still you didn't rectify. 61st day, you have to vacate. Be able to understand. All of you, the logic. Next. Now, who is relative? In case of HUF, every member of HUF is a relative to each other. Remaining people, in case of other than HUF, husband and wife is a relative. Or father, mother, brother, sister, son, son's wife, daughter, daughter, husband. Getting it? Now here you see daughter, stepdaughter is not there. That kind of observations and all stop. புரியுதா? நம்ம கேட்ட content இல்லல தான் இந்த மாதிரி observations எல்லாம் highlight பண்ண முடியும். So there is no intention here. Getting it? So all of you clear on ceiling limit, all that? So that's it. Disqualifications is done. So maximum tax audit assignments, how many you can accept? 60 per financial year. That is per financial year, not at any point of time. Whereas company audit 20 at any point of time. Be clear. Next we will have to discuss appointment of auditors. Until now, everyone clear? Next. Getting more clarity? Next. Appointment of auditors. Appointment of auditors. See, the appointment of auditors process involves two things. One is selection of auditor, one is selection of auditors, one is actually appointment process. Now again, selection of auditor is different for government company and selection of auditor is different for non-government company. Here also, selection of auditor is, appointment of auditor is different for government company. Appointment of auditor for non-government company, the process is different. Now, we have only in our syllabus, we don't have in our syllabus how to select auditor for government company, we don't have. How to select auditor for government company, we don't have in the syllabus. We have in syllabus how to select auditor for non-government company, procedure for appointment for government company, procedure for appointment for non-government company, everything we have in our syllabus. Now here, what is a government company? 4 criteria are there. If any of these 4 criteria are satisfied by a company, it's a government company. Criteria 1, not less than 51% of the voting power held by central government. Or criteria 2, not less than 51% held by state governments, one or more state governments. Criteria 3, a combination of central and state together held minimum 51% of voting power. Or if a government company is a subsidiary of another government, if a company is a subsidiary of another government company, then that company is also government company. Only these 4 criteria. Are you getting the point? Now, many have this confusion. What is private limited company? What is public limited company? What is private sector? What is public sector? So this is where we will have an opportunity to discuss that. See, private limited company means what? The ownership of this company is restricted to private people. My company is not open to public. Anybody going on roadside public cannot come into ownership. Yes or no? You saw my company, you liked it. You want to become owner. No, not possible. It's private. Able to understand? The affairs of the company are private. Confidential. Are you getting the point? What is public limited? I'm open to public. My company shares are open to public. My members can sell to anybody. Anybody can buy and become a member. That is public limited. Understood the word public limited means what? Private limited means what? Concept part. Now, next, in this, how many of you have cleared group 1 already? Oh, நிறைய பேர் இருக்காங்க. Fine, it's okay. Now, what is public sector and private sector? Public sector, I mean, okay, ITC. What is it? Private sector or public sector? ITC Limited. Public sector. Major ownership is held by government. Yes or no? Tata Consultancy Services Limited. Listed company. Big listed company. Public limited listed company. Public sector or private sector? Private sector. Why in TCS, less than 50%, more than 50%, more than 50% ownership is held by not government, somebody else. Some shareholders. We are we government? No. We are public. If more than 51% of the voting power is held by government directly, central, state, what? Then only it is called as public sector undertaking. Otherwise, it is not public sector. Reliance, all these are public limited companies, but private sector. Private sector, public sector is not company law term. It's an economics term. Understood? In Companies Act, will you find the word private sector? Clear? Understood? That's it. So, government company means naturally public sector. Non-government company, private sector. Now, non-government company can be private limited company, public limited company. This is company law terminology. Understood the difference between public limited company and public sector company? Public sector means government owned. It may be public limited. Public limited company not necessarily government owned. Reliance Industries Limited is a public limited company. Public like you and me can buy shares, no? But is it government owned? So it's private sector. Understood? Private banks we call. Private bank means what? Private limited company, huh? ICICI Bank is a private bank. But what is ICICI company name full form? ICICI Limited. Where is private word in that? But we are calling it as private bank because it is owned by private people, not government. Now, see how to select the auditor. In case if a company is having audit committee, so what do you mean by audit committee? See, in company, there are many board of directors. If you look at Reliance Industries Limited, it has many directors. Just a minute. So you take this is Reliance Industries Limited, and in this company, you see there are 14 directors totally. There are how many directors? 14 directors. These are the directors of Reliance company. Getting it? And you see here, so Mukesh Ambani, he is one of the directors, chairman and managing director. Neeta Ambani, non-executive director. See again, directors know there are various types. Independent director, non-independent director. Independent director is something like who do not have any interest in the company, who do not have any relationship with the company. He is just a director. Director simpliciter. We call him as. Like how auditor, same independent director. He is appointed based on merit. He is appointed to look at the company, monitor the company, watchdog. Getting it? Now you see, in listed companies or in many big companies, 14 directors were there, right? Now this company, business will be taken care, business has to be looked upon, accounts have to be maintained, audit has to be conducted. There are so many works which CSR activities have to be undertaken, governance activities have to be undertaken, HR policy should be designed, company risk and all has to be, strategic risk management and all they need to check. Strategic management you might have studied, no, business risk analysis they need to do. Do you think all these 14 directors will do all the activities? No. How the board of directors work? They divide the work between them. They divide the work between them. So that's why, how do they form? They form committees. How do they form? They form committees. There are 14 directors. Whenever board meeting is held, all 14 will present. But whenever accounts and audit shall be discussed, yeah, accounts and audit, some 4 directors are there. 4 of you take care of accounts and audit. 4 of you will take care of how? Form a committee. What committee? Audit committee. Business risk analysis has to be done every day. Some 3 directors were there. 3 of you please form. That is a risk management committee. Company HR policies shall be designed. Human resource policy, salary policy, increment policy, all that. Human resources and nomination and remuneration committee. Some directors together, 3 or 4 of them will form. Company finance completely has to be looked upon. Finance committee. Company CSR project. Some directors have to be looked upon. CSR committee. Overall governance aspects have to be checked upon. Corporate governance committee. Stakeholder relationship committee. Likewise, there are many committees which has to be formed. One example of committee is what? Audit committee. So audit committee will have whom? Board of directors. Will all directors will come in audit committee? No. Few of them will come in part of audit committee. So which companies this committee is mandatory? Now whenever audit committee is there, what will happen? They will exclusively look into audit related aspects. They will exclusively look into financial statements, preparation related things and all. They will guide. Whenever a company has audit committee, those charged with governance means whom? Audit committee. Those charged with whom governance means what? Audit committee, then board of directors. Higher level. Board is ultimate. Audit committee is below board. But audit committee will give recommendations to board. Audit committee will guide the board of directors. Not every director is having knowledge of accounts and audit. But audit committee directors will have that knowledge, because the members of audit committee must have, composition of audit committee. The audit committee will have minimum 3 directors. Majority means 51% shall be independent. The members of audit committee shall be able to read and understand financial statement. They should have financial statements knowledge. Do you think financial statements can be understood by everybody? Going concern means what? Only you and me can understand. Because we have that question. Because it is important for exams. Will our parents, even though they are educated, do they understand going concern topic if at all they are not from commerce background? Suppose your father or your mother or your relative, some of them is working in a tech company. No idea about commerce, balance sheet, nothing. You go and ask him, hey, this company is preparing financial statements on going concern basis using generally accepted accounting principles. You will not understand anything. Correct? So financial statement is not something that can be understood easily. So audit committee, whoever director is coming part of audit committee, they must be having the knowledge to read financial statements. Now, so that is how company has to constitute audit committee. Now tell me, for whom this is applicable? All listed companies, audit committee is compulsory. Unlisted public companies, any of the 3 criteria if they satisfy, any of the following 3 criteria if they satisfy, audit committee is required. Here actually exceeding 50 crore they say, it is only more. 50 crore is not there, only more than 50 crore. But this kind of mock observation is not required. Getting it? In institute they will not ask MCQ, is it 50 or more than 50? They will not ask that kind of question. Getting it? Broadly you remember, that's enough. Next, these limits shall be taken as on last preceding audited balance sheet date. Now, what is the selection of auditor for appointment of auditor? Before appointment, first you should select the auditor. No. Now, what is the procedure for selection? Suppose, first if audit committee is constituted, then the auditor shall be selected by audit committee. If audit committee is constituted, then auditor must be selected by audit committee and recommended to board of directors. Board of directors can't appoint. They will recommend it to members. By the way, we are discussing this entire provision from which company point of view? Government point of view, non-government. Government company selection we don't have in syllabus. Government company auditor selection is taken care by C&AG. C&AG has some panel where you and me have to register. We chartered accountants register. If C&AG want government company appointment, they will allocate audit. They will select auditor on suitable basis. So you and me cannot decide that. So C&AG. But for non-government company, auditor will be selected by Audit committee, they will recommend to board of directors and board will recommend to members, members will appoint. Sometimes audit committee will select the board, no. Board of directors may not agree. Then what board of directors will do? Please audit committee change another person. Audit committee decided not to change. No, I will go with the same person. ABC and chartered accountants are very good. Board of directors are not okay. Now who will prevail? Whose decision ultimately will prevail? Board of directors. And whenever board of directors disagree with audit committee, they should record the reason. They should record the reason. Able to understand. And wherever audit committee and board of directors disagreed with each other, corporate governance issue, it shall be given in annual report. Why board disagreed with the committees and what is the reason? They should give information in the annual report as per SEBI. Generally, board will not disagree. But if at all they disagree, they need to give explanation to all the shareholders why you did not follow audit committee. Audit committee, honest people, independent directors. They will take right decision. Why are you rejecting them? Are you getting the point? People will question. Understood or not? So ultimately they will recommend to members. Members will come and appoint the auditor. And that appointed auditor, his appointment is valid up to 6th AGM conclusion. This is a broad process. This is what we clearly mentioned. Board may agree with the proposed auditor. If board disagrees with the recommendation, refer to audit committee for revision. Audit committee decided not to change. Then board can recommend to auditor, proposed auditor, and the fact that they disagree with the committee selection and reasons, members may take final action. Easy. Next. So what is the appointment procedure? What is the provisions related to appointment? Now here, again, I told you appointment process is different for government company and non-government company. Again, for government company itself, we have how to appoint first auditor, how to appoint subsequent auditor. Non-government company also we have how to appoint first auditor, how to appoint subsequent auditor. Who is a first auditor? If the auditor is appointed for the first year of its incorporation, we call him as first auditor. Nothing but if the auditor is appointed for conducting audit of first financial year, we call him as first auditor. Any other auditor is subsequent auditor. Getting it? You know, company financial year. No, there is a definition for financial year. If company financial year shall end on 31st March, shall gap, the maximum duration of financial year is what? 15 months. Maximum financial year can have how many months? 15. Only in the first year 15 months is possible. Getting it? Suppose if a company is incorporated between January 1st and 31st March, only between this, if company is incorporated on or after 1st January up to 31st March, only within these 90 days or 91 days, whatever, if a company got incorporated, it can have more than 12 months financial year. If a company incorporated on January, generally closing should be done by 31st March. But immediate 31st March I will not do. I will go beyond 31st March. Are you getting the point? I will go beyond 31st March. One of the students have told me indirectly, a company cannot have less than 3 months financial year. That interpretation is wrong because that is not a condition. Able to understand? Simple. If a company incorporated in January 1st, by 31st March instead of closing, I will close on the next 31st March. Suppose I incorporated on 1st January 2022. I will close my books of accounts on 2023. What is the gap? 15 months. Suppose I incorporated on 1st March 2022. I will close on 31st March 2024. The gap is more than 15 months. So not permitted. So 2023. Gap is less than 15 months? Yes. Accepted. Suppose I am incorporating company on 1st December 2021. Let me check up to 31st March 2023. Gap is again more than 15 months. Not permitted. But I should close on 31st March only. So which year I should come? 4 months. It is permitted. Okay. Less than 15. It can be 15 or less than 15. And should close by 31st March. So this is first year. So in some exceptional cases, first year can be more than 12 months. But not exceeding 15 months. Only first year. Second year onwards, April onwards, it will start again close on 31st March. All other years will be only 12 months. Very clear. Next. So if auditor is appointed for the first year of incorporation, we call him as first auditor. Remaining are called as subsequent auditors. Now, in case of government company, first we will discuss provisions for government company. So what is the procedure for appointment of auditor in case of government company? The first auditor will be appointed by whom? Selection will be by C&AG. Appointment will also be C&AG within 60 days from the date of registration. Many students fail to write the word from the date of registration. Complete answer. If C&AG fails to appoint, board of directors will appoint within next 30 days. If board also fails to appoint, inform the members who will appoint within 60 days at EGM. This point many people will not write. And not only this, whoever is appointed, his appointment is valid up to conclusion of next AGM. Conclusion what many people will miss. Until next AGM, until conclusion of next AGM. What's the difference? Suppose I planned the AGM on 10th August. But on that day, quorum was not formed. Or quorum was formed, some additional discussion came. AGM was adjourned to 17th August. Now AGM finally concluded when 17th August. Now if I say appointment is valid up to until next AGM means what? 10th August. Conclusion of next AGM means what? 17th August. What is the provision? Conclusion of first AGM. So the auditor appointment, auditor shall hold office till conclusion of first AGM. Able to understand. So whenever a question has been asked on this practical question, you should write fully like this, provision. Now, what about subsequent auditor of government company? Appointment of subsequent auditor for government company. The C&AG only shall appoint within 180 days from the date of commencement of the financial year, and his appointment is valid till the conclusion of next AGM. Conclusion of next AGM. Are you getting it? For non-government company, we will check with the dates. Getting it? Now, what is the appointment procedure for non-government company? First auditor. First auditor of non-government company. Who will appoint? Board of directors will appoint. First auditor of non-government company shall be appointed by board of directors within 30 days from the date of incorporation. If they fail to appoint, inform the members. Members shall appoint the auditor within 90 days at EGM. 90 days will be calculated from date of registration. 90 days is calculated from date of registration. If board fails within 30 days, next 60 days members will appoint. But instead of defining next 60, what they said? Just within 90 they said. Now 90 means what? From which date? Incorporation date. Are you getting it? But don't write 60 days word. Write only 90 from incorporation. Don't even mention from incorporation. Just you understand that. You just simply write within 90 days. That's it. Are you clear? And the auditor will hold office till conclusion of first AGM. Clear? Now, we'll take an example here. Suppose a company XYZ Limited was incorporated on 10th April 2020. This is the year when the company was incorporated. So first year is what actually? What is the first year? 10th April 2022, 31st March 2020. Okay, sorry, 2021. Now within 30 days means by 10th May we should appoint the auditor. Let us assume board of directors has appointed on 5th May. Board of directors have appointed on 5th May Mr. A as the auditor. Now Mr. A appointment is valid up to conclusion of first AGM. Company year is over on 31st March 2021. First AGM will be conducted within 9 months, no? But company decided to conduct within June itself. They didn't wait up to 6 months also, within 3 months itself. Every time the company will conduct AGM in June month only. Let us assume 15th June 2021 is first AGM for the company. First AGM for the company. No adjournment, nothing. Same day, everything concluded. Mr. A appointment is valid up to 15th June. Now, Mr. A is reappointed. Mr. A is reappointed for how many years? Subsequent auditor. Mr. A is appointed on the same day again. Mr. A is appointed. Mr. A is appointed on the same day again. Now his appointment is valid up to 6th AGM. conclusion of 6th AGM, which means this is year 1, this you don't count. So here he is appointed. Now first he will do audit of which year? Or let us assume Mr. B is appointed. Mr. B is appointed as subsequent auditor in the first AGM, whose appointment is valid up to 6th AGM from the conclusion of first AGM. Now Mr. B will do audit of which year first? 1st April 21, 31st March 22. So 21, 22 he will do audit. 2021 last year auditor did. He audited. What about 21, 22? Who will do audit? B will do. That year will over on 31st March 22. AGM is conducted 15th June 2022. Will he leave the company? No. Again he will do audit of 22-23. The AGM is conducted on 15th June 2023. Again he will do audit of 23-24. Then AGM will be completed on 15th June 2024. Same date company is conducting AGM. Let us assume. Sir, what if it is Sunday? Don't ask. Okay. Just for the sake of example. Next. 24-25. Same 15th June 2025. Again 25-26. 31st March 2026. Books of accounts closed. And audit is done in the 2026 AGM. Completely everything is done. Now he will leave. Now you see, this is the 6th AGM. From the AGM where he was appointed. Suppose if I call this as 1, 2, 3, 4, 5, 6. Suppose if the auditor is appointed in 40th AGM. His appointment is valid up to conclusion of 45th AGM. If auditor is appointed in the conclusion of 45th AGM, his appointment is valid up to conclusion of 50th AGM. Likewise it will come. Able to understand, all of you. Correct? So now you see, for how many years he is doing audit totally? How many financial years? 5 financial years he is doing audit. Able to understand? Now we will say no, auditor is appointed for 5 years. Not correct. Auditor is appointed for conducting audit of 5 financial years. That is correct sentence. Suppose no, first AGM is conducted in 15th June, whereas 6th AGM was conducted in September. Gap is more than 5 years. But 6 AGMs only. But gap is more than 5 years. Our first AGM was conducted in September. 5th AGM was conducted in June 6th. The gap is less than 5 years. So auditor may be appointed for a duration of more than 5 years or less than 5 years. But he will do audit of. That's it. Understood. Conceptually you should understand all this. Next. Next. So everyone clear all of this, all of you. So that's it. That is regarding subsequent auditor provision. Every company shall at AGM appoint an individual or a firm, and appointed auditor shall hold office from the conclusion of that meeting till the conclusion of 6th AGM, and thereafter till the conclusion of every 6th AGM. Now this question has been asked. What are the certificates the company shall obtain from the proposed auditor or proposed cost auditor or proposed secretary, anybody? What are the certificates the company shall obtain from proposed cost auditor? They may ask you like this. Cost auditor also has same disqualifications. Before appointment is made, first get the consent. First of all, is he interested or not? Ask him. Don't give him a surprise that he was appointed. Correct? Next, a certificate indicating he is eligible and not disqualified. You should get a certificate that he should give a self-declaration that I am eligible to become auditor of the company. I met with qualification. I don't have any disqualification. And he should once again give declaration. Total number of audits after accepting this client also will be within ceiling limit. And I should give him list of pending cases against me or my partner or the firm indicated in proper manner. I should give all these declarations to the company. Only then company board of directors recommend to members. Then members will appoint. Yes or no? Once auditor is appointed by the company shall file a form with ROC within 15 days. The form number is ADT1. Mostly they will not ask this form number. Some senior citizens, whoever is setting paper, they will ask. Getting it? வீட்டோ உக்கார மாட்ட சும்மா எக்ஸாம் பேப்பர் செட்டரா வந்துட்டு இந்த மாதிரி மொக்க கொஸ்டின் எல்லாம் கேள்வி கேட்பா. எஸ் ஆர் நோ? இது 30 days 60 days என்ன ஆச்சுன்னா என்ன ஆயிடும் உனக்கு எனக்கு? You should ask the concept, yes or no. You should test the concept, analytical skills of the student. Next, everyone clear? Where at any AGM, if no auditor is appointed or reappointed, if no auditor is appointed or reappointed, existing will continue to be auditor. This provision is copy pasted from previous Companies Act to this Companies Act. Now in this Companies Act, no relevance for this. Getting the point? Earlier, no, before this 2013 Companies Act, we used to have appointment every year. Only after 2013 Companies Act, 5 years at a time appointment concept came. Now 5 years appointment concept at a time, we will not apply this provision. But still some super senior citizens setting the paper are questioning this. Because they don't know Companies Act 2013, they would have not read. They read only 1956, they're still in that only. Next. So all of you clear? Everyone? Next. Provisions of filing casual vacancy. So how to fill casual vacancy of the auditor? So what is that vacancy? Casual vacancy. What is meant by the word casual? They just used casually. Promise. They just used the word casually. There is no significance for the word casual. See, when will I say casual vacancy? If at all uncasual vacancy is there, then it's a casual vacancy. Would have some significance. Is there any uncasual vacancy provision in the law? No. Simple. In auditor's office, no position, no. If auditor is not there in the position, he is disqualified because of some reason. Then there is a space, no, there is an empty, no, in the position. Who is auditor? So that vacancy is called as casual vacancy. Are you getting it? Now casual vacancy shall be filled. Yes or no? So how to fill the casual vacancy? First of all, what do you mean by casual vacancy? First of all, what do you mean by casual vacancy? In this example, the auditor was appointed on 15th June 2021. Yes or no? First AGM. And his appointment is valid up to 15th June 2026, which is 6th AGM conclusion. I am talking about non-government company. Example. Now, this is the date of appointment. This is the expiry of term. What is it called as? Expiry of the term. This is called term of appointment or tenure. So, once the term is over, then the term is expired. What you have to do on the expiry? You have to leave the company. But before expiry of the term. You left the company. The auditor left the company before expiry of term. Why he will leave the company before expiry of the term? There are many reasons. Yes or no? The auditor might have died, demise of the auditor. Or if it is a partnership form, dissolution might have happened. Or the auditor may become incompetent to contract. The auditor may have become incompetent to contract as per contract law. Or auditor might have been disqualified subsequently after the appointment. Subsequent disqualification immediately shall vacate, and that vacancy shall be treated as casual vacancy. Or auditor was removed by the company. Company only removed. Or tribunal removed. Either company or NCLT, someone have removed. Or auditor poita resignation. Auditor himself resigned. Any reason. By reason of by any reason, if the position of the auditor became empty, that vacancy is called as what? Casual vacancy. Remember, there is a definition for casual vacancy. Vacancy arising in auditor's office by any reason other than expiry of term. Other than expiry of term, if vacancy comes, that's a casual vacancy. Term expired, he left. That is not casual vacancy. 6 days, he will leave company. Is it vacancy? No, that is not casual vacancy. Before expiry of term vacancy, if arises, it's called as casual vacancy. Now, how to fill the casual vacancy is the question. Can I just leave like that, or should we fill the auditor? That is the question. We must fill the auditor. Casual vacancy. In case of non-government company, what is the procedure? In case of government company, what is the procedure? This is the question. Now, in case of government company, casual vacancy shall be filled by whom? C&AG within 30 days. Hey, auditor left the company, man. Audit was not conducted. Books of accounts have to be prepared. Books are prepared. Auditor has to conduct the audit. Audit report should be given. We should send to all the shareholders. We should call for the general meeting. All this, if it should happen, audit must be done. And the auditor left. So we cannot continue like this without auditor. Can we conduct AGM without having financial statements? You might have seen in 137. Yes or no? So C&AG will appoint within 30 days. If C&AG do not fill, board of directors will fill within next 30 days. Now, what if it is a government company? What is the why auditor vacancy is there? Check it out. Auditor died, or dissolution in case of partnership firm, or incompetence to contract, or subsequently disqualified, or he was removed by the company. Any reason other than resignation. Vacancy arises not because of resignation. We only removed him. Board of directors can fill within next 30 days another chartered accountant. Suppose if it is resignation, the appointment shall be approved by company at the general meeting. Which general meeting? EGM, which will be convened within 3 months of the recommendation of the board. Board will recommend the auditor. They will not appoint. They don't have power to appoint you. They will recommend the auditor. Within 3 months meeting will be conducted. Their auditor will be appointed. Are you getting the point? All of you. Sir, within 3 months AGM only coming, sir. Can I directly appoint in AGM? If you want to conduct AGM, first books of accounts, financials, everything must be audited. No. Audit report must be there. No. Then only you can conduct AGM. Correct? Huh? In order to call AGM, you must send 21 days notice. Along with notice, what will you send? Financial statements and audit report. So, auditor resigned, financial statements not ready, financial statements were not audited. How can you call for AGM? At a time, how can you mix these two? So first call AGM, appoint auditor. He will do audit. Then again call AGM. He will explain to all the shareholders all the things. Clear? Now, we are appointing auditor, no? Government company, anyhow it is appointment is valid up to next AGM conclusion. Non-government company 5 years, no. In casual vacancy also 5 years it will come. No. In casual vacancy if you are appointed, always your appointment will be until conclusion of next AGM only. Original auditor was appointed for 5 years. You are not appointed for 5 years. You are appointed temporarily. In AGM, people will decide. In AGM, people will decide. Able to understand. That's it. So what is casual vacancy meaning is also explained. Next. Now, auditor can resign, no? How he should resign? That is a question. How he should resign? Can he resign or not is debatable question. That you will understand in final. How to resign, all that. If at all you want to resign, what procedure you should follow? That is given under Companies Act. First, if you want to resign, inform the same to C&AG in case of government company. More importantly, first inform to the company. Yes or no? And you need to file a form with ROC in ADT3 within 30 days from the date of resignation. In auditing chapter, you will get totally 4 forms. ADT1, ADT2, ADT3 and 4. 1 and 2 filed by company. ADT3 and 4 filed by auditor. ADT3 resignation. ADT4 reporting of fraud. ADT1 appointment of auditor by the company. Means company did the appointment, so they need to inform. Company want to remove the auditor. Say they did removed, so they need to file. Resignation who did? Auditor. So he has to file. Fraud who should report? Auditor. So who should file? Auditor. That's why 1 and 2 by company, 3 and 4 by auditor. Understood. Next. Now, whatever the reason form you are filing, no, should you mention reason or not? Clearly. Whatever, anything is fine. Any reason you can mention. So, the auditor should mention the reasons and other facts that may be relevant regarding resignation. Suppose if you fail to comply with this, if you fail to comply with the above terms and conditions, you are liable for punishment under 140 subsection 3. What is the punishment? 140 subsection 3 says, if you fail to inform the company, if you fail to inform the C&AG, if you fail to mention the reason for resignation, if you fail to file ADT3 form with the ROC, any failure, you are liable for penalty. Penalty is having 3 parts. Fixed penalty, variable penalty. In the law, you don't find these words. For understanding purpose, I am using. What is a fixed penalty? Auditor is liable for a penalty. What is the provision? In case if the auditor failed to comply with 140 subsection 2, he is liable for a penalty of 50,000 rupees or auditor's remuneration, whichever is lower, and for continuing failure, 500 rupees per day, subject to overall maximum of 2 lakhs. This is a question. This is a statement. Now, fixed penalty is how much? 50,000 rupees or remuneration, whichever is lower. And variable penalty is what? 500 rupees per day for continuing failure from the date of first failure. Now, when the first failure will start? After 30 days. After 30 days. Within 30 days you have to inform. Up to 30th day, is there any failure on your part? After 30 days also, you didn't inform them. 31st day onwards, you are failing start, no. So every day is a failure, no. You are failing with the provision. So for every day after 30 days, 500 rupees per day penalty we have to calculate. Now as a whole, what is the maximum limit? 2 lakhs. That's it. Easy or not? Next. Now then we still have removal of auditor. So next, removal of auditor. Now removal of auditor is again having 2 provisions. Removal of auditor by company, removal of auditor by NCLT. Removal of auditor by company, removal of auditor by NCLT. Now what is the procedure? If company board of directors want to remove, first board resolution is required. Then you must obtain central government approval within next 30 days. Getting it? Central government gave approval. You filed a form ADT2 to central government and got approval. After getting approval, within next 60 days, conduct an extraordinary general meeting. Inform the members what happened clearly. Pass special resolution. 3/4 majority is compulsory. Only if central government gave approval, only after passing special resolution, auditor will be removed. Otherwise, he will not be removed. Now, before you do this entire process, if you want to remove the auditor, first you should communicate him, no. Opportunity of being heard should be given, no. So, before removing the auditor, an opportunity of being heard shall be given. Now, here you see the provision. The rotation, I'll come back later, okay? So, provisions related to removal of auditor. Getting it? So, an opportunity of being heard shall be given to the auditor before removing him. Actually, in my main material, I think we have added a question. Why central government approval is required for removing an auditor before expiry of term? Actually, removal means what? Is it after expiry of term or before expiry of term? Logically, common sense, before. Term expired, he will only live. Why you have to remove? After 6 months, you will only live. Why should I suspend you? Correct? So, before expiry of the term only, removal, permission, prior approval of the government, everything is required. Otherwise, not required. Correct? So, in the main material, I have a question, additional question. Why central government approval is required? Why central government approval is required if auditor shall be removed before expiry of term? Suppose if auditor want to be removed after expiry of term, that is not removal, first of all. That is not removal. Auditor will naturally change. Able to understand. Now you have a provision here. 140 subsection 4. There is a provision. How to appoint an auditor other than retiring auditor. How to appoint an auditor other than retiring auditor. Special notice. Have you seen all that? So many will read that provision without understanding it. I will give you the logic here. Okay. So understood until now? Next. Removal of auditor by NCLT. When NCLT will remove the auditor? If NCLT received an application from either tribunal on its own or central government or some aggrieved party. What application? Application is received that auditor of a company has acted in fraudulent manner, colluded with the directors and officers and cheated public. Then tribunal will direct the company to change auditor. Then that means casual vacancy arisen. Company will appoint another auditor. Government company, C&AG will appoint. Suppose if the application is made by central government. Central government means what? Income tax department, GST department, somebody. Okay. And tribunal satisfied that change is required. Then it shall make an order that he will not function as auditor within 15 days of receiving the application from central government. And central government may appoint another auditor in his place. Understood or not? Further, the auditor on whom this prohibition order was made, the auditor in respect of whom the prohibition order was passed, he will not be liable to become an auditor for another 5 years. The firm itself is disqualified for 5 years for all other companies. The firm against whom this disqualification notice was given, it is disqualified, for 5 years to do statutory audit for any company. Not only the company where you are removed. In every other company also you are disqualified for next 5 years. But this CFO can do non-audit services. Audit services they can't do. Able to understand. That's it. So that is regarding removal of auditors by tribunal. Next we have rotation of auditors. Next we have rotation of auditors. Getting it? Actually we have a spelling mistake here. So rotation of auditor. It's okay if at all you have that any small mistake, you can take it out. Now rotation is applicable for these companies. I'm not talking about the rotation, applicability points. What is the manner of rotation? You know why rotation of auditors concept came? To eliminate familiarity threat. If you are having continuous association with company for so many years, if you are continuing as an auditor for so many years, will you develop some bonding or not? Auditors and directors develop some bonding. Maybe you don't have any relationship with the company, business relation, you don't have shares, but your independence of mind will affect, no? Naturally, you develop some sympathy towards the client. They will develop some sympathy, some bonding will be developed. Now you are becoming more familiar. Mind is compromised now. Able to understand? So, compulsorily auditor has to be changed. By the way, this provision is applicable for which companies? Non-government companies. For government company, CLDG will take care. We are discussing rotation provision only for non-government company. Now, what is the rotation provision says? If at all a company appointed individual as an auditor, for how many years an individual can be appointed continuously? One term of 5 years. Not even 5 years, they say 5 consecutive years. Now, an individual completed one term. First, 39th AGM appointed, up to 44th AGM conclusion, this fellow is there. Can we reappoint him one more term? No. Can I reappoint one more term? No. Because he is an individual. For how many years we should block him? From expiry of the term till next 5 years, I should not appoint him. Correct? Suppose if it is a partnership firm, my auditor. Can I appoint at a time 10 years? No. I will appoint for one term of 5 consecutive years. Can I immediately reappoint for another term of 5 years? Yes. Another term we appointed. After 11th AGM, can we appoint again one more term of 5 years? No. How many years we should block them? 1. Getting it? Now, in my entire lifetime, with 2 auditors, can I manage? Happily, I can manage. 10 years, one firm appointed. 5 years, another auditor. Again, 10 years, I brought back the firm. Again, 5 years, this fellow will come back. With the 2 persons, with the 2 individuals or with the 2 firms, I can easily manipulate. No. Able to understand. All of you. Now, you see the word here, they use the word firm of auditors. Firm of auditors means sole proprietor of partnership firm. Act do not contain anything clearly, but ICI gave a notification saying it is, MCA gave a notification saying it is a partnership firm and LLP. Not sole proprietary firm. Sole proprietary firm is also firm only. Able to understand. Now, when you are rotating, getting it? What points you should take care? You should take care. Like we will call, if an auditor who is appointed in 39th AGM, he will be retiring in 44th AGM. He is retiring. Can I reappoint him? Means I will check is he eligible or not. If the company rotation is applicable, this is individual not eligible for reappointment. If not eligible for reappointment, retiring auditor will be reappointed or not? Not reappointed means he will leave the company. Then he is called as outgoing auditor. Now in his place another auditor is coming. No, we call him as incoming auditor. Now incoming audit firm, outgoing audit firm, common partner should not be there. If at all there is a common partner, the new firm is also blocked for 5 years. Outgoing auditor, incoming auditor shall not belong to same network, Airtel Jio, not that. Getting it? There are network firms in India. Okay, like Deloitte, KPMG, ENY, BDO, PwC. There are so many network firms in India. Grant Thornton, getting it? So GT. So there are so many network firms that are there in India. Now, network means what? It's a brand name. The actual firm is different. ABC & Co is a Deloitte firm. DEF & Co is also Deloitte firm. DHI & Co is also Deloitte firm. ABC & Co completed 10 years in one company, 2 terms. Now, can I appoint DEF & Co which is also Deloitte network related firm? No. Network itself should change. Sir, what is network? How to form this network? All that you have in CA final ethics chapter. No, it is not required. Understood or not? Not only that, a person who is a partner in charge of the firm certifies the financial statements of the company, retire from the company and join another firm. The another firm is also disqualified for 5 years. Suppose last 10 years ABC & Co is our auditor. In that, Mr. A is signing our balance sheet P&L. Our company balance sheet P&L. Now that firm 10 years completed, left. Mr. A, no, withdrawn from the firm, resigned from the firm also, came out, retirement of the partner, joined with another firm. Is it a common partner? No. He is not a common partner. He removed, no. In one partnership, he came out. He came. So common partner point cannot be applied. Now he joined another new firm, right? Can I appoint that as an auditor? Then also not appoint. No, you should not appoint. Now here people are making all wrong interpretations. Sir, Mr. A signed the financials and he resigned. He went to another firm. Then the firm is disqualified. Suppose ABC & Co, sir, 10 years they did audit. Mr. A is only signing our financials. But Mr. A did not come out. Mr. B came out and joined another firm. What about that? Still disqualified. Understand the intention of the law. Here, provisions, rotation principles are inclusive or exhaustive. Principles must be understood as inclusive. Understand the intention of the principle. Accordingly, if at all there is a resemblance of the partners, don't accept that audit. Don't accept them as an auditor. Clear? They only speak about 3 criteria, but doesn't mean only 3 you need to look into. Understand the logic behind that and accordingly fulfill it. Clear? Next. There is a question on this. The concept of joint audit. There is a correct or incorrect question on this. The Companies Act has some traces about joint audit, or the Companies Act do not contain any traces for joint audit. Correct or incorrect question? Incorrect. Actually, in Companies Act, there is nowhere joint audit word is covered. Only in one provision it was covered. That too in the rotation of auditors. Here it is covered. Here it is covered. What they will say here? You see here, subject to the provisions of the Act, members may resolve that. What are they saying? Members may resolve that. In the firm appointed by it, auditing partner, nothing but engagement partner and team shall be rotated at such interval. What they can say? Okay, audit firm is appointed for 5 years. Sir, 5 years, same person don't come and do audit. Every year change. For better purpose. Members of the company may take that kind of decision also. Now, is it a normal rotation? Is it rotation? Is it change of auditor? Rotation of auditors means what, man? Change of the firm or change of partner? Firm. Here they are talking about what? Change of partner. That's why I call it as internal rotation. This is not firm changing, auditor changing. Just, sir, every year same partner. Why same partner every year? Every year let them come different partner. Is it compulsory, by the way? No. Members, if they resolve, then they have to follow. Or members may resolve. Audit will be conducted by more than one auditor. Members, if they decided, joint auditors can be appointed. Now tell me, Companies Act 139 subsection 2 indirectly speaks about joint auditors, no? So, do Companies Act contain any reference to joint audit? Yes. Can I say Companies Act is not at all speaking about joint audit? No. Are you clear? All of you. Just a minute, I will show you the question, how it will come. You see, I have given many questions, practical questions also. Okay, in the main book. I told, right, this is only a concept notes. Here we have given practical questions, how to present in the answer, everything is highlighted. So here the audit are true or false statements. In my main book at the end of the chapter, true or false statement is covered. You see, 19th question, you see true or false statement in my main book. The concept of joint audit has legal foothold under Companies Act 2013. Correct or incorrect statement? Correct. Under section 139, you can write 139 if you don't remember subsection. The members of company may resolve that audit shall be conducted by more than one auditor. Hence, the concept of joint audit has legal foothold. Legally, in Companies Act, identity is there. Companies Act is silent, generally joint audit, but indirectly through rotation, this point is indirectly covered, joint audit concept. That's it. With this, rotation is also completed. With this, rotation of auditors is also completed. Just one more provision I have. Before expiry of term, everything we finished. No, powers of auditor, all that I'll discuss later. Along with audit report, I'll cover. Powers, duties, all that. Reporting of fraud also I'll cover only with audit report. Audit of branch office accounts, applicability of provisions, appointment of auditor of all this I'll cover later. Provisions related to cost records, that also I'll cover later. So, what is the procedure for appointment of auditor other than retiring auditor? Generally, no. Suppose retiring auditor means what? Suppose we appointed auditor at 39th AGM. His appointment is valid up to 44th AGM. Suppose company directors, they decided, okay, let us change auditors. Until 44th AGM, he will continue. Before that, they will have board meeting. Audit committee will say another auditor name. They will approve. They will send AGM notice that in the 44th AGM, another auditor will be appointed up to 49th AGM. Notice has been sent. Members came. New auditor was appointed. Correct? How appointment of new auditor will happen? Suppose I have right now Mr. A. 44th AGM, until that his appointment is valid. Now, 44th AGM onwards, I want to appoint Mr. B. What is the process I will follow? Company. Board of Directors will form a resolution. What resolution? 44th AGM onwards, Mr. B will be our auditor. Now, AGM notice they will send to the members. In the notice, they will mention Mr. B will be our upcoming auditor from 44th AGM to 49th AGM. Shareholders will come, approve it, over. Correct? Very special notice in this. Very special notice. Here they are saying no, special notice shall be required. Have you read this provision? All of you, how many of you have read this provision? 140 subsection 4. It says special notice. Suppose, look at this situation. Suppose appointed auditor, Mr. A, in 39th AGM. Up to 44th AGM, his appointment is valid. Company decided, directors, they decided, Mr. A is working very well. Let us appoint same auditor from 44 to 49. Forget about rotation, all that for the timing. The company rotation does not apply. Okay, fine. So, 44 to 49 also same auditor. Now, company sent me notice. Hey, come for AGM. In that notice I saw, same auditor is going to be reappointed. I am a key shareholder. Who am I? Key shareholder having 1% voting power in the company. Getting it? I thought auditor will be changed. Because previously Mr. A is our auditor, right? Up to 44th AGM, he is having so many cases pending against him. Right now he is an auditor for one company which is in insolvency. He is facing so many cases against. If the same person is our company auditor, I am worried. But anyhow, appointment was made. 44th AGM, he will leave. Directors will only change voluntarily, I thought. Directors only will voluntarily change. So I can happily come and approve new auditor. But when I saw the notice, I shocked. What the notice says? Mr. A is proposed to be reappointed. Along with me, every shareholder have received. What will happen if I don't react? Everybody will come, approve and leave happily. But I am a key shareholder. I don't want this to happen. What can I do? I will give special notice to the company 14 days before the AGM. Because they sent me notice 21 days before. And I saw within 7 days I should react. So I should send notice to company. Within 14 days, before 14 days before the AGM, I will send a notice, special notice. I am objecting Mr. A's reappointment. The following are the reasons. Please circulate my special notice to every other shareholder. Company circulated to every other shareholder. Until now, how many companies circulated? 2 documents. First document, director's intention to reappoint. Second document, one of the shareholders' objection on reappointment. Now, auditor also, he will also receive no special notice. Auditor said, hey, on me, what are these objections? I will give reply on this. Auditor gave written representation to the company at least 7 days before meeting. Company shall distribute this written representation to all other shareholders, including me, who sent the notice. Now everybody got 3 documents. Original notice, there Mr. A is being reappointed as proposed by directors. Special notice objecting Mr. A reappointment. Mr. A reply on the objection. Now shareholders will come. They have all the 3 documents, entire information. They will take the final call. Suppose shareholders believed special notice. What will happen? Will they reappoint the auditor? No. Now tell me, other than retiring auditor, we will appoint obviously another auditor. So in this situation only special notice is required. Otherwise, suppose if company itself decided to change to Mr. B, will I issue special notice? Company itself sent a new auditor name. Should I issue notice saying don't appoint existing auditor? Yeah, that's what now we mentioned in the notice. Able to understand. That's it. So that's the power. Have you read special notice provisions in company's law? Company law. Have you? That's it. So with this 140 subsection 4 is also completed. Suppose no, for the company rotation is applicable. 5 years individual completed. Should you give special notice telling the company don't appoint once? Already we don't appoint. Law will not permit, first of all. You need not tell. So that's what the last note point. This provision need not be applied where retiring auditor completed tenure of 5 years as per 139. Means if rotation of auditors provision is applicable, already tenure completed, company has to change. Even if company reappointed, board of directors are liable for punishment. Understood or not? That's it. Major provisions of company audit chapter are discussed. Remaining provisions of company audit we will have to discuss after audit report. So next chapter will start audit report. Comfortable? Easy? That's it. Okay. So we'll start tomorrow the audit report chapter. We'll continue in the next session. Okay. Thank you. So the next chapter is audit report. So in this chapter, we are going to understand how to prepare the audit report, nothing but. You have this chapter earlier, you have this chapter in the CA Inter. See, this is not just like, reading and trying to remember nothing. You need to understand how the report has to be prepared. Tomorrow, when you go for articleship, they'll ask you, see, ultimately, what is the purpose of doing audit? To give opinion, correct? The ultimate objective of audit is to give opinion. Whether financial statements are free from material misstatements. How do we give opinion? Through audit report, correct? Audit report is a document through which ultimately we give opinion. Now you see, in this audit report, this is the content that we are actually going to cover. These are the topics that we have in audit report. The topics we have is these standards we have. We may not be discussing 100%, but we will be discussing majority. Getting it? Now, what is the format of audit report? That is the first thing that we need to understand. So, what are the contents of audit report? What are the points that will be there in audit report? That is the main thing. See, you are learning nothing but in this chapter. What is our learning outcome? After learning this chapter, you must understand how to prepare an audit report after performing the audit. After you got the evidence. Getting it? How to get the evidence? We have a chapter called documentation and evidence. How to apply sampling? We have a chapter called sampling. How to do substantive analytical procedure? We have analytical procedure chapter. How to verify assets, liabilities, purchases, sales? We have items of financial statements chapter. Correct? After doing all this, finally what will you do in a company after verifying all the things? You finally get some conclusion. And after getting the conclusion, how to give opinion? That is what, right? This is the standard which is dealing with how to give opinion. So now you see, what are the contents of audit report? Any report will have a title, yes or no? Any report will have title. So audit report is also having title. Getting it? So the title of the audit report is what? What is the title that we must use? We must use the title called Independent Auditor's Report. We must use a title called Independent Auditor's Report. That's it. See, it is very clear indication that we are independent auditor and this is a report containing our opinion. Then addressee. To whom we address audit report? To the members. To the members of the company. In case of government owned companies, central government owned companies, we address to C&AG or we may address to President of India. In a state government undertaking, a state government owned company, we address to governor. Like suppose you see Tamil Nadu Power Distribution Corporation Limited, TNPDCL, from where you get electricity bill. Yes or no? They are the one who are supplying electricity, distributors. And that's a company limited by shares. And who is the major ownership in that company? Tamil Nadu government. So it's a state owned government company. Bharat Petroleum Corporation Limited, that is also a company. But in that, major ownership is held by whom? Central government. That is central government owned company. Anyhow, both are government owned companies, both are called as public sector companies. Are you getting it? Now, addressee to the members, generally to the members. In case of special purpose financial statements, we may give to addressee to board of directors. Next, the ultimate thing that we require to give in audit is what? Opinion. So we need to give ultimately what? Opinion. Now how to give opinion? What are various types of opinion? That is the thing that we will have to discuss in this para. Are you clear? In audit report now, these are called as sections. Opinion section. Basis for opinion section, or it can also be called as opinion paragraph. Basis for opinion paragraph. You see, this is a separate section, this is a separate section in the audit report, correct? Section means not law, companies act section. Section means what? A part of it. Able to understand? In this table I divide it into two sections. One section I will use for some purpose, one section I will use for some purpose. Section means what? Part. Able to understand? So, part or para or section, anyway you can call. But in the entire standard, how these were referred as? They were either referred as sections or they were referred as para. Both means the same. So, opinion para or opinion section. Next one, basis for opinion section. Now tell me, if I give a positive opinion, I am saying entire financial statements of the company are true and fair. I gave an opinion that financial statements of the company showing true and fair. I gave a positive opinion. Will I have any specific reason why I gave a positive opinion? Will I have any specific reason why I am giving a positive opinion? Generally, no. Then how did you give opinion? What is the basis? They are asking what is the basis? You gave opinion, no, what's the basis? I did audit as per standards. Getting it? So likewise, I will mention something. We'll discuss later. Getting it? In-depth point we'll discuss later. So we mentioned that. But when I give a negative opinion, will I have a reason or not? Generally, why financial statements are showing true and fair view? There are so many things. Why I am giving true and fair positive opinion? There are so many things. But when I am giving negative opinion, I have a specific reason. Correct? I have a specific reason. So, basis for opinion contains that. Then, key audit matter. Then remaining is what? Material uncertainty related to going concern. If you look at the format which we are discussing is covered under which standard? 700. This format of audit report is contained in which standard? 700. If you look at 700, these 4 points will not be there in the ICA material. Getting it? But I gave in the format of audit report here. And you see right side what I mentioned, applicable as per relevant standard. What does that mean? These points will not come in every audit report. You see, that's why I highlighted with a different color. When they will come in audit report, if applicable, it will come. If not applicable, that's it. Are you getting the point? If I want to give material uncertainty para, then it will come. If I want to talk about key audit matter, then it will come. Emphasis other matter, if I want to talk about, then it will come. Are you getting the point? If I don't have to discuss any of this, What is the previous para basis for opinion? If I don't have any of this, straight away next para will be exactly. Able to understand? Then in the audit report, we are mentioning to all the shareholders what are the responsibilities of management. They are responsible for preparation of financials. They are responsible for running this company. All that we will mention. Whatever you learned in preconditions to audit, no, all those points we will mention. Then we will talk about our responsibilities. Auditor responsibilities, we will mention so clearly what are all our responsibilities. Do we need to get absolute or reasonable? That only we will mention. We will mention that we are only liable to give reasonable assurance, but not absolute assurance. All these points we will mention. Next. Then we have something called other information. This standard we don't have in our syllabus. Not in syllabus. This information, this para is not in syllabus. Remember, other matter paragraph is SA 706. Other information paragraph is SA 720. Both are different. 720 means other information. Other matter para means SA 706. For us, which is there in our syllabus? Other matter para is there in our syllabus. This is not in our syllabus. Getting it? So this will also apply as per the respective standard. Understood or not? Then report on other legal and regulatory requirements. So you see, now there is a title, addressee, opinion, basis for opinion. So much you are giving. In addition to that, you are giving additional report. You are reporting on. You are reporting on means you are giving information on what? Legal and regulatory requirements. Regulatories means what? RBI, IRDA, SEBI, TRAI, Telecom Regulator. These are regulatories. If regulator is asking you something to report in audit report, then you have to report them. Suppose RBI has prescribed 4 points for banks, that the bank auditor shall report on these 4 points. Getting it? The bank auditor has to report on 4 points. Likewise, RBI has given an instruction. Then we will report. Companies Act. Legal requirement means what? Companies Act. Companies Act gave us some requirement that we should report. 143 subsection 11 CARO 2020. All 21 clauses should be reported in audit report under which paragraph? This paragraph. Able to understand? CARO is not something different topic. CARO is what? Part of audit report. It is part of audit report. Inside audit report, under the last part of the audit report, we will give CARO. Are you getting it? So CARO is not a separate report. CARO is not something in topic. It is nothing but a reporting requirement. Whatever points mentioned inside the CARO, on all those points, we have to comment. We have to give our opinion. Are you getting it? We'll discuss how to remember 21 clauses. Don't try that. Not required in exam. They will not ask you, tell me 21 clauses. Getting it? They will ask you, what are the aspects that you verify? What are the aspects that you verify relating to immovable property in case of fixed assets? This is the question they'll ask. And you don't know that. Able to understand? You only know headings, not the matter inside that. You are trying to remember what will not be tested. But you are not at all reading what will be tested. Getting it? So, that also we'll discuss clearly. Then finally auditor will sign, where he signed, date. So all these are the contents of the audit report. Then after UDIN number, we'll discuss that. So this is the content of the audit report. Now each and every segment we need to understand. Able to understand, all of you? Until now got a brief idea? Next. Now we need to discuss opinion para and basis for opinion para. First of all, remember, we are now discussing actually SA 700 related content. What is SA 700 related content? Forming of an opinion and reporting on financial statements. First, how to form the opinion and how to report on financial statements. This is the discussion. Now, tell me, how many types of opinions we have? In the previous sessions also we have covered how many types of opinions that we can have. Opinions can be broadly 2 types. Positive opinion, negative opinion. Either you may have a positive opinion or you may have a negative opinion. Now, in auditing, we are not using these words. We are using the words unmodified opinion, modified opinion. Instead of using the word positive, negative, getting it? Unmodified and modified. This is a terminology that we use. Now tell me, suppose, by the way, my positive opinion, when I am giving positive opinion, what do you mean by that? Company is performing really well. Directors are working super. Is this the reason? Is this positive opinion meaning? What is positive opinion? Financial statements are showing true and fair picture. What's the difference? Financial statements, company is actually in losses. Completely losses. Worst performance company. But they honestly disclosed everything. They honestly disclosed their worst performance and worst position. They disclosed honestly. So which opinion you'll give? Unmodified. Nothing but positive. So auditor's unmodified opinion, positive opinion, clean opinion does not mean company is performing well. Positive opinion means what? Company books of financial statements are showing the real picture. Suppose company is excellently really performing well, superb. But company financial statements are showing worst performance. Actual reality is company is performing well. But management manipulated entire picture and showing company is actually having losses. Which opinion you will give? Modified, nothing but negative. Financials are not true and fair. They are not showing true and fair. Able to understand. So, if financial statements, you appointed me as an auditor to check the balance sheet P&L, I inquired background data, everything is right. So, I'll give everything, I will mention everything is right. If something is wrong, I'll mention something is wrong. If everything is wrong, I'll mention everything is wrong. Are you getting it? So, when our auditor will give unmodified opinion, tell me, simple, financial statements are prepared by the company, board of directors. I was appointed to do the audit. So I took balance sheet P&L. I saw entire that fixed assets, current assets, breakup, records, physically verified, bills, books of accounts, supporting invoices, GST books, GST copies, everything I verified. And I felt whatever balance sheet P&L numbers, presentation, classification, disclosure they are showing, I felt everything is correct, does not require modification. They don't require any modification. What do you mean by the balance sheet P&L does not require any correction? What do you mean by that? Balance sheet P&L doesn't require any correction at all. That's what I'm telling. What does it mean? Balance sheet P&L are showing correct numbers. They are showing correct information. So which opinion I'll give? Unmodified. They don't require any modification. That's why I'm giving which opinion? Unmodified. I will also not modify my opinion. I have positive opinion, I'll give the same. I will not modify because they don't require any modification. Suppose if balance sheet P&L contains mistakes, if balance sheet P&L contains mistake and company want to issue the same balance sheet P&L to public, which is misleading, which is containing misstatements, what should I tell company first? Please modify the numbers because they are wrong. The balance sheet P&L is showing wrong picture. Please modify, I'm asking. Management said, no, we will not change. This is final. This is what we will send to public. Do whatever you want. Okay, they will not rectify. They will not modify the financial statements which require modification. They are not modifying. Then what will I do? I will modify my opinion then. Able to understand the terminology? How they came. So I will modify my opinion. Now that is what definitions were given. Unmodified opinion. What is the definition you know? If auditor concludes, if auditor decides, concludes based on sufficient and appropriate evidence, based on sufficient and appropriate evidence that the financial statements prepared in all material respects according to applicable framework, then the auditor will give unqualified opinion or clean opinion. Able to understand? So what do you mean by unmodified opinion? What it indicates? When auditor gave unmodified opinion, what does it indicate? Does it indicate company performance is good? Does it indicate company is excellent? No, it indicates auditor got evidence, financials are disclosing all information, accounting policies changes are properly accounted, and financials are prepared as per applicable framework, accounting estimates are reasonable, management is doing business with prudence practices. Yes or no? This is what actually it implies. Are you clear? That's it. Now when auditor will give modified opinion, two cases. Okay, before that, let us check here below. Now let us check what are the different cases. Modified opinion is again divided into three types. Modified opinion, the standard classified as three subtypes. One is qualified opinion, adverse opinion, disclaimer of opinion. It's DOO. Disclaimer of opinion. Here what am I saying? I don't give opinion. Disclaimer of opinion means what? I don't give opinion. It's not opinion. I am disclaiming, I am denying to give opinion. So denying to give opinion is also a type of opinion. Having no opinion is also an opinion. Are you getting it? Now, how and which cases the auditor will give which opinion? Let's look few examples. Getting it? Now, take a balance sheet of the company. Take a balance sheet. The company is having fixed assets. Okay. Gross WDV is this much. Accumulated depreciation. And this is the net WDV. Then the company is having current assets, which is around some. The current assets they are having breakup. Trade receivable 100 crore. Inventory 100 crore. Cash and bank balances some 100 crore. Totally 300. Totally the balance sheet is 700 crore. Let us assume. Now equity and reserves and surplus. This is approximately 500 crore. And outside liabilities are approximately 200 crore. So this is the number. Rough numbers of a balance sheet of a company. A brief overview. Now in this balance sheet, there is one trade receivable. There is one customer. From whom? The outstanding amount was some 10,000 rupees. This is 100 crore ma. There is one customer from whom there is an outstanding amount 10,000 rupees. It's actually doubtful. But company did not created provision. A company has to create a provision, but they didn't create. I have evidence that it is becoming a bad debt, or it is actually a bad debt. But company did not treat it as bad debt. Is it a misstatement or not? Yes or no? Misstatement or not? Yes. Now, which opinion I'll give? Remaining all are correct. These are all correct. Even remaining part of the trade receivable is correct. Only this 10,000 I have a problem. Which opinion I'll give? Dear shareholders, don't believe this balance sheet. People, company cheating you. Can I select this? Which opinion I'll give? Unmodified. Why, sir? This is 10,000 is immaterial. This is immaterial. Out of 100 crore, 10,000 rupees is how much immaterial? Out of total balance sheet 700 crore, 10,000 rupees only I am having a mistake. Only for 10,000 there is a mistake. There is a negative thing. Apart from that, everything else is true and fair. So I'll give which opinion? Unmodified opinion. What if this number is 1 crore? Modified, fine. Inside modified, which one you will give? Qualified opinion means what? Everything is correct except so and so. Adverse opinion means as a whole everything is wrong. Now here all these items are right, but 1 crore worth of misstatement is there. Is 1 crore material or immaterial? Material mistake is there. But can I say entire balance sheet is misleading? I cannot say. Entire balance sheet is misleading. Can I say as a whole balance sheet don't believe this? I can't, because I have evidence for all other items. Everything is correct. Only this 1 crore mistake I discovered. Are you getting it? Now which opinion I'll give? Qualified opinion I'll give. Able to understand. What if this is 10 crore? 10 crore worth of doubtful debt. 10 crore worth of doubtful debt is not, they're not showing properly. It's actually a bad debt. It's actually a bad debt. Now tell me, is it a material mistake? Yes. Now tell me, 10 crore means current year profit of the company is 7 crore only. Current year profit of the company is how much, 7 crore. Without charging of this bad debt, without writing of this bad debt, current year profit is 7 crore. Actually, if at all the company created provision for this bad debt, there is no profit. It's actually loss. But because of ignoring this mistake, entire result is misinterpreted, correct? Actually, it's a loss-making company. But people are thinking it's a highly profit-making company. Hey, company is having so much, very much good profit, they are thinking. Is it correct? So, which opinion you'll give? Qualified or adverse? Adverse I'll give, because this is changing my overall view about the company. Able to understand something which is fundamental to the user, I'm not understanding. My opinion on this entire company will change. If at all this bad debt is charged, getting it, I may feel that this is completely misleading. P&L account. Without charging bad debt, there is 7 crore profit. After charging it, there is 3 crore loss. So, as per auditor point, if at all this 10 crore provision is created, company is actually having loss. Now, as a whole, the balance sheet P&L misleading or not? I will treat it as not only material, but also pervasive, not persuasive. Pervasive. Pervasive means I feel this is as a whole impacting. Are you getting it? Some auditors know 10 crore out of 700 crore is also not pervasive. They may feel like that. Some auditors may still give which opinion? Qualified. Some auditors may give which opinion? Pervasive. Remember, what they will feel pervasive, what is material, is a matter of professional judgment. What I feel material, you may not feel material. What I feel pervasive, you may not feel pervasive. So here in this case, if it is me in that position, if this is the result of the company, if this provision is charged to the P&L, entire P&L image is changing. So I will consider that's why pervasive. Able to understand? It is giving entirely a misleading picture. That's it. Are you clear? Next, another example. Suppose, now you see, we are only focusing on misstatements. Misstatement, immaterial, material but not pervasive, material and also pervasive. These three types we have seen. If the misstatement is immaterials as a whole, which opinion will give? Unmodified, unqualified opinion. If mistake is material but not pervasive, qualified. If mistake is material and pervasive, we will give adverse. Able to understand? Next. Same fixed assets is approximately some 100 crore, accumulated depreciation some 400 crore, trade receivable some 100 crore, inventory some 100 crore, cash and bank balances some 100 crore. So total 700. Getting, and liabilities from 200, equity, reserves and surplus some 500. This is a balance sheet. In this balance sheet, trade receivable, there is some 10,000 rupees worth of debtor. Okay. I sent him external confirmation. I sent him external confirmation, but I didn't get reply. He didn't confirm me. Now tell me, do I have evidence or not? No. I want to get evidence from him that is he really liable to pay to the company 10,000 or not? I want to get an evidence. I sent it to so many debtors, everyone replied, but this fellow is not replying. I tried to reach him, not available. Getting it? I tried to get evidence alternative method, not possible. Ultimately for 10,000, I did not get evidence. For all other remaining items, I got evidence. For all other remaining items, I have received evidence. For this 10,000 only, I did not have evidence. Now tell me, 10,000 rupees worth of item, I don't have evidence. I will not give opinion on this balance sheet. Can I say that? Why? Because the 10,000 is immaterial. Have you got evidence for all material items? Yes. Then you can give opinion, no? Why you are worrying about immaterial item? Ignore it. So we will give which opinion? Still unmodified. What if the debtor value is not 10,000 but 1 crore? Same situation. What if the debtor value is 1 crore? 1 crore worth of outstanding balance with the customer. I don't know whether it is really there or not. I don't know whether 1 crore is really liable to pay or not. I don't know. Getting it? If I see the sales document and all, it is saying that he has to pay. But when I want to trace him, he is untraceable. Ultimately, 1 crore worth of debtor, I don't have evidence. But remaining all other items of balance sheet P&L, I have evidence. Remaining on all the balance sheet P&L items, I have unmodified opinion. But on this 1 crore, I am not able to give unmodified. I am not able to give unmodified. So which opinion I will give now? Qualified disclaimer. Qualified. What will I say in qualified? 1 crore is materially misstated. Can I say that? How can you say it's a misstatement, man? Misstatement means what? You must have proof. What company did wrong in this? 1 crore, I don't have evidence. If you don't have evidence, say that you don't have evidence. How can you say this is wrong? Are you getting the point? If there is no evidence, how can you say it is materially misstated? In the previous example, it's a bad debt. I have a proof. Customer is already insolvent. I have a proof. It's a bad debt. Clear cut. So I can say company is still showing it. But here, you don't know where the customer is. You didn't talk to him. How can you say 1 crore is materially misstated? How can you say this is a mistake? First of all, do you have information to say this is mistake? No. When you don't have information, how can you comment on this? So give your opinion on the rest of the balance sheet P&L except this. Are you getting the point? Except this, give your opinion on the rest of the balance sheet. Our rest of the balance sheet is true and fair except qualified opinion only. Previously, after except word, we will say that the debtor is materially misstated. But now, we are unable to obtain except that with respect to 1 crore, we are unable to obtain the external confirmation with which we are unable to comment on the recoverability. Understood. We are unable to comment on the existence. Clear. Not having evidence means you cannot use the word misstatement is there or not. You don't have evidence first of all. How can you judge is it right or wrong? When you can judge it is right or wrong, if I have evidence I can say right or wrong. If I gave you phone and asked you to give your opinion, after operating sometime you can tell is it performing better or not. I didn't give you the phone itself. I am asking you, tell me your review. How can you give? Able to understand. If I did not give you the phone and asking you to give review, can you say the phone is working bad? Exactly. How can, when you say financials are materially misstated, you must have proved that it is mistake. When you are saying it is misstated, how it is misstated? Tell me, show me. Here I am asking you 1 crore, how it is misstated? Show me the proof. No, it is not misstated. I can't say on that. When you can't say on that, say that you can't say on that. Are you getting the point? All of you. What if this is some 10 crore? What if this is 10 crore? I will give which opinion? Disclaimer of opinion. Straight away I will give which opinion? Disclaimer of opinion. 10 crore worth of customer is not traceable. I don't have evidence for that. I don't have evidence for that. I cannot say it is wrong. Adverse opinion means what? As a whole balance sheet is wrong. It is not correct. It is showing wrong picture. But can I say here it is showing wrong picture? With respect to 10 crore, do you say it is not there? See what is wrong, when it is wrong actually, suppose company don't have 10 crore customer, but company showing like that. You have proof that company is, this is a fictitious transaction, you have a proof. Or you have a proof that this is bad debt, still company showing in the balance sheet as asset. Then you can say company is doing this kind of misleading. But here what is the problem? Is it a bad debt? Or is it a fictitious? You only don't know. If at all the customer respond me, if at all I find the customer, I can then talk about that. Able to understand. But this is not fictitious. Only problem is I did not get evidence. Able to understand. Now, for a not only material, it is pervasive as a whole. Suppose no. Okay, let me think this way. I don't get evidence ultimately. Okay, what if, let me take risk. Ignore this 10 crore. I'll give unqualified opinion. But what if tomorrow, if this 10 crore is a fake invoice and the company is actually having 7 crore profit right now? What if tomorrow a fraud was discovered? This 10 crore is actually a bad debt. This 10 crore is actually a fake invoice. What if the mistake is discovered tomorrow? Which opinion you will give? If at all that is discovered today. If at all the mistake which you will discover tomorrow, if at all you discovered today, which opinion you would have given? Adverse. But I don't know whether it is true and whether it is really existing or not. So I will give which opinion? Let me not give any opinion. If at all this is wrong, I should have given adverse. But since I don't have any proof, that this is right or wrong, I don't have any proof, why should I give opinion on this as a whole? If at all this is wrong, I would have given adverse. Which means this is such a big item. This is entirely changing opinion on the people's mind. Such a kind of item, you did not get information, you did not get proof. When you did not get proof on such an important item, which will change the opinion of the people ultimately, why are you risking? Don't give opinion. Are you getting the point? Indirectly, what are they saying? If you are not getting evidence, if you are not getting sufficient appropriate evidence for material and pervasive item, then you will give which opinion? Disclaimer of opinion. You see how the definitions were clearly framed. So now tell me, before I go further, modified opinion, we have 3 types. Okay, keeping that aside, we will give modified opinion 1. Evidence is there, mistake is proven. 2. Evidence is not there. Correct? Evidence is not there. In both the cases, we will give which opinion? Modified. In how many types we will give modified opinion? 3 types. Ultimately. In how many cases you will first of all come with modified opinion? Evidence is not there and it is important item. Evidence is there, it is important item, materially misstated. You see now. If auditor concludes based on sufficient appropriate evidence, financial statements as a whole are not free from material mistakes. Auditor, based on evidence, I have proof that it is bad debt. And I'm concluding financials as a whole are not free from material. As a whole, they are having mistakes. Material mistakes, but they're not free from material mistakes. Means what? Mistakes are there. Understood or not? All of you. Next up. Not only that, another situation I'll give modified opinion. I am unable to obtain evidence. To conclude financials are free from material mistakes. Are financial statements completely right? I'm unable to get the evidence. I'm unable to say they're completely right. Why are you unable to say they're completely right? Because you're unable to get evidence. Able to understand. So in this case also we will give which opinion? Modified opinion. Now in how ultimately we will modify our opinion in these 2 circumstances. In these 2 circumstances we will modify our opinion. Now which modified opinion you will give? It depends upon the actual misstatement or absence of evidence. You see, we have given a table below. Suppose you have obtained sufficient and appropriate audit evidence. Have you discovered any material misstatement? No. Is it pervasive? The question itself does not apply. Not applicable. Which opinion? Unqualified. Have you discovered any material misstatement? Yes. Is it pervasive? So you will give. Have you discovered material misstatement? Is it pervasive? Adverse opinion. Sufficient appropriate evidence not obtained. When it is not obtained, Can I use the word misstatement word? Can I use the word misstatement? Misstatement means what? It is wrong. Here evidence is ille. Evidence itself is not there. How can you say it is right or wrong? So, is it material? Yes. Now, evidence is not there, no? Tomorrow, what is the possible effect if it is went wrong? Okay, evidence is not there. Now you cannot say it is right or wrong. Let us take this, a situation. Tomorrow, what if it is wrong? At that time, is it material? Yes. And is it pervasive? No. In such a case, no. Whatever the item where you did not get evidence, no. Material item. Except that remaining part you give opinion. On that don't give opinion. So which means indirectly, when I am excluding some portion, what is that opinion is called as? Qualified. When I am saying everything is right except something means what? Qualified. Able to understand? Suppose if it is material and pervasive and I don't have evidence, then I'll give disclaimer. Generally, we will not give disclaimer of opinion. Whenever there is a necessity for us to give disclaimer, first what we will do, we will withdraw from the company. We will try to resign from the auditor's post. If resignation is not possible, then only we give which opinion? Disclaimer of opinion. Are you getting the point? Now you see how the definitions will come. First, qualified opinion, if you understand, remaining two parts of the definition is dead easy. Now you see qualified opinion. The auditor shall express qualified opinion in two situations. You see in this table, in how many situations you are getting qualified opinion? When evidence is obtained, that is one scenario. Evidence is not obtained, here also qualified there. Yes or no? So qualified opinion came twice, whereas disclaimer opinion came only once. Adverse. Disclaimer also came only once. Yes or no? Unqualified opinion also comes only in one situation. But qualified opinion will have two situations. And that's why you see, disclaimer of opinion only one para definition. Adverse opinion one para definition. Whereas qualified opinion has two parts of the definition. So one qualified opinion part of the definition is regarding evidence available, material misstatement discovered but not. Another part of the definition, evidence is not available but it is important item. Understood or not? But not pervasive. So if you are able to understand, now you read all the definitions, you don't try to remember, you remember naturally. Correct? Now you see, the auditor shall express which opinion? Qualified opinion when two cases, A or B. If any of these two cases exist, anywhere you can give opinion. What? Suppose if auditor obtained sufficient appropriate evidence, now you are concluding based on the evidence, you have a proof. Based on proof, now I can decide that misstatements are material but not pervasive to the financial statements. Now here you see the word individually or aggregate. What does it mean? Suppose in debtors I did not discover 1 crore mistake, but I discovered 20 lakhs mistake. In inventory I discovered 35 lakhs mistake. In outstanding creditors I discovered some 35 lakhs mistake. As a total, if you say 1 crore, it is material. So mistakes, no. If the mistake individually is a material mistake, then I will come and give qualified opinion. Multiple are there, all of that together also material only, but not pervasive. You see, misstatements individually or aggregate. Whatever applies, that you apply. If multiple mistakes are there, aggregate it. It's only one or two mistakes individually you see. Able to understand. If single mistake is there, what is a mistake? If it is multiple were there, total it. After totaling it, is it material? Check it out. Yes. Is it pervasive? Not pervasive. Then you will give which opinion? Which opinion? Qualified. Now you see here the word, but not pervasive is there, right? Here the word, but not pervasive is there, right? I will remove that word and keep word end. Then it will become which opinion? Exactly. The definition is exactly same. Able to understand. In qualified opinion, first part, before pervasive, if I remove but not word and keep end, what opinion will come? Adverse. Understood or not? Now you see the second part of the qualified opinion, which is little trickier. Okay, now the auditor is unable to obtain sufficient appropriate evidence. Some 1 crore worth of customer is there. I am unable to trace him. I am unable to get evidence on which I have to base the opinion. Because if we give evidence, if we give confirmation, I would have given opinion. But he is unable to give opinion. He is not giving confirmation. I don't have evidence. But I conclude that, okay, he is not giving. Can I take risk and give unqualified opinion? I want to take risk. But before I take risk, I need to calculate the risk, no? Tomorrow, what if this 1 crore is actually a fraud? I just look at tomorrow effect. Right now, I don't know. Is it fraud? Is it true and fair? I don't know. I don't have evidence. But what if tomorrow, if it is a fraud, what is the possible effect? What is the possible effect of misstatement? What if possible effect of misstatement? Misstatement actually there, huh? Is it actually existing? Undetected. You did not detect it. You did not identify. You are only talking about possibility. Yes or no? What if the auditor concludes the possible effect of undetected misstatements? What is the possible effect of undetected misstatements on the financial statements? What is the possible effect of undetected misstatements? If it could be material but not pervasive, then also don't give unqualified. That is, possible effect is material, no future. If it is wrong, you have to give qualified, no, at that time. If at all it is wrong, you give qualified. But here, you don't know whether it is right or wrong. Then also give qualified only. On that item, don't give opinion. In the basis for opinion para, we will mention 1 crore worth of debtor, we are unable to trace him. Regarding this, we don't have any opinion. On the rest of the financials, they are true and fair. Now shareholders will ask management, why, what happened this 1 crore, all that. Are you clear? But on this 1 crore, I am not giving opinion. Why I am not giving opinion only on this 1 crore? Only that is what? Rest of the item I got evidence. Able to understand. Now suppose you see here, the word but not is there, right? Second part of the qualified opinion definition. If you remove that word here and keep end, which definition will form? Disclaimer of opinion definition will form. Understood or not? You need to observe every element like this. Don't blindly read. Are you clear? These definitions are very important for MCQs. These definitions are very important for MCQs. You see, if auditor is unable to obtain sufficient appropriate evidence and concludes that the possible effect of undetected misstatements could be material and pervasive. Possible effect is going to be material and pervasive. Then also we will give disclaimer of opinion. Material means what we all know. What is pervasive? When do I say pervasive? Mistakes are there only in one item. Can I say pervasive? Mistakes should be there in multiple items always. Not necessarily. Even if it is one item, if it is big item, we will give which opinion? It is pervasive. If it is even single item only, but it is very big item, then also it is pervasive. Suppose I have 1000 crore total asset, investment itself is 900 crore. This investment I don't have evidence. Fixed assets are there, current assets are there, trade receivables, inventory, so many were there. All of that together 100 crore. Only investment value 900 crore. Total balance sheet 1000 crore. The investment ledger alone we don't have evidence. Remaining all are there. But this itself is substantial portion, correct? So, when do I say pervasive? Sometimes, generally, if multiple items are affected in the balance sheet and in the P&L, multiple items, fixed assets mistakes, inventory mistakes, receivables mistakes, cash and bank mistake, trade payables mistake, everywhere it is a mistake. Multiple items affected and the aggregate you felt not only material, you also felt it is misleading as a whole. Then you feel pervasive. Sometimes it may not be multiple, but it may be only one item. That one item could be substantial portion. Then also I will call it as pervasive. Or Pervasive may be in relation to disclosures which are fundamental to understand. Suppose company has to prepare books of accounts using accrual, but they followed other than accrual basis. But they are showing in the balance sheet P&L notes to accounts that they followed accrual, but they didn't follow. Fundamental disclosures they are making and negative statements. They are giving false statements. You see the pervasive definition. Pervasive effect on those which are not confined to, not limited to specific items, specific account, specific item of financials. It is not one or two items, multiple items. Or, here it is or. If so confined. Okay, it is one item. Then do we say pervasive? It represents a substantial portion of the financial statements. It represents a substantial portion. First point, what are they saying? Pervasive means not in one item or two items. One or two items mistake, it is not pervasive, it is material only. Or if it is one or two item, if it is substantial portion, then it is pervasive. Or in relation to disclosures, fundamental for understanding. So if in these three, if they are making any mistake, then it is pervasive. Now you see, there is a question which can be asked like this. Write about decision by auditor regarding different types of modified opinion. How auditor will take a decision in order to decide about modified opinion. First one, nature of the matter giving rise to modification. First of all, why I want to modify? What is a matter because of which I want to modify first of all? Is there a material misstatement? Or is there, I am unable to obtain evidence for material item? What is the reason? Misstatements material or material item no evidence. So what is the reason? First, nature, you figure out. Then, judge about pervasiveness. Judge about pervasiveness of the effect of the misstatement. When there is evidence. When there is no evidence, possible effect of the undetected misstatement. When I say the word effect, it is detected misstatement. It is detected misstatement. When I say possible effect, mistake is not detected. Undetected misstatement. Understood how much in-depth meaning is there? Are you getting the point? So, first, what is the nature of the matter? Why you want to modify? Is there a material mistake? Or you are unable to get evidence or both? Anything might be there. Both can also be there. Inventory, material mistake is there. Debtors, I did not get evidence. Total tendency. Material. One MMS is there. There is another material item, but not. Evidence is not available. As a whole, is it pervasive? Check it out. Then also you will give which opinion? Qualified. After discovering all the mistakes, simple, total it. Total the mistakes. Now what is the total impact? Material, yes, but not pervasive. Qualified opinion. Material and pervasive. Material and pervasive. You see, major portion is coming from misstatements or your inability to get evidence. Suppose if the major contribution for the pervasiveness is not getting evidence. Not having evidence is the main reason for pervasiveness. Then which opinion? Able to understand. All of you. Next. This itself can be asked as a question mark. Next. Now, here I have given some observations for your better understanding. When sufficient appropriate evidence is available, can we give disclaimer of opinion? When sufficient and appropriate evidence is not available, can we give adverse opinion? Simple logic. Adverse means what? Saying everything is wrong. In order to say that is not right, that is wrong, I need proof. People will ask me, hey, that is wrong. What is wrong? Tell me. I don't know anything about that. But I am saying wrong. Will people agree? Able to understand? So that's regarding various types of opinions. We'll look at how the paragraphs looks like. In the audit report, how opinion paragraph drafting comes. That is important for MCQs. Which is important for MCQs. if you observe, this is a pronouncement book illustration. See, in SEA 700, in pronouncement book, you are having some 5 illustrations. One is enough. Unmodified opinion, one illustration is enough. Because they will give illustration for fair presentation framework, how to give audit report. Listed entity, fair presentation framework, how to give audit report. Non-corporate entity, compliance framework, how to give audit report. Like so many were there. That and all we can't discuss in marathon. Getting a revision class, we can't discuss all that. Now, if you want, I'll discuss, but I'll ignore some 5 or 6 chapters, no problem. Huh? That's why. Next. Illustration 1. Audit report on financial statements of listed entity. You see here, the auditor has concluded which opinion? Unmodified opinion. Now you see the format of audit report. What is the title? Independent auditor's report. Addressee to the members of the company. Now you see, there is a side heading came which we didn't discuss. We straight away discussed which one? Opinion. But what is this side heading? Suppose, no? All of you have seen advanced accounts consolidation topic. Have an idea at least. Now, if a company has a subsidiary company, or associate company, this company shall prepare consolidated financial statements as well. Correct? Now, the company is preparing 2 sets of financial statements. One is standalone financials. This company own assets, liabilities. This company own income and expenditure. Consolidated financials, my company and my subsidiary, my associate, joint venture, combined balance sheet, combined P&L. Able to understand? Like suppose, no, very simple, layman example. When you are like, in marriages and all, we see this. When there is a marriage going on, do we look at only the bride and groom, or do we look at the family as a whole? As a whole family. Yes or no? Same way here also, in company, Tata Motors you see, only Tata Motors is excellent performing. Right now Tata Motors is having decent profits. But it has some subsidiary company called Jaguar, Land Rover and Range Rover, JLR. Now this company is facing too many losses. What's wrong? Tata company's parent, that is child. When child is suffering, who will support? Obviously, when subsidiary company is making too many losses, who will give them the loans, compensations, all that? Tata Motors. Okay, Tata Motors is earning super. But based on Tata Motors standalone performance, if I invest no money, but my whatever profits they are getting, they are not giving me. They are using it for Jaguar company. Revival. Yes or no? So even though the company is performing super, the profits are going for this. So why will I get the profit ultimately? So I don't want to look at only your individual picture. I want to look at entire family picture. I want family balance sheet and P&L. And that is what consolidated balance sheet, consolidated P&L. Are you getting the point? This is total group picture. That's it. See, in Tata Motors, you are showing investment in Jaguar. So much investment value is there. But out of that investment, so much is loss only. So if you show me the combined picture, I will understand much better. Combined picture of Tata Motors, no, consolidated, the profit is lesser than individual picture of Tata Motors where the profit is higher. Able to understand? All of you? Next. So, now when company is preparing 2 sets of financial statements, auditor shall give audit report separately on standalone financials. Audit report shall be given separately on consolidated financials. Now when you are giving 2 different audit reports, which audit report your audit report deals with? You should mention, no. So here what they mentioned? Standalone. Are you clear? Now directly what? Opinion. We have audited the standalone financials of the company comprising balance sheet, P&L, so and so, all that first para. Now, in our opinion, to the best of our information, according to the explanation given to us, the aforesaid standalone financials give the information required by the Act in the same manner required. Whatever Act says, they are giving. And not only that, they are giving true and fair view in conformity with the gap. Are you getting the point? Now, you see here, I'm using the word and give true and fair view in conformity with gap, right? If this word is there, if this line which I highlighted right now, then this is fair presentation framework. What is this framework is? Fair presentation framework. If these words are not there, then that is a compliance framework. What is fair presentation? What is compliance framework? In Companies Act, what is recommended, what is mandatory is fair presentation framework. Companies Act 129 subsection 1, which talks about preparation of financial statements. What that section says, you know, every company shall prepare financial statements by complying with the Schedule 3, by complying with the accounting standards, and shall convey true and fair view. Since the word Companies Act uses the word true and fair view, you must follow fair presentation framework. Suppose true and fair view word is not used, what will happen? Every company shall prepare financial statements as per Schedule 3, as per accounting standard. Suppose accounting standard is asking me to follow either SLM method or WDV method. But for my company, plant and machinery, both are not suitable. I have to follow units method. Production units method I should follow. But Companies Act is saying me follow accounting standard. Sir, that is not suitable, sir. That is not fair method. It doesn't matter. You follow SLM or WDV, that's enough. So if I have to blindly follow the law, even though the accounting treatment is not suitable for me, if I have to compulsorily follow the law, that is called which framework? Compliance. Suppose if they use the word true and fair. What is true and fair? You know what it says, definition of true and fair? You always try to follow. You always try to follow the law. The financial statements prepare as per the framework. However, you can deviate. However, you can deviate for the purpose of achieving fair presentation. Suppose if you follow accounting standard, SLM, WDV, both are not suitable for you. Both are not suitable for you. For you, production method is suitable. Production units method, that is not there in the standard. Example. Now, ignore the standard. Follow production unit method. Mention, give a disclosure in audit report. Give a disclosure in the financial statements, notes to accounts. That company followed production unit method, which is not as per accounting standard because of the following reasons. That is called fair presentation. In fair presentation, I will deviate. See, there is a difference between deviation and violation. Now, in fair presentation, am I violating accounting standard? I am deviating for what reason? Fair presentation. If I follow units method, first year depreciation is actually 4 lakhs. But if I follow SLM, the depreciation comes only 1 lakh. Depreciation number is not reflecting the actual usage of the asset. Able to understand? So, SLM method is not correct because that is not fair method. That is not fair for me to show lesser depreciation. What is fair for me? I should show depreciation how much ever I used. That is fair on my part. Able to understand. Now, what is the difference between true and fair? True means the fact. Fair means reality. Getting it? Like simple example. Debtors were there. Debtors. How are we showing debtors in the balance sheet? How are we showing debtors in the balance sheet? Some 100 crore debtors were there. 5 crore doubtful debt was there. 95 we are showing it as asset. Yes or no? This is the balance sheet total asset, right? This is the asset we are showing ultimately. But tell me, honestly, correctly, truly, how much the company shall receive? How much company shall actually receive from debtor? 100. How much the company can receive? 100. But out of which 5 is doubtful, no? If I say 100 crore as my asset, out of which 5 is actually doubtful. Logically tell me, fairly tell me, how much company will receive? Company will receive only 95. Okay, I understand, the fact is 100. But fairly speaking, how much the company can realize? 95. This is fair value. This is fair presentation. Whereas this is true. Truly 100 crore I should receive. I will not show what are my true assets. I will show what are my fair assets. Fairly how much I will receive, that only I will show. Able to understand? That's it. That's the basic difference between true and fair. Understood all of you? Next. So that is regarding the unmodified opinion. Now we will see how modified opinion we will give. How modified opinion we will give. So for that we have to go to SA 705. So SA 705 we have again illustrations. This is qualified opinion illustration. Independent auditors report to the members of the company. What is the side heading they used? Whereas in the previous example, what side heading they used? Which side heading? Simply opinion. So when you are giving unqualified opinion, simple opinion is enough. When you are giving qualified opinion, side heading must be. Suppose if it is adverse opinion, disclaimer of opinion. Now you see qualified opinion. We have audited same matter. Now in our opinion, to the best of our information, according to the explanation given to us, okay, you see below, the aforesaid financial statements give a true and fair view. That is also positive opinion only, no? Qualified opinion also they are saying what? Aforesaid financials are true and fair. But there is some exception. Which means it is not absolutely positive opinion. It is conditional positive opinion. What is it? Conditional positive. What is the condition? Some exception they used. What are they saying? Except for the effect of the matter. There is some matter. Except that effect. Where the matter is mentioned, described in basis for qualified opinion section of our report. In our report only, in the same report, there is another section. What section? Basis for qualified opinion section of our report. Except that matter, the aforesaid financials are true and fair. Above financials are true and fair. Except some matter given in basis for qualified opinion section. Except the effect of that matter, rest of the matters are true and fair. What is the matter? The company inventory is carried in balance sheet at 100 crore. Management has not valued inventory at cost or NRV, 100 or 90, whichever is lower, but valued the inventory only at cost, which is actually a departure from accounting standard. Correct? Not only qualifying, you should also quantify what is the mistake value. Had management, you see, had management stated inventories, if at all management showed at whichever is lower, 10 crore. Rupees 10 crore would have been required to write down inventory to their NRV. 10 crore I will reduce to NRV. And the cost of sales will increase by 10 crore. Income tax will increase by so and so. Income will decrease by so and so. Shareholder funds will decrease by so and so. I should mention, if mistake is not there, how it will look like. Mistake is there already. How it is looking like we can see already in the balance sheet. Balance sheet is misstated. Numbers we already saw. If this mistake is not there, what would be the reserves and surplus? What would be the profit? What would be the sales? That also you should show. Are you getting it? Which means quantification of misstatement is also compulsory. Understood or not? All of you. You see here we mentioned basis for opinion para when you give modified opinion. Suppose if there is a material misstatement, qualify. Sorry, not qualify, it's quantify. What is it? Quantify. The auditor shall quantification of effect of misstatements unless impracticable. You have to quantify. If it is not practicable to quantify, suppose 20 mistakes are there. Is it possible to quantify? Able to understand. All of you. Next. Now I will have to give one small example here. Suppose there is debtor 10 crore, there is creditor 10 crore and debtors also some 20 crore we have. 20 crore. What the company did, Company overstated creditor by 1 crore. Which means actual creditor is how much? Company overstated debtors by 1 crore. How much is actual debtor? Now, asset 1 crore increased, liability 1 crore increased. Can I set up both and say no material misstatement? Now, what is the total misstatement here? Exactly. 1 crore, 1 crore. How much it is? 2 crore. Let us assume. Creditor is overstated by 1 crore. Debtor is understated by 1 crore. Now tell me what is the total mistake? 2 crore only. Mistake will not have any sign. Getting it? 1 crore mistake. Here 1 crore mistake. That's it. Plus minus no. No symbol for that. Understood or not? Total is 2 crore. Total you should say aggregate material or not. Understood? Next. Next we will see adverse opinion, how it looks like. How it looks like, adverse opinion. Still, after we are only discussing opinion para, then we will discuss basis for opinion para. Understood? So just this one and disclaimer we will see and then take a break, okay? Now you see, adverse. In our opinion, to the best of our information, explanation given to us, you see here, the accompanying financial statements do not give true and fair view. Able to understand? We are straight away saying do not give true and fair view. Are we giving any exceptions or completely not true and fair? So the word except will not come here. Here it will come what? Because of significance of the matter discussed where? Discussed in basis for adverse opinion section below. Here I told you, here it is mentioned. Why auditor gave adverse opinion? This matter is there? No. Because of its significance, we are saying the aforesaid financials do not present true and fair view. What happened, the company has not consolidated one of the subsidiary. This is actually an audit report on consolidated financials. This is an audit report on consolidated financials. Now in consolidation, all the subsidiaries should be consolidated. All the joint ventures associates should be consolidated. Correct? But one important subsidiary is that I didn't consolidate. Now, consolidated financials, are they giving complete picture? Are they giving true and fair picture? One subsidiary company itself is not consolidated, which means which item is misstated? In balance sheet, which ledger is misstated? All the ledgers. Fixed assets will go wrong. Current assets will go wrong. Liabilities will go wrong. P&L, all the items will go wrong. Now tell me, can I quantify? Suppose if inventory alone mistake is there, I will quantify. This is the mistake. If this is not there, this much would be the profit. But fixed assets, all items mistakes. Current assets, all items mistakes. Liabilities, all items mistakes. Why all items were misstated? One subsidiary is not consolidated. So every item is understated. How can I quantify? So I cannot quantify. If auditor is unable to quantify, auditor shall state that. Getting it? That's what auditors mentioned in this in adverse opinion. You see, the effect on consolidated of the failure to consolidate have not been determined. Auditor must have mentioned that he didn't determine. Are you clear? All of you. Now you see disclaimer of opinion. Now you see disclaimer of opinion. So disclaimer of opinion, if you observe here the starting point itself, we were engaged to audit. They didn't use the word. We have audited. Why we are giving disclaimer? We didn't get any evidence. When you did not get evidence, where you verified? How can you use the word audited? You see, adverse opinion, it will start, we have audited. Qualified opinion, we have audited. Unqualified opinion, we have audited. Disclaimer, we were engaged to audit. Which means, what are you saying? We were appointed, but we didn't audit. Correct? Now tell me, here, straight away what they are saying, we do not express an opinion on financial statements. Why? Because of significance of matter described in this basis for disclaimer of opinion section. Because of the matter, there is a below section in that I described why I couldn't give the opinion. Can I use the word in our opinion, to the best of our information, according to the explanation, no opinion? Can I say like that? What is your opinion? In my opinion, no opinion. Can I say that? I should straight away say I don't have opinion. Correct? That's what the wording, sir. All of you understood or not? Now, how basis for paragraph will wordings looks like? in different scenarios. How auditor responsibility sections will looks like in different scenarios. All that we will discuss. We'll take slight break and then come back. Clear all of you? So now we'll observe about how basis for opinion paragraph we will modify. How basis for opinion paragraph will change in different scenarios. Getting it? Like if you check, so when we have given unmodified opinion, the side headings we understood. Now what is the basis for the opinion? For unmodified I don't have any specific basis, but still basis is compulsory to mention something. See, when I give qualified opinion adverse, I have showed you how they clearly mentioned the mistake. Correct? But I am giving unmodified. What should I mention in basis? What is the basis for the opinion I am giving? I should mention logic of the opinion, right? What is the basis? The basis is we conducted audit. The basis is we conducted our audit. How you have conducted the audit? As per standards on auditing. And do we have responsibilities under those standards? Yes. And these responsibilities are further described. They were described where? In auditor's responsibility for audit of financial statements section of our report. In the same report, there is another section. Audit of auditor's responsibilities for audit of financial statements section. In that, we clearly mentioned auditor responsibilities. Go and refer that. That's what they're saying. Yes or no? We are independent of the company as per code of ethics. And we have fulfilled all the ethical responsibilities as per the requirements and code of ethics. We believe that the evidence we obtained is sufficient and appropriate to provide a basis for the opinion. In the above opinion para, how we started opinion para in our opinion? Based on the information and explanation given to us. Correct? To the best of our information, to the best of our explanation. Whatever information I got, whatever explanation I got, I gave this opinion. Now in the basis for opinion, last line what I have highlighted, here we are giving affirmation. We are giving acknowledgement that have you got enough information you want? So what are they saying here? We believe that the information and explanation we got is sufficient and appropriate to provide basis. Look, based on information we get the financials are true and fair. Now you have a doubt. Did I got complete information I want? Did I got the information explanation whatever is necessary? Yes, I got. Able to understand. That's it. So that is basis for opinion. Now you see qualified opinion. Now you see basis for qualified opinion. In that second para I see same, no? We conducted our audit as per standards on auditing. And our responsibilities under those standards are further described in. Our responsibilities under those standards are further described in. Auditor's responsibilities for audit of financial statements section of our report. Correct? Same way, when we are giving adverse opinion also, we are using the same. You see here, adverse opinion, here we are giving specifically what mistake. But below we are giving same. This paragraph which I highlighted now, it is there in unqualified opinion. It is there in basis for qualified opinion para. Now basis for adverse opinion para. Everywhere it is coming. Correct? Now same, we conducted our audit as per standards. But you see, in disclaimer of opinion, it will not come. Because we didn't do audit at all. Why should I see basis for opinion? I didn't give opinion at all. So what is the logic? So what should I give here reason? Why I did not give opinion? You see the heading of the standard. Heading of the side heading. Basis for disclaimer of opinion. You are giving reason why you did not give opinion. Able to understand? Whereas in the past three, what is the basis for your opinion? Basis for qualified opinion, basis for adverse opinion, basis for opinion. What is the basis for your opinion? Whereas here it is, what is the basis for not giving opinion? You give reason. Now we conducted our audit as per standards, all that will it come? Exactly. Are you clear? Now, you see auditor responsibility section. Auditor responsibility section, when I am giving unmodified opinion, what points I will cover in auditor's responsibilities? Our objective is to obtain reasonable assurance whether financial statements are free from MS, whether due to fraud or error. Remember, ours is only a high level of assurance. Reasonable assurance. What is reasonable assurance? Reasonable assurance is a high level of assurance, but not absolute. It is not a guarantee. Even though we do audit as per standards, still material misstatements will exist. The misstatements can arise from fraud or error. Our objective is we do risk assessment, we do apply skepticism, we evaluate accounting policies, we see management going concern basis, and we evaluate overall presentation structure of the financial statements. Whenever we find something wrong, we communicate with management, important deficiencies, all that. We are required to provide top management some information regularly. This is entire responsibility of auditors under various standards. These are the responsibilities of auditor. Now in exam you may be asked a question. What are responsibilities of auditor? As to be reported. What are the responsibilities of the auditor to be reported? But you see, this auditor responsibility para is similar even when you are giving qualified opinion. Even when you are giving qualified opinion, same. Unmodified opinion, whatever responsibilities content you give, same only you will give even in qualified opinion. When you are giving adverse opinion, auditor responsibilities paragraph will have same matter. So whether you give unmodified opinion, qualified opinion, or adverse opinion, auditor responsibilities paragraph is a section inside that matter is same. Understood or not? But when you are giving disclaimer of opinion, auditor responsibilities for audit of financial statements paragraph, the matter is different. The matter is different. Our responsibility is to conduct audit in accordance with standards on auditing and issue auditor's report. However, because of the matter described in basis for disclaimer of opinion, I mentioned reason in the above para. Because of that, we were unable to obtain evidence to provide basis for the opinion. However, we are independent of the group. We complied with ethical requirements. That's it. Now I will show you the main material. In the recent exam or somewhere, the question has been asked on this. Question has been asked on this. So I'll show you my main material itself. This is the main material. If at all you want to learn the subject properly and fully, it is better to follow always the main material. You see, in the recent exams or somewhere it has been asked. July 2021, 3 marks question was asked. In July 2021, there is a question on this, 3 marks question. What you will describe? Description of auditor responsibilities for audit of financial statements when the auditor gives disclaimer of opinion, 3 marks question. Able to understand? When auditor gives disclaimer of opinion, when auditor is giving disclaimer of opinion, what points he will mention? Hey, where is that? We closed, huh? Okay. So when auditor is giving disclaimer of opinion, what points that he will mention? He will first mention what is his responsibility, and he will mention that because of the matter described in basis for disclaimer, we couldn't obtain sufficient appropriate evidence. And he is also talking about independence, compliance with independence, code of ethics, correct? Answer you see. A statement that auditor responsibility is to conduct audit. Second point, a statement that because of the matter described in basis for disclaimer, the auditor was not able to obtain sufficient appropriate. Last one, auditor shall give a statement about independence and other ethical requirements. This is what actually in the matter drafted, no? This is how questions will come in exam. Okay, what is qualified opinion? They will not ask. Getting it? They will ask this kind of tricky questions. You see, January 21, 4 marks question. What an auditor should mention in basis for opinion section of auditor's report. When auditor modifies on the financial statements, what amendment he should make in the section. In the basis for opinion, when you are giving modified opinion, what points you will write? When you are giving modified opinion, what points you will write? So they are asking nothing but you to write the answer on this one. Description of basis for opinion when you are giving modified opinion. Here you can just write any 3 points. 1, 2, 3 points you have to write. Whenever you are giving modified opinion, you should quantify. If you are unable to quantify, mention the reason why you are unable to quantify. Inability to obtain evidence. 1 to 4 you need to write. 1 to 4. When you are unable to obtain, what you need to do? Are you getting it? And when you are giving disclaimer, audit report shall not include the reference to a statement about audit is obtained, sufficient, appropriate, all this. Getting it? Have you read this subject in depth like this? Have you understood like this? That's why when a new question comes, we are losing. And always looking at the past examination question bank. I told no, past question paper question bank, why I don't recommend, 4 attempts, 5 attempts before papers were dummy. And you are reading that question bank. And ignoring the present standard at which they are testing. MCQs will be drafted like this. MCQs will be, they'll give you opinion draft and ask you to give what is your answer on that. So be careful. And same way, even in SCA 700 also, they will ask one more question. They'll ask you one more question. You see that question, the location of, description of, auditor's responsibilities are always within the body of audit report. This is asked from July 2021 for 2 marks. True or false question? In the question, now you see the location of, description of auditor responsibilities for audit of financial statements is always within the body of audit report. What are they saying here? Auditor responsibility section is there in the audit report. That should always be in the audit report only. It should not be given somewhere else. What the standard says, you can give it in a website, you can give it in a law. You see here. Yeah, you see here, we have given here itself. I think main material you see, okay. See, always remember, I'm telling you, smart notes is not substitute for main material. Getting it? That is only for quick reference of key topics. But in-depth explanation, in-depth clarity if you want, you should refer always the main material. So what is it? The auditor responsibilities, no? We can mention in body of audit report. In India, we follow this. Or as an appendix. I showed you CARO, no? I have not yet started CARO, but CARO will be given as an annexure. How CARO will be given as annexure? In the report on legal paragraph, the 12th part is there in the audit report 12th part. In audit report only it will be there. But below we will write point, please refer annexure 1 for CARO. Annexure means what? It's like an additional sheet in your answer book. Additional sheet is a separate document or part of the answer book. Same only. So, auditor can talk about auditor responsibilities. Audit responsibilities, so many were there. All that if you explain in the audit report, you may feel like, oh my, it will become bulky. So, you can give it as an appendix. Or, give a reference to the location of the website. You put this responsibilities in your website, put the website link here. In these 3 methods, you can discuss auditor responsibilities in the audit report. But in India, we follow within the body of the audit report. I'll show you Air India audit report. Where we follow within the body of the audit report. So, this is Reliance Industries audit report, and I'm also opening Tata Motors audit report. Okay, Tata Motors we will see. So standalone financial statements. This is auditor's report. This is standalone financial statements. This is auditor's report. You see how the same format, no, whatever we have seen in the standard, to the members, title, opinion. You see the wordings here. You see the wordings, in our opinion, everything is same, no? Basis, we conducted our audit as per standard. Then you see responsibilities. You see auditor responsibilities were given clearly in the audit report itself. What are the auditor responsibilities here? He is mentioning in the audit report itself. You see, auditor responsibilities for audit of financials. Our objective is to obtain reasonable assurance is a high level of assurance, but is not a guarantee. Misstatement may arise from fraud or error. We are responsible to identify and assess risk. We have to check internal control. We have to check accounting policies. We have to check going concern. We have to see overall presentation structure. Same points were there in the standard also, no? Copy paste only they'll do. Getting it? Next. So you see almost entire, see this much is there. Responsibility para, so much is there. You can keep it like this as it is, or you can give this responsibilities as an annexure, or you can give the responsibilities in a website and give a link here. If you want to know about responsibilities, click the link, go to the link and read. Because if I keep entire responsibilities in this itself, audit report is looking very lengthy. Are you getting the point? But in India, we follow this method only. See, Tata Motors is giving in the body of the audit report. This question was asked, 3 marks, 2 marks, true or false statement. The location of, description of auditor's responsibilities for audit of financial statement section should always be within the body of the audit report as per the standard. False. It can be within the body of audit report, or it can be given as an appendix to the audit report, or it can be given, or auditor can give a specific reference to the website or the law or regulation which talking about auditor responsibilities. Now, another way a question can come, how a question can come is, what auditor responsibilities section shall contain? What auditor responsibility section shall contain? It should mention objective of auditor. It should mention a statement that reasonable assurance is a high level of assurance. You should mention a statement that misstatement can arise from fraud or error. You should mention a statement that you exercise judgment and skepticism. You should mention statement in case of joint audit or branch audits. You should also mention that you are responsible to do risk assessment. You should understand internal controls. You should check accounting policies. You should check going concern. You should check overall presentation structure, all that. All these points we wrote, no? In the real audit report, that question can be asked. What points you will report? What points you will mention in auditor's responsibilities relating to audit of financial statements? Understood or not? Next time if someone says audit is easy, 50 pages only you study, don't believe. Maybe they only know that 50 pages. They don't know anything else. Next. So we have seen opinion para, basis for opinion para, auditor's responsibilities relating to financial statement section. Yes or no? Now, if I again go back, so we have completed title, addressee, opinion, basis for opinion, and auditor responsibilities for audit of financial statements. Responsibilities of management we have already seen while we are discussing engagement letter. Correct? Same only it will come. Now, other information para we don't have in syllabus, so we will mark it as complete because we don't have in syllabus. We need not discuss, so we will put it as green. Now, we still have the unhighlighted one to be discussed. Now, what is material uncertainty related to going concern? What is key audit matter? What is emphasis of matter? And what is other matter paragraph? Now, we will start emphasis of matter and other matter paragraph, then key audit matter, then material uncertainty. Then I will come to CARO. Getting it? So, by the next session, apart from this next session, first half, I will try to finish up to CARO. By this today's lecture itself, we will try to finish entire reporting. Are you getting it? We still have 18 more hours allocation. So happily we can discuss remaining content also. Getting it? Next. Actually, I don't take a revision for 25-30 hours and all. I take revision only for 18 hours or 17 hours or 20 hours max. Normally 16-17 is enough. More than enough. But the reason why I am taking 25-30 hours is so that I can cover little more topics. Now you see I can discuss almost all the things, many things. Only thing is I am not giving detailed explanation for every topic. But significant topics I am covering in revision. And that too, this can be understood only if you have already gone through the syllabus completely once. you listen to the classes or studied from the book, at least once only you can relate to. If at all you are a first timer, maybe you will get some idea, but you have to work on more later. Okay, now I will just show you Air India Audit Report. In the meantime, Air India Audit Report is there. I'll just show you Air India Audit Report. What opinion they gave? Qualified opinion. What is the basis for qualification? Oh, they have 3 points. Okay, like some fair value assets which are held for sale, some investments, there is some valuation misstatement is there. Some trade receivables, payables, inventory lying with third parties, bank accounts, they didn't get evidence. And some, they didn't recognize leased assets. Non-recognition is also misstatement. Now, all these 3 put together are material or individually material? Aggregate. As a whole, they are material, but not. So, they gave which opinion? Now, tell me, here, no, if you look at here, they didn't talk about purchases and sales. Which means, on purchases and sales, which opinion auditor has? Unqualified. See, when I am qualifying, here I will mention where and all I have qualification. Remaining all other cases, my opinion is unqualified. As a whole on financial statements, it is qualified opinion. As a whole, they are true, except so and so. Understood or not? Unqualified opinion is as a whole. Qualified opinion is also as a whole, except something. Adverse opinion is also as a whole. Opinion we will give first as a whole. But if I have to give opinion as a whole, first I should have opinion on each and everything, correct? I must have opinion on purchases, I must have opinion on sales, I must have opinion on inventory, I must have opinion on trade receivables. So first individual I'll have. Individual, is it unqualified, 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 unqualified? Nothing but I will say, is it material misstatement, like that. Then finally I will consolidate and give a single opinion. You might have seen when you are doing, when we are discussing so many standards, if inventory is materially misstated, you will give qualified opinion. Getting it? We will say like that. But as a whole financials point of view, if you think it is not material, we will again ignore. But whenever we apply materiality, opinion, whenever we think of opinion, we should not see each and individual mistake. We should see total of mistakes. All the misstatements must be totaled. All the items where you did not get evidence must be totaled. As a whole, you should see the impact. Is it material? Is it pervasive? Then decide. Understood or not? See here, in this example, on trade receivable leases items, I may have qualified opinion. But on going concern, I may have unmodified opinion. Getting it? So, individually you need to apply. Qualified means only on that. Remaining is unmodified, obviously. Able to understand. Okay, I'll sink this point when I'm discussing going concern, so that many have this problem. Sir, when you said when going, in going concern, if everything is fine, we will give unqualified opinion. But in Air India, going, we give qualified opinion, but going concern is fine. Going concern is having some problem. Going concern is fine, absolutely. But we give qualified opinion. In Air India, we give qualified opinion, not on some other else. But on going concern, what opinion we gave? Unqualified. Clear? How opinion shall be interpreted, I am telling you. That's it. Now, let's look at emphasis of matter paragraph and other matter paragraph in the auditor's report. Emphasis of matter para and other matter para. So, what is emphasis of matter para and other matter para? So, emphasis of matter paragraph is a paragraph which is included in auditor report, which refers to matter appropriately presented or disclosed in financial statements that in auditor's judgment is of such importance that it is important for the shareholders for understanding of the financial statements. So, what is this exactly? You look at, we'll see whether Tata Motors used emphasis or not. Did Tata Motors used emphasis of matter para? No. No, they didn't use. They only used key audit matter. They didn't highlight. They emphasized. You see, they used emphasis of matter para. What are they saying? We draw attention to note number 2, which describes in detail economic, social consequences, disruption in the company as a result of COVID-19 is impacting supply chain, consumer demand and financial market, commodity prices. Our opinion is not modified. By the way, we will go to that note number 29C. Okay, 2C we will go there. We will go to that note number 2 subpoint C. We will go to that note number 2 subpoint C. We will see what the company is mentioning there. So C, right? Not this C, no? 2C I think correct only. This is only. So what are they saying here? The World Health Organization in February 20 declared COVID-19 as pandemic. So which has rapidly spread throughout the world, including India. By the way, we are looking at this audit report of 21-22 financial year. Including India. Government in India and across the world have taken significant measure to curb the spread of the virus, like mandatory lockdown, restriction and activities. Consequently, companies, manufacturing plants and offices had to operate with restriction for certain period of time. The pandemic has impacted operationally commodity prices. Management believes that it has taken into account all the impacts, events arising from COVID-19. So they have taken all. However, given the effect of pandemic and the restrictions on the overall economic activity, and in particular on the automotive industry, the impact on the above mentioned financial statements is subject to significant estimation uncertainties due to so and so. The company will continue to monitor any material changes. So they just mentioned about the impact of COVID. They just spoke about that. Now you see, this notes to accounts, you see, the balance sheet started somewhere in which page number? I'll show you the home page. You see, the standalone financial statements of Tata Motors were from which page to which page? 232 to 330. Out of which means roughly 100 pages. 100 pages, 98 pages per se. Financial statements were how many pages? 98 pages. That you see how small font, how much matter is there in a single page. Yes or no? It is more than our auditing subject itself. So 100 pages it is there. Now out of 100 pages, some 5 or 6 pages go for audit report. Some balance sheet main document, P&L, cash flow, statement of changes in equity. For all that 5. So 10 pages will go for the main statements. Now to understand these balance sheet P&L, detailed information is given in notes. That is around 90 pages. Will any shareholder read this entire 90 pages? Tell me. No, he will definitely not read. But will auditor read this 90 pages? Obviously, I am signing, man. Can I apply signing on that? Can I apply sampling on that? I should not apply. So I must read entire balance sheet, P&L, cash flow, notes, every page I should read. So when I am reading this, I saw this 2C point. I felt this is important point. I felt this is very important point. I felt every shareholder should read this point. Every shareholder, every investor in the stock market, they have to read this point. I want everybody to read this point. What should I do? Highlight it. So bring highlighter, highlight all the points, annual report and send the annual report. Not possible, no. 90 pages, how he will rotate? So better, he will definitely see audit report, no. Very important document. In audit report, I want to highlight. So highlight means what? Emphasize. Highlight means what? Emphasize. Emphasize in the audit report. Now, who felt this is important? So in auditor's judgment, it is important. For whom it is important? Users. Better the word is users. So now, by the way, I am highlighting, no, the 2C point. Why am I highlighting? Is company did some mistake in that? No. Did it present appropriately? Did the company presented the information appropriately? Disclosed appropriately? Correct, huh? If at all there is a mistake, what should I do? Modified. But here, did they do any mistake? Now you see the definition of emphasis of matter para. What is emphasis of matter para? It is a para included in audit report that refers to a matter presented or disclosed appropriately. Yes or no? Which is of which is that in auditor's judgment is such important that it is fundamental for users understanding. See how the definition has been formed. Able to understand. Now they will ask you this question. Write about emphasis of matter para. What is the manner of presentation? Manner. How Tata Motors presented emphasis of matter para? Did they merge it in opinion para? They give a separate section, no side heading. Yes or no? So include the paragraph in a separate section. Tata Motors gave separately. Did they put side heading? The side heading contains is what? Emphasis of matter. So put heading containing the term emphasis of matter. Now express the matter being emphasized. Give reference to the matter. Did Tata Motors give reference? We draw attention. Draw attention means what? Attention. Emphasizing. To what? Reference. Note number 2C in the financials. Okay. So accordingly, this paragraph shall refer only the information disclosed in financials. Which means if some information is there in Board of Directors report, should I highlight here? I can't refer Board of Directors report. First of all, Board of Directors report is forming part of the financial statements. We give opinion only on. We don't give opinion on any other part. Also state that auditor opinion is not modified. You see what Tata Motors auditor is mentioning. What Tata Motor auditor is mentioning, you see here. You see what Tata Motor auditor is mentioning. We draw attention to last line, you see. You see this last line. Our opinion is not modified. Why am I saying this? When I say note number 2C, you know, you studied emphasis. Emphasis is not a modification. You know that. But normal people, what they think, hey, why auditor highlighted 2C point only? Something went wrong in that. People may interpret wrongly. So you should tell them, you are highlighting. And also tell them, hey, I don't have any objection on that. I'm just highlighting, but I don't have any objection on that. So that is what? Presentation. State that the auditor opinion is not modified in respect of the matter. Now tell me, suppose if the point is having material misstatement, can I use emphasis of matter paragraph to highlight that? Don't highlight and all. Withdraw. Give modified opinion. Giving modified opinion on a material misstatement is indirect way of highlighting. Correct, huh? Because we are anyhow mentioning that in basis for qualified opinion, basis for adverse opinion, that point. When I mention something specifically in audit report, indirectly I am highlighting, no? Correct, huh? So emphasis of matter para is not a substitute for disclosure in, not a substitute for 570 material uncertainty reporting. What is material uncertainty reporting? We'll discuss later. Now did you understand emphasis of matter? All of you. So when do we use this matter paragraph? It is used to draw users' attention to a matter which is important for their understanding. From whose point of view? Auditor's point of view. So when auditor is not modifying the opinion on that point, when can I use emphasis of matter? When the opinion on that point is not modified. I don't have any objection on that point, but it is important, or it is not treated as key audit matter. If it is treated as key audit matter, keep it under key audit matter. If it is not a key audit matter, don't keep it under key audit matter. Simple. You can use emphasis. Understood or not? Uncertainty related to future outcome, litigation, regulation, whatever. Examples, what and all we highlight. Important points we will highlight. What are examples of the important points? You see, main material gives few more examples. Understood or not? That's it. Next, other matter para. What is that? Other matter paragraph. Now you see, other matter paragraph definition. It is also a paragraph, correct? Huh? It is also a paragraph. Where it is included? In the audit report only. What it refers to? A matter other than those presented or disclosed in the financial statements. Other matter paragraphs are also a paragraph which is included in audit report other than presented or disclosed. So what other matter paragraph in audit report refers to? It refers to some matter, but that is not given in financial statements. Suppose if the matter is presented or disclosed in financials, I will highlight that in. But if it is not in financials, okay, in auditor's judgment, this matter I will give because it is relevant for user to understand the audit to understand the responsibilities, to understand the audit report. What the audit report deals with, what audit report do not deal with. Getting it? Understanding of the audit. Last year financials were not audited by me. I want to mention the other matter paragraph I can use. I want to talk about my responsibilities. So what do you want to talk about auditor responsibilities? Sir, auditor responsibilities, we have a para, no? Auditor responsibility section is there. Then why this para? In this, I will talk about my division of responsibilities. What I will talk about? Division of responsibilities. So what do you mean by division of responsibilities? Look at this example, my favorite example, State Bank of India Group. So you take this, you look at this. You know, State Bank of India Limited, State Bank of India Limited. This is actually a company, first of all. It's a company registered under Companies Act, which got license for banking under Banking Regulation Act from RBI. That's first of all. And it's a listed company in the stock exchange. Correct? And its major ownership is held by central government. So it's a nationalized bank, public sector bank. Now, the State Bank of India, no, this is having a subsidiary company. The State Bank of India is having a subsidiary company. SBI Mutual Funds. What is it? SBI Mutual Funds Limited. They have a company. And the State Bank of India actually is a bank, no? How a bank will conduct business in India? Through branches. Through branches. We have Mylapore branch, Mandaveli branch, yes or no? Tungambakam, Chennai branch, Hyderabad, it has some 100 branches. In Chennai, they have some 100 branches. You know, State Bank of India is having how many branches in across India? 23,000 branches. I'm not talking ATM machines. I'm talking number of branches. Where you, bank, you'll go, bank, no. Bank means where you'll go, head office, huh? You'll go to nearby branch. Like the 23,000 branches State Bank of India is having across India. Able to understand? Now, out of these branches, some 16,000 branches, no audit at all. No audit because of some exemption given. Because these branches, no, individually they don't have much transactions. So 16,000 branches of State Bank of India were not at all audited. Now around some 8,000 or some 8,500 or 9,000, whatever number, I'm not accurate, I'm just telling you. Some 8,000 branches were audited by branch auditors, Now this entire State Bank of India, overall bank has auditors again. We call them as statutory central auditors. What do we call them as? Statutory central auditors. Now this bank is audited by 12 joint auditors. This bank is audited by 12 joint auditors. 12 joint auditors. 12 CA firms were appointed as auditor for State Bank of India. Since more than two or more than two were appointed, what do we call it as? Joint audit. Now here joint auditors are appointed for the branch or for the entire bank together? Entire bank together. But do these joint auditors who are principal auditors, who are nothing but principal auditors, main auditors for the bank, yes or no? Will they do audit of all the branches? For branches, separate auditors for there, so they will not do the audit of branches. But do they have power to do audit of branch as well? Hey, they are main auditors, they can do audit of branch also. Sir, already branch auditor appointed, still he can do. Still he can do. But generally what they will do, since branch auditor is there, why should I go and do again? Now, all these 8,000 branch auditors will prepare audit reports, correct? And this entire 12 joint auditors together will prepare an audit report. Which audit report we will give to public? Main auditor's report or all the branch auditors report, main auditor report, all 8,000 reports we will give to public. Main auditor report is only given to public. Overall, main auditor's report only will be given to public, which means on the State Bank of India, there are more than 8,000 audit reports, but only one will be sent to public. That one audit report is signed by 12 joint auditors. But did these 12 auditors who are signing the entire balance sheet, entire P&L, entire audit report of the bank, Do they audited entire bank? Entire transactions, did they audited? No. But who is signing that? Main auditors only. Whose report is sent to public? Main auditors. I sent your report to all of you. You feel, what do you feel? Okay, I am the one who did entire audit, you feel. But I didn't do the audit. I am giving audit report. Since I said everything is true and fair, you are believing it. Same way, I got branch audit report. He said everything is true and fair. I also believed him. So I am saying everything is true and fair because they said everything is true and fair. Able to understand. Based on their opinion, I am giving my opinion. Correct? Huh? Suppose in some of the branch, if something was wrong, an auditor was colluded in fraud, whom you will question? Me or the branch auditor? Whom you will question? You will question main auditor. But tell me, in this scenario, logically, am I responsible? Am I normally responsible? Logically tell me, am I responsible? No, logically I am not responsible. Why? I am not the one who did the audit. They are also statutorily appointed. They are also chartered accountants. They are also subject to all the qualifications, disqualifications. They are liable by auditing standards. They do audit. They give audit report as per 700 format. Everything is same. But their scope of audit is only branch. My scope of audit is bank. Able to understand? Now, I should tell all of you that in my audit report, look, so and so thousands of branches, they were not audited. But I have seen their summary statements. So and so thousands of branches were audited by branch auditors. Their report is given to me. Based on this report, I prepared my overall report, and that report only you are reading. If I tell you this statement clearly, after you read that statement, what do you feel now? Okay, this fellow is not the one who is doing entire audit. Branch auditors were there. Based on their opinion only, he gave this opinion. Tomorrow, if branch audit something went wrong, we should not question this fellow. We should question this entire matter. Where do we report? Understood? Okay, so you see other matter paragraph of the State Bank of India audit report. Other matter paragraph of the State Bank of Audit report, you check. So financial statements. You see, this is the auditor's report. This is the auditor's report. You see how many auditors have signed. You see how many auditors. This is firm. This is firm name. This is auditor name. So auditor 1, 2, 3, 4. So 3 rows, 3 columns were there, 4 rows were there. Means what? 12. 12 joint auditors were there. Before this year, State Bank of India audit reports 2021 financial year. That audit report was signed by 14 joint auditors. Later it was signed by 12 because RBI revised. RBI revised maximum number of joint auditors can be 12. In case of a bank, what is the maximum joint auditors? 12. Now you see here, other matter paragraph, you see clearly what they mentioned. We did not audit financial statements of 8,500 branches which are included in standalone financial statements, which assets reflects 21 lakh crore. Revenue is how much? 1,17,000 crore. This much worth of revenue, this much worth of assets, we didn't audit. Yes or no? The financial statements of these branches were audited by branch auditors whose report have been given to us. And our opinion in so far as related to these amounts is based on report of branch auditor. By the way, am I raising any objection here? Our opinion is not modified on the above matter. So we are talking about specific responsibility. Are you clear? Now you see here, again, in the State Bank of India, this is consolidated audit report on consolidated financials, I think, or audit report on standalone, audit report on standalone financials. You see, like in the beginning itself they reported. So what they have audited, they mentioned here, we have audited. Who audited? Branch auditors or principal auditors? They have audited central offices, 17 head offices, global marketing unit, business group, commercial group, 20 branches. Only 20 branches they audited. 8,557 Indian branches were audited by branch auditors. 34 foreign branches were audited by branch local auditors, foreign auditors. Okay. The branches audited by us and audited by other branches were selected by RBI in accordance with so and so norms. There are 16,000 branches which were not subjected to. And what is their portion of advances? Unaudited branches. Out of total balance sheet assets, advances, 18% belongs to branches which are not audited. 34% deposits belongs to branches which are not audited. 29% income is not audited. 40% of the expenditure interest is not audited. See, if I simply say 16,000 branches not audited, how people will understand? What should I tell? Number of branches is irrelevant. How much amount not audited? How much deposits not audited? How much expenditure not audited? Tell me that. So, not only number of unaudited branches, but the financial effect of those branches shall also be reported. This is a reporting requirement that you saw in bank audit chapter. I will show you later. When we are discussing bank audit chapter, I will show you that point. Able to understand. All of you. So that's other matter paragraph. Easy. So other matter paragraph is what? The auditor shall include other matter paragraph when it is not prohibited by law or it is not treated as key audit matter. So we should have a separate section. So when auditor includes, you must have a separate section with a correct heading called other matter. Now whether you want to use emphasis of matter or other matter paragraph, please communicate to those charged with governance. That's it. Understood or not? Next. So with this, emphasis of matter para and other matter paragraph has been completed. So we have completed emphasis of matter paragraph and other matter paragraph. Now we still have to discuss key audit matter and material uncertainty related to going concern. Getting it? So just 2 minutes. So the next one that we will have to discuss is material uncertainty related to going concern, which is SA 570. So nothing but we have to discuss entire 570 standard, only then we can understand that point. By the way, let us discuss 299 joint audit concept as well. First I'll cover this, then I'll go to 570 because in SA 6 and other matter para joint audit point also came. No. Now tell me, is joint audit compulsory? Is there any reference in the Companies Act regarding joint audit? Yesterday I showed you. In rotation of auditors they have given this. Yes. So what is a joint audit? It's a process of appointing two or more individuals or firms or combination is known as joint audit. There are some advantages, there are some disadvantages that is not required. Getting it? Now tell me, State Bank of India, all 12 joint auditors together signing? No. Now who is responsible? All 12 of them are responsible for everything? Now tell me, when we appointed 12 auditors in State Bank of India, how they do the work? First one auditor will go, do the entire work and come back. Then second auditor will go, again do the entire work and come back. No. How they do? They split the work. They divide the work and then do it. Now when they're dividing the work and they're doing it, suppose we all are appointed as joint auditors. I divided some work and you are doing some work. If I do some mistake, will you take the responsibility? If you do the mistake, will I take responsibility? So, what is the responsibility of joint auditors? When the work is divided, where the work is divided, each joint auditor is responsible only for the work performed by them. Yes or no? Now tell me, sir, how they will divide the work? They may divide the work based on assets and liabilities. You do audit of assets, I will do liabilities. Or they may divide based on income or expenditure. You do incomes, I do expenses. Or you verify purchases, I verify other expenses. You verify sales, I verify other income. Anyway, I can divide. Or we may divide work based on geographical area. You take care of entire north sales, I will take care of entire south region sales. Or based on identify. You do audit of division A, division B, division C. I will do audit of division D, division E, division F. Yes or no? Or we may divide the work based on period. You do quarter 1, I do quarter 2. You do quarter 3, I do quarter 4. Able to understand? Anyway, they can divide. Or some other basis. Combination of all this. Are you getting the point? Purchases we have to verify. You do 2 quarter purchases verification. I will do last 2 quarters purchases verification. Sales. You verify division A, division B sales. I will verify division B, division C. Any combination I can use. Correct? Now tell me. There are some cases where work cannot be division. Where there are some works where we can't divide the work. Suppose we saw Tata Motors notes to accounts. 100 pages is there. You verify first 20 pages, then I verify next 20 pages. Can I divide like this? Can I divide like this? No, I can divide separate concepts. See, financial statements we can't split. Is notes to account separate document? It is like working notes. In your answer, balance sheet some amount you put. How did that amount came? Working note. Is working note separate thing? No. In order to understand this amount, that amount, your working note has to be seen. In order to understand balance sheet P&L, what you have to refer? Notes. It is a combinedly one document only. Able to understand? So, can we split the documents? I can't. So, in respect of verifying presentation disclosure requirements of financial statements, whether it is made as per applicable framework, joint auditors will have joint, combined, indivisible. Able to understand? Or, when you are verifying financial statements, are they prepared as per the statute? There, you can't divide the responsibility. Or matter is brought to the notice of all. On a particular incident, everybody knows, but everybody did not act at all. Everyone acted negligently. Knowledge of everyone. It is knowledge of everyone, but still they didn't react. There is a big fraud happened. Then all of them are responsible. Decision taken by all. Responsible. Audit work is not divided on a particular area. On a particular thing, all of us want to decide and do contingent liability. Some pending cases were there. On that pending cases, should we treat it as contingent liability? Should we treat it as provision? All of us, all of us together decided. In that case, on that area, any one of us can be accountable. Able to understand? Next, or to make sure audit report complied with the standards. We are all giving same audit report, a single audit report. Are we giving 12 audit reports? We are only giving single. In that case, whether audit report is prepared as per the format applicable. Who are responsible? All of us are responsible. This question itself can be asked for 4 marks. Understood or not? Now, how joint auditors will report in case of joint audit? Generally, all of them arrive common conclusion. Express common opinion. No joint auditor is bound by majority. That word not you remove. Accidentally came. No joint auditor is bound by majority. Actually here, joint auditor is not bound by majority. But when I added no, I forgot to remove that not. Are you getting it? Because it is giving contradictory meaning. No joint auditor is bound by majority's opinion. Like suppose out of 12, 11 decided to give unqualified, one fellow decided to give adverse. According to him, it is adverse. Now, they will sit and discuss and try to resolve. Yeah, like that we should not give, 2 reports means again people will confuse. Like that first they'll try to resolve. Still he didn't agree. He want to give adverse opinion. Now in such a case, the disagreeing joint auditor, is he bound by majority? He will give his own report. Now, the State Bank of India will give 2 audit reports on the same financials. One audit report containing unqualified opinion, another audit report containing adverse opinion. Now your doubt is, which one public should follow? The auditor who gave adverse opinion, he has given reason. In where he has given reason? Basis for adverse opinion section, he mentioned reason. Public, no, they will read that. If they think this auditor's opinion is genuine, acceptable, they will follow that. If they think, hey, this auditor is idiot, exceptional, okay, I will not follow his opinion, then I will follow first audit report. Now, in other matter paragraph, other matter paragraph definition, if you recollect, other matter paragraph is a paragraph used in the audit report that refers to a matter other than presented or disclosed in the financial statement that in auditor's judgment is required for understanding of the, it is required for it is required for the user's understanding about the audit responsibilities, audit report. Here we are giving 2 audit reports. Now all 11 auditors know, in their audit report other matter paragraph, please refer audit report given by so and so 12th auditor. They will cross refer. 12th auditor gave adverse opinion, no. In his other matter paragraph, he will report one point. Please refer audit report given by 11 joint auditors containing unqualified opinion, which is also attached here only. They should cross refer each other. Why they should cross refer? Suppose I am a shareholder, I saw adverse opinion auditor's report. Here, auditor gave adverse opinion. Okay, I am going through. Other matter paragraph, I saw, oh, there is another audit report. Then I will go to the other audit report. Same way, they will also find other audit report. Able to understand. If multiple audit reports were there, the information that there is some other audit report is also available. How you should give that information? In other matter paragraph. Are you clear? That's it. Every term will have a meaning. Every term will have an understanding. Blindly don't read. Understood now? For every word I am showing you a clear-cut example. That's it. Audit is a very practical subject. But the problem is people don't understand that. Getting it? That is the reason why audit is like this only. You have to remember. Read 10 times, you'll remember. What remember? You'll not remember. You might have read this already 3-4 times some points, but you'll never remember that. It's impossible to remember. Next. So if there is a difference of opinion, disagreeing auditor can give his own opinion by a separate report. Now, by the way, in joint auditors, we are dividing the work and doing, no? Other joint auditor worked on his, and he came back, he said everything is fine. Should I verify that? Should I verify workings of the other joint auditor? No need, man. For his work, he is only answerable, no? Why should you verify? Each joint auditor is entitled to rely on the work performed by another joint auditor. That's it. Now, you see, joint auditor, State Bank of 12 auditors together are working. Imagine the amount of coordination required among them. All of them will have superiority complex. That he is superior than others. Yes or no? So, the engagement partner, important team member from each firm, they should be involved in planning. All joint auditors should develop plan. Correct? All of them shall establish audit strategy. All of them should develop the plan. Now, while developing the plan, identify where and all work can be divided, where and all work cannot be divided. Identify reporting objectives. Identify important factors. Do preliminary engagement activity. Identify resources required. All the joint auditors together sit and plan. How many team members you will bring? How many team members I will bring? How many you will bring? Getting it? Let us have complete picture. What are the things that we need to audit? Who will do the audit? Allocate names. Able to understand. We should develop a joint audit plan. Able to understand. And each joint auditor shall do risk assessment. Risk assessment will be performed by all of them. Able to understand. And communicate to other joint auditor if the risk identified belongs to other joint auditor. And all joint auditors shall, it's not obtain, it's actually give. But the standard uses the word obtain, but that's not correct. All the joint auditors will give. Will each joint auditor give separate engagement letter or give a common letter? Common engagement letter. And from management also, when they are getting declaration, do they get separately or common? Common representation letter. Now, work is allocated between joint auditors. It is in their plan, no? It is in the plan, no? Now, all the joint auditors must sign that work, and that shall also be communicated with those charged with governance. This question itself they can ask. Write special considerations to be adopted by joint auditors. Able to understand. Or they will ask you like this. The joint auditors, before starting the joint audit, should develop joint audit plan. What factors they should keep in mind? They'll ask you only this third point for 4 marks. There is another question in audit strategy chapter. What are the points to be kept in mind while developing an audit plan? The answer is different. What are the points to be kept in mind while developing joint audit plan? The answer is this. If the word joint is not there, this answer you should not write. You should write audit strategy chapter answer. Able to understand? Sir, I wrote correct answer only. Your answer is correct, but not for the question which is asked. Getting it? So with this, joint audit is also completed. So next we need to discuss SA 570. That we will discuss at afternoon. Okay, be here by 3 sharply. Okay, that's it. Now if we start 570, it will take little time. So in the next session, what is our point of discussion is 570 key audit matter, CARO 143 checklist. With that, audit report chapter is over. Few more standards I am not covering. Few standards I will not be covering. Everything is not possible, no? See, first we will cover as per our agenda. As much as possible we will cover. Still at the end, if we have time, no. Uncovered topics I will try to cover. All of you. But believe me, whatever that we are covering in this classroom, this will give you that enough knowledge now. So that whatever mistakes you are doing earlier in your reading, if the way you are interpreting the subject, you already, I think by this time you would have discovered. So later you can apply. Later you can read once again entire subject on your own. You will definitely understand in a much more beautiful manner. Okay, that's it. So the next topic is SA 570 going concern consideration. Like we are discussing the audit report contents. In that what we covered is almost that paras, that sections which will come as per requirement of other standards. Emphasis other matter we covered. Still we need to discuss material uncertainty related to going concern and key audit matter. Getting it? Now, so what that auditor has to cover in going concern assumption? What auditor has to check? Just a minute. So what auditor has to check in this going concern assumption? See, going concern, like until today, until you heard of it in the context of accounting, you might be thinking that financial statements are prepared using going concern assumption. And of course, we have to prepare financial statements using going concern assumption. When we will prepare financial statements using going concern assumption? When going concern assumption is suitable. When do we should prepare financial statements using going concern? When the financial statements, when going concern assumption is suitable only we have to. Suppose if going concern assumption is not suitable for us. Sir, what do you mean by not suitable? Going concern assumption not suitable, what does it mean? See, what is our objective of audit? Our objective of audit is whether the financial statements are free from material misstatements and are they prepared in accordance with applicable framework. Whatever points, amounts, disclosures, presentations, classifications, whatever they showed in the balance sheet, P&L and notes, are they right or wrong? We need to check right. Are they true and fair or not? We need to check right. Correct? So auditor has to check whether they are true and fair or not. Now management used in the notes to accounts, management said clearly, the financial statements are prepared using accrual basis and using going concern basis of accounting. Going concern assumption has been followed. What you might have learned, management will use going concern assumption and that's how it will continue. What is my question here is, auditor has to check whether management can use going concern assumption or not. What is the standard says indirectly? Auditor has to check whether management can use going concern assumption or not. Management can use it or not. See, because it is going concern assumption, financial statements are prepared on historical cost basis. Okay, you take a Ford, approximately they invested more than 10,000 crore in the factory. More than that, just giving a rough figure. More than 10,000 crore would have been invested in constructing the Ford factory in Chennai. Getting it? Now very recently they sold it for how much? 700 crore. At what price it is sold for? 700 crore. They invested 10,000 crore and sold it for 700 rupees. Like it is as simple as 10,000 article is sold for 700. You see any company, plant and machinery. Suppose you take Reliance Industries. You know what is the plant and machinery of Reliance Industries value? 4 lakh crore. The Reliance Industries Limited plant and machinery value is approximately 4 lakh crore. Only plant and machinery I'm talking. So where this plant and machinery will be find, you'll find it in the construction factory. Yes or no? The oil refinery, the structures, whatever it is nothing but 4 lakh crore. Now, if at all this plant and machinery is sold today, as per book value it is 4 lakh crore. Now, if at all we sell this, do we get 4 lakh crore? Outsiders will buy this plant and machinery in scrap. For the company it is plant and machinery. For you and me, correct? No, it is not useful at all. Can you bring that machinery and keep in your home? Oil refinery? Will you use it for any other purpose? Obviously, the factories that are constructed, the machinery which are used by these factories, these businesses, they are mainly customized. They are mainly customized. Customized items will not have resale value in the market. There will not be a buyer. Obviously, at what price we will have to be selling it at? At scrap value. Whatever iron and steel, you have to dismantle it completely and sell it at iron and steel cost. Able to understand? But the balance sheet we are showing 4 lakh crore. No. If you sell it immediately, it will hardly give 4 lakh, this 4 lakh crore worth of machinery will hardly give some 1500 crore in reality. If you sell it 1500 crore only, you will get. But then why are we, then if that is the realizable value, then why are we showing in the balance sheet at 4 lakh crore? I don't have intention to sell. First of all, I don't have intention to sell. See, I know if I sell the machinery right now, it hardly fetches me 1500 crore. 40,000 rupees worth of machine will hardly fetch me 1500 rupees. Are you getting it? But who the hell told you that I want to sell? I don't want to sell. I will use this machine. I will use this for next 50 years. I will use this machine for next 50 years and I will generate lakhs and lakhs of cash flows. Lakhs and lakhs crores of cash flows. More than this value of the machine, I can generate money. I can use it for my business. I can generate money. That's why I'm showing on historical cost basis. Why I am not considering NRV? Because I don't have intention to sell. I will use it in future. Okay. That is the reason you are showing. Now, can you use in future? That is a question. Can you use in the future? Yes, of course, I will use in the future. First of all, do you have future? This is a question. Do the company has future? That is a main question. Are you getting it? Now here future means how many months? Minimum 12 months. From balance sheet date, whatever the balance sheet that we are signing, from that balance sheet date, we need to apply 12 months logic. Getting it? So from balance sheet date, see whether 12 months is there or not, tenure. Next 12 months, can the company successfully continue or not? This is a position that you need to check. Are you getting the point? Now, only if you feel, only if auditor conclude, yes, the next 12 months, company can successfully run, no doubt. We cannot have a long-term gestation. We can't estimate long-term how things gonna change. Yes or no? In 2015, BSNL is a very growing company. In 2017, it died. Are you getting the point? Who knows? 2018-19, Jet Airways is one of the leading air carrier. Indigo Airlines and Jet Airways. These are the two companies which are, neck-to-neck competition. Within 6 months in 2019 beginning, I think, or 2018 beginning, within 6 months collapsed. Entire Jet Airways. Are you getting the point? So, people, shareholders, they should get an idea. Before the company become, insolvent, we must give them the idea clue, right? So, can the company use going concern assumption? Will the company definitely continue in the next 12 months? I need to check it. Because financial statements are prepared using going concern assumption. Because fixed assets, everything is shown at historical cost. And because going concern assumption is used, historical cost method is used, balance sheet is tallying. People are thinking company will exist for another few more years. Getting it? So I need to check this assumption. So management will use always, but you need to check, is it appropriate or not? Suppose you saw the company status. Right now, Reliance Jio Communications, you see, excellent number of subscribers. Yes or no? Everyone is almost using it. They are getting so much of revenue. Almost everyone is, broadband also, Jio fiber only when you are taking. When I say this company as on 31st March, will I get any doubt on the going concern ability of the Reliance Industries? Definitely the company will be there for another 2 decades. That is the kind of confidence that we get. So how do you say that? You can't just like that say that. You need to check at the cash flows. You need to look at the nature and condition of the business. You need to look at the external events and conditions, external economic factors, law and regulations. Everything is favorable. So Reliance company can happily use going concern assumption. As an auditor of Reliance company, on going concern assumption which they used, will I qualify? Do I need to object it? No need. Suppose. So that is about Reliance Industries Limited. Getting it? Suppose you take another company, where it is like Jet Airways. Jet Airways. 1 minute, okay. Yeah, suppose you look at Jet Airways. The company already defaulted payment of salaries. Already defaulted payment of creditors. A single flight is also not operating. Now this company, let us assume, appointed me as an auditor now. And this company prepared balance sheet P&L. And they used going concern basis. They used going concern basis. But company is not at all running. Most of the operations were halted. Labor strikes are going on. And company defaulted tax authorities. Defaulted creditors. Now tell me, when all these kinds of defaults present, and the company is still using going concern basis in financial statements, will you agree for it? Now for this company, is going concern, use of going concern basis of accounting, is it appropriate or inappropriate? Inappropriate, correct? Huh? So now tell me, for Jet Airways, use of going concern basis is inappropriate, correct? Huh? But they used going concern assumption. Now financial statements misleading or not? When the going concern basis of assumption is inappropriate, they cannot use, the company is not at all running, the company is already failed, and still management is claiming that they are continuing the business. In the near future also company will prosper. That's how management is showing, which is not correct in reality. So what opinion will give you? More clearly, adverse opinion. If the financial statements are prepared using going concern basis and in auditor's point of view, and auditor concluded based on sufficient appropriate evidence that use of going concern basis of accounting is inappropriate, then auditor shall give adverse opinion. Whereas for Reliance, how do you feel? Going concern basis of accounting, the way they are using is appropriate. And even they used going concern basis. Both are matching. So obviously I'll give its opinion. Unqualified opinion in the context of going concern. See, maybe from going concern point of view, unqualified I gave. But in the Reliance, I discovered material mistake in inventory. I will give qualified opinion on inventory. Understood or not? I will give qualified opinion on what? Inventory. On going concern, I will give its opinion as a whole. Unqualified. With respect to going concern, I don't have objection. But on inventory, I may have objection. That is again a different thing. Able to understand. Now look at the situation of Air India. Look at the situation of Air India. Here you can take Ford Motors also example. Ford Motors, which is recently closed. Okay. Air India you take. You know Air India position. Air India is having approximately 7 lakh crore accumulated losses. 7 lakh crore. No, sorry, 7 lakh crore worth of deficit, I think. I'm not sure exactly. Let me open that. You see here, Air India is having they have given this material uncertainty para, they used it. They are having net loss of, accumulated losses of 70,000 crore, 7 lakh millions, I mean nothing but 70,000 crore. 1,000 millions is equal to 1 billion. Getting it? 1,000 millions is equal to 1 billion. Getting it? Fine. So they are having how many? 70,000 crore. 70,000 crore. They are having accumulated losses. And how much? Current liability is exceeding its current assets, nothing but generally which one should be higher? Assets should be higher than liability. But here liabilities are higher than assets by 54,000 crore. And they have incurred during the current year 7,760 crore loss. Accumulated losses 70,000 crore. First, forget about all that. How many assets they have? They have lesser than liability. What does it mean? Pocket cash ille. In fact, I need to pay people. But still, Air India used going concern assumption. Still, what happened? Air India used going concern assumption. But you see, did we qualify on the going concern assumption anywhere here? No. Actually, when you look at this situation, is the company going concern proper? Already defaulted. Company don't have cash. Single rupee also not there. How come single rupee is also not there? Assets are more than, liabilities are more than assets. So already defaulted. Going concern is missing. Company cannot operate. But still, Air India used going concern basis of accounting. And even auditors have not given any objection on that. You see, qualified opinion, it is talking about something else, not about going concern. Why? Because the management is of the opinion that going concern basis of accounting is appropriate in view of continued support of Government of India. Because Government of India is supporting, already I don't have cash. Government is giving me loans. Government is giving me incentives. By taking that, I am surviving. Air India is surviving because government is giving loans and all. That's why, as long as government is supporting, will the company shut down? Now tell me, here what should I tell? What should I treat this as? Should I treat this as going concern appropriate or inappropriate? Appropriate. But I have a query. Until when government will support? Whenever they want, they can withdraw. Yes or no? If government decided, okay, let's not go with this, we are unable to revive the company, we are unable to implement turnaround strategy, we can't revive, so let's close the company. If the government came up with this decision, what will happen? Going concern will be completely, it will be not inappropriate, correct? Now, as on 31st March, Air India position is that, and when I am speaking to the directors of the company, they are saying, we prepared using going concern basis because government is supporting. My question is, next 12 months government will support? No sir, not sure. We are not sure. Now tell me, right now as on balance sheet date, government support is there. So that's why company is able to pay salaries, able to pay creditors, able to pay everything else, taxes and all. But within next 12 months, what if government withdraw the support? Who knows? Now tell me, can I say concretely government will withdraw the support? No. Or can I say government support will be there for the next 12 months? No. Is there an uncertainty or not? Is this uncertainty material or not? So, going concern is appropriate, but material uncertainty exists. The problem is, going concern is fine, but material uncertainty exists. Now, what auditors shall do in this kind of situation like Air India? I will ask Air India management. Dear management, you prepared financial statements using going concern assumption on the logic that government is supporting. Okay, I agree. And you are only saying until when government will support, you only don't have clarity. Maybe government might promise earlier that next 2 years I will support, but any time later they can come back and withdraw. So, there is a material uncertainty. Kindly disclose this material uncertainty in the financial statements. I am asking the management of Air India, please disclose this uncertainty. Every shareholder should know that company is having this kind of uncertainty. Just because company is continuing, don't think that company will continue like this next 12 months, next 24 months. Anytime government stops withdrawing the support, that's it. The next day we have to stop the business. Please inform this uncertainty in the financial statements. Management is also very honest. Sir, we already did, sir. You can see financial statements, notes to accounts, crystal clearly we explained in one note point where government, like we clearly mentioned in the note point, that in the note number 52, the company is surviving only because of the government support. If government withdraws the support, we will shut down. Because government is supporting, we have not shut down. Because government is supporting, we have prepared the financials on a going concern basis. We clearly mentioned, honestly disclosed. Now tell me, going concern right now it is fine, but material uncertainty exists, and that material uncertainty honestly disclosed by management in the notes to accounts or not? Yes or no? Now, are they misleading anything? Are they misstating anything? Now, in that context, which opinion you will give? Unqualified opinion. That's why you see here, auditor has not qualified anything related to going concern. Which means on going concern point, what opinion he gave? Unqualified opinion. Because the qualified opinion of Air India audit report contains qualification on not going concern matter, but on some other stuff. Which means on going concern matter, what opinion auditor gave? Unqualified. Suppose this material uncertainty is there, right? Air India management told me, sir, let's not disclose, sir. Let's not disclose this uncertainty to people. People will panic. Shareholders will panic. Let's not discuss that in the notes to accounts. And Air India management, even though material uncertainty exists, they are not disclosing fully or partly. They are not disclosing. Now, financial statements are misleading. Are they misstated by non-disclosure or partial disclosure of the uncertainty? Now, which opinion you will give? Adverse or qualified, depending upon the severity. But generally, since it is going concern, straight away adverse, and in basis for adverse opinion section, I will give reason for that. Yes or no? In basis for adverse opinion section, I will talk about the reason for that. Now, if financial statements are disclosing everything honestly, we will give which opinion? Unqualified opinion. Material uncertainty is being disclosed in financials honestly, unqualified opinion we will give. But tell me, when I give unqualified opinion on the financials, where there is a material uncertainty? Yes or no? Why am I giving unqualified opinion? Because management is honestly disclosing. Tell me, the point which Air India disclosed in note number 53 regarding material uncertainty about the company future. Because the uncertainty about the future of the company they disclosed in note number 53. Is it important point? Very important. This is about company future, company existence. Yes or no? Should we highlight it? Yes or no? By the way, do we have any objection on that? We want to highlight. Where we will highlight? No. Since it is going concern issue, did auditor highlighted here in emphasis of matter para? No, he highlighted under material uncertainty related to going concern. So he highlighted here, the company has incurred. We draw your attention to note number 53. Our opinion is not modified. This is exactly like emphasis, no? Same presentation. What's the difference between emphasis of matter and this one? Here, in this side heading, we can only highlight about going concern issue. We cannot highlight any other issue. This is not a routine matter to highlight under emphasis. This is very important matter. So, for highlighting going concern material uncertainty in audit report, a dedicated paragraph is given. Immediately after opinion, you see, it is not given at last also because it is most important. So, they gave at the first itself opinion, basis for opinion, material uncertainty related to going concern. Now, the question, please think and answer. Suppose Air India management is facing material uncertainty. They did not disclose that uncertainty in the financial statements. That non-disclosure is material and pervasive. Which opinion we will give? And will you use material uncertainty related to going concern para to highlight that? Obviously no. See, if I have to highlight, it should be there in the note point, no? Correct, huh? This, when can I highlight here? If it is there in the note point, Company did not disclose, man. How can I highlight? I'll give adverse opinion. I will talk about this under basis for adverse opinion section. When company did not disclose, I will directly discuss that under basis for adverse opinion. But if company disclosed it honestly, I don't have any objection. I will put it under material uncertainty related to going concern. Understood when this will come? So material uncertainty related to going concern paragraph section in the audit report will come into picture only when auditor gives unqualified opinion on which matter? Clear? Everyone. That's it, the standard. That's it. The standard is over. Now, so what is the objective of the auditor here? Auditor has to obtain sufficient appropriate evidence regarding appropriateness of management's use of going concern basis. Now you got the evidence. Try to identify whether a material uncertainty exists. Then report as per this standard. Now, for every company, whenever we are doing audit, we have to do a preliminary assessment. But we don't do. Management has to do preliminary assessment. Every company, every organization has to do a preliminary assessment. See, this is not something there only in companies. In our home also it will happen every day to day. Getting the point? Do our parents check or not at the end of the month? What are the expenses for the next month? So how much we are having inflow and what is the expected outflow? Yes or no? And if there is any shortage, how to finance that shortage? Don't they do all these evaluations? Same with company we will do. That is called what? Preliminary assessment. So management must do a preliminary assessment regarding use of going concern assumption. What they consider in preliminary assessment right now, what is the nature and condition of the business? Are there any external events or conditions like changes in law or regulation? Is there any, how is the operational forecast? How the significant events and transactions? Able to understand. How the significant events and transactions, how are they affecting? So this is a basic analysis which company has to do every time. Now what auditor has to check, check whether management is doing this preliminary assessment formally. Suppose management did this preliminary assessment. No event or condition is found. No symptom, no indicator. Excellent company. Do I need to do anything else? Nothing. Happily I'll proceed with other work. Suppose I discovered some indicator, some event, some condition, some symptom that may cast significant doubt on the entity's ability to continue as a going concern. If auditor identified any events or conditions that may significantly cast a doubt on entity's ability to continue as a going concern, the auditor shall do further audit procedure. The auditor shall do if auditor identifies any circumstance which causes, which gives a doubt on going concern. Then what auditor has to check? Once again, see, is there a policy for risk assessment related to going concern by the management? How management future plan of action? Did entity prepare future cash flow budget? Yes or no? And look at the cash flow, profit, latest financials, take legal opinion, look at the minutes of the meetings, see the subsequent events, see how borrowing facilities company is having right now. If suddenly company default, is there anybody to support this default? Getting it? Now, after doing all that, suppose I discovered material uncertainty. Check if financial statements adequately disclose the material uncertainty. If financial statement disclose adequately the uncertainty, auditor will express unqualified opinion. Getting it? And you shall also put a separate section, material uncertainty related to going concern. Draw the attention to that note point. Able to understand? Suppose financials are not disclosing. If the financials are not disclosing, express a qualified or adverse opinion. Suppose going concern itself is inappropriate, no discussion. It's wrong at all. Completely wrong. Going concern itself is not there. But the financial statements were prepared using going concern basis. But in auditor's judgment, the use of going concern basis of financials is inappropriate. Then auditor shall express. That's it. You are also reading earlier all this. Have you read by understanding like this? The reading should be like this. You see, every sentence when I'm reading, you're able to understand. That understanding is that's what understanding is. Visualization. You should read with that kind of intensity. Getting it? Next. Now you are saying, we are discussing, no, sir, if we identify any events or conditions, we need to do further audit procedure. What is the further audit procedure? Means this point, this answer you have to write. Write about audit procedure. In case, if auditor identifies events or conditions that may cast a significant doubt on entity's ability to continue as a going concern, you should write this answer. Write about risk assessment related to going concern. You need to write this answer. Able to understand. If you look at main material, I have given little more content on going concern. That is also important. That was asked in last attempt or that before attempt. Write about risk assessment related to entities use of going concern assumption. That is a question. Getting it? This answer you have to write, or I have given accurate answer in the book, main book. You see that. Able to understand. Now, what kind of indicators can be there? Indicators are broadly classified into indicators in financial, operating indicators, other indicators. Like financial indicators, negative operating cash flow, adverse key ratios, discontinuance of dividend, inability to pay creditors on due date, loan terms and all we are failing. So negative operating cash flow. Still there are many indicators in main material. Net liability position. What is it? Net liability position. And the creditors are not supporting. All these are indicators. In Air India, operating cash flows are negative because accumulated losses. Asset liabilities are more than assets. Net liability position. Correct? Inability to pay creditors. Air India is unable to pay suppliers on time. All these indicators will give me an idea what the company is having problem. Yes or no? Next, operating. Entity itself want to close. Entity only decided to close. Ford Motors, they only decided to close voluntarily. Until then they try to manage, but somehow cash flows are not affected. They are not supporting. They announced in 2021 that we are winding up. Next, loss of key management, operational thing. Coffee Day. Yes or no? When the CEO died, the Coffee Day future was, completely was questioned. Later his wife took over and slowly she revived slowly. Next, loss of major market. BSNL did not get 4G allocation. Only recently in the past 1-2 months only they are getting slightly 4G allocation after 4G was implemented 3 years before. 3-4 years before 4G was implemented. Now BSNL is getting allocation when everybody else is participating in 5G. Next, loss of customers, loss of franchisee, loss of suppliers. Any supply, supply of raw material is not available. Labor difficulties, shortage of supplies. Semiconductor is short, in across the world. Now every country is facing this situation, semiconductor shortage. Some companies closed down because of this. Able to understand? There are other indicators. The company is not complying with legal, solvency, liquidity norms. Insurance companies has to maintain 150% solvency. Banks have to, NBFCs have to maintain some 15% solvency ratio, 15% capital ratio. If an NBFC do not comply with capital ratio, liquidity assets ratio, NBFC will liquidate. RBI will remove the license. Legal proceedings against the company, if at all they were successful, company will have to sell the entire assets and pay the liability. Changes in law regulation. Uninsured or underinsured catastrophe. Some catastrophe occurred whereas all the missionaries and all were not insured at all. All these are indicators that going concern of the company might affected. Able to understand. That's it. So that is related to going concern. SA 570. But you need to read from main book. See, read this only for getting an idea from smart notes. But ultimately, reading from main book. Many students, they'll ask me this question. If there is a short notes, it is easy to revise day before exam. You are only assuming like that. Getting it? You give me ICA material, I'll revise before you. You must know how to filter the information when you are reading. Okay. Only if the information, see, why to that extent. Some of you might watch a movie, you are fast forwarding, when watching movie or web series. Yes or no? Are you asking for, edited movie? No, right? You are asking for smart notes edited one. Nothing but short notes means what? We need to edit everything and remove the information and then give you. And you want to read from the short notes thinking that your time will reduce. Now you see, when I'm explaining all this, more or less I covered all the points. You see how I eliminated when I'm explaining? You should also get that skill. First, you should always read the main book properly. If you have given a proper reading of the main book, you naturally understand how to eliminate the information. Only if you have command on the book, you can eliminate like that. Otherwise, you can't. Getting it? So, don't depend on short notes as running notes as like that. So that it will be easy for you to revise. No. Always revise from main book. That is what my sincere advice. And you should filter consciously. You should not, see, when I give you cut short notes, no, you naturally remove without your knowledge. But you must know what you are eliminating. You must know what you are reading. That can be achieved only when you are reading from main book. Next. So with this, SA 570 is done. So the next one is key audit matter. So in audit report, if you check once again, we have completed one more side heading. Yes or no? One more content of the audit report is completed. The next one is key audit matter. Yeah, let's continue. The next one is SA 701, communicating key audit matters in the independent auditor's report. Communicating key audit matters in the independent auditor's report. So the side heading is like in audit report is key audit matter. So what exactly is a key audit matter? How it is different from other sections of the audit report. Correct? Now we know opinion means where we discuss opinion as a whole on the financial statements. In the basis for opinion section, what do we give? The reason. Especially when we are giving qualified or adverse opinion, we will put one more additional reason why specifically we give qualified or adverse. Then we have material uncertainty related to going concern, and we understood how it has to be used. Then we saw emphasis. If you have any important point in the financial statements, you can highlight that point without qualifying. Correct? Other matter para, you can highlight about branch audit responsibility, joint audit responsibility, or other auditors, report, another report, all that stuff. So what is key audit matter? The name itself says important audit matter. Key, significant, material. So important audit matter. Now we'll see one example on key audit matter. Then I think it is better to discuss. Tata Motors you take, they have given key audit matters. Okay. So what they have given here, if you check what they have given, key audit matters. Is it visible? Everyone? At the last row also. Okay. 220. Yeah, correctly it came. Okay. So now you see, what are they saying? Key audit matters are those matters that in our professional judgment were of most significant in our audit of financial statements of current period. These matters were addressed in the context of our audit of financial statements as a whole and in forming opinion thereon, and we do not provide separate opinion on these matters. By the way, here below we are discussing some issues. We are not giving any separate opinion. And remember, below we are discussing some points below. These matters were addressed already. Auditors have already looked upon, already verified while conducting audit and while forming opinion. As a whole, they formed opinion on the financials. At the time, these points are all considered. So they are not giving any separate opinion on this matter. Then what are you giving? So key audit matter, like what they are saying here. During the current year, the company has transferred its passenger vehicle to its step-down subsidiary Tata Motors Passenger Vehicle Limited, formerly known as TML Limited, Tata Motors Limited, Business Analytics Limited, in accordance with the scheme of arrangement provided by NCLT. Okay, this is something like sale of the company, transferor company, transferee company, all that. The company has filed NCLT approved scheme, all that. Okay. The company has accounted for the transfer in accordance with GAAP and have recognized excess of consideration received over carrying value to capital reserve. Consideration received more than carrying value. Capital reserve amalgamation. Remember. The transfer of passenger vehicle undertaking has a significant measurement and disclosure impact on financial statements. All that stuff they have given. So since this work involves so many things, they have this Tata Motors, the auditors felt this is fundamental to users' understanding, very important. So what auditors did, how this matter was addressed, We performed the following audit. First, they verified test of controls. Remember, in audit procedure, you have test of controls and test of details, compliance procedure and substantive. That's what. First, they did compliance procedure. They evaluated, we evaluated the design and tested operating effectiveness of control over assets and liabilities of the PV. First of all, passenger vehicle related assets are what? Liabilities are what? How organization has a control over that? How organization identified exactly passenger vehicle, assets and liabilities. First, auditor checked the controls, records and all. Then, they evaluated the design and test the operating effectiveness of the key control for amounts to be disclosed in discontinuing operation. Now, passenger vehicle business is discontinued in one company and added to another company. In this company, it's a discontinuing operation, no. So, they saw that. Then, what test of details they did? Actual substantive procedure. We read the minutes of the meeting of board of directors and saw the NCLT order. And they verified completeness and accuracy. Controls are maintained, no. They saw the accuracy of the records. They looked at the accounting treatment. They verified the disclosures made in the financial statements. They analyzed accounting treatment and proper disclosures are there or not. And they have seen the company's assessment on tax impact, all that. That's it. So now what are they saying here? Actually tell me. Left side what they said. During the year what happened they told. Some passenger vehicle business is there. That business is removed from one company and added to another company. And how they recognized in the books of accounts regarding the transfer of undertaking, slump sale, nothing but. Yes or no? And accounting. What right side what he is saying? First left side he said about the situation. Significant transaction happened. During the year this is a significant, not transaction, event. This is an important event happened in the year. Right side what he is saying, auditor, how he verified he is saying. How he conducted the audit. Nothing but in key audit matter what auditor is telling exactly. What according to him important audit matter. How he audited. Correct? How he audited. You see right side what he is saying. Test of details what he did. Test of controls what he did. Left side what he is saying. He is explaining the story about what happened. He felt it is important issue in audit. And right side he is telling how he verified the issue. Nothing but in key audit matter we are talking about an audit process, right? Nothing but in key audit matter what are we talking about? Audit process. What audit procedure exactly we did? We will theoretically say compliance procedure I did, substantive procedure I did. But practically he is showing an example like this or not to the shareholders. Tell me, is this information useful for shareholder? Logically speaking, no. Common sense, no. How does this treatment? See, he only told that so and so thing he felt important. How he verified he is telling me. How far this information is useful for me to take an investment decision? Getting the point? I don't know, sometimes I feel hypocrisy. Getting it? Like they just use just to prove the superiority of disclosure, superiority of the thought process. That's why it came. It is not at all useful for shareholders, anybody, especially from finance angle. This is not useful. By reading this, I understand now. Okay, this is how auditor evaluated this point. After looking at this, I will get much more doubts. How purchases auditor did, how sales audit. If at all he didn't speak anything, I'll be happy. I'll see financials, everything super. Suddenly you are coming and showing me, hey, see this amount? This I audited like this. Then I'll immediately, that's how you audited. Correct? If at all they didn't speak anything, happy, no? Able to understand. All of you. Then why auditors commented this if it is not useful to shareholders? Because it is mandatory for listed entities. For all listed entities it is mandatory. Getting it? They will ask you, write about applicability of key audit matter. Are you getting it? International standards on auditing 701 came. And SCA 701 we adopted. And ICI standard says it is applicable for all listed entities. So auditors of every listed entity will give at least one matter. At least Tata Motors find that auditor is little practical. He took some important transaction happened during the year and explained that. Reliance auditors are too much. They spoke some 8 or 9 issues. They spoke about some 8 or 9 issues in key audit matter. And you see, Apple auditors, you see. This is United States, Apple Incorporation. Okay, this is the annual report of the Apple company. So this is the financial statements. This is the report of independent registered public accounting firm. We use heading what? Here they are using what? Independent registered public accounting firm. And they are also given opinion, basis for opinion like us only, US also. Critical audit matter. Exactly. And now here also you see critical audit matter means what? The critical audit matter communicated below is a matter arising in current period, which was communicated to audit committee. Audit committee means what? Those charged with governance. Yes or no? By the way, are we providing any separate opinion on these matters? No. We are not providing separate opinion on critical audit matter. Correct? Huh? Now, description of the matter. What is that matter they mentioned? How we addressed in our audit. They are also showing their skill set. But the problem is people don't understand that. You are exhibiting. Yes or no? You are exhibiting your skill set. You are talking in fluently, very much fluently in Manganese something, some language. The problem is I don't understand that. Hearing it. Next. So EY is the auditor for them. And same way, there are many companies. There is a company called Shell. This is United Kingdom. This is UK framework. And there is another company called Volkswagen, which is German. I mean Europe. They follow European framework. These companies will follow, UK frameworks. In many countries, this audit subject is something common. Auditing is universally a same subject. You see here, our opinion. They clearly said our unmodified opinion. What we have audited, they have given a big list. So somewhat neatly presented than Indian companies. Basis for opinion. Independence. Conclusions related to going concern. Overview of audit approach. What they did in audit. How they fixed materiality. And scope of audit they clearly mentioned. Then key audit matters. Here also they mentioned. So what is the matter? How they responded. How auditor responded to that. Our assessment of key audit matter. You see the definition is more or less similar to India. Key audit matters are addressed in the context of audit. Key audit matters, second para you see, key audit matters are addressed in the context of financial statements as a whole, and we do not provide separate opinion on these matters. Correct? What are key audit matters? They are those matters in professional judgment were of most significant in audit of financial statements of the current period. You see the definition in our book? Key audit, the matters which in auditor judgment are most significant in the audit of financial statements of the current period. These are selected from matters communicated with the audit committee. That's what they wrote in Apple. Here they wrote in, they are charged with governance. Yes or no? Now, what is the purpose of key audit matter? Purpose enna? To show off how we do audit. Yes or no? Tell me, can I discuss about entire my audit process in key audit matter? What I did, what I exactly did in 50 days audit. In the year you can discuss, but audit report will go 500 pages. The purpose of communicating key audit matter is to provide greater transparency, enhancing the communicative value of the audit report. Audit report value is increasing. Audit report is not a boring document about opinion. It is containing emphasis. It is containing it is containing key audit matter. Able to understand? Key audit matter provides additional information to users of financials, understanding the entity and areas of important judgments used. Where and all in this company important matters are. What are the important transactions in the company? What are the important events? What are the areas of significant judgments? What are the areas of significant risk? These are the areas where key audit matter. You see selection of key audit matter. What are the criterias? Areas of higher risk, significant judgment, significant event or transaction. Tata Motors have selected significant event or transaction, sale of passenger vehicle division to another company. Yes or no? Now, Reliance company has used some judgment, significant judgment involved. Company, last time, they changed useful life from 30 years to 50 years. Significant management judgment, no, which involves accounting estimate. So Reliance auditor chosen because of this point, that item. And another company has chosen revenue recognition, which is containing risk of errors. Able to understand? How you select key audit matter? Will you select key audit when you feel something is important? When there is a significant risk, or when there is a significant judgment, or when there is a significant transaction. That is what the factors determining key audit matter. Are you clear? Circumstances when key audit matter shall not be not required. This is not there in the ICA book for you. Actually, it is there in the standard, not there in the book, main book, not required. Now, when you are prohibited to discuss key audit matter, when you give disclaimer of opinion. What is meant by disclaimer? You didn't do audit. Audit pannale. Venanga mukyamana audit matter varum. The audit itself is not conducted. How can you get important audit matter? Understood my point? Now tell me, is communicating key audit matter a substitute for disclosure in financials? No, obviously. Key audit matter is just to show the skill set of the auditor. And key audit matter is not a substitute for modified opinion. Is it a separate opinion? Or is it a substitute for going concern material uncertainty? Emphasis of matter para. Is it a substitute for modified opinion? Is it a substitute for disclosure in financials? Is it a substitute for disclosure in accordance with SA 570 where material uncertainty related to going concern exists? Understood the sentences now? If you plainly read without understanding, you read 10 times, you will not understand. Now you see, you can easily connect with it. Yes or no? You see how easily I'm, reproducing the big definitions. Not because I remember, because I understand. Are you clear? In going concern also, this sentence, if auditor identifies events or conditions or circumstances that cast a significant doubt on entity's ability to continue as a going concern. How did I identify? How did I understand? How did I remember this? If auditor identifies any event or condition or situation or symptom or indicator that cast, means that gives a significant doubt in my mind about organization ability to continue successfully, means going concern. Simple. That's how it was framed. You understand the sentences like this with concept, all that understanding. So the moment I see if auditor identified event, condition, indicators that gives doubt on going concern ability, able to understand. So like that you need to think every time. Are you all clear? Key audit matters means what? They are the matters which are most significant for the auditor in the audit of current period. Why do I discuss about last year? And these matters, did I address in audit? Yes. Am I giving separate opinion? Or is it a substitute for modified opinion? So you see how it is framing everything logically. Understood? With this, key audit matter is also done. Clear? All of you. Next. So the next part is, now coming back to the audit report once again. See, look, I am only covering hardly 40 to 50% of the total chapter. Concepts I am covering everything. But each concept has so many sub-concepts that I am not covering fully. You see main material, you will find so many other different ways of questions. Getting it? Now, material uncertainty related to going concern is covered. Key audit matter is also covered. Next. Now, what is the pending one? Report on other legal and regulatory requirements, which is also called as other reporting requirements. Now, what is this? So, report on other legal and regulatory requirements. Report on legal and regulatory requirements. We don't have legal requirement at CA Inter. Sorry, regulatory we don't have. But legal requirement is there. Legal means what? Requirement under law. So Companies Act we have three requirements. 143 subsection 1, 143 subsection 3, 143 subsection 11. 143 subsection 3, 9 plus 6, totally 15 matters auditor shall report. Checklist we call it as, affirmations we call it as, auditor shall report on 15 matters. Auditor shall inquire on 6 matters, 6 inquiries. 143.3, central government has passed an order, CARO 2020, where auditor has to talk about 21 clauses. Clause numbers, oral drilling, that is not correct. Getting it? You need to understand what is inside the clause, which is what tested in exam. What is the reporting requirement for undisputed statutory dues as per CARO 3 marks? What will you answer? Understood how the questions were asked? If a company has raised funds using IPO, what are the reporting requirements as per CARO 2020 regarding the same? This is how the questions will be asked. What is the audit reporting requirement in case of NBFCs under CARO 2020? And if a company has raised working capital loans, what is the audit reporting requirement under CARO 2020? This is how the questions will come. All these questions appear like not existing in the syllabus, right? Now you see they are in the syllabus, they are in the CARO itself. Okay. Now, these matters we don't have in the syllabus. 143.1, 6 inquiries, I say study material is not containing on them, so not required. So what are these 15 matters? What are these 21 clauses? We need to discuss. Now, CARO applicability. To whom CARO is applicable? All the companies, including foreign companies. However, banking companies, insurance companies, section 8 companies, one-person companies, small company, straight away, CARO do not apply. The auditors of these companies, when they are giving audit report, they will come to report on legal and regulatory requirement. Where are right? There they will not talk about CARO. They will talk about remaining, anything else. But they will not talk about CARO. You see Tata Motors, are they talking about CARO or not? We'll see. Report on legal and regulatory requirement. You see here, report on other legal and regulatory requirement. As required by CARO 2020, we are giving annexure. So they are talking, no? And the report on legal and other regulatory requirement, CARO is given. Yes or no? Now I'll ask this, my another favorite question. If any of your friends says I'm super in audit, ask him first, did he listen my class or not? If not, ask him where CARO will come. In the audit report, what is CARO? First ask him, he'll give super definition. Then ask him what is it CARO? He only says 21 clauses are there. You want cheat code for 21 clauses, how to remember? I don't want all that. Where CARO will come in audit report? Ask this. Even where you did articles, no? Some CS will be there in the form. Ask them where CARO will come exactly. They might have prepared many number of audit reports, right? I can say even CS who qualified, more than 90% they don't understand. More than 90% they don't understand this. Getting it? So you need to understand, just because we qualify doesn't mean we are knowledgeable. We will qualify with all short notes as running for flowcharts and all. If you read 10 times hard work, you'll qualify. But you will not understand if this kind of questions were asked. Big Four, no, they'll ask these kind of questions. Big Four and all, they'll ask all these kinds of questions. Getting it? So you ask them, you tell them, CARO will come under report on legal and regulatory. In audit report, there are so many parts. Inside that, there is a part like this. Inside that, it will come. Getting it? How many of you did articles? Oh, many. Have you went to any company audits? Have you saw audit reports? Or you prepared audit reports? Have you ever observed all this? What they do in audit report, last year audit report copy paste. Years they will change. What they do in audit report, no? Last year audit report, they will copy and paste it. Years they will change, company name they will change. The below people who will sign, their name will be changed. That's it. And audit report, they will look at last. They don't even think about this. They don't even think about it. You need to understand audit reporting. Only if you understand audit reporting well, you can do statutory audit much better. First you must know why are you doing audit, no? What people do in reality, they'll go to audit, no? What they'll do, first? Yeah. So what they'll do is, they'll first go to client office. Directly take books, documents, start verifying. They don't even understand what to verify. Because this is what I did. Getting it? Nobody was there to explain me how to do audit. First of all, my partner also don't know. He only know half. Getting it? That's how it is. They tell me in CPT or in foundation when you are studying, you might have thought something. Hey, this chapter for exam I'll leave, but after exams I'll study this for knowledge's sake. Have you felt like that or not? Some of you, yes or no? How many of you felt this? At least I should read such an interesting topic. I must read after exams. And none of you touched it back. Correct? Same way, CA final students also. It's okay, we'll leave now. After exams, we will read and become a good chartered accountant. And that's how these people came who are practicing right now. Getting it? You go and ask any of the partner, whoever is, you take any big firms, you ask them what exactly all this, they can't tell you. Because they never studied. Do they have exams like you? So obviously they don't study. And why are you attending this class? Because next month you're having exam. If at all you don't have a class, hey, knowledge kudukuranga sir, pola manga. Varivingla? Illa. Are you getting it? Because you're having exam, you're coming and attending. So whose responsibility it is to impart that kind of knowledge? Mine. But the problem is, the person sitting here, many of them are not having knowledge. Because they also studied in the same way. Yes or no? Whatever I study, I only give you that. So we need to relearn everything. Getting it? We need to relearn everything. You may ask me now, then how come you learned all this? Because I have to teach, no. And I can't learn the way I learned earlier. So I have to make it. So why audit is theory? Why audit is boring? I just started looking at the subject. For me, basically I have this problem. If I read anything, if I don't understand, I'll Google it and then identify and search it and then find out. That thought process helped me to learn the subject much more deeper way. So that's the only reason why I have good command on audit. See, I'm able to show UK reports, US reports, Europe reports. Across world, I have seen some 7 or 8 frameworks related reports, reporting requirements. So that is the reason. That's how the understanding, that helps. If at all I didn't do that kind of analysis, obviously it will never come. That skill set will never come. There are many who are much experienced than me in the field, in audit. Getting it? The only reason within past 1 month I got 4.5 lakh views is only reason is in the past 1 year. The only reason is the content quality. So if the content is very strong, if you understand, understanding means this. Even now I am trying to, still I'm having some 5% clarity missing on few topics. Still I'm discussing, still I'm discovering. Getting it? So that is a kind of learning. Of course in exam that is not required, but I must give you the idea about how to learn. That's my responsibility. Correct? Just read 10 times and go and write exam. That is not what I should teach you. Getting it? Auditing is like this only dry subject. Enna dry? Ipo varakum na sollitiya dry engadu. Monday dry na auditing dry da irukum. Correct? The brain dry irundadna and subject dry da irukum. Ungalukku kediyadu solla ungalukku. Like whoever is teaching basically. Next. That after we uploaded the previous marathon, like whatever first time, after we saw how the market responded, like how everyone was responded, okay, then I understood, okay, so there is a lot of dry market dry people in the market, due to which people are still following the old methods, and if at all we give something new, something really understandable, this is how they appreciate. We worked on all 8 subjects of CA Inter like this. We worked on all CA Inter 8 subjects like this, and we created some model, all that. That's how it went very successful, our institute, whatever. We do spend 0 on marketing. We have no admin office. We have nothing. Getting it? Still we are able to, yearly we have 2,500 students online. We don't take live, we only take recorded version. The only reason is because of the kind of content we cover. We don't have animation videos. We don't use PPT presentations. Like how I am opening the material and teaching you. Exactly that. People think PPT will make class interesting. No. It's a person sitting who can make interesting the class. It's a content that we are speaking that makes interesting. Till now, have you felt bored? But in this entire subject, 20%, 15-20% syllabus will be there where you will feel little bored. Because I myself also don't understand them. Honestly, I'm admitting here. It's not I don't understand. It's difficult to make you understand that. because you will not have that exposure to visualize. Sometimes you can't express it, the visualization. Sometimes no, only when you see that I can make it, link with your mind. Most of you have never seen big internal audits, operational audits, but that related discussion is also there in our book. But okay, it occupies hardly 15% space, but 85% of this subject I'm telling you, I can make you visualize. Getting it? Next. And mostly what I feel is company audit is not at all a benchmark chapter. That's an easy chapter. That's nothing. Company audit chapter is nothing. It's very easy. Anybody can teach well. Audit report, standards, sampling. Getting it? These are the topics which are highly courageous. Documentation, risk assessment. Getting it? These topics. Mostly audit report, because this nobody understands. So, fine. Next. So CARO is applicable for all these. Sir, CARO is applicable for all companies except all these companies. Understood? Now, CARO is not applicable for private limited companies also. But 4 conditions have to be satisfied. Correct? For a private limited company, CARO do not apply. If they satisfy 4 conditions, all the four must be satisfied. The company shall not be a subsidiary or holding of a public company. The private company shall not be a holding company or subsidiary company of a public company. Just we will open that. You see, the company shall not being a subsidiary or holding company of a public company. The total paid up capital and reserves and surplus shall not exceed 1 crore on balance sheet date. And borrowings from banks and FIs shall not exceed 1 crore at any point of time during the year. And total turnover shall not exceed 10 crore, including turnover calculated from discontinuing operations. Total turnover, including discontinued business turnover, total it shall not exceed 10. All this is satisfied. Remember, loans at any point of time. Whereas here it is balance sheet date. These can be tested by senior citizen paper setters. If it is me, I will not test on this kind of stupid items. Getting it? Example, here it is 1 crore, no. I will ask, 1 crore exactly. I will put 1 crore and ask you a question, and you will definitely make some small mistake. And then I will identify, and you will say, hey, sir, ரொம்ப intelligent. இந்த மாதிரில கிடையாது intelligence. Getting it? This is nowhere related to that. And these kinds of questions can be asked only by senior citizen paper setters. If at all the paper setter is a senior citizen, if there is no age criteria, age criteria should be 35, paper setter. But anga start agade 30. Getting it? Like, you can set the paper only after 5 years of qualifying. Only then you are eligible to become a paper setter. Some criteria were there. Okay. Now, what do you mean by paid up capital? What do you mean by reserves and surplus? What do you mean by borrowings? And what is turnover and additional points? Remember, small company, what is a small company? Small company is also a private limited company, you know that. Small company is a status. If a company whose capital do not exceed 2 crore, now it is 2 crore, and turnover do not exceed 20 crore, then it is called as a, suppose mine is a private company, I have 15 crore turnover, I have 1.5 crore capital. Am I small company or private limited company failed to satisfy the condition and CARO applicable? If I am having small company status, then private limited company limits I will not check. If I take small company status, I need not check private company 1 crore criteria, 10 crore criteria and all. Able to understand. Small company, 2021 limits revised. Corresponding limits not revised in CARO. Able to understand. Because you see, when we do mistake, if I tell you, hey, that point is mistake, you will rectify that only. Relating to that, where and all there are points, will you rectify them? This is what happens in government also. The Ministry of Finance, they would have received a recommendation from small and medium enterprises. Sir, up to 20 crores is also small business only today, considering the inflation, all that. Please make small company status limit up to 20 crore. They requested. The person sitting in the ministry, he is not studying CA inter auditing subject. First of all, understand. He is not studying company law subject. Immediately when I say small company means, do you think he will get all our CARO point is there? That is it. We only don't remember first point. Why do he will remember? So what he will do? He will put a proposal. Sir, small company limits we will change. And they will change it. They will forget the fact that there is something called CARO. Private limited company is there. Private limited company CARO limits are something different. They are more than small company. Once upon a time, small company means what, 50 lakhs like that. Turnover is very low. Actually, originally it was some 10 lakhs something. Originally, small company status. So that time, small company is different, private company criteria is different. Able to understand. In 2016, I am talking. But later, last private company, no. Until there also you need to check. Small company criteria, many of the private companies will satisfy. So, they are exempted under small company category, CARO. If a private limited company do not claim small company status, then they will have to check with the 4 conditions. Understood? Now, CARO applicability. CARO is applicable for a company means it is applicable for branches also, right? Obviously. If separately a branch auditor is performing the audit, he shall also give CARO report, right, as part of his audit report. Correct? Now, should I give CARO in the audit report which is given on consolidated financials? No. If I am giving audit report on consolidated financial statements, CARO report will not apply. Only 21st clause of the CARO report will apply on consolidated financials. In audit report, you see Tata Motors consolidated audit report, you will find only 21st clause related reporting requirement. Actually, CARO report will not apply on consolidated financials. Only 21st clause will apply for audit report given on consolidated financials. Understood or not? To this much extent, I don't think in exam they will be testing it. So that's about the applicability of CARO. So the next one we'll discuss, we'll continue after a few minutes break. Getting it? So clauses we need to start. The clauses and checklist, once we discuss that over this chapter. And I will show you what are all the references that you need to look into. What are the books that you need to look into on this chapter. Okay. So let's continue. So what auditor has to report? In the CARO, what are the points that auditor has to comment? So if you check here, so these are the points which auditor has to comment in CARO. So these clauses shall be reported as part of auditor's report as referred under SAS 700. Under which paragraph? Reporting on other legal and regulatory requirements. There, these points will appear. Now, what are the points that auditor has to check? Only important points we will discuss. Getting it? Now, first, auditor has to talk about fixed assets. The first thing which auditor has to report is about fixed assets. Inside fixed assets, there are 5 reporting requirements totally. A, B, C, D. There are 5 reporting requirements which auditor has to discuss. First one which auditor has to discuss is regarding fixed asset register. The side headings which I am giving is like I made it just for easy reference. Getting it? In the original CARO order or in the ICA book, there are no side headings like this. Now what auditor has to check regarding the register? Whether the company is maintaining proper records, showing full particulars like quantity details, location, situation of fixed assets, including intangible and PPE both. So what is this called as fixed asset register? See, every organization, they will have so many tables, so many chairs, so many air conditioner systems, yes or no, printers, and they have conference rooms, conference tables. Imagine a big IT company. They'll have security cameras. Yes or no, they'll have various security systems. They'll have server rooms. They'll have electrical fittings, generators. Yes or no, fire extinguishers. Imagine a company, how many assets they have. Should they have a control on that or not? How do the company will have a control on the assets? They will record it. What they'll do? They will record first. Whenever they buy an asset, whenever they buy something, they first record it in a register. Purchased so and so asset on so and so date. date of purchase, from whom, supplier, date of installation, amount paid, GST, depreciable amount, depreciation, written down value. Like this, they will maintain a register. Installation place. Building number 5, floor number 4, right side. They need to put installation details also. This is an internal control. Now tell me, maintaining this kind of record, is it alone sufficient? Company has to check physically whether the asset is there or not. Yes or no? So, physical verification also auditor has to check. Able to understand? So first please auditor, check, is this company which you are doing audit? Okay, I understand. You gave opinion on the balance sheet P&L showing everything is true and fair, fine. Is this company properly taking care of the assets? Is the question of the shareholders. The company has invested money in so many assets. Now my worry is this company properly taking care of these assets? First tell me, do they have a control on the assets register? And are they physically verified by management at reasonable interval? Is these fixed assets verified by management at reasonable interval? What is reasonable interval? It depends upon the nature and size of the organization and the controls implemented by them. Nature and size of the organization, controls implemented by them. You imagine Reliance Digital, Chroma, any store like this, electronic appliances, Bajaj Electronics or whatever, Pi Electronics, any electronic shop you imagine. Just imagine Sharvana stores. Can you bring anything from inside the store to outside without billing? How highly the controls are? Yes or no? Okay, forget about stores. Can you bring any fixed asset of the Sharvana store from inside to outside, any chair? Can you bring outside? The controls are so rigid. Yes or no? The controls are so rigid. Security guards were there, CCTV cameras were there, employees are monitoring. Yes or no? The controls are very high. Now, the fixed assets of these kinds of companies, big companies, where they're having completely campus surrounding by electrical fencing, security setup, CCTV surveillance. When this kind of structure is there in the campus, it is highly difficult for anybody to bring outside any asset of the company. Correct? The controls are so strong. So tell me, in such a kind of company, do we need to regularly verify physically? Is asset there or not? Chair there or not? Computer there or not? Should we check physically? Impossible. Whenever employee is entering inside, he is screened. Whenever he is going outside also, screening is done. So obviously there is no possibility that assets will move out without authorization, without management approval. Now, in these kinds of companies, assets can be verified physically once in 3 years, once in 5 years. Getting it? Tata Motors is verifying fixed assets once in 3 years. But understand, physical verification is not that easy. It is not that easy what you think. You need to take up a paper, go to the building, go to each floor, record how many tables were there, record how many chairs were there. In this room, if I give you a paper, what are all the assets were identified except walls? If I ask you to make a list of it, you will take at least half an hour. Only in this room where there are no assets. Yes or no? This podium 1, this chair is there, below some CPU is there, there is some speaker, there is some amplifier, there is another speaker, there are projector screens, there are 2 projectors. Yes or no? And there are chairs, there are 3 air conditioners, there is some controlling unit, power controlling unit. It takes at least 15 minutes for writing down and listing it. Yes or no? Imagine a company spread in 130 acres, having big buildings, having so many chairs, working approximately 20,000 employees. This classroom having 100-150 capacity itself is having these many assets. Imagine a company where work atmosphere is created, workstations, tables, phones, dedicated phones. Think about laboratories, inside that all the equipment. How many assets were there? Physical verification is not easy. Getting the point? So, in Tata Motors, every day whenever you go, in one of the campus in Tata Motor, in one of the campus in Tata Consultancy Services, every day physical verification will happen. Every day, somewhere it will happen. But by the time once I verify one fixed asset, again I will come back to that asset and verify when? After 3 years. In the manner, within 3 years, remaining assets are being verified. Are you getting it? So auditor has to check whether these fixed assets are physically verified by management at reasonable interval. Suppose if they are identifying discrepancies, material discrepancies. Discrepancy means shortage or excess. Are they properly dealt in the books of accounts? That is what the auditor has to check. Now I will ask management, what is the physical verification you did? Internal auditors gave a report. They found some shortage and excess. How they were dealt in the books of accounts, I saw the treatment and all. Everything appears fine. Then I will give here positive comment. Are you getting the point? Next, whether the title of immovable properties, are they held in the name of the company? In the balance sheet, fixed assets, land and building, you are showing so much. Where is the title deed? Ask. See in whose name the title deed was. It is in the name of the company or not? Or if it is in the name of board of directors, why the property is not registered in company name, but why on board of directors name? Description of the property, gross carrying value, in whose name it is held, why it is not held in the name of the company. Auditor has to give this information. You are saying financials are true and fair, but you need to verify all these points and report to all the users. Next, revaluation. Auditor has to check. What auditor has to check? Whether the company has revalued its PPE and intangible, nothing but whether the company has revalued its fixed assets. If so, who has done the revaluation? Is it performed by a registered valuer? Is it performed by a registered valuer? And suppose if the revaluation effect is 10% or more in the net carrying value of each class of property, plant and equipment and intangible, net carrying value of each class of PPE, net carrying value of each class of PPE. What is the percentage of change in case of revaluation? If it is 10% or more, how much amount has been changed? You should mention. Example, suppose in balance sheet of a company, getting it? This is current year figure. This is current year figure. Fixed assets, you check it out. They have something called plant and machinery, one class. Furniture, another class. Electrical fittings, motor vehicles. Now plant and machinery, if you check, inside that they are having some 10,000 crore. You open the breakup. Notes to accounts is having the breakup. Getting it? This plant and machinery original was 15,000 crore. 15,000 crore. Now, minus depreciation in the during the year 2,000 crore. Minus revaluation effect is 3,000 crore. Like that, it came approximately to 10,000 crore. What is the figure before revaluation? 12,000 crore. Only these two. Ignore revaluation. Without revaluation, what is the change? What is the value? Net carrying value 12. What is the change in the net carrying value because of revaluation? 20%. Now is it more than 10%? Now auditor has to mention in CARO what? How much amount to change? 2,000 crore. Downward revaluation. Auditor has to mention. When this amount has to be mentioned? If the percentage of change in net carrying value because of revaluation is 10% or more. Leon, like this a question can come in exam. Getting it? Don't think it will not come. Last time in CA final it was asked in working capital. Sir, the final, sir, adunale. No. Sometimes CA inter paper was much tougher than final. Most of these topics are there in final, you know. CARO is there in final. All the topics that we are discussing till date is there in final. In fact, compared to final, you are being tested much more difficult questions. Sometimes same topic. Getting it? All of you. Next. Now, suppose on this company, if any Benami Property Act related proceedings are they started against the company or pending against the company, auditor has to give. Auditor has to check whether company has disclosed them in the financial statements. Whenever Benami Transactions Act, getting it? Benami law. Under that particular law, if any proceeding is pending on the company or any proceeding is started during the year on the company, did the company disclosed honestly in the balance sheet P&L notes? Check it out. If yes, say that it is disclosed. Suppose there are no cases against the company at all, say that they are not available. Are you clear? Now you see how auditor has to report in CARO. So auditor has to report on legal and regulatory requirements, yes or no? You see what auditor has reported. What auditor has reported below. Annexure 1. What auditors of Tata are saying? The company maintained proper records showing particulars, quantitative details, situation. The company maintained proper records for intangibles. The physical verification of these PP are verified in a phased manner over a period of 3 years. And according to the having regard to the size of the company, the verification is reasonable. No material discrepancies were noticed. Means auditors are giving everything positive comment. Now here, the title deeds of immovable properties are disclosed in the name of the company. They were in the name of the company. The company has not revalued. Accordingly, that clause is not applicable. Now the company has no proceedings under Binami Property Transactions Act. Everywhere auditor gave which comment? Positive. Understood or not? Next, inventory. 2 points auditor has to check. Whether physical verification of inventory, whether the physical verification of inventory is conducted by management at reasonable interval. If any discrepancy is there for each class of inventory more than 10%, 10% or more difference in physical verification noticed, how they have been dealt in the books. If excess inventory is noticed on physical verification, they will record. If shortage is noticed, they will eliminate from the books of accounts after taking some approval, all that. See whether it is done or not. Suppose working capital loan has been obtained by the company by showing stock statement, debtors statement. By showing current assets, company got loan. Hypothecation of current assets, company got working capital loan. Suppose if the company has sanctioned working capital loan in excess of 5 crore rupee, then this point is applicable. If the company is sanctioned with working capital limit of more than 5 crore, this point is applicable. Now, what auditor has to check? Whether during any point of time the company has been sanctioned with working capital limit in excess of 5 crore in aggregate from banks on the basis of security of current assets. If so, actually one point is missing here. If so, I will open the direct, I think here it is missing. So, there is another point inside this, refer main material. Getting it? Refer main material, that is important thing. That is an important thing. What's the page? Yeah. Just I'll reopen this file. The second part is most important part. Actually, the second part is most important part. You see here, whether company has availed any working capital loan in excess of 5 crores. If so, the quarterly returns, quarterly statements filed by the company with the banks and financial institutions, are they matching with the books of accounts of the company? If not, give details. This is most important point. If the company has sanctioned with more than 5 crore working capital limit by hypothecation of current assets as a security, auditor has to check whether quarterly statements filed with the banks are they agreement with books of accounts. See, in banks, no. You will be sanctioned with 5 crore, okay. But how much you can withdraw, it depends upon drawing power. It depends upon drawing power. Drawing power is fixed based on the value of the security given by you. What is the value of the stock and value of the current assets? You give me quarterly statements, no? Based on that, I will give you drawing power. What some companies do, as per books of accounts, current assets are 100 crore only. But when they are giving statement to the bank, they will say current assets are 130 crore. When they are giving statement to the bank, what they'll do? The current assets are 130 crore. Is it a material misstatement in the financial statement? How come? Bank statement, whatever statement I'm giving to bank, I'm giving mistake. Stock statement I sent it to bank, there it contains mistake. How come it is a mistake in financials? In my books value correct only. But the statement which I am filing with the bank, there is a mistake. Now these kinds of frauds people are doing. Getting it and getting higher loan, and at the end when they default, when the bank is going and selling the fixed current assets, no, because they have lien, they have security, they are realizing that current assets are very less. All these days companies manipulating by giving false statements. That statements are certified by CS also. Getting the point? So to curb that kind of practice, this CARO point has been implemented. So the stat auditor has to check what statements company is submitting to bank, what is actually as per the books of accounts. Auditor has to check. Able to understand. Now you see what Tata Motors have reported. So physical verification is done. That is positive comment they have given. You see how many differences they have given. According to the information explanation, the company has been sanctioned with working capital limit in excess of 5 crore. Okay. In our opinion, the quarterly return statements filed by the company with the banks and financial institutions are in agreement with the books of accounts of the company. They are saying positive, except statements for the quarter ended 30th June, 30th September, 31st December filed with all the banks in India were listed. All the banks in India were listed. Except statements filed with these banks for 3 quarters, there is a difference of how much? 689 crore, 490 crore, 758 crore, some 30, some like 38 crore. So like this there is a difference. Okay, here again 44 crore, so much. Now, these statements were subsequently rectified after 31st March and submitted to respective statements. Auditor would have scolded the company, hey, what is this? Okay, management said, that's our business practice. Auditor will say, no, I have to report in CARO. What to do? You only tell. Company would have asked auditor. So you at least now give revised statement saying that past time statements filed was incorrect. Company gave. Now I need to qualify. If you qualify next year, you are not my auditor. Okay, what should I do? I'll put everything under exception. All the banks covered, no? Statements filed with State Bank of India, Bank of America, Citibank, HDFC Bank, ICICI Bank, Standard Chartered Bank, Union Bank, Kotak Mahindra Bank, Bank of Baroda. What else left? With these many banks, all the quarters related statements were containing mistakes, deviations. Should auditor say they are matching or not matching? You should say negative comment, not matching. But auditor said agreement, except everything kept under exception. Is the bike in good condition? Yes, excellent. Only thing, tires is to be replaced. Wheels were broken. Engine is it's noisy. Okay. And light is not working. Signal lights are not at all there. But bike isn't working in good condition. Yes or no? Next. Understood the point or not? Next. Investments, guarantees, security, loans and advances. This point is little lengthy. So what we need to cover is, first of all, the auditor has to check whether the company has given loans, advances, investments, guarantees to any other person. If so, how much aggregate amount given during the year? How much aggregate amount given during the year to subsidiary joint venture associates and to other than subsidiary joint venture and associate? If company has given loans and advances to subsidiary associate joint venture, how much you gave? To others, how much you gave? Same way, what is balance outstanding at balance sheet date? And what is outstanding at balance sheet date? Subsidiary, associate, joint venture, I shortcut called it as related party. Remaining are called as unrelated party only for reference sake, but it is not related party definition. They clearly used the word subsidiary, joint venture, associate. How much loan you gave during the year? And tell me what is outstanding at the end of the year. To other persons, how much you gave during the year? What is outstanding as on 31st March? You see, like what Tata Motors you have replied. You see what Tata Motors have replied? They have given aggregate amount during the year 110 crores given to subsidiaries, associates, joint ventures, and to others how much it is given? 18 crore. What is outstanding as on balance sheet date? Subsidiary, associate, joint venture total outstanding 620 crore, and for with respect to others total outstanding 32 crore, and to suppliers how much is total outstanding? 61 crore. So this is the loans and this is advance in the nature of loan. What is advance in the nature of loan? What is advance in the nature of loan? Sometimes we give advance to supplier. Generally, advance given to supplier will be adjusted against subsequent purchase. But when amount is given to supplier, how come it is treated as nature of loan? It is something a kind of deposit. So it's an advance given to supplier, but it has a nature of loan. Able to understand? It's something kind of security deposit. Who knows? But you gave to supplier, no? It is not treated as deposit. It is treated as loan. Now, next. So, related party, unrelated. Now, what auditor has to check in the next? How the terms and conditions of this loan? How the terms and conditions? Are they prejudicial to the company interest? If they are something affecting the company interest, auditor has to be very careful. Now, auditor has to check whether repayment is made regularly or not. You are giving loan. A company gave loan. Check whether the other parties are repaying the company on time or not. If they are paying on due date, regular. If at all always delay, irregular. Suppose if somebody is liable to pay for more than 90 days overdue, what recovery steps company has taken, auditor has to check. You see, Tata Motors have given that. According to the information explanation given, in our opinion, repayment of principal were regular, except in case of two subsidiaries which are there outside India, 600 crore, interest 140 crore was due for payment in earlier years, means overdue for more than 90 days. They were not collected because they are not recoverable as these subsidiaries are in losses and amounts have been provided for, means what? Provision is created in books of accounts. Now, the company has converted the loans given to subsidiaries into investments. Loan given, no, it is turned into equity capital. And have you understood? You might have done this in internal reconstruction. Creditors will be given shares. Something like that. Next. Now, they are asking one more. The company gives loans, right? Now, they are liable for due, right? Suppose the other party is not repaying regularly. We will call them and ask, why are you not repaying regularly? He said, I am having severe financial difficulty. What we will do? We will reschedule the loan. Okay, fine, I understand your situation. Take 6 months time. After 6 months, you pay me. That's called reschedulement or extension. Getting it? I extended credit period and loan schedule of repayment have been changed completely. Or I have given some fresh loan. Do one thing, take this loan, repay that, and let's start a new agreement on this. I'll give a fresh loan to repay original loan. Specify aggregate amount of such loans which are renewed, which are extended, which are settled by fresh loans. How much of the total loans given by the company were in the form of rescheduling, renewal and fresh loan? What is the percentage of aggregate to the total loans and advances out of total loans given by the company during the year? How much percentage of loans were given for reschedulement, renewal and extension, all that, fresh loans? Auditor has to specify the percentage. In Tata Motors, there is no such thing. Now, another question. Whether company given loans to anybody which is repayable on demand. I gave a loan, then the other party has to pay. Whenever I ask, they have to pay. So auditor has to check, did the company that you are doing audit, did they give any loan to anybody which is repayable on demand, or where without specifying repayment, or you didn't mention repayment time? If so, how much aggregate amount, percentage you give as part of loans? Company during the year gave 100 crore, out of which 3 crores were given on demand loan. 3 crore is demand loan, 3%. And aggregate amount of the loans granted to promoters related parties. How much demand loans you gave to promoters and related parties? Are you clear? Then other loans point is not required. Deposits point is not required. It's very simple. Cost records is very easy. Next, statutory dues. I'm only covering important points. Okay. Statutory dues. Now, statutory dues have been broadly divided into two parts. One is undisputed statutory due. See, in smart notes, no, when I'm taking, I discovered in the previous class, I discovered rotation, one spelling mistake. Now, in this one, working capital second point is missing. I will change it. That's why I'm telling you, after the end of the marathon, I will give entire smart notes. Only when I'm taking revision class, I will check it much more focused. Getting it? The intensity of checking is much more higher than normal checking. Okay, so that's why I will upload after all the corrections. That time you take. So then only we will also finalize for printout. So by this month end, the printout will be available, hard copy. Let's make it month end, not now. Getting it? Let's make it by month end. You can book on this rest application for the material. I will announce through a video all that. Okay, don't be hurry. So that if we check everything properly, no, at least until this we need to check. Remaining parts, it's okay. Part 1 of the main material up to CARO, whatever is there, that only we need to check because this is law. Remaining points are normal. Very rare it will miss. Are you clear? You see the sample of mistakes. In 100 pages, we discovered two mistakes. Okay, next. What else? Where am I? Statutory dues, sorry. So statutory dues. Statutory dues. The statutory dues shall be broadly divided by CARO into two parts. The statutory dues will be divided into two parts. Undisputed statutory dues, disputed statutory dues, disputed statutory dues, undisputed dues, disputed dues. Now, undisputed statutory due. What is disputed statutory due? Suppose, first of all, what is a statutory due? If any amount that I am liable to pay because of the law, any amount I am liable to pay because of the compulsion under law, then that is called as statutory due. Electricity bill, is it a statutory due? Is it a statutory due? Electricity bill? No. It's a good. Electricity is goods. You are purchasing and using the electricity, so you are paying. If I don't take electricity connection, why should I pay? Or if I have electricity connection, I don't use electricity, why should I pay? Is it compulsory under law? It is not tax, income tax, electricity income tax madriya, GST madriya, no, right? It's not something like GST, income tax, provident fund, ESI, profession tax, municipal tax, property tax, correct? It's not something like taxes and duties. Electricity is a goods. You can touch and feel. Yes or no? Getting it? So, it is movable from one place to another place. You can store it. All the characteristics of goods were there. It's a commodity. It is not a statutory due. Now, these statutory dues are broadly divided into two types. Undisputed, disputed. Now, suppose I am doing business and I am paying GST to the government every month. Now, GST department sent a notice to me mentioning that the rate of GST applicable on my product is this much, not whatever that you are paying 5%, but 18% applies on your product, and they calculated entire amount and asking me to pay finally some 15 lakhs. Able to understand? They straight away passed a demand order. Now will I pay? Okay sir, thank you sir, will I pay? No. I will go to higher authority. I will go to appeal authority above them. Whoever passed me order, I will not go to him. I will go to his superior authority. I will file a complaint on him. Getting it? Why should I pay? I will give my explanation. Now will the case settle immediately? Now the due is there, no. Department raised a demand on me. Now there is a due. Is it under dispute or not? Yes. Now that's called disputed due. So auditor has to ask the company where and all the company is having disputed statutory dues. First ask the list. Now give report. What you need to report? Forum where the dispute is pending and how much amount is pending in the dispute. My amount is pending in GST appellate tribunal. GST appellate tribunal. Amount is 15 lakhs. I will also give much more information related to 21-22. And it is due under GST law. You see, Tata Motors auditors have given that information. You see, Income Tax Act, income tax due 2 crore related to these years. 1995. Okay, forum where the dispute is pending, High Court. Getting it? So where the dispute is pending, you see these many disputed dues were there. Central Excise Service Tax, STAT we call it as. Appellate authority at commissioner level. Even under GST also they have. GST appellate tribunal. These many pending dues were there. Auditor has to take this information from company and paste it here. That's it. Will the company win the case or lose the case? No need to tell. Getting it? All of you. So that is the reporting requirement for disputed. So in case if the dues were not deposited because of dispute, auditor shall indicate how much amount forum. But you see Tata Motors is giving much more information to which year it belongs to, under which act it belongs to, everything they are giving no even more clear picture. Next. Now undisputed means what? Every month I am paying tax voluntary, no? Every month Provident Fund I am paying voluntarily, ESI I am paying voluntarily, TDS I am paying, advance tax I am paying, GST every month I am paying voluntarily. Now, is it all, I am paying voluntarily, no? Are they because of any dispute? No, I am paying voluntarily. These are called as voluntary payments. Voluntary is different from free. I am not giving freely to the government. Because I am using government resources, I am paying taxes. Getting it? Voluntary doesn't mean optional. Every month I will only compute how much GST collected from customer. I will pay honestly to the department next month 20th. These kinds of payments are called as undisputed due. Now what auditor has to report? You have to check in the company whether the company regularly depositing undisputed dues. Company has to pay every month voluntarily some taxes and duties. Are they paying voluntarily? On time, regular means what? On time, due date, check it out. If not, extent of arrears outstanding for more than 6 months, which are still existing on the last day of the financial year. As on 31st March, the tax was still outstanding. That was outstanding by then, by before how many months? More than 6 months it is outstanding. Auditor has to give the list of it. Are you getting the point? So this is the undisputed due. So they'll ask a question like this. Write about a reporting requirement under CARO 2020 for the auditor regarding undisputed statutory due, 2 mark. Write about audit reporting requirement for working capital loan under CARO 2020, 2 marks. Like this a 4 marks question will come. Understood? Next. 8th point is not required. Default in repayment of due, you can understand easily. Okay, I'll cover that as well. Default in repayment of dues. Dues means what? For the company it is due, means what? Liability. Company has taken loans from FIs, bank, debenture holder, governments. The company has taken loans. Now what auditor has to check? Is there any default? Is there any default? What is default? EMI I have to pay on 10th. I did not pay. 11th, 12th, 13th, 14th. No. I defaulted. Sir, I paid late. Still default is there? No. Late payment is a default? No. So auditor has to check whether there is any default. If so, suppose if there is a default, for how many days there is a default? How much amount is defaulted? Mention the following format. Name of the borrowing. Okay. Like motor vehicle loan for the company director. Name of the lender. HDFC Limited, amount not paid on due date, 1,50,000 EMI was not paid on so and so dates. Principal or interest are both. EMI, principal, delay in days, some 40 days. Remarks, company paid later and rectified. Able to understand? Auditor has to give a report like this. Next. Is the company which you are auditing, is that company was declared as a willful defaulter by any bank? Check it out. Ask a CIBIL report of the company. They'll generate and give you. See the CIBIL report. Is this company declared as a willful defaulter? Who is a willful defaulter? You're having money, but you're not paying. He is called as willful defaulter. Vijay Mallya, Nirav Modi, all these people were treated as what? Willful defaulter. Suppose bank gave you loan, you invested, you started business, big restaurant chain you opened across India. Almost 15,000 crore invested across India, you opened a big restaurant. Lockdown came. Continuously 5 months. Complete, entire assets was destroyed. Getting it? Completely gone. Now tell me, are you a willful defaulter? Here I didn't pay banks. I defaulted, I became insolvent, I didn't pay. But this caused because of the misfortune. It's not that I intentionally defaulted. So in this case, you are not treated as defaulted. If a person don't pay loan to bank, he is willful defaulter. No. Ungalaketa cash irundittu, still you didn't repay. Then you are treated as what? Willful defaulter. Same way, next auditor has to check. Did company got any loan? Yes. For what purpose they got? Some purpose. Working capital loan, building loan they got. For what purpose they used it? It is used for payment of director remuneration. Getting it? They got a loan for construction of building but used it for director salary payment. Auditor has to report. If not, amount of loan diverted shall be reported. Diversion of amount. Did the company got any short-term loan? Yes, working capital loan. But used it for construction of building. Again danger. It will affect the company default solvency. Same way, did the company take any loan? Yes. This loan is used for what purpose? For subsidiary company needs. For meeting subsidiary company needs. Okay, you have taken loan for meeting subsidiary company needs. Yes. If so, details you have to give. Have you taken any loan? Yes. What security you gave? I have shares in my subsidiary company, no? That shares I kept as security to the bank. And I took a loan and I defaulted. What will happen? Bank will take ownership in the subsidiary company. Yes or no? I have ownership in the company. That ownership I kept as encumbrance and I took a loan and I defaulted. Who will become owner? Bank will become owner. Whether the company has raised any loan on pledge of securities held in subsidiary, associate, joint venture. If so, details you have to give and report. Is there any default in repayment of such loan? If you default in repayment of loan taken on security of shares held in joint venture, associate and subsidiaries, and if you default in that, you will lose that ownership. You will lose that subsidiary relationship. Are you clear? That's it. Then end use of IPO. This is same like old CARO. You can understand, no change. Next, reporting of fraud. Whether any fraud by the company, whether any fraud on the company has been noticed or reported. Check it out. Now, whether any frauds by the company, on the company, by officer or employee, earlier it is there, now it is removed. On the company, even an outsider do a fraud. Company identified the fraud. Please report it. Company committed a fraud. There is a history. Please report it. And all these frauds are identified by whom? Management. The company itself identified. Auditor did not identify. Whether any frauds by the company or on the company has been noticed or reported. If company management noticed and reported, take a list of it and report it. See, Tata Motors have reported. You see, during the course of our audit, no material frauds by the company or on the company have been noticed or reported, except we have been informed about 3 incidents where aggregate 15 crore involving 3 employees in collusion with vendors processed payments without proper documents. The services of these employees are terminated. Auditors gave no nature of fraud, amount involved, mentioned the nature of fraud is what? Purchases, vendor related fraud. Amount involved is what? Aggregate, 15 crore. That's what CARO is asking, no? If so, nature and amount involved. Clear? Next, 143.12. This is regarding if auditor identified, here auditor identifying the fraud. If auditor identifies a fraud newly, which company did not identify, for an amount involving more than 1 crore, he shall inform to central government no within 60 days. ADT 4 form he will file. Whether such form has been filed, you have to mention here. Tata Motors said nothing has been found. Next. Now, company is receiving whistleblower complaints. Whistleblower mechanism will be there in a company. If at all any employee of the company or management of the company came across something suspicious, fraudulent, they will put a complaint to the, directors of the company. Whistleblower complaints, we call it as. Auditor has to check. Tata Motors, did they receive whistleblower complaints? Check it out. Yes, they have received so many. Have they been considered in your audit? Yes, I have considered. That's it. No need to mention what complaint they received. Getting the point? You see what Tata Motors have commented? We have taken into consideration the whistleblower complaints received by the company during the year while determining our audit procedure, while planning our audit, while deciding nature of audit. All the complaints received by the company we considered, and accordingly our risk assessment procedure was impacted. Able to understand? Next. Nidhi company point not required, related party point not required, internal audit system. This point may be required for you. Important. Now they are asking section 138. Some companies should have compulsory internal audit department. Some companies should have compulsory internal audit department. Whether the company is having internal audit system which is proportionate, commensurate with the size and nature of the business. Suppose company is having so many operations, so many transactions, so many. Namesake, one internal auditor is appointed. Is it sufficient? Auditor has to say. Say now, okay, suppose company is having proportionately good number of internal auditors. There is a department itself, super. Now they'll give reports, no? Will you check those reports or not for your audit? I will check internal audit reports so that I will know much more things better. So whether the reports of internal auditors, are these considered by you statutory auditor? Check it out. Are you clear? Non-cash not required, NBFC point also not required for you. That is important at final. Cash losses. Here they are asking whether the company incurred cash loss in the financial year and in the immediately preceding financial year. If so, amount of cash loss. Right now, suppose this is 21-22 audit report. So current year means 21-22. Previous year is 20-21. Now in this year, is there any cash loss? Check it out. Last year also, is there any cash loss? Check it out. Report it here. What is cash loss? Now in P&L, profit after tax, there is a loss. For that, you add back non-cash expenditure which is debited to P&L. What are non-cash expenditures? Provisions, depreciations, all that. Add back, you will arrive cash loss exactly. Suppose after adding back non-cash items, loss is turning into profit. Is there any cash loss for the company? No. Able to understand. Next, they are asking one more question. During the year, did any auditor resign from the company? Sir, if auditor resigned, why will he report, sir? Another auditor came, no. I am the auditor appointed under casual vacancy. I am not the original auditor. I was appointed now temporarily until next AGM conclusion. Previously one auditor is there, he resigned. Have you taken the issues? Why he resigned? Objections, concerns raised by outgoing auditor. Have you considered them? In CA Act, you will get at CA final. There is a clause called clause number 8, part number 1, schedule number 1 of Chartered Accountants Act. Whenever we are accepting an audit, Previously, if somebody else did the audit of the company, we should first get NOC from them. We should get from them NOC. Only then we can accept the audit. So this auditor previously resigned, no? He has communicated with him, previous auditor. Now he raised some issues and objections. How did you dealt with it? They are asking. First of all, is there any resignation? Check it out. If so, then you need to verify this. Are you all clear? Next, material uncertainty. Material uncertainty. Just 2 minutes gap. Next one. CARO is asking you to check, is there any material uncertainty? They are asking you to check, is there any material uncertainty? So, whether you follow SA 570 procedure properly or not, this point you need to check compulsorily. What they are asking you, you know, on the basis of company financial ratios, aging analysis, realization of assets, payment of liabilities, other information, knowledge of directors and management plans. You saw so many things. You interacted with so many. Whether the auditor is of the opinion that, first one they are asking, whether the auditor is of the opinion that no material uncertainty exists as on the date of auditor's report. As on the date of auditor's report. On the date when you are giving audit report, you should check this point. That the company is capable of meeting its liabilities existing at the date of balance sheet. I am signing balance sheet, no? On a particular date I am signing, no? Balance sheet date is 31st March, but I will be signing it on some other date. That date is called as audit report date. On the date on which you are signing the audit report or the balance sheet. As on 31st March balance sheet date, there are some liabilities, right? And you are signing the audit report and balance sheet after 2 months. You have seen 2 months post balance sheet. In the balance sheet, there are so many liabilities. Do you still feel the company will repay all the liabilities on time? Check it out. So auditor has to do cash flow analysis, funds flow analysis here. Auditor has to see, is there a possibility of default by the company to any creditor, debtor, any creditor, supplier, or any other loans or advances taken from bank, yes or no? It is not only talking about past defaults, it is also talking about next defaults, yes or no, which will fall due within 1 year from balance sheet date. As on 31st March, there are so and so loans and advances liabilities. All these due dates were there within next 1 year. Do the company has ability to repay them within next 1 year? Now people are awake. Now the authorities are awake. Now they are asking auditors, hey, okay, past data, everything is true and fair, fine. You first tell me, company has liabilities, no. Next to 12 months, they are falling due, right? Will the company repay? Is there any material uncertainty? You are saying no material uncertainty. Specifically, give here your comment. Tomorrow if company default, first I will come and ask you why company defaulted, how it is defaulted. Suppose in between company did some manipulation and then defaulted, okay. Otherwise, you didn't verify properly earlier. If you did not verify this point properly earlier, you did not apply audit procedure earlier, you are liable for Schedule 2 offense under Ethics, CA Act. Your certificate will be cancelled. 5 lakhs up to penalty will be levied. Able to understand? Next, CSR. Corporate Social Responsibility Fund. Now this is regarding, see in CSR, no, every year you have to spend some 2% of average net profit. Companies, no, especially big companies like Reliance, Tata, you take 2% of net profit will come somewhere to 500, 600, 700 crore. One of the approved project for CSR is rural development. Rural development means what? Laying of roads, water tanks, pipeline connections, drainage, sewerage, all that. Yes or no? Can this happen within single year? So these projects will be taken up by the company, which will range over 1.5 to 3 years. Max 3 years generally. Now the CSR point is saying what? You should spend 2% of the profits within the same year. How come when I am taking rural development project? So CSR rules permitted. If at all there is a project you are undertaking, suppose you are spending CSR money on a project mode and the project duration goes more than 1 year. Whatever money you unspent, right? Within 31st March you have some money, no, which is not yet spent, right? That money, keep it in a separate bank account. Within what time you should keep it in a separate bank account? It shall be transferred to special account. See whether that money has been transferred or not. Auditor, they're asking. Are you getting the point? And still there is some other amount which I thought originally to spend on normal projects within this year. 31st March, I want to spend on normal projects, not more longer projects. I want to spend on all, like midday meals program, education programs like that. I want to spend. I spent as much as possible. Still some 10 crore left unspent. Is it related to ongoing project? No. Now what should I do this? This I should transfer within 6 months to the fund given under Schedule 7. Prime Minister National Relief Fund, CARES Fund. Like that, there are so many funds. So if it is something other than ongoing project, see, the funds have been transferred within 6 months from the end of the financial year as per Schedule 7. Check it out. That's it. Understood or not? If you understand CSR provision, then only you understand this. In CSR, if you understand unspent means what, spent means what, ongoing means what, other than ongoing, I gave you an example, yes or no. If you understand like this, you understand. All of you clear. That's it. Next. Whether there have been any qualification adverse remark by the respective auditors in CARO reports of companies included in consolidated. If yes, indicate details of companies, paragraphs, where and all qualified or adverse remarks were given. I'll show you Tata Motors consolidated financial statements report. Tata Motors consolidated financial statements report. You see, this is consolidated financial statements. And inside this, you see CARO point. Actually, consolidated financials, will CARO come? No. But only 21st clause will apply. Yes or no? You see here. Consolidated financial statements. In our opinion, according to the information explanation, the following companies incorporated in India and are included in consolidated financial statements have adverse remarks, qualifications given by respective auditors. All these companies were consolidated as part of Tata Motors. Now, shareholder want to know, what about remaining companies' CARO point qualifications? In Tata Motors CARO report, auditors have qualified under point 2B, working capital qualification there. And 3C, loans and advances, company, subsidiary company did not pay 600 crore. 6-4, this is 4D, some investments guarantees, that condition like that. Some 6A, this is regarding cost record, something like that. So under these clauses, they have some qualifications. So Tata Motors holding company. So this company financials, these are the paras in their standalone financials related audit report, CARO report, where there are qualifications. And Tata Motors Finance Solution, Tata Motors Finance, these are all subsidiary joint venture associates, under which clauses the respective statutory auditors gave negative remark. We just gave a list. So I am a shareholder. I want to see all the qualifications of all the Tata company related. Which one? Tata company means Tata Motors related companies. I will see this. Okay, I'll directly open that audit report, open that clause to be, I'll see what qualification he made. Understood or not? To best of my knowledge, so 2B will come many places. 2B here is there, 2B here is there. Getting it. 2B is what? Working capital. Many will violate that. That's it. With this, CARO is completed. All of you understood. Main provisions we discussed. You know now how to understand the CARO? Okay. That's it. Then we will have to discuss 143 subsection 1. We have to discuss 143 subsection 3. Sorry. Checklist items. 143 subsection 3 we have to discuss. So in the previous session, we have covered the CARO 2020 main clauses we have covered. Now we need to discuss 143 subsection 3 checklist items. We popularly call them as checklist items, or we also can call them as affirmations. Getting it? Like there are 15 affirmations. There are 15 affirmations which auditor has to report. There are 15 affirmations where auditor has to report. On all this, whether the auditor is having a positive comment or negative comment, both shall be reported. Now, what are the affirmations? First one, they are asking whether he has asked, sought and obtained all the information and explanation which to the best of his knowledge and belief were necessary for the purpose of audit. You are already giving an opinion para. If you look at the audit report once again, in the opinion para we are clearly mentioning, in our opinion, to the best of our knowledge and according to the best of our information and according to the explanation given to us, the aforesaid financial statements are true and fair, or the aforesaid financials are not showing true and fair, something you'll reply. And in basis for opinion paragraph, last sentence, we believe that the evidence obtained by us is sufficient and appropriate to base for the opinion. You clearly mentioned there already. Now there you are mentioning because of a standard requirement. Now company law is asking you, Mr. Auditor, have you asked and got the entire information that is necessary for the purpose of audit? Again later, if something went wrong, don't say that client did not give me this information, he did not give me that information. No, we don't want to listen all that stuff. Once again, I'm asking you an affirmation. Here you are affirming. These are all called as affirmations. Able to understand? Next, whether in your opinion, proper books of accounts as required by law have been kept by the company so far as you appears from your examination of those books and so far as it appears from your examination of those books. So what is that in the B point? First part they're asking, according to you, you saw the company, you went inside the company. We are only seeing balance sheet P&L. We don't have any access inside the company. But you are the auditor. You visited the company. You saw books of accounts. Did the company maintain all the books and records, whatever is mandatory under law, in a proper manner or not? So we are asking auditor regarding books of accounts and proper returns adequate for the purpose of audit has been received from branches not visited by him. The thing which I highlighted in yellow color is a different point. In the same B point, the first part is different, second part is different. Getting it? The first part is asking what? Did the company maintain books of accounts properly? That's it. Second part is asking what? The company has branches and company might be maintaining some branch accounts separately and you didn't visit that branch. You have not visited the branch. Okay, you didn't visit the branch, but records were there at the branch. How did you verify? Have you received the returns? Have you received the summary? See the yellow sentence starting. Proper returns adequate for the purpose of audit have been received from the branches not visited by him, the auditor. Did auditor receive the returns from the branches? Summary statements from the branches at least. You have not visited, fine. At least have you received it and checked it? See, regarding branch accounts and branch audit, we have a topic in company audit. Once I finish this, I'll go there and then finish it up and then we'll proceed to the society's audit chapter. Since the time comes, I'm just telling you, is it compulsory for a company to maintain branch accounts separately? No. Getting it? You take Reliance Industries itself. They have a retail segment, no? They have retail segment. There is a company called Reliance Retail, example. Now what this retail segment is doing, they are doing through Reliance Digital Electronics. Through Reliance Trends, they are selling garments. Through Reliance Jewels, they are selling jewelry. Likewise, they have some retail stores. Now in that store, suppose you go to Reliance Trends, any one store. Do they maintain separate books of accounts? No. They only maintain billing system. Only billing will be done here. When you are going and selecting the cloths and after billing, they just do billing. Accounting will not be maintained there. They only maintain petty cash register. Reliance Trends, they maintain only petty cash register. Like the store will have a manager, right? The manager will be given some cash. And suddenly if a small repair came, no, any air conditioner repair or some water leakage is there, getting it in the store. Now we need to spend money, right, to repair that. Who will spend that money? Manager will spend. Company only has to spend. Now, once water is leaking, company cannot wait, no. Manager cannot wait until company gives the money and then he repair, no. Yes or no? So what companies will do? They'll give some petty cash. That take this 1 lakh rupee or take 5 lakh rupee per month. This is 5 lakh rupee is the maximum expenditure for the store per month. So this within this 5 lakh, whatever repairs, maintenance of like all that you please incur. And whatever you spent, we need proofs, bills. To whom you have given, we need register. Only that register they will maintain. Is it books of accounts? It is just an expenditure summary. That's it. Are you getting the point? But do Reliance Digital maintain, Reliance Trends, do they maintain separate accounts for each office? No. Entire accounting is centralized. When entire accounting is centralized, branch accounts concept itself do not apply. When entire accounts are centralized, branch audit concept also do not apply. What auditor will go and do at branch if accounts are centralized? Are you getting the point? When branch audit will come into picture, first of all, when the branch is maintaining separate accounts. Okay, suppose branch is maintaining separate accounts. Is branch audit compulsory? I mean, should we appoint separate branch auditor compulsorily? Not required. Suppose the company is there, only 3 branches, accounts are maintained separately. Main auditor only decided to audit all the 3 branches also. Now branch audit is not compulsory. It is company choice. It is company choice. You see, ICICI Bank, they are having more than 5,000 branches. They are having more than 5,000 branches across India. But do you know, there is no branch auditor. In ICICI Bank, there is no branch auditor. Whereas State Bank of India is having so many branches, only for 8,000 branches they are doing audit. But they have appointed branch auditor. State Bank of India is maintaining accounts separately in branches. The accounts means not just electronic, not just in the computer accounts. Accounts means what? What do you mean by accounts? Background supporting documents. That is what main important thing. Electronically everything centralized. You can access anywhere. But the background supporting documents will be there. No. Customer took a loan. Loan related documentation, where it will be there? Branch. But for one customer, one big file will be there while giving a loan. Getting the point? Now all the files were centralized. How can they maintain all the 5,000 branches related? Each branch is having in a year 400 customers. 5,000 branches into 400. 20 lakh files will come. 20 lakh files where they will maintain? Centralizedly. So what they do? They'll keep at the branch itself. But private banks, major documentation is completely through online. Major background data. So centralized operations. So they don't have branch auditors. Now here this second part yellow highlight. The second part will apply when the company is having a branch and the branch you have not visited. Now they are asking you, have you received the record at least? Okay, you didn't visit. Have you received it? Without receiving the branch related statement, how can you do audit? That's what the meaning. Understood or not? Third point is asking, suppose. Third point is regarding suppose if the branch is audited by a separate person. If the branch is audited by a person other than company auditor, then they are asking, is the report on the accounts of the branch nothing but branch audit report? Is it sent to main auditor? And how the main auditor dealt with while preparing his report? Mr. Auditor, have you received branch auditor report? Have you considered his observations, qualifications, adverse remarks, all that? He will also give CARO report, branch auditor. Have you looked into all this? See, only main audit report will come to public. Main audit report shall be prepared after considering branch audit's report. So that's what they are asking. Are you clear? Now, you may have a doubt. Sir, how branch auditor's report will be interpreted by main auditor? SCA 600 you don't have in syllabus. It's at final. That is at CA final. SA 600 standard is at CA final. Using the work of other auditor. Are you getting the point? Next. Then they are asking fourth point, whether balance sheet and P&L are in agreement with books of accounts. B point, first part is what asking? Company maintain records properly. This point, what are they asking? Balance sheet, P&L, you are saying no, true and fair. Are they matching with books? Then they are asking one more point, whether financials are prepared as per accounting standards applicable to the company. And have you identified any transaction or have you identified any matter which has any adverse effect on the functioning of the company? During the year, company accepted some project which is actually a loss making. Is it having a negative impact on the company or not? If you find such a kind of adverse transactions, getting it, which you think not good for the company, then you have to give here the list of the transactions. Then, is there any director of the company disqualified from being appointed as a director? Like for auditors, directors also have disqualifications. Here they are asking you, is there any director who is disqualified? Is there any disqualified director? They are asking. Next. H point is again similar to B point. In B point, what are they asking? According to you, did the company maintain proper books of accounts? H point, do you have any adverse remark related to accounts? Maintenance of accounts and other matters, do you have any objection on them? Same point is asked indirectly. Now you may have a doubt, how come, sir? Earlier companies at 1956 has only 6 points like this. While copy pasting, some points were retained and some points were newly added. While adding the new points, they forgot this is indirect speech, that is direct speech. Getting it? Next. Now, I point, whether the company has adequate internal financial controls over financial statements, are they in place, and how are they operating, how effectively they are operating. Auditor has to talk about whether the company has adequate internal financial control with respect to financial statements. This is in corporate language is called as IFCO4. Internal financial controls over financial reporting. Getting it? Now, internal financial control with respect to financial statements, are they in place in the company? Did company formally have internal financial controls? And how are they effectively operating? I'll discuss about this financial controls when I'm discussing, audit documentation chapter. Getting it? Maybe risk assessment, I'll give you a brief idea, probably if required, I'll give you at the time. Getting it? Next. Now, this point do not apply. Auditor has to give his opinion on operating effectiveness of internal financial controls. Not only operating effectiveness. First of all, do the company has adequate controls? Check it out. Suppose company has to employ 100 controls. They employed only 50. The internal financial controls employed by the organization are inadequate. However, the 50 controls are operating effectively. So they are asking you quantum of the controls. First of all, did the company implemented all the controls wherever required? And then implementing the control alone is not enough. Are they operating effectively? That also auditor has to check. Then finally, this IFCO4, this IFC opinion, the auditor need not give in respect of the following companies. For the following companies, IFC reporting do not apply. What are the companies? One person company, small company, private limited company satisfying the following conditions, like turnover shall not exceed 50 crore and borrowing shall not exceed 25. A private company whose turnover do not exceed 50 and whose loans and borrowings do not exceed 25. Only for that private company, this IFC point do not apply. You need not worry about. You see, when borrowings are less than 25 lakhs, 25 crore, it is not a public, so much of public interest is not involved. So IFC do not apply. Understood or not? Next. Further, there is another note point in the book. There is a section called 197. There is a section called 197 actually, directors related section. And the auditor of a company shall make under 197 by virtue of 197 actually in his report under 43 they will say, but actually it is what? 197. Whether remuneration paid by the company to its director, is it in accordance with the provisions of the section? If any director is paid excess remuneration, give such details. This is required only for public companies. Auditor, along with 143 comments, along with 143 means under which section of the audit report this we need to comment? Report on other legal and regulatory requirements. There itself, first point 143.11 CARO, annexure. Second point 143.3 sub-points all these, checklist. Then third point 197 related. Did the company paid remuneration in excess of limits given under the law? Company law has put a limit, how much maximum remuneration you can pay. That point applicable only for public companies, not for private. So auditor has to check, able to understand. This question has been asked as a correct or incorrect question. What they can ask you is like, according to CARO 2020, whether a company has paid remuneration in excess of limit prescribed under law to the directors shall be reported under CARO. Students will write yes. Incorrect. Well, while reporting under section 143, read with 197. You need to write like, read with 197. Getting it, or 197 read with 143, even more better. The auditor has to verify whether the company has paid remuneration to directors in excess of limit specified. If so, auditor has to give the details. Are you clear? This requirement is applicable for public companies. You need to write like this, the answer. Understood or not? Next. Then along with these points, such other matters, okay, whatever is required. In that, this fourth point is relevant. This fourth point is having amendment. This is newly added point. 4, 5, 6. All these three are newly added points. So what is this sixth point says? So what is the sixth point says is, fifth point. 4, 5, 6 on I'll cover ma. Okay. Fourth point has sub-points 3, which is very complicated. Now, fifth point, if you check, whether dividend declared or paid during the year, is it in compliance with 123 of the Companies Act? Whether dividend declared or paid by the company, is it in accordance with 123? So there is a section 123 to 127 talks about dividend provisions. If you want to get an idea on dividend provisions, you can watch my company law marathon, which we recently uploaded in my channel. You can see in that company law marathon, dividend provisions alone were there. You can see the timestamps. I only dealt with the dividend provision explanation. Now, a company which declared dividend shall pay within 30 days. If at all it couldn't pay within 30 days, within next 7 days, they need to transfer to unpaid dividend account. And from there, it has to pay to the shareholder within 7 years. Now, first, once declared dividend is declared, within 5 days, company has to transfer that amount to a separate bank account first. Okay, from where they will have to pay the dividend to all the shareholders. Getting it? Now, when the company is having insufficient profits, they have to comply with regard to maintenance of reserves. They have to comply some conditions relating to maintenance of reserves, maximum rate of dividend, all the provisions. That is what you need to check. Whatever dividend declared by the company, are they satisfying 123 or not? 123 refers many other sections. If 123 is referred, naturally 127, 126, 5, 4 is also referred. Understood or not? Now, here, what are they saying is, with effect from financial year 1st April 2022 onwards, auditor has to check whether the company has used accounting software which has a of recording audit trail facility. Recording audit trial facility and see that it is operated throughout the year for all the transactions recorded in the software, and the audit trail feature has not been tampered, and audit trail has been preserved by the company as per statutory requirement for record retention. What is the requirement for record retention? 8 years, Companies Act. What is the record retention period? 8 years under the Companies Act. So they're asking. Earlier, only big companies used to maintain audit trial facility. So first, what is audit trial? It is nothing but once I enter a transaction, if I later modify the transaction, we will not see that it is modified. Simple logic. In calculator, you are typing some, I gave you some 100 numbers. And I asked you to total them. You saw the total and showed me on the calculator. I want to see how you totaled from the beginning. Checks are there, no? 100 check limits. Yes or no? 100 check is there. Suppose if your calculator do not have the check feature, can I see which number you added first, which number you added next? Can I see that? That feature is called as audit trial. What is that feature? Audit trial. You are showing me the end result. Before you get this end result, what exactly happened in the process? I have to see that. Getting it? That process is also I want. You are showing me this is the final ledger. You are showing me this is the final amount. You are showing me this is the final balance sheet, trial balance. You are showing me this is a purchase entry, finally. But before you pass this entry, what entry you passed? Later you modified amount. Later you modified narration. Later you modified something else. Later you might have rectified the entry. I want to see what are all you did exactly. In the calculator, can you see the checks? Yes or no? Can you modify the check? Can you modify the check? You can't. Only thing how you can modify, only you can clear the entire data. Are you getting it? So the company should have such a kind of check facility. Trial, we call it as check facility or log facility, and that is called audit trial. Getting it? That should be retained for how many years? 8 years. In calculator, the moment you press AC, it will clear. But in company, it should not clear. It should be there for how many years? 8 years. For every transaction which they are passing, what exactly happened? Getting it? Everything shall be recorded. So what is a audit trial? It's a step-by-step sequential record which provides evidence for history of transactions to its source. In Calci also, the total amount, check is providing what? Source. What you inputted. What are all the amounts you entered? So that the final result came. Yes or no? Auditor can trace every step of date of a particular transaction right from ledger to its source with the help of audit trial. I can, with the help of this facility, this software feature, I can trace what happened at first. Later how company has modified. Even full stop you changed. Even if you remove the full stop, it will be recorded as version 2. You see in Facebook or Instagram or somewhere, you posted one. You made a post. Later you edited. Edit history is visible. You know that edit history? I can see edit history. What is your original post? What is your revised post? That is nothing but audit trail. So in the accounting also it should be there. So this will give more security for the auditor. Otherwise what will happen? Some companies, they pass entries originally. Until audit is conducted, they'll make like that. Later they'll modify. As per their own needs. Understood or not? Especially this audit trail feature is most important now, having looked at working capital criteria in CARO. What are the records showing stock amount and how much stock statement showed? If audit trail is there, I can see. Maybe even company is giving stock statement, no? In CARO, auditor will report if there is a difference in books and stock value. Between stock value and the books value, if there is a difference, no auditor shall report in CARO. What companies can do, now onwards. As on stock statement date, company will manipulate books. This is our stock. No, stock is matching with the statement with the bank. Later again, they will modify the books. How do we know that it is modified? If the trial is there, I know version 1 is this much, version 2 is this much, version 3 is this much. Understood? That's audit trial. Next. This is regarding fourth point, 1, 2, 3. What is this point exactly? First look at this incidents, like this example. On this very recently, some fraud happened. ABG Shipping Yard. There is a shipping company called ABG Shipping Yard. Shifting of funds, diversion of funds. These frauds are called as diversion of funds, nothing but. Now, in order to have a look on diversion of funds, these provisions were added for the auditor to check. First, auditor has to do some audit procedure. First, auditor has to do some audit procedure to identify loans given, investments made, guarantees given. Most importantly, loans and advances and investments. Loans, advances and investments made by the company which I am doing audit. Auditor has to identify, did the company which I am doing audit, did that company made loans, investments, advances? We call that company as funding party. We call our company as what? Funding party. This company gave some loan or advances or made investment. Getting it? To an intermediary. Some mediator. This intermediary may be a foreign entity or maybe others. This intermediary may be a foreign entity. They are not using the word foreign company. Now, with this intermediary, they will have a memorandum of understanding. They will have a memorandum of understanding. Memorandum of understanding means what? Conditions. What is MOU? That's nothing but conditions, terms and conditions. This MOU can be written or otherwise, means oral also. We may not have any written evidence. We may not have any written evidence. So our company giving loans, advances or made investment in whom? In intermediary. Made investment in intermediary with an understanding whether it is in writing or otherwise. Provided, by the way, intermediary can be a foreign entity, including a foreign entity. Getting the point? That this intermediary shall again lend or advance or invest or even guarantee. The intermediary shall lend, advance, invest or guarantee to another person, to any other person or any other entity, to any other entity. Now, who is this entity? Who is this entity? Who will decide this entity? Funding party will decide. So, identified by funding party. And this party we call him as, ultimate beneficiary. We call him as what? Ultimate beneficiary. Now, our company want to give loan to ultimate beneficiary, but because of some reasons we couldn't. This is hawala transaction, money laundering transactions. Getting it? What our company did? We gave a loan. We gave an advance. We gave an investment. We made an investment in one intermediary. That intermediary may be a foreign entity. With an understanding that this intermediary shall lend, invest, guarantee or give an advance to any other entity identified by the original company, funding party. Now auditor has to check, is there any this kinds of transactions? Yes, there are so many, hundreds of transactions were there in this company, out of which only 95 were disclosed in financial statements. Only 95 was disclosed in financials. Now tell me regarding what I am concerned about. Remaining 5 transactions, what happened? This auditor has to check. Suppose company said, sir, 100, all the 100 disclosed, sir. 100 transactions we have like this during the year. See, all the 100 disclosed. Then I need to get a declaration. I need to get a declaration from the company that apart from this 100, there is no other transaction. Apart from this 100, there is no other transaction undertaken by the company like this. There are no omissions. Everything is disclosed. Like this, you need to get a declaration. Understood or not? Here you are the auditor for which company? Funding party. That is fourth point, sub-point 1. Fourth point, sub-point 2. What it says? If you are auditor of an intermediary, sub-point 2 is focusing on intermediary. You are doing audit of a company, right? Did the company received any loan? Did the company received any advance? Did the company received any investment? Now, from a foreign entity, from any entity including a foreign entity, with an understanding in writing or otherwise that this company shall again transfer the funds to any other person identified by funding party. Now here you are the auditor for which company? Intermediary. Okay, you received 100 amounts like this where you have to transfer to somebody else. Have you disclosed all the 100 items in the balance sheet? Directors are saying we disclosed everything honestly, see the information, notes. They are disclosing everything. They are not hawala money laundering, legal transactions. Legally they executed, they are showing everything. When do we say hawala? When do we say money laundering? When it is not disclosed. Yes or no? Now I am asking, is there any other item which is not disclosed? Directors are saying, no, everything is disclosed, nothing is omitted. Give me declaration for nothing. Give me declaration that apart from whatever you showed in the financial statements, there are no other transactions executed by this company. Give me a disclosure. Declaration, nothing but representation. That is fourth point, sub-point 2. Fourth point, sub-point 3. What it says? Now, you have got, there are some 100 transactions, everything is disclosed. There are some 100 transactions and everything is disclosed. Correct? You verified in audit, have you found more than 100? Have you found any additional transactions? Have you found any additional transactions? Getting it? Now tell me, if at all you found any additional transactions, the declarations given by the directors, is it right or wrong? That's what the fourth point, third point says. Based on your audit procedures, have you got evidence that the representations received in the first point and second point are not true and fair, not reliable? That is third point. Understood now the points. Have you studied this earlier at all or ignored? Ignored? This is asked in exam, in the recent exam. In CA Inter, I think it is asked. In CA Inter only, I think final or Inter, but somewhere this has been asked. For 4 marks. Are you clear? That's it. Okay. So with this 143 subsection 3 checklist has been completed. What is the reporting requirement here? Auditor has to report whether positive or negative. That's it. All of you clear? Now you see here, first point is regarding funding party, right? Whether management represented to the best of the knowledge and belief other than disclosed in financials, no funds have been, nothing but other than disclosed in financials, there are nothing else. There are no funds, advanced loaned, invested, it may be borrowed fund or my own capital, whatever, by this company too, or in any other person, including foreign entity with an understanding, recording in writing or otherwise, that intermediary directly or indirectly lent, invest to other persons identified by original company, nothing but ultimate beneficiary. Able to understand? Now here it is regarding, we are acting as an auditor of intermediary. Third one, based on your work, have you found anything that above declarations are wrong? Above declarations contain material misstatements. That's it. Clear? All of you? That's it. So with this, 143 subsection 3 is also completed. Next. So with this 143 is completed, then we still have in company audit few more provisions like branch audit, cost audit, and we have rights and duties of an auditor. Then we have 147 penalty, and we have internal audit provisions, nothing but. Getting it? These provisions I have not covered. Branch audit, cost audit I will cover in brief. Remaining you just take care. They're very easy. Okay, so we'll move to company audit again. You see, whatever book that you are following, I don't know. See the quantum of syllabus. See the quantum of syllabus. So much is there. So there are some provisions like rights and duties of the auditor, powers of the auditor. Auditor has right to access to books. They'll ask you a question on write about auditor's power to access to books. 4 marks. You have to write all these points. Okay. The right of access is to all the books and records, whether maintained at head office or branches or anywhere. The right can be exercised any time. That is business hours, working days. And with respect to subsidiary associate company also, you can access if at all you are doing audit of consolidated financials. And remember, books and records includes minutes of board meetings, other records includes all this. And books of accounts definition includes cost records. Even though cost auditor is separately appointed, you still have access to cost records. Moreover, you have to give your opinion on cost records maintenance in CARO. Under the 6th clause of the CARO, you have to talk about whether company is maintaining proper cost records or not. Next, you have right to get information and explanation when you did not understand something in the books. You have right to ask anybody information, explanation. They have to explain. And you have right to receive notices of every general meeting. And you have duty to attend every general meeting. But with prior approval of board, you can skip any general meeting. Right to lien. This actually we don't exercise, but in one of the November 2019 exam, I think somewhere it has been asked. Write about right to lien. If auditor did not receive the fees in respect of the audit performed on the company books of accounts, you can exercise a lien only on those books where you audited. Can you exercise lien on the director's personal records? You can't. Lien must be exercised only on those items where you have worked on, but amount is not received. Getting it? But at the end of the para, what it says is simply, due to condition under 128, it is impracticable for the auditor to exercise lien. And moreover, in reality also, it is not at all useful. Where you will keep all the records? In auditor offices and all will be very smaller. Where you will keep line records? Getting the point? Now, by the way, can auditor exercise lien on working papers of him? Working papers means I am doing work, that is my data. My working is my data. See, now suppose I am writing so much, here. Can I exercise lien on this? This is what I worked, yes or no? On my property, how will I exercise lien? Able to understand. Lien can be exercised on others' property legally. Correct? Then auditor has duty to give an audit report. What is that audit report we have learned? Yes or no? What points that he should cover in audit report is mentioned here. And if auditor gives any qualification remarks, he shall compulsorily mention the reason. 143.4. That's why in basis for qualified opinion, basis for adverse opinion, basis for disclaimer of opinion. Getting it? In all the cases, we are specifically talking about why we took such course of action. Yes or no? And you have duty to sign the audit report. Who should sign? Only the partner of the firm should sign, who is a chartered accountant. And you have duty to comply with auditing standard. And you have duty to attend general meeting. The power is not for board meeting, only for general, AGM, EGM, whatever. The auditor has right to attend general meeting only when the accounts are discussed. Correct or incorrect? Incorrect. It doesn't matter whether accounts are being discussed, audit related stuff is being discussed, doesn't matter. It's a general meeting, shareholders meeting, that's it, I have right. What they are discussing, what is the agenda, irrelevant. Understood. Next. 143 subsection 12. If auditor has reason to believe that an offense of fraud for 1 crore or above is committed in the company by officers or employees. Here, if the third party committed the fraud, is not applicable. On the company, somebody has done fraud. Who is that somebody? Employees of the company, officer of the company. But you see CARO, reporting of frauds. whether the company has, whether the auditor has, whether any frauds on the company or any frauds by the company were noticed or reported during the year. Which frauds? Frauds identified by the company. That fraud may be committed by third party on the company, or company on the third party, or employer officer on the company, or employee officer on the third party. Doesn't matter. But here, fraud committed in the company by officer or employee. Are you getting it? On the company, fraud has been committed by officers. Some officers of the company, used their power and exploited money. You discovered that. Who discovered? You discovered. And the amount involved is more than 1 crore. You have to report to central government. First, within 2 days, inform to board of directors. Ask their explanation within 45 days. And after you got the explanation, forward a report to central government within next 15 days. Sir, I failed to get any reply, sir, from directors. Okay, directly report to central government, mention a point that I told to directors, but directors did not responded. All these points you inform in when? ADT 4. Able to understand. So this point is not required. Next, if the fraud is less than 1 crore, the auditor shall report. Okay, shall report the matter to audit committee or board of directors in other cases. Means, if audit committee is there, first report to audit committee. Otherwise, board of directors. Within 2 days of knowledge. On this one MCQ I saw, which is very funny. If auditor identified a fraud for less than 1 crore, the fraud shall be reported to option A, audit committee, option B, board of directors, option C, A or B, option D, A and B. If I have to say one option is right, remaining should be wrong. Yes or no? The option is there, A and B. I'll report to both. What happens? What will happen if I report to both? Do anybody punishes me? Is there a violation? I report to everybody. What happens? I'll report to audit committee and board. Nothing wrong, right? But since the word or is used, answer is A or B. After looking at this answer, first of all, after looking at this question, I understood he is a super senior citizen who has to sleep on the bed. But coming and setting up the paper by asking this kind of stupid questions. Is there any significance here, or is there any? Suppose no. You went to a hotel. Sir, idli venuma, dosa venuma ketta. Idhula renditlo onnu choose panna mudiyuma? You can choose both, right? There he is asking, you want idli or dosa? Or means, hey, only one only I should choose. Because he used the word or. Can you interpret like that? There are some words or and you should not interpret them. There is no meaning. They are just like, for filling the sentence it will come. There is no significance for the word. Here there is no significance for the word or. Is it about talking about conditions or complaints? No. Understood or not? Now, you need to inform to board nature of fraud, amount involved, parties involved. Directors have to give in their board report what is the nature of fraud, amount, parties, what actions the company has taken. Next. Now this requirement is applicable for cost auditor as well as secretarial auditor. What if there is a non-compliance on this? In case of listed company, penalty up to 5 lakhs. In case of other company, penalty up to 1 lakh. This penalty provision is important. Getting it? 140 subsection 3 resignation time. We discussed one penalty, variable penalty, that one and this one. This is important. Next, audit of branch accounts. I told you when branch accounts will be applicable. First of all, when branch audit concept will come into picture. Okay, my company has branch account separately and I want to appoint a separate branch auditor. Whom I can appoint? First of all, my branch audit, who can do? If possible, my auditor will do, main auditor. He is not interested. I will appoint another CA having COP. Suppose my branch is outside India. That branch audit, no, my company auditor alone will go and do. Or I will appoint another chartered accountant having COP. Or I will appoint another person who is qualified to act as an auditor in accordance with the law of that country. Understood or not? Over. In case of a foreign branch, the audit of that branch can be conducted by either the company auditor or another chartered accountant having COP. Full stop. Correct or incorrect? Incorrect. It can be audited even by any other person holding that auditor qualification as per the law of that country. Understood how a question can come? Now who will appoint branch auditor? Same, shareholders only. Members only will appoint. Getting it? However, shareholders can delegate the power to board of directors. Now what are the reporting requirements? Same reporting requirements like main auditor. He also have to report on 143 checklist items, 143.11 CARO, fraud reporting, everything applies to him. Are you getting it? Now, whenever branch auditor is there, the principal auditor has to perform certain procedures to get information from the branch auditor. The principal auditor will inform other auditor what are all special areas. I will tell him what are all special areas. You focus on this. Okay, especially focus on inter-branch transactions. We should make arrangement for coordination. You WhatsApp me every time whenever you have an issue. I will WhatsApp you. We should make a coordination. Yes or no? And I will also inform other auditor what are all the reporting requirements applicable for the company. He may not have an idea what are all reporting requirements for the company. And I will get a written summary from the branch auditor regarding what are all he did. We may do this, we may not do this. If at all principal auditor still want to know more, he can visit to the branch. He can go and visit the other auditor and branch. Just because branch auditor is appointed, is principal auditor prohibited to visit a branch? He still have right to visit branch, right to audit. He can ignore branch audit report. I will do audit once again. No problem. Are you clear? That's it. Then internal auditor, for which companies it is compulsory, it has been given here. Getting it? Public companies, unlisted public companies, private companies and listed companies. Who can act as an internal auditor? He may be a CA, he may be a cost accountant, practice or not, or any other professional. MBA candidate can be an internal auditor. No specific qualification for internal auditor. It is not compulsory, only CA should act. Further, internal auditor may or may not be. Which means I can recruit one CA permanently and employ him. So he can be my employee as an internal auditor, or I will outsource my internal audit work to a firm of chartered accountants. Anything it can happen. And all this true or false question might come. Are you clear? Now, what is the concept of internal audit? All that you have in risk assessment chapter. You are having in risk assessment chapter. I told if I have time, I'll discuss that. Next, auditor's remuneration. Who will fix the remuneration? The audit remuneration shall be fixed in general meeting by members, or members will fix manner how it shall be fixed. Suppose member said, no sir, we will not fix. Board of directors, you please fix. Then board of directors will fix. But ultimately, who should give this power? Members. Getting it? And remuneration includes what and all? Expenses incurred by auditor in connection with audit and any facility. If auditor is incurring any expenditure, traveling, transport, stay, hoteling, and that amount is reimbursed by company, that expenditure is also treated as part of auditor's remuneration. So, remuneration includes facility given to him. Whatever facility given to him. In income tax, you might have seen non-monetary perquisites. So, whatever perquisites we are giving to auditor, that is also be treated as a remuneration given to auditor. Next, maintenance of cost records. This is regarding cost records and cost audit. What are they saying here? For which companies cost records first of all apply? Trading companies, purely a company which is engaged purely in trading, cost record do not apply. Only for companies engaged in manufacturing or providing services. You are creating something. Now, moreover, which has overall turnover from all the products and services 35 crore or more during the immediately preceding financial year. In the last year, if the company is having 35 crore or more turnover from all the products, aggregate turnover, then only cost records will apply. Then only the company shall maintain cost records. However, if a company is classified as micro enterprise or small enterprise, not medium, only micro and small, which are covered under MSME Act, they are exempted from this cost records. Now, what about cost audit applicability? The companies which are engaged in production or providing services, these companies were divided into two categories. Regulated sector, non-regulated sector. Companies that fall under regulated sectors, companies that fall under non-regulated sector. Okay, so there is a list of companies given which fall under regulated, which fall under non-regulated. So that list we have to see in real life and then accordingly decide. Now, cost audit applicability for companies which fall under regulated sector. What is the applicability criteria? If the total turnover in the last financial year is 50 crore or more and aggregate turnover or from the products and services covered in the sector is 25 crore or more. Example, Reliance Industries you take. It is dealing with garments. It is dealing with petroleum. Garment is non-regulated sector, whereas petroleum is covered by Petroleum and Gas Board, regulated sector. Getting it? Now suppose Reliance is totally having turnover 60 crore, let us assume. 60 crore is the total turnover of the company. But from the product covered in regulated sector, how much from that minimum should be there? 25 crore minimum. Minimum this 25 must be there. Total must be more than 50. Then only we will call it as regulated sector. Cost audit is applicable. Suppose if this limit do not satisfy. If this limit do not satisfy, then check the non-regulated criteria. Overall turnover how much? 100 crore or more? Yes. Plus. Now they are covered in non-regulated sector, no? Companies. The businesses were there, no? Which are covered under non-regulated sector. From that business, how much is the turnover? More than or equal to 35 crore. Overall more than 100 crore. This is more than or equal to 35 crore. From non-regulated, both the conditions satisfied. Then cost audit is compulsory. Simple. Understood the logic or not? All of you. Now, sir, I satisfied either regulated sector criteria or a non-regulated sector criteria. Logically speaking, cost audit apply to me. But I was given exemption. This is important for correct or incorrect question or 3 marks question. I am actually satisfying the limits. My turnover, I am a regulated sector company. Overall turnover 100 crore. Regulated sector turnover 50 crore. More than 50, more than 25. Cost audit is applicable. But I got exemption. I will not appoint cost auditor because my major revenue, minimum 75% of the revenue I am getting in foreign exchange. I am exempted. Or I am operating in special economic zone. I am exempted. Or I am actually an electricity generation company. I'm a company. Yeah, I'm a company where I am doing manufacturing process of only one thing, electricity generation. That too, why am I generating electricity generation? For captive consumption. Example, wherever company has installed solar plants. Every company that has installed solar panels above their offices, all of them are manufacturing electricity, indirectly. Now, do they come under regulated, non-regulated, all the discussion? Suppose mine is an IT company, information technology company. I have installed complete, glass building. That glass is completely solar glasses. It's completely solar. Every year approximately I will generate, my company turnover is more than 100 crore. My company turnover is more than 100 crore. 500 crore I have, 1000 crore I have. And I am generating through the glasses electricity worth of more than 25 crore. More than 35 crore, some amount. Now, can you call me manufacturer and then put me cost audit, all that? No. I am generating this for my personal consumption, not for commercial sale. Are you getting it? So, for these companies also it is exempted. Now, who can be appointed as a cost auditor? Only a cost accountant who is in practice, provided that person is not appointed as a company auditor for conducting audit of financials. Suppose my firm is there. I have 6 chartered accountant partners, 4 cost accountant partners. We are majority CS, no? For one company, we are stat auditors. Same company shall not appoint us as a cost auditor. Qualifications, disqualification, rights, everything is similar to stat auditor. Who will appoint cost auditor? Board of directors. If audit committee is there, board will appoint after taking recommendations of audit committee. Time limit for appointment within 180 days from the commencement of financial year. Once you appointed, inform to central government within 30 days. What is the tenure of the cost auditor? End of the year within 180 days. From the end of the year, closure of the year, 180 days, or till he submits cost audit report, whichever is earlier. Whichever is earlier you can interpret. Are you clear? Sir, we appointed cost auditor, sir, casual vacancy raised. Same reasons like company auditor. Casual vacancy. Board of directors will fill within 30 days and will inform to the central government in CRA 2. Removal. The cost auditor may be removed before expiry of term through board resolution after giving opportunity of being heard. Now, cost auditor will submit cost auditor report to board of directors. Board of directors shall submit that report to central government. And government, no, they may call for additional information if at all necessary. Cost auditor also have duty to report on fraud. Easy. Clear? Next. This point, special notice point, all that we have covered. Penalty for non-compliance under section 147. Under section 147 of the Companies Act. So what is the penalty in the hands of the company? Minimum fine, not less than 25, but which may extend to 5 lakhs. If at all company contravened with all these 139 to 146. Example, company has to take recommendation. Board of directors have to take recommendation of audit committee, but they didn't take. They didn't take at all. Suppose if they take recommendation, later argued and completed and okay. So board of directors did not consider audit committee itself. Getting the point? It's a violation. How much penalty? Minimum 25, maximum 5 lakhs in the hands of the company. Whoever officer, because of him this contravention happened, he is liable for minimum 10,000 penalty, which may extend to 1 lakh, or he may even liable for 1 year imprisonment, or both. Suppose if auditor contravened with 139, getting it? You have to give declarations, free consent and all. You didn't do that proper declarations. Okay, you are not liable for appointment under rotation. Still you accepted appointment. You are providing one prohibited services. You are not signing. Your staff member is signing the audit report. Violation. Getting 143. Your rights and duties you are not fulfilling. Then if it is unintentional, 25,000 minimum, but which may extend to 5 lakhs or 4 times the remuneration, whichever is less. Suppose you intentionally did. You contravened with intentionally in order to defraud shareholder, defraud creditors, defraud tax authorities. Minimum fine 50,000, maximum 25 lakhs or 8 times the remuneration, whichever is less. Maximum remuneration is 25 lakhs. Yes or no? Now, if at all you proved under subsection 2, where auditor has any convicted under subsection 2, he shall be liable to pay, refund the remuneration, pay damages for the statutory bodies, authorities, creditors for the loss arising out of misleading information. You have to pay damages to third parties as well. Now you see here, if it is intentional, imprisonment up to 1 year might come, and the word is end. Compulsory imprisonment. Compulsory, if you intentionally contravened, compulsory imprisonment. Now imprisonment, is it for only the partner who involved or every partner of the firm? Criminal liability, only concerned partner. Criminal liability means what? Imprisonment. Civil liability means what? Payment of fine. With respect to civil liability, in audit of a company, getting it, the civil liability will be generally partner or partners jointly and severally. General provision. Civil and criminal liability is joint and several. General. Specifically they clarified, if it is in case of an audit firm, criminal liability shall only be exercised with the concerned partner who acted in fraudulent manner. Are you getting the point? That's it. This is 147 provision. Are you all clear? With this company audit reporting is also completely discussed. Easy. That's it. So the next one is regarding audit of cooperative societies. See, the cooperative societies are multiple types. There are multiple cooperative societies. The law governing the cooperative societies is, there are 2 laws. There are 2 laws and regulations. There is a third law, Cooperative Societies Act 1912, which is actually called as Central Act. Central Act in this chapter. There is another law, Multi-State Cooperative Societies Act 2002. If a society is operating from more than one state, 2 or more than 2 states, then Multi-State Cooperative Societies Act is applicable. Now this is also actually called as Central Act, because this is also an act governed by central government. So you can also call this as Central Act. But in the Cooperative Societies Act, in this Cooperative Societies chapter, Central Act generally means what? Original Cooperative Societies Act 1912. Apart from this, we have state cooperative society laws in various state governments. If a society is established in one state, if that state government has a society law, then naturally that society is governed by the state society law. Tamil Nadu Cooperative Societies Act is there. AP Cooperative Societies Act is there. Maharashtra Cooperative Societies Act is there. So West Bengal Societies Law. So almost in many states, state level laws were there. So they will govern all the societies that were established in that particular state. Suppose if the society is operating in more than one state, respective state law you may have to comply, plus multi-state society law will also have to be complied. Now, if a society is operating in more than one state, which law will prevail? It is clarified in multi-state societies law. So they have given some guidelines on that, not there in our syllabus. Getting it? Now, what is the level of expectation from the student on this chapter? Low level of clarity. You need not have absolute clarity because we are not discussing entire society law. We are only discussing society law related to audit provisions. We are not discussing about operations of the cooperative society. We are not discussing about managing of the cooperative society, bylaws of the society. We are not discussing about all that. We are only discussing what elements? Audit elements in the society. Only audit related element, if you understand, that's enough. Are you clear? So, the level of knowledge expected from you on societies is only restricted to audit. That's it. Now you see. So what is a cooperative society? First of all, it's an independent autonomous association. It's independent, united voluntarily to meet common economic, social, cultural needs and aspirationals through a jointly owned enterprise. Getting it? Now, the law that is applicable is Central Cooperative Societies Act 1912. So cooperative society is nothing but a business entity where we pulling together all means of production cooperatively, elimination of middlemen and exploitation from outside forces. People form as a union and then work. And they register under society's law. Getting it? For every member's mutual benefit, for everyone's benefit, the society will be formed. Now they'll ask you a question on this. Cooperative society definition they'll give. So it's nothing but a mutual organization where resources are pooled together, like that they'll give you. And audit of societies is very important. Apart from audit, what other services the chartered accountants can render to societies? What other services a chartered accountant can render to cooperative societies? 4 marks question was asked earlier on this. So what services you can give him? You can do writing accounts. You can install softwares, accounting softwares and systems. You can do internal audit. You can do management accounting services. You can do taxation. You can do due diligence. There are many other services which you can do, but you need to write these points compulsorily. So a chartered accountant plays significant role in development of society's organization. Apart from audit, there are some professional services which can be rendered. They are as below. A slight 3 marks or 4 marks question might come. Understood or not? Next. Now, how to do audit of cooperative societies? Now we are discussing audit of cooperative societies as per original Act 1912. We are also discussing audit of cooperative societies under multi-state law. Which means in this chapter, you will find appointment procedure 2 times. Rights and duties of auditors 2 times. Able to understand? Apart from this, you will also find some provision called special audit, inquiry, inspection. That's it. This is the syllabus in this chapter. Nothing else. Getting it? Now, who will do the audit of cooperative society? Who will appoint? Registrar of the cooperative society. Like ROC is there in company, here also ROC there. But here it is registrar of cooperative societies. He shall audit. He will only audit, or he will cause by some person authorized by him in writing in this behalf for every society once at least in every year. Either the registrar can directly audit or the registrar will appoint somebody else to do audit. Getting it? What in audit? Auditor will mainly focus on overdue dates, valuation of assets and liabilities. What are the special aspects to be covered in societies? We have a separate question. There we will discuss. Understood or not? Next. Now, the registrar, the collector. Collector means district collectors will be there, no IAS officers. They will be appointed as generally registrars. For registrars of, who are the registrars of cooperative societies? Generally the collectors. Getting it? Or any person authorized. Tell at all time access to books, access to every officer who will furnish information in regarding transactions and workings of the society. So these are the powers of the registrar, nothing but powers of registrar of cooperative society. What are the powers of registrar of cooperative society? They may ask you a 3 marks question. The registrar, the collector or any other person authorized by his general or special order in writing have right to inspect books, papers, securities, cash, whatever. Or has the right to ask every officer to give that information regarding transactions and working of the society and may inspect in whatever the way he want. So registrar means what? Whoever is appointed to perform the duties of registrar of cooperative society. In many states, collectors were appointed. District level, regulatory mechanism is there. District level regulation is there. So wherever district level cooperative societies, they will be managed by collectors. Next, what is the form of audit report? The audit report format in prescribed form specified by registrar, or he will give the rules. What should be the format of audit report? If nothing is there, we follow SA 700 format. Getting it? So on completion of audit, the auditor has to submit the report to society, and copies also shall be forwarded to respective authorities like state, special auditor, deputy registrar, district level deputy registrar, like that. What matters he will mention in the report? You see, all these matters, all these matters we have similar to 143.3 checklist. Whether he has obtained all information, explanation necessary, whether the accounts give information required by the act, whether balance sheet P&L is giving true and fair view, yes or no, whether balance sheet, are they showing true state of affairs, proper books of accounts have been properly maintained, whether balance sheet P&L are in agreement with the books and returns. Same points, Same points we have seen in company audit. Audit reporting 143.3. Yes or no? Same, exactly same points. There the word is company, here the word is society. And if at all any point you are talking negatively, you need to give reasons, So the auditor has to give observations if any answer is negative. Now this is important. In addition to audit report and contents inside that, you have to give 4 schedules. You have to give mainly 4 schedules. You have to give 4 schedules to the audit report. What schedule number 1? If you find any transaction which is contrary to the provisions of the act, rules and bylaws of the society. When you're doing audit, you discover some transaction, unauthorized transaction. It is not in the power of the managing person of the society. The managing person withdrawn money for personal use. That is unauthorized. It is against bylaws. Able to understand? Or if society has entered into any transaction that is against act, provisions, please list out all the transactions you identified in schedule 1. Able to understand? Second, all sums which ought to have been but not have been brought into accounts of the society. Nothing but omission of receipts. Nothing but omission of receipts or sales or incomes. Actually, there are some transactions which have to be entered in books but not entered. You discovered the omissions. You should give them in schedule 2. Any material, any property belonging to the society which is actually bad and doubtful. Some asset of the society appears doubtful. Give list of all doubtful properties and materials, assets in schedule 3. And material irregularity, impropriety in expenditure. Companies incurring expenditure without rules and regulations. Companies incurring expenditure without taking proper care. 100 rupees items they are buying for 200. Unreasonable prices. Able to understand? That is called what? Impropriety. Propriety means reasonable. Impropriety means unreasonable. Or when money is due to the society, company is not collecting properly. All irregular, impropriety in expenditure, in realization, money is due to the society. If you find impropriety, irregularity in this given Schedule 4, any other matter specified in Schedule 5. So these are the schedules which auditor has to attach to audit report on the cooperative society while presenting the report to the central registrar. Are you clear? Now, note, if you don't have any of the above points, you will give nil report. Clear? How many of you, honestly tell me, studied this chapter? This is a very simple chapter. You can easily score 5 marks. You should not read this chapter at last. You should read along with audit report. Because most of the points are similar to audit report and company audit. People don't understand. If you understand company audit and audit report, this chapter do not require explanation at all. You just give a plain readings conceptually, clearly if you understand, that's enough. Then, auditor has to fill audit memos. Auditor has to fill audit memos. And regarding what is audit memo, you refer later. Getting it? So, in addition to the audit certificate in prescribed form, various schedules, whatever we have discussed above, the auditor has to fill 2 sets of questionnaires. First set of questionnaire, he will fill this is applicable for all types of transactions, getting at all types of societies. So this is about general information about the society he has to give. The second set is applicable for specific type of society. What questions will be there inside that registrar will decide. Registrar will give you a questionnaire. You did audit, no? Now answer me all these questions. So the questionnaire will have 2 sets. Set A, first set and second set. First set is applicable generally for everyone. Every auditor has to fill that. Second set, depending upon your which society auditor. Are you society auditor of credit society, milk cooperative society, consumer society? Which auditor? Depending upon that second set you have to answer. And auditor will give audit report in narrative format. So the auditor report in a narrative format is submitted by auditor, will be addressed to the society chairman. Generally, narrative audit report is divided into 2 parts. Part 1 of the audit report, part 1 of the narrative audit report. They may ask you a question straight away on this. Write about narrative audit report of cooperative society. Part 1. It will give you information on financial position, capital structure, solvency position, profitability, and comments on the working of the society. And it must be suitably divided into paragraphs. Mistakes having an impact on the profitability of society shall also be mentioned in the part 1. Whereas part 2, if you have any observations on transactions, getting it, which are finished products of routine, vouch, post-audit, missing vouchers, loan bonds, inadequacy of documentation, like general points we will discuss. First point, you talk about the society position, capital structure, solvency position, financial position, and how the society is working as a whole. Generally you will talk. Second point, you will talk some, in records were not maintained for inventory, some purchase invoices are missing, some bills authorization was missing, all clerical issues and all you will talk in part 2 of the audit report. This itself they can ask you as a question. Write about narrative audit report in case of cooperative societies. Then we have multi-state cooperative society. This is important, even more important. In this entire society law, this is even more important. Multi-state cooperative society is even more important. What it says? The Multi-State Cooperative Societies Act, getting it? This applies to every society whose objects are not confined to one state. Their objective is spread over multiple states, not one state. So this act contains detailed provision regarding registration, how to become a member in that society, management, like Companies Act, no. It contains how to form the company, who can enter as a member, how to manage the company. Everything is there in Companies Act. Multi-State Cooperative Societies Act is very big, has around 100 sections. The funds of multi-state society cannot be used for any political purpose. They'll give you a true or false question on this. A multi-state cooperative society has given a donation which is 2% of the average net profit. What is your answer? It is not 2, it is 3%. No, you should write incorrect. A multi-state cooperative society is prohibited to give any donation to political party. And Multi-State Societies Act, no, it contains conditions regarding investments, restrictions on loans, borrowings, similar to company law. Next, every society shall maintain books of accounts for all sums of money received and expended, for all sale and purchase of goods, all assets and liabilities, particulars related to material, labor, items of cost in case the society engaged in production, manufacturing, all that. This is exactly books of accounts definition under Companies Act. Same definition, books of accounts definition. Next, auditors. Who can do the audit of a multi-state cooperative society? General cooperative society, who can do auditor? Normal as per Central Act. Registrar himself will do, or any other person authorized by him. Whereas multi-state society, only a chartered accountant who is having practice within the meaning of CA Act means who, only the person having COP, who are not eligible to become auditor of a multi-state society. Body corporate disqualified, officer and employee disqualified, member of the society is disqualified, who is in employment of an officer or employee is also disqualified. Actually, here there are two disqualifications. A person who is in employment of an officer or employee, he is also disqualified. A person who is a member is disqualified. Or a person who is indebted to the society, has given guarantee, provided any security on behalf of the third person exceeding 1,000. Exceeding 1,000, actually it's a continuation. I split it as ABC. Whether it is indebtedness, whether it is guarantee, whether it is surety, whatever, if it is exceeding 1,000 rupees, you are disqualified to become auditor of the society. Suppose after you are appointed, you are disqualified, then you are subsequently disqualified, no? You shall immediately vacate the office. That's it. So that is regarding qualification, disqualification. Now, what is the appointment procedure for multi-state cooperative societies? How to appoint first auditor? How to appoint subsequent auditor? Similar to Companies Act, yes or no? The authority, the board of directors of multi-state cooperative society within 1 month from the date of registration shall appoint. If board of directors fails, then society, multi-state society will conduct general meeting, no? There the members will appoint the first auditor. What is the time limit? They have not given. Next, until when first auditor appointment is valid? Till the conclusion of first AGM. Multi-state cooperative society, the law is similar to company law. Subsequent auditor. Members of multi-state society at each AGM, they will appoint subsequent auditor. His appointment is valid till the conclusion of, similar to company law. Now, previously they have asked this question. What is the procedure for appointment of auditors for multi-state cooperative society? The first auditor by board of directors within 1 month. If they fail to do so, then the members will appoint at the general meeting. His appointment is valid up to conclusion of first AGM. Subsequent auditor shall be appointed only by members at AGM. His appointment is valid up to conclusion of next AGM. Casual vacancy shall be filled by board of directors. That point is not given, but who will fill that? Board of directors. Understood or not? What are the powers of auditors of cooperative society? Right to inspect to books, documents. Right to get information, explanation from officers and employees. Same rights, no company law. This itself can be given as 2 marks question. Understood or not? What are the duties? He has duty to make inquiry. We have inquiries, no, under Companies Act, 6 inquiries we have. So he has duty to inquire. Suppose if the society gave loans and advances by taking security, secured loans they gave. Now what you have to check? Are they properly secured? And what are the terms of the loan? Are they given? Are they prejudicial to the society? Are they unfavorable to the society? Auditor has to check out. Now whether transactions which are merely book entries, not prejudicial to the society. Book entries means depreciation provision, book adjustments. If any entries were passed only in the books of accounts, there is no proof for the invoice, nothing like that. No invoice, no proof, nothing. Are they reasonable transactions or not? You have to check out. Whether board of directors of the society incurred any personal expenditure, but charged to society profit and loss account, society revenue account. Auditor has to comment. Society, they have issued shares for cash. During the year, society issued shares for cash. Shares allotted for cash consideration. Now you need to check, is the cash actually received? If not, if no cash is received, position stated in the accounts is correct, regular and not misleading. Suppose if cash is not received, amount called up, but the other party have not paid up, shareholder did not pay, call scenarios, company showed properly or not, you have to check out. That's it. Now auditor shall give duty to give audit report. This is similar to duty to give report under Companies Act 143 subsection 2. Getting it? The auditor shall make a report to the members on the accounts given examined by him on every balance sheet and P&L. He should comment about true and fair view of state of affairs, profit or loss. Understood? Duty to state some matters. This is like checklist again. First 143 subsection 3. At the beginning of this session, we discussed 4 items. First 4 points. First point, have you got information explanation? According to you, proper books of accounts maintained. Have you received the summary from branches not visited by you? Have you received the branch audit report? Whether balance sheet P&L are tallying with the books of accounts, same 4 points copy pasted. But there it is company, here it is society. Suppose if any of the answer to the above is negative, auditor should mention reason. Understood or not? Now, next. This special audit has been asked as a question. They asked about applicability of special audit. Some 3 marks or 4 marks question they asked in past examination, in the previous exams. Now, this multi-state cooperative society is normally every year subjected to audit. Every year, some auditor will be appointed who is a chartered accountant. In addition to this, government may order special audit. The government may order for special audit. So what is the criteria? The government may order for special audit. When a government can pass an order for special audit in a society, first condition is in that if the government is holding minimum 51% paid up capital, getting it? Either the central government or state government or both together. If the ownership of the government is minimum 51% in the society, then only they can think about special audit. Understood or not? Now, okay, government is having ownership, nothing but that society is now which society? Government owned multi-state cooperative society. It's a public sector multi-state cooperative society. Then government when will order special audit? If these 3 circumstances prevail. What? Affairs of the society are not managed as per the principles, practices. Prudently, they are not doing the business. The society is doing very aggressively unethical practices. Getting it? Or society is managed in a manner which is causing serious injury, serious damage to the interest of the trade. They are taking anti-competitive practices. They are against anti-competitive law. Or the financial position of the society is, the financial position is endangering its solvency. The society's solvency is very badly affected. Government want to know why, what happened exactly. Then the government can order special audit. First of all, if it is not owned by government will not worry. But since the society is owned by government, if these circumstances prevail, then the government will order for special audit. They'll ask you a correct or incorrect question. The government can order for special audit in case of any cooperative society where the society affairs are managed in such a way that is bringing bringing injury or damage to the interest of the trade industry. Incorrect. A society, government can order for a special audit only if the paid up capital of not less than 51% is held by central government or state government or both, and society is being managed in such a way it is bringing injury or damage to the society. Are you clear? Now, what is the procedure for conducting special audit? First, special auditor must be appointed. Special auditor can be some other chartered accountant, or why to appoint another CA? Already society has a CA who is independent person. I will ask him, take these parameters, check the society once again as per these parameters. I will give him the clue how to do the special audit. I will give him the work. So the special audit, the government may direct special audit and shall be conducted and appoint either a CA separately or multi-state society auditor himself to conduct a special audit. Powers, same powers, whatever powers were there to normal auditor, same power special auditor also there. Now after doing the audit, special auditor will make a report to central government. And all the matters given under 73, 4 points were there here, checklist points. Every matter is covered in the special audit report. Now finally, after taking the report, government will take an action. Suppose government there is no action is taken within 4 months. Government within 4 months, if nothing is taken, which means society is completely fine, working fine. Government will just send the report to society for getting comments of the society. Okay, and the multi-state society will circulate the reports to members in the next general meeting. Now, special audit expenditure who will bear? Government to decide and society will pay. Suppose if the society do not pay, it is recovered as land revenue arrear by the collector. How land revenue arrears are recovered by collectors? If you are not paying revenue properly, property tax, they will seize your home. So like that, collector has power to recover the revenue related to auditor's remuneration. Understood or not? Now, there is some inquiry inspection that is not required now. Now, special features of society. Like what are the special points while doing audit of society we must consider? The most important element in society is overdue debts. What is a overdue debt? Especially this is important for credit societies. Credit societies means what? They will give loans to their members. Now, overdue means what? Member we have given loan, but it is more than crossed due date. Now, auditor has to check overdue debts for a period more than 6 months to 5 years. Overdue debt for more than 5 years, see that they are classified properly and the same shall be reported by auditor. And see, compare with previous year. Previous year, how much is the overdue debt and current year, what is the overdue debt to the ratio of working capital. Last year, overdue debt totally how much divided by working capital how much. This year, overdue debt how much divided by working capital how much. Look at the ratio analysis. Is there any improvement or or any deflation, like like non-performance? Next, see the recovery chances. Accordingly, we need to make a provision for doubtful debts. So auditor has to check these 4 points related to overdue debts. They'll ask you a question, 3 marks question. Write about audit of overdue debts in case of cooperative society or multi-state cooperative society. Anyway, they can ask 3 marks. Understood or not? Now, what is overdue interest? You might have seen in bank, once an asset becomes NPA, interest on that NPA which is accruing shall not be recognized on accrual basis, but shall be recognized only on cash basis. Yes or no? Now, NPA interest here it is called as what? Overdue interest. Suppose a debt become overdue. On that interest will be accruing, so society following accrual system. Don't recognize that interest because principal itself is not coming. Okay, so overdue interest is an interest accrued or arising in the accounts where the principal is. What is accounting treatment? It should be excluded from interest income. Means don't treat it as income. That overdue interest shall be credited to overdue reserve account. We will credit that interest to what? Reserve. Whatever interest that we need to receive, we will credit to reserve and will be transferred to P&L whenever realized. In banks, whenever interest is overdue, on NPA interest, we will not recognize in P&L, but we will recognize it in memorandum account. And once it is received, it will then be transferred to P&L. Next, classification of bad debts. Certification of bad debts. In some societies, getting it? Auditor has to certify. Auditor has to approve. Only then society can treat it as bad debt. Now, if there is no auditor requirement, if there is no such kind of auditor condition, then managing committee will write off as bad debt. Auditor has to check who has authorized the bad debt. Then valuation of assets, all these are very normal. They are common for everybody. Then auditor has to give a special report to registrar. They may ask you a 3 marks or 4 marks question. Write about special report to registrar by auditor of a cooperative society. If auditor identified irregularities like personal profiteering by members of managing committee, society directors know they are getting some profits out of the activities of the society. Personally, they are minting money from the society resources, or frauds you identified, or mismanagement of the society, you need to make a special report to registrar. Everyone understood or not? And in credit societies, no, auditor has to check members' passbook regarding the loan given to members. It is something like external confirmation. Especially members' passbook and all you must do in case of rural societies. Because in rural area, members are not educated. They will take loan and lifetime they will be paying interest. They don't understand. Able to understand. That's it. Now after auditor do the audit, no, after auditor completes the audit, auditor has to give a classification to the society. Rating. This is something like rating. How the rating? Society overall, maintenance of accounts records, overall rating from auditor point of view. The judgment is based on criteria given by registrar. If society is not satisfied, no, about the audit class, it can make an appeal to registrar. Then registrar may review audit classification. So auditor should be very careful while making decision about audit class of the society. That's it. So now for a normal society, who can act as an auditor? The society, the registrar himself can act, or any other person. Any other person means whom? He is the person holding government diploma in cooperative accounts, or he is a person who served as an auditor in cooperative department of government. They can act as an auditor, or they may appoint chartered accountant happily. Understood or not? The appointment of auditor is made by whom? Registrar. And the auditor so appointed shall submit the report to whom? Registrar. Audit fees is paid by the society as per the fee prescribed by registrar. Now, books of accounts, all that, getting it same. Books of accounts, record society. Society, what books and all they need to maintain? They need to maintain all the books of accounts that fall under the definition. Can society maintain additional books? Can the society maintain additional books for their convenience? Yes, no. What problem? Society is at liberty to maintain additional records. Ultimately, transactions and results must be presented clearly. Able to understand. Now, in case of large societies, different books and registers shall be maintained. Daily summary totals, loan dispersal register, loan repayment register. Likewise, they will maintain many records. Understood or not? Then restrictions on shareholding, all this give a single reading. With this, society of audit is completed. We only not covered 2 aspects. Inquiry, inspection by registrar. Restrictions on share capital, restrictions on charitable purpose donations. These are all we have not covered. Hardly 2 topics we have not covered. They are not that important. But remember, sometimes it may come in exam. Getting it? So give a reading. First of all, I gave you a brief idea about entire society's audit. So it is exactly similar to company audit and auditor's report. Understood all of you? That's it. So we have completed almost fundamentals, nature, objective and scope, company audit, audit report and society's audit. All this together will occupy a minimum weightage of 30 to 40 marks. 30, minimum is 30 from entire this topic to maximum 40. Getting it? Now we still have to discuss various other chapters. In that, the next one is audit documentation and evidence. In this chapter, we are actually discussing 230, 500 and 330. These 3 standards related content we are actually going to discuss. Getting it? Now first of all, how we do an audit? How we will do an audit? If you look at how we will do an audit is like, you see, we will have an audit plan like this. We will have an audit plan like this. Getting it? This is an example which I drafted in my regular class. Getting it? First we will plan. We will draw the audit plan. First what we do, first we will do risk assessment process. First we will do risk assessment process. Like how auditor will do audit in real life is, once a client appointed me. What is the steps in audit, First, the client board of directors might have felt some auditor is required. Then they'll delegate the responsibility to audit committee. Then audit committee will find auditors residing in that locality or maybe outside. Who knows? Auditor can be from anywhere, no? Yes or no? So audit committee will identify, trace out the auditor, finalize few firm names and pick out one. Suppose my firm is picked and that firm has been recommended to board of directors. The firm has been recommended to board of directors. Now the board of directors felt very comfortable with the profile I have, getting it, with the previous experience our firm has, the staff numbers that we have. They felt we can handle the company audit very well. They recommended to members. Before recommending to members, they asked me few declarations. I gave free consent. I gave declaration that I am not disqualified. I gave declaration that audit ceiling I satisfied. I gave declaration about my pending cases, all that. I gave declarations. Then they recommended to members. Members appointed me. They sent me appointment letter. Then I sent my acceptance letter. That entire stuff is filed with ROC by filing ADT 1. Now before I start with any other work, first I gave an engagement letter. Making them understand what is an audit exactly. They also signed it and sent back. Now I am appointed. First I need to do audit of 21-22 financial year. Getting it? I was appointed somewhere in September 2021 when the AGM was conducted. So I will do audit of 21-22. Now I was appointed in 21 September itself. Year also not yet closed. I may do audit after 31st March or I may do audit immediately. I will start immediately the audit. Maybe balance sheet P&L is not ready, but books of accounts are being made, no. Every day books of accounts are being prepared, no. I will first verify first 6 months transactions. Then I will wait up to 31st March, then verify balance 6 months. Then I will verify balance sheet P&L. Anyway, I can do audit. Suppose, first what I will do in audit. First of all, doing audit means you are doing some process, correct? You are executing some process. Verification process, audit process, audit procedures. What is it actually called as? Audit procedures. Verification procedures. First I need to apply verification. What is audit? I need to verify something. So whatever procedure I am following, that is called audit procedure. SA 330, 315 and 330, both these standards cumulatively talk about audit procedures. Audit procedures will consist of risk assessment procedure. That is what SA 315 is covering. And audit procedure will consist of further audit procedure, which is SA 330. Further audit procedure is discussed under SA 330. So what is risk assessment? Risk assessment means first I will understand the company. First I need to understand what business they are doing. How are their processes? In the previous session also somewhere I clarified, if I don't understand the business, I don't understand how they are selling the goods. If I understand how they are selling the goods, how they are storing the inventory, based on that I can understand what method of inventory valuation the company has to adopt. So knowledge of client business is important in order to do a proper audit. Correct? So I need to understand the entity first and the environment, the law and regulation applicable to the entity. I will go through a walkthrough test. What is it called as? Walkthrough test. Getting it? I'll go to the factory. I'll observe how the factory premises is, how the factory surrounding is, how to enter into the factory, what controls they have. So what factory consists of? How much is the acres? Where and all warehouses were there? How the controls in the warehouse? How goods are taken out of the warehouse? What is the protocol to be followed? Able to understand. I do all this analysis. That analysis is called as what? Risk analysis. Risk assessment. When I'm observing something, what am I trying to figure out? I am trying to figure out what can go wrong. What is it? What can go wrong? I entered into the factory. Getting it? I just went little bit ahead and I discovered the moment I entered into the inside factory plant, I discovered people are wearing multiple color uniforms. People are wearing multiple color uniforms. Some are wearing, orange t-shirts. Some are wearing green color t-shirts. Some are wearing some brown color coats. Getting it? Some workers are not wearing like any uniform kind of thing. Getting it? They are wearing in casual dresses. The moment I saw this, I felt a doubt. I got a doubt. Like, what is this coding? Uniform coding. What is this code? But somebody, there is no uniform code at all. I got a doubt. See, I have not yet started audit. I have not yet verified books of accounts. Nothing. No, nothing. First, I want to understand what the company is doing. What product they are dealing with. So I immediately called the production manager. The factory head is there, no? I asked him, so what is this color coding? He told me, sir, whoever is wearing this orange coat, whoever is wearing, they are our permanent employees. We recruited them. They are our employees, permanent. Whenever they retire, they'll leave the company, or when they want to resign, they'll resign. Otherwise, we don't. As long as they are working good, we will keep them, permanent employees. We will pay them salary, provident fund, ESI, everything we have. Okay, fine. So company has a HR policy. As per that, they are recruited. Something I understood. Then I asked, those who are wearing green dress, who are they? Sir, we don't require more than 200 permanent employees, sir. But every month we will get some project. Whenever we get a project, we want some extra 100 people at that time. Only project time we want. So that time we can't keep them idle every time. So what we do? Contract labor. They are what? Contract labor. So there is a supplier, sir, who will supply us additional people whenever we want. So those people will come for 20 days, will work, and we will settle the money to the contractor. He will pay wages to them. Contract labor. Then what about the people who are not wearing uniforms, who are wearing casual dresses? So what about them? They are daily laborers. They are daily laborers, casual laborers. So they are appointed for supportive works, not for the main works. Getting it? Whatever the permanent employee is doing, for them they will just put a support. Now every day outside the factory we will put a board. Today we want 25 workers. Today we want 48 workers. Like that we will put board. And they will enter. Now I have a problem here. Okay, these people are casual laborers, no? Daily laborers, right? How do you pay wages? Sir, again in that there is a classification, sir. Out of these daily laborers, some people are skilled, some people are semi-skilled, some people are unskilled. They don't know any work. If at all I ask him to bring glass of water, he'll go and bring glass of water. That's it. This is the kind of laborers, unskilled. Okay, what is the wage structure? For skilled labor, we will pay some 750 per day. Semi-skilled labor, we will pay 500. Unskilled labor, we will pay 300. Some amounts. I'm just taking example. Don't check it with Industrial Dispute Act. Minimum payment of Minimum Wages Act. Getting it? I'm just giving an idea. So we will pay like this. How will you pay them? I asked. Sir, we pay them by cash, sir, at the end of the day. Morning they'll come, evening they'll go. Our cashier or somebody will come. So they all stand in the queue. We will pay that and then they'll leave. Have you seen Narasimha movie? In that there is a song, no? Ekkutto limit to that song. Yes or no? So that he becomes rich, no? After blasting that hill. Getting it? There you will see that cash payment when all the laborers visualize, they are nothing but whom? Daily laborers. In Telugu I know that song. Okay, in Tamil I don't know. Getting it? Padayappa movie. Sorry. In Tamil it is Padayappa movie, right? Padayappa. Okay. So they'll pay this money daily. So I got this doubt. Okay, understood the wage structure also. Now my problem here is, the moment he told me, I found a risk here. Suppose on a particular day, 100 daily laborers came. 100 daily laborers entered. 100 daily laborers entered. Out of these 100 daily laborers, management said 40 skilled labor. On the day when I visited, no? On the day how many were there? I asked. 100, sir. 40 skilled, 30 semi-skilled, and remaining 30 were unskilled. This is the composition they told. Now for them, 40 people we will pay 750, 500, 350. Okay, today I am seeing live, they are showing me how it is exactly okay. But in past, I was not there, no. Every day I will not go to the company, no. Every day I will not go to the factory, no. In past, they may do this kind of fraud. What? Suppose skilled people only 40 came, unskilled 30 came. But they may write skilled 60, unskilled 10. They may write like this, yes or no. And they can manipulate the wages, no. Because moreover it is paid in cash. The production manager, factory head, cashier, if they collude, can they do easily fraud like this or not every day? So this is a fraud risk factor. This is an opportunity, a fraud risk factor. Able to understand. Now I identified the moment, the first day when I went to the factory, I identified this risk. What should I do? If this is very big transaction during the year, if this occupies totally during the year huge amount, then this is a significant risk. Then it is a significant risk. I need to address this in my audit. I need to specifically focus this in my audit. I may decide this as key audit matter if possible. Are you getting the point? I will see what is the control behind it. I will see how management is ensuring only right number of skilled laborers were paid at the skilled rate. Right number of semi-skilled were paid at the semi-skilled rate. There is no manipulation in the records by the management. How management is taking controls here? I will check. I will check controls surrounding this transaction. How management is ensuring it is paid correctly. The production manager cannot manipulate semi-skilled into skilled and take higher wages, differentiation amount, yes or no. So auditor has to, this is a risk. Fine. Still they showed me little more. Okay, I am telling you where we generally find risks. Getting it? Then we moved. Then we went to production. Then we went to warehouse. The warehouse was so big, 5 acres approx, or 2-3 acres warehouse, very big warehouse. Getting it? Inside the warehouse, they employed automatic roboting system for movement of goods from one place to another place within the warehouse. Getting it? You see, there is a video on Flipkart warehouse. The YouTube, you can find Flipkart warehouse. Getting it? Now in this warehouse, there are some compartments. Now there is one compartment is the room. A big, very big compartment. I asked him, what is this? He is just telling me, in this we store these goods, in this we store raw material, in this we store this one, in this we store this one. And one room they showed me. And they told me they will store scrap in that room. What they will store? Scrap. In the production, whatever scrap is generated, that scrap will be stored in that room. Getting it? Now, I asked him like, what are the records for scrap that you will maintain? What records that you will maintain? Sir, we don't measure how much is entered into the room, sir. But whenever we are selling, we will measure how much is sold. Whenever we sell the scrap, whatever scrap was outward from that room, we will record it. But don't you record input? I asked them, no sir, we don't have any input scrap register. Like how much scrap generated on a particular day, how much is entered into the room, inflow is not recorded properly. Now this is a risk. This is a risk. What will happen if inflow is not recorded properly? They may sell 1 crore, 1 ton of scrap. As per the books, they sold 1 ton, but in reality, they might have sold 1.5 ton. That 0.5 ton they would have manipulated. Now, how do I know scrap sold is showing some deficit? If I have input, first of all, in my stock, how much I have? 10 tons I have. Then why only 8 tons sold? I can question. If I don't have the 10 tons register, if at all they sold for 8 tons, who knows how much it is? Possibility there or not? Another risk factor I found. If this is also material to the financials, I will have to focus on this more. Another risk I identified. This is how we do risk assessment. Every area, how assets are maintained, what records are maintained, how salaries are paid, what controls they have, how people are recruited, what controls they have. Able to understand. How goods are purchased, what controls they have. All this analysis I do, the risk analysis, risk assessment, what can go wrong, what can go wrong. This is called risk assessment process. Now you see, what is SA 315 heading? Identifying and assessing risk of MMS. Now, when I see this casual laborer, I identified a risk. I assessed that it is important, significant risk. Now, fraudulent financial fraud, some frauds will happen, a misappropriation of cash will happen. No. Is it resulting in a misstatement in the financial statements or not? So, I am identifying the risk and assessing the risk of MMS. How did I identify it and assess this? Through understanding the entity and the environment, how they are working, including internal controls. Yes or no? This is risk assessment procedure definition. Understood how it is done, all of you? Now, once I do this risk assessment, what should I do now? I understood entire factory, entire company. Now I came back my office. Okay, now I need to plan my audit. I'll call my all the team members. Getting it? I will develop an audit plan. I will develop an audit plan like this. Getting it? I will develop an audit plan like this. Getting it? Like, this is the audit program, audit plan. What is the audit that we are taking actually? Statutory audit. Some company. Getting it? Some starting date of the audit is some May. And audit is expected to close by 30th, but actual closing date was 5th July. So the team, so I am the engagement partner, there is an audit manager, two senior articles I took, one junior article I took, and 2 paid assistants. Paid assistants can be CA or non-CA. Anybody. Getting it? Next. First, who will do risk assessment? I will do, and my CA, who is an employee, we both will go and do risk assessment. 7 days it took for us to understand about the company. What company is doing, what exactly their processes, 7 days it took. So understanding the business and processes. Then first we come back and prepare this entire plan. We will prepare this entire plan. There are purchases, sales, payments, receipts, others. C will do this work, D will do this work, E will do this work. This is the days allocated and how much they need to check. Extent of sampling. What should be the sample size? Have you heard of nature, timing, extent? Nature means what? I do opening balance, verification, cross verification. Getting it? Timing means what? 1 day. Extent means what? Coverage, 100%. Are you getting the point? So, when I'm verifying, purchases, I asked about, when I'm verifying sales, scrap is the point which require major consideration. Auditor's instructions. I instructed Mr. D, focus mainly on scrap. What controls were there around the scrap? Then inventory, scrap registers were not maintained. Focus on that. Yes or no? Others, employee expenses, daily laborers, no controls. Check it out. So these are the assets. Then statutory areas, I will allocate the work. Then overall reviews, I will allocate work to these people. They'll do 5 days. Then overall, I will do a review of the entire audit. The engagement partner is liable to review the entire audit. All of whoever performed. So what I will do, review every team member's work. Because if something goes wrong, ultimately people will ask me, not my article. Finally, I will hold audit summary meeting with the client, where I will discuss audit summary memorandum. You have a question, what is audit summary memorandum? Yes or no? So I will discuss a summary with the client, with client meeting. All our team members will be there. CEO, CFO, accountant, general manager, all of them will come. A big meeting. It may be 1 day or 2 days, who knows? Are you getting the point? Then finally, we will prepare audit report. Now at first we will give engagement letter. We will have to give letter of weakness also. Now when I'm doing audit, I found so many places where risks are there. No, I will tell the management, see, in these areas you don't have control properly. Risk is a risk. Whatever risk I identified, where control is not there, where I feel control is deficient, I will give letter of weakness. Understood or not? Then finally, audit report, everything is over. Then I'll go back my office. Now I have gathered so much of workings, I must have gathered soft copies, so many. Company gave me purchase register, sales register, all Excel sheets. I applied sampling in the Excel only. And we saw physical copies, so many. Some copies we have taken Xerox copies. And we kept in physical hard copy files. Some data is in soft copy. Entire files, they were in zigzag manner. What my people have to do? They need to assemble. You have a question. Assembly of audit file. Yes or no? Now after we came back to our office, in fact we will not assemble after coming. We will assemble in the client premises itself. I will tell all my articles, hey, don't just come and keep the paper inside the file. Keep it in a structure. Getting the point? First bottom opening balance should come, then purchases working should come, then sales workings should come, then above that order, you maintain order. When you're writing notes, no, you're directly opening notes and writing. You're opening to the what is the last page where you written, the next page onwards you're writing. Correct? So you open in a structured way when you're writing notes. Same way, when you're keeping files in the papers, no, you keep in a particular order. Are you getting the point? And that is called assembly of the audit file. You have a question, write about assembly of audit file. Now after audit file is assembled, what everyone? Every of my members will sign. Every of my members will sign here. Getting it? We will take this printout, keep it in the working paper file, and we will save this entire workings. This paper, entire this working, I will retain it for 7 years. After completion of the audit, from the date of auditor's report or group audit report, I will retain this working paper till completion of 7 years. Understood? This is the basic introduction to this chapter. Okay, so now based on risk assessment, I have to do further audit procedure. Now, what is further audit procedure? I need to test controls. I need to test controls. I need to test substantive procedures. This is compliance procedure. In compliance procedure, only one procedure, that is testing the internal controls. Substantive procedure, we have two. Testing of details, substantive analytical procedure. Are you getting the point? All of you? Yes, sir. Now, next. Now you might have heard, no, books of accounts and all. You might have heard books of accounts, how client will maintain books of accounts, how auditors will maintain documentation, all that. Getting it? Suppose you open auditor's office, no, auditor office. Like if you're working in any audit office, you will understand that once you start articles. So like in office, no, we will have some server. Like everyone, whoever work, no, that will be stored on the server, main computer. You're all using computers, no, they are client servers. They are clients actually. They are actually client. Like my computer is connected with one main server. Whatever I'm working, it will be stored on the server. If you open server in computer, it will give you two files. Example, I'm only giving example. Clients, others. Getting it? I'm showing you documentation, how in real life looks like in files. This is looking like files in systems, files, folders. Clients folder is there. Inside that we have complete company clients. We have some individuals who are for whom we are filing IT returns. We are having partnership from clients also. I am thinking about which client? Company client. Okay. Now company client is open. Now inside company client we have statutory audit. The companies where we did statutory audit, then others. Getting it? Suppose if at all I accepted a client only for preparing his books of accounts, then it is not audit client, he is non-audit client. Now statutory audit, inside that we have so many clients: A limited, B limited, C limited, D limited, E limited, likewise. Now I opened C limited. When I open C limited, we are doing for C limited audit from 1819, 1920, 2021, 2122. These are the folders. Now we are discussing audit of 2122. It's over. Audit is over. I opened this folder in the computer. This folder opens. Immediately it shows the following. Okay. Risk assessment procedures. Risk assessment, like preliminary work, field work. What is it actually? Field work or workings, or you can also call it as a transaction audit. Getting it? Now it will show summary meetings. Then it will show summary meetings or summary reports, all that. Then finally it will show deliverables. What is it? Deliverables. What are all we should give? Now risk assessment we open. In that, company MOA, AOA, company controls, internal control policies, procedures, we visited, no, photos and all we have taken, so many, that entire records were there. Now in this file itself we have audit plan. No, I showed my Excel sheet audit plan, that is also there in this only folder. Then field work I opened. Inside this field work we have again multiple folders. Transaction audit folder, balance sheet items folder, statutory areas, ledger reviews, like this there are some folders. Transaction audit folder I opened, purchases audit, sales audit, receipts audit, Payments audit like that, there are some folders. Purchases folder I opened. Getting it? Population data, total purchases data, samples selected, sample verification. Getting it? My observations and other purchase related records and all were there inside this. Tomorrow, see why you have to maintain all this. Tomorrow somebody came and questioned you. You did not do audit properly. Okay, you are liable for arrest. I will show my working papers. Getting it? How can you arrest me? Based on how can you prove that? See, if I am negligent, okay, you can arrest me because I did a civil fraud. Getting it? Being an auditor, I did not discharge my duty. Now, here, I will show all this entire my computer. Not only this, wait, I will come and show you my hard copy. I will call my article, ask him to bring C limited files. C limited files they have brought immediately into the office. Getting it? I showed him, I opened each and every file, papers. See, these are the works we perform. This work is performed by him. This work is performed by him. Getting it? These are the workings. We did not simply give opinion. We checked all this. And finally only we gave opinion. This is documentation. What is the purpose of documentation? What is the purpose of documentation? Tell me. It's an evidence for auditor's basis for a conclusion about achievement of overall objective. Whatever opinion you give, this is a evidence. The soft copy which I showed, hard copy which I have, it's an evidence. That too, this audit documentation evidence that we planned the audit, performed the audit as per legal and regulatory standards requirements. Understood? How this documentation helps? It will help my engagement team to plan and perform the audit. Actually, it will help my future teams. Getting it? So current year when I do audit, my current year documentation will help in the next year. Next year articles may not be same. Some other will come. So they'll come and ask me, sir, how to do audit of this company? I will tell him, go and see the last year working papers. You will understand. Next. It will help members of the team to direct and supervise the work. So as a partner, I will not go every day to the client premises. 30 days we did audit. I will go only 4 or 5 days only. So first day I will go, I will allocate work to all my articles and all. They are working. Every day whenever they work, they gather some papers and keep in the file, no? Yes or no? I will review them. So it will help for me. It will help for me to direct and supervise. And whoever is working, no, they will keep documentation, right? Will it make accountable? For my staff, no, they will make them accountable. Maybe they are not accountable for outsiders, but for me they are accountable. So it is relevant for future audits. And with working papers, I can do quality control reviews. I can do quality control review once audit is completed. How I did audit, I want to verify. Did I conducted audit as per standards? I will see quality control review. I will apply quality control review. And the working papers, whatever I am maintaining, documentation, whatever I am maintaining, it will help me for external inspection. Like what? Tomorrow NFRA is coming and want to review. So some fraud happened in a big company, I am the auditor. They want to see how I performed audit. Did I colluded with them? They want to see. Or did I acted negligently? They want to see. My working papers will help, will protect me if at all I did proper audit. If at all you didn't do proper audit, your working papers also will not be enough for you. So whenever you are doing something, whatever you are verifying, whatever you are checking, document it. Save it. Able to understand? Are you getting the point? Next. So now tell me, what is documentation? It's nothing but recording. It's a record of audit procedures performed, evidence obtained, conclusions the auditor reached. Whatever procedure I performed, it is showed in my working paper, soft copy, hard copy, computer files, all that. And these are called as working papers, also called as work papers. Now this working paper is whose property? My property. Understood? Next. What is the objective? It is a sufficient and appropriate record for the opinion. It's an evidence that audit was planned and performed as per the standards. So nature of documentation, objective of documentation, both you can write a similar answer. Next. Now, how should I prepare my documentation? What should be the manner? How should I prepare my documentation? You should prepare documentation in such a way, an experienced auditor, but he is not part of your audit team. He didn't work on your audit, but he is having experience in audit. By looking at your working papers, he should understand Have you planned? Have you performed? Have you reached to conclusion? Have you taken opinion? Everything an outsider should understand. So the auditor shall prepare documentation that is sufficient to enable an experienced auditor. Actually here the word is experienced auditor. Actual word is what? Experienced auditor. Here it is not simple auditor. Here it is experienced auditor, having no connection with the audit. But he should understand nature, timing, extent, results of the procedures, significant matters arising, and significant conclusions you have taken, opinion you have given, everything he should understand. In such a way you should maintain documentation. Which means if the documentation is understandable for you, that is not enough. It should be understandable for any person who has knowledge of audit. Now, who is an experienced auditor? Who is an experienced auditor? He is an auditor who has he is a person maybe insider of the audit firm or outsider, but he has knowledge of accounting standards, knowledge of auditing standards, knowledge of law and regulation. He also know about the company and knowledge of the business. Who can understand all this? We call him as what? Experienced auditor. This is called independent third party test. What is this also called as? Independent third party test. That's it. So what auditor shall document? You have to document whatever the test that you performed. Getting it? What are the matters you tested? Purchases you tested, sales you tested, payments you verified, document it. Who performed this work? Document it. Who verified this work? Document it. We are documenting an audit plan. Yes or no? And what are the significant matters? What are the important matters discussed with the people with whom you discussed in the top management of the company? Document it. Suppose you identified information inconsistent with the final conclusion. Please document how you addressed. If at all you got some evidence where it is not matching with something else. Suppose very simple, scrap and all you verified. Getting it? Later you got some other evidence that scrap generated by the organization is this much, not this much. Getting it? If at all you identified such kind of multiple evidences mentioning multiple details, different details, then have you resolved it? Which is correct? Are you getting the point? Suppose books of accounts debtors balance shows 10 lakhs. You asked for third party confirmation. He replied 8 lakhs. Which is correct? Have you resolved it? You need to document. Understood or not? Now, in what form I will document? Should I document in electronic form or should I document in physical form? Depends. It depends upon the, nature of procedure I performed. If I go and physically verify, I will not have documentation at all. If I do a video recording of the entire physical verification, I can document it. Getting it? So, the form of the documentation, what content you should document, how much you should document, depends upon size and complexity. If it is very big organization, documentation content will be high. If it is more complex, generally more documentation I will get. Nature of procedures performed, risk, if at all there are more risk, more audit work I will do, more documentation. Significance of information I got. If I feel some information I got is very important, I will retain it. Some points, suppose purchases I will do, right? 100 samples I am verifying. 100 samples I am verifying means every purchase, related goods received note, related order copy, all that I will verify. But do I document everything? Do I save everything? I will just verify and leave it. I will tick and then leave it. I will put tick and then leave it. Suppose I saw one voucher, one purchase invoice, huge transaction. Generally organization purchases 10 lakhs, 15 lakhs, 12 lakhs like that. But this is 1.5 crore, exceptional item. 1.5 crore value is an exceptional item in this company. Because this company generally purchases for 10 lakhs, 12 lakhs, 10 lakhs, 12 lakhs, around that. Only one transaction was entered into with 1.5 crore. At a time they purchased in bulk. I asked management what? There is a bulk discount announced by supplier. So we purchased and retained the raw material. It's an exceptional transaction. So exceptions identified. So if you identify more unusual things, we will document more of them. Able to understand. And the need, this point is not required. Audit methodology and tools you used. Vouching. How you verified Excel sheet. Getting what tools that you are using. Inquiry, inspection. There's so many stuff. Getting it? These are the factors that you affect documentation. Next. Tell me, you have to prepare documentation in a timely manner, right? Is it better to prepare documentation after 30 days or every day whenever the work is completed it is better? Exactly. The auditor shall prepare documentation on a timely basis. Preparing sufficient documentation on a timely basis helps to enhance the quality of audit. It facilitates effective review, evaluation of audit evidence. Documentation prepared after work is performed is less accurate than documentation prepared at the time when the work is performed. Clear? This chapter, no, many don't understand this. Many don't understand this chapter. They just read like something they're reading. They feel like something they're reading. But you see, for every point, we are able to see with a real situation. Correct? Now, so audit file means what? Whatever you're documenting, no, in a computer or in physical file, that file is called as what? Audit file. This file may be a folder in a computer, in a storage media. It may be in electronic form or it may be physical form that contains records that comprise documentation for a specific engagement. What do you mean by that? I should maintain separate audit file for each client. I should maintain separate audit file for every year audit separately. Understood or not? Now, auditor should assemble the file, no? You are documenting timely. Now, you should assemble also, right, neatly. You should assemble it. You should give reference numbers. Later, when you see this paper, you should understand. Not just you. Another experienced auditor also should understand. If NFRA person is coming for quality review, he should understand. So, the auditor shall assemble the documentation in an audit file and complete the administrative process. Audit as an assembly of audit file is an administrative process. Is it an audit procedure? I completed audit. I am just audit to papers and all a zigzag manner. I am just adjusting this. Is it an audit procedure? It's an administrative process. So this has to be completed on timely basis. The SQC, there is an SQC requirement. The SQC standard says, firm shall establish policies and procedures for timely completion of documentation. This assembly shall complete within 60 days from the date of audit report. Once you give audit report, within next 60 days, make it neatly ready and keep it in the bureau or keep it in the locker. Retain it for how many years? 7 years. How many years you have to retain it for? No shorter than 7 years from date of audit report or date of group audit report. What is group audit report? Suppose I am a branch auditor. My audit report is 10th June. Principal audit report is 20th July. Not from this date, 20th July onwards, 7 years. Whichever is later. Able to understand? Next. What is audit documentation? Audit documentation, they'll give you this question in exam. Audit assembly of audit documentation involves a new audit procedure or additional audit procedure. False. Assembly of audit documentation is not an audit procedure. It's an administrative process. What is there in administrative process? Deleting the documents which are superseded. Some workings 1 are there, workings 2 is there, workings 3 is there. Workings 3 is final workings. Why are you retaining working 1 and 2? Delete them. Then sorting, collating, cross-referencing, coloring. That is called assembly processes. Are you getting the point? So, the completion of assembly of final audit file after the date of audit report. Like final audit file you are assembling, right? It's an administrative process. It does not involve new procedures or new conclusions. Now to the documentation, whatever I have collected, can I make changes? Yes, you can make changes, which are administrative nature. Like what? Some one page, some 4 or 5 Xerox copies were there. Delete them. Keep it only one. Superseded, duplicate documents and all, deleting it. Rearranging it, they were not in order, rearranging it, sorting, we call it as. So this and all you can do. Once you finalize, after the assembly has been completed, you should not delete any paper. You should not throw any documentation before the end of retention period. So firm should have policy for retention of documentation, how they should retain, where they should keep it, so that they can keep it for 7 years. So minimum how many years? 7 years. Ownership. Whose property? Audit documentation. Auditor's own property. Nobody can demand. Can principal auditor ask for documentation of branch auditor? No. Because branch auditor's documentation is his own property. Understood or not? If at all branch auditor is willing to give, you take it. Otherwise you can't demand. Understood or not? Next. Now, not only this, auditor should also document significant matters. The auditor should document significant matters. What is a significant matter? Wherever there is a significant risk is involved, that is significant, or wherever you feel financial statements are materially misstated, that might be a significant matter, or where there is some difficulty in applying audit procedure. You want to verify whether company paid GST properly or not, and company has not maintained any GST reconciliation sheets. You have done the entire reconciliation. So much time you kept. That's a significant matter. That's a significant. Whatever you feel it is important issue, you have to document. Findings that could result in modification. You found something where you felt modified opinion should be given. That is also a significant matter. Significant matter includes what and all. You need to document all these. They'll ask you in exam straight away, 4 marks question, write about documentation of significant matters. Understood or not? Documentation related to professional judgment is little difficult topic which requires major time to discuss. It will take more time to discuss, cannot be covered in revision class. Okay. Then audit summary memorandum. What is it? Audit summary. Now once you completed the audit, now you have to discuss with the management, right? Especially in large audits, no? Observations are too many. I will go with the 20 team members. 20 team members I will go. Example, for doing big company audits. Everyone has his own observations. Like suppose one team member did audit of purchases of, goods A, audit of purchase of good number C. Another team member made audit of purchase of some reserves, audit of purchase of some other raw materials like that. Getting it? Now both of them are having, each of them are having 40-50 observations. 20 team members worked on different works. Every one of them is having observation. Now management is asking, sir, what are the issues you found, sir? All 20 members of us going there and then informing management what are all the issues. Will it become clumsy or not? So what should we do? We should find a summary. So the auditor may consider it is helpful to prepare and retain as part of documentation a summary. So if you look at summary, it will be easy. So where significant matters will be, recorded and how they were resolved by auditor. This summary will facilitate effective and efficient review, inspection of documentation, especially for large entities. Because of the summary, I can easily review what happened in audit. It also helps the auditor to consider whether there is any individual essay objective that auditor cannot achieve, which would prevent the, like in summary, we will also record what are all the auditing standards where I did not follow properly any requirement. If a particular standard requirement I did not follow, I will have to record it in audit summary. That's what that point meaning. Able to understand? So that's about audit summary. Okay. So with this, SA 230 is completed. This is nothing but which standard we discuss now? 230. We originally discussed what is risk assessment overview, what is further audit procedure overview. Then we entered into 230 discussion. Understood or not? Then we will go and discuss, maybe in the next session, I will be discussing this 330 audit procedure. Then I will come to evidence. We'll see. Getting it? All of you fine? In regular, we discuss this approximately chapter for 8 to 9 hours. Approximately. Here we can only cover within 2 hours. Understood? This is not that easy. Whatever you think, it is not, audit is not what you think. There are so much stuff. You see my regular material, you will find even little more content. Getting it? They will ask you in exam. Okay, I'll show you. I'll show you. I will explain you how in different ways questions will come in the evidence discussion. Yes.